Minister, as you know, was here 3 weeks ago, and they want to make a deal. We'll see what happens.
US President Donald Trump says that the US will strike a trade deal with India soon. His comments come after Treasury Secretary Scott Bessent said that the US was, quote-unquote, very close on India. It's an action-packed day globally, domestically, and we'll bring you all the updates right here on Power Breakfast on CNBC-TV18 in the Mumbai News Center. I'm Hormuz Patakia. Let's first take a look at how the Asian markets have started off. It's a mixed picture that's coming in from the Asia-Pacific screen. We just, in a few minutes earlier, got a factory output data from China that fell to a two-year low in line with the tariff tensions that are ongoing with the US. The Shanghai Composite, though, absolutely at the flat line. The Hang Seng 2 trading around 0.2% lower. The Taiwanese index just above the flat line as well. Losses are coming in from South Korea. Kospi is down almost 0.6%. And even the Nikkei that has resumed trading after a holiday yesterday is also trading absolutely at the flat line. The manufacturing PMI data, as you can see, at 49 and a reading below 50 indicates that the economy is currently in contraction. So mixed cues or not very significant cues emerging from the Asia Pacific region. Also pull up the GIF Nifty and give you an idea of how our markets are likely to start off. Well, mostly in line with how the Asian screen is as well, on a cautious tone as of now. A 50-point downtick is what the implied open is currently suggesting. But Wall Street had a good session yesterday, and because of new hopes of tariff deals taking place, the Dow ended 300 points higher. The S&P 500 gained around 0.6%. The Nasdaq too was up almost 100 points, and that comes after Commerce Secretary Howard Lutnick said that a major trade deal has been completed, but he did not name the country. The White House administration has repeatedly said that they were in constant talks with Japan, South Korea and India. And let's also listen in to what the Commerce Secretary had to say.
Every country in the world, just like Donald Trump has said, wants to do a deal with us. Now, here's the point. I have a deal. Done. But I need to wait for their prime minister and their parliament to give its approval. And then there are country after country where we're just working through the details. But you have to remember, they have prime ministers, they have parliament, they have to work through their process. But all of these are going to be coming. And what they're going to be is they're going to be incredibly smart, incredibly thoughtful. They're going to unleash the ability for us to export to them to grow. And they are going to also protect our industry so we can grow. And I think our GDP is going to pop from there. If you do a trade deal with a country, and they say, all right, I'm going to open my market for $15 billion, okay, which is not big at all. It's small. And you do it 20 times. That's $300 billion. That's 1% of GDP. Go ask Goldman Sachs. If they do 20 deals and they do $300 billion of GDP growth, right? So instead of having a $1.2 trillion trade deficit, we only have a $900 billion trade deficit. Still terrible, right? And we have 1% GDP growth, and they have $4 trillion in factories built in America. Right? Isn't that another point of GDP growth? Isn't that 2 points of GDP growth?
Some positive developments, at least with regards to a trade deal with India, but that's all the global market action that we have. How will all of these overnight cues impact our own markets? Our research team joins in with how the trade setup looks like, the stocks that are likely to be in the news, and of course the setup on the F&O side of things as well. Even in yesterday's session, where we were erring on the side of caution, we did open well. We made a new high. We crossed Friday's high of 24,365, but we could not sustain above those levels. That 24,450 mark again proving to be a resistance, a barrier, and eventually we closed around that 24,350 mark as well. It was the tensions around the border with India and Pakistan is what has kept sentiments in check. But what ensured that the Nifty managed to keep its head above water was Reliance Industries, and it is the outperformance that continued from a Tuesday's trading session as well. Now 2% higher there, one and a half lakh crore added to its market cap in 2 sessions. So almost 8% higher in 2 sessions is Reliance Industries. And the cautious sentiments reflected on the Nifty Bank as well. It hit that mark of 56,000, tested those levels, but then cooled off almost 600 points from the highs. So that 55,500 to 56,000 continues to remain a barrier for the Nifty Bank. Of course, with tomorrow being a holiday, the weekly expiry for the Nifty contracts has moved to today. So that will be in focus as well. The traders would look to remain light considering the fact that tomorrow is a holiday, and especially because of the ongoing developments with regards to the tariffs, the geopolitics and all of that. However, the stock specific activity may continue, and speaking of that, watch out for defense names because they've been on a tear over the last two trading sessions. Take a look at this, almost 15 to 30% higher in the last two sessions. Masgao Dock is now at a record high, and Paras Defense is going to be reporting its results today. Of course, there's a lot of global action lined up as well. You watch out for the GDP data from the US later this evening. The PCE inflation comes in later today. Apple, Amazon, Microsoft, Meta, Qualcomm, all of them report results over the next 2 days. So we'll have to digest all of that on Friday morning as well. So cautious cues for our own markets. The GIFT Nifty 2 indicating a 60-point downtick as of now. But moving over to Sudarshan now, who will list out the stocks that you need to keep an eye out for today. Sudarshan, good morning.
Good morning, Harma. So we'll start with Bajaj Finance. It was a minor miss on NI and operating profit front. NI was up 22% year on year and up 4.5% sequentially, and operating profit was up 18% YOY, but it has slipped 3% on a sequential basis. For FY26, company believes that AUM growth is likely to be in the range of 24 to 25%. Also, net interest margin is expected to be stable. Coming to BPCL, it was a strong Q4 earnings led by refining segment. Even marketing margin has benefited from higher inventory gains. EBITDA was up 2.4% on a sequential basis. Margin has improved to 7%. Remember, our estimate was around 4 to 5%, and reported GRM has surged to $9.20 per barrel against our expectation of $5.60. Coming to India Mart, it was a subdued quarter. Revenue was up just 0.2% on a sequential basis. Even one major thing that we focus in India Mart is the paying subscriber growth, which remains muted. It was just 1% on a sequential basis. Shoppers Stop, it was a muted revenue and EBITDA growth. Even margin was flat at 16%. For Praj Industry, it was a miss across the board. Profit has declined year on year for the third consecutive quarter. UTI AMC quarterly average asset under management has slipped 4% on a sequential basis. Even SIP AUM was down 2%. Star Health Insurance operating loss. Company has reported operating loss of rupees 87 crore versus profit of 90 crore. Even combined ratio has increased by more than 600 basis points YOY. For CEAT, revenue was up 14%, EBITDA has slipped 1%, and margin was down almost 200 basis points, but it was higher than estimate. For IndusInd Bank, after Deputy CEO Arun Khurana had resigned, now the company has announced that its CEO Sumant Katpalia has resigned effective April 29, and board has sought RBI's approval to constitute a committee of executives. For Alembic Pharma, it has received established inspection report from US FDA for 1 unit, and lastly, Prestige states it has received regulatory nod for Indrapuram project, and gross development value is seen more than rupees 9,000 crore.
A long list of stocks. We'll keep an eye out on all of them. Sudarshan, thanks a lot for that. And lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. Still not able to cross higher levels, but what's the FNO data indicating?
Well, the FNO data indicating, for starters, it is weekly options expiry today. You wonder why on a Wednesday, because remember, tomorrow is May 1st and it is a trading holiday. So as a result of which, we will watch out for the key indices. But if you look at the key indices yesterday itself, ignore the range that they traded at, look at the close, then that tells you that there's nothing. There was a fair amount of consolidation that took place in yesterday's trading session. But the real story was in the high and the low of the Nifty itself. So you look at the high yesterday, 24,458, and the low, 24,291. And that exactly is the broad range that the street is working with as well, because the GIFT Nifty is indicating a negative start, but it's at the lower end of the range. What's positive, however, are the internals. The biggest internal is the kind of flows that we're seeing from the institutions, the cash market. Both the DIs and the FIIs bought in yesterday's trading session. In fact, the FIs have now bought for 10 trading sessions in a row. We don't remember the last time we saw this. And the FIs and DIIs put together, bought together for third session in a row. So there is a fair amount of money that is entering the Indian market itself. Institutional flows this month itself, over the last two trading sessions, the FI purchase has made their net flows for this month, the month of April, positive to around 2,700 crores, and the DIIs have put in around 27,000 crores itself. And that's not just the cash market. Even in index futures, the last three trading sessions, the FIs have been pumping in money. The one trading session where they sold, they were caught on the wrong side. So yesterday they bought about 911 crores, added 6,800 long contracts, and now their long exposure stands at 44%. Today, the weekly options expiry, there's 24,350 call which is active and the 24,300 put, telling you that the expiry range is seen between 24,250 and 24,425. Were the markets to break out, there is a positioning which is taking place at 24,500 call as well. So there is a fair amount of punt buying. So we'll keep an eye out on that. And also watch out for trend. The stock did well yesterday post numbers, but a lot of the details that came in after numbers would lend more short covering to that stock today.
Oh yes, absolutely. What a move we saw on Trent after the numbers came in just before closing. Mangalam, thanks a lot for that. We'll take a short break. Up next, we get you the latest developments around President Trump and the tariff talks. Stay tuned.
To us, then we sell to them. So the onus will be on them to take off these tariffs. They're unsustainable for them.
And they are saying you guys are not talking about it. So is that true?
Look, they have a different form of government. They're playing to a different audience. So I'm not going to get into the nitty-gritty again of who's talking to whom. But as I said, I believe for the Chinese, these tariffs are unsustainable.
And very quickly, 2 days ago, you said you didn't know if President Trump had spoken to Xi Jinping. Do you know now?
Again, I would say Caroline and I have a lot of jobs around the White House. Running the switchboard in one of them.
Does the administration anticipate supply chain shocks or supply shocks coming now that cargo shipments from China are significantly down? And if so, are there being plans or are there plans in the process of how to address that?
Welcome back. Now, US President Donald Trump has said that the US will strike a trade deal with India soon. Now, his comments come after Treasury Secretary Scott Bessent said that the US was, and I quote, very close on India. Listen into what both of them had to say.
India's coming along great. I think we'll have a deal with India. The Prime Minister, as you know, was here 3 weeks ago, and they want to make a deal. We'll see what happens.
India, in a funny way, is easier to negotiate with than many other countries because they have very high tariffs and lots of tariffs. So it's much easier to confront the direct tariffs when, as we go through these unfair trade deals that have been put in over decades, that the non-tariff trade barriers can be much more insidious and also harder to detect. So a country like India, which has the posted and ready tariffs, it's much easier to negotiate with them. So, I think the India negotiations are moving well.
Now, sources have also told CNBC-TV18 that India and the US are exploring opportunities for an interim trade agreement in the goods to secure an early mutual win ahead of finalizing the first phase of the proposed bilateral trade agreement by the fall of this year. Abhimanyu gets us all of these details. Abhimanyu.
On the India-US trade talks, government sources have indicated that an interim arrangement is being looked at on trade and goods, which could take place as part of early mutual wins in case both the sides agree. The initial focus would, of course, be on goods and non-tariff barriers flagged by the Indian side, which includes the marine sector. The US had suspended the additional 26% tariffs on India till the 9th of July, and both the nations are intending to take advantage of this window to push the trade talks. India and the US are slated to hold sectoral engagements for the proposed BTA from the end of May 2025. The Commerce Ministry had held a meeting with the American officials in Washington, D.C. between 23rd and 25th of April, in which it has indicated that discussions took place on issues like tariff and non-tariff matters. Discussions were also held on the pathway for conclusion of the first tranche of a mutually beneficial multi-sectoral BTA by the fall of 2025. The ministry further indicated that productive sectoral expert-level engagements have taken place virtually, and in-person sectoral engagements have been planned from the end of May 2025. It remains to be seen how early the negotiations are going to begin and what are the issues which are going to be ironed out initially.
Abhimanyu, thanks a lot for that. Let's also listen into what former RBI Governor Raghuram Rajan had to say on the trade deal talks between India and the US.
this should be seen in the larger context of the India-US relationship, which covers things like defense, but also education. A whole lot of Indian students coming to the United States to learn, do research, and so on. So many areas in which there could be collaboration. But within that, I do think that India benefits hugely if it can negotiate tariffs to a much lower level, even while some other countries have it at a higher level. It may cause a lot of companies to look at India in a new light, especially given the large Indian domestic market. So you not only get an entry into India and produce for the rest of the world, including the United States, at low tariffs, but you also get to serve the Indian market.
Would have supply chain shocks, and I think retailers, they have managed their inventory in front of this. You know, I speak to dozens of companies, sometimes daily, but definitely weekly, and you know, they know that President Trump is committed to fair trade and have planned accordingly.
Welcome back, and apologies for the technical error just a few minutes ago. And Dia is now joining in with some of the other major overnight headlines from President Donald Trump in his special segment, Trump Watch.
President Donald Trump on Tuesday marked his first 100 days back in office with a rally in Macomb County, Michigan, just outside Detroit and deep in auto country. In the space of just more than 3 months, he signed more executive orders than any other president, sent markets spiraling with tariffs. However, he signed a pair of directives easing the impact of his tariffs on the automotive industry, yielding to weeks of intense lobbying from automakers. Parts suppliers and dealers who want excessive levies could push up car prices, triggering plant shutdowns and job losses. Under the first executive order signed aboard Air Force One, imported automobiles were given a reprieve from separate tariffs on aluminium and steel, an effort to prevent multiple levies from piling on top of each other. The offset will reduce in 1 year to as much as 2.5% of the value of those cars and then be eliminated the following year, a bid to motivate domestic manufacturing. The offset will be available for cars that were produced after April 3rd. Online retail giant Amazon on Tuesday said it had decided against showing consumers how much U.S. President Donald Trump's tariffs have contributed to the price tag on its goods. Amazon spokesperson Tim Doyle said the team that runs low-cost Amazon Haul Store considered the idea of listing import charges on certain products, adding that this was, however, never approved and it is not going to happen. The clarification came after a strong rebuke from the White House when Secretary Leavitt called the reported plan a hostile and political act by Amazon. That's all for today. Now back to you, Hormaz.
Yeah, thanks a lot for that. And moving back home now and continuing with our developments on IndusInd Bank, where its MD and CEO Sumant Katpalia stepped down after the derivative accounting lapse. This follows the resignation of Deputy CEO Arun Khurana just a couple of days earlier. Ritu is here with all the latest developments. Ritu.
Well, thanks for that. The accounting lapses at IndusInd Bank are triggering some top-level exits, just as we had reported. And a day after the Deputy CEO Arun Khurana stepped down, we now have the bank's CEO Sumant Katpalia stepping down from his position a good 11 months before his term was to end in March next year. For now, the board has sought RBI's approval to constitute a committee of executives who will discharge the duties, roles, and responsibilities of the CEO in the interim until a permanent CEO is appointed. Now, our sources indicate this committee will be formed very shortly once RBI's approval comes in. Now, this is a clear fallout of the accounting discrepancies at the bank's derivatives portfolio, where the incorrect accounting led to a near 2,000 crore rupee hit on the bank's P&L, and that comes on top of the 600 crores of discrepancy in the microfinance portfolio, which is currently under audit. So all of these are expected to, of course, be factored in the fourth quarter earnings, which are due in the next few weeks. Now, in his resignation letter, Sumant Katpalia has said that he was resigning in relation to the ongoing derivatives discussion, and he said, and I quote him, "I take moral responsibility given the various acts of commission or omission that have been brought to my notice," end of quote. Now, the resignation also comes just a few days after the bank disclosed that an independent investigation by Grant Thornton had identified the key individuals who were held responsible for these issues, and the bank had stated that the board would determine the changes that were required and realign the senior management responsibilities based on these findings, which is what we're now seeing play out. We understand the outer limit for the committee to function in place of the CEO is 4 months, so the expectation is a new CEO will be in place before that.
Ritu, thanks a lot for that, and watch out for IndusInd Bank today. The stock has moved up almost 23% in the last 1 month. But the big earnings from yesterday, Bajaj Finance were numbers reporting after market hours. Abhishek is joining in with the fine print. Abhishek, good morning.
Morning, Homer. So the Bajaj Finance are both the NI and PAT were below our poll, but the key point to note is that the FY26 guidance has been trimmed versus the FY25 guidance that was there. So 14 to 16 million customers addition seen in FY26 versus 18.2 in FY25. AUM growth rate to slow down to 24 to 25%. Earlier guidance was that AUM growth will be in the range of 25 to 27% in the long term. A net interest margin to remain stable. However, cost of funds can decline by about 10 to 15 basis points. Now, fees and other charges will grow at 13 to 15%. This is weaker than the loan growth, suggesting that there will be weakness in the fee income as well. Credit cost to be in the range of 1.85 to 1.95%. Earlier, the guidance was 1.75 to 1.85 for FY24. However, they had surpassed that and reached nearly 2% without the one-off. So, credit cost remains high. With respect to ROA, that will come down to 4.4 to 4.6% range. Earlier guidance was 4.6 to 4.8% range. ROE will come down to 19 to 20%, from the earlier guidance of 21 to 23%. So the guidance remaining weak and the P&L below our poll, you can expect the stock to be under pressure today. Back to you.
Abhishek, thanks a lot for that. And moving on then, Prime Minister Narendra Modi asserted that the armed forces have complete operational freedom to decide on the mode, targets and timing of India's response to the Pahalgam terror attack as he chaired a meeting with the top defence establishment. Parikshit is here with more details on this. Parikshit, good morning. What are you picking up?
Well, the Prime Minister chaired a very important meeting with the Chief of Defence Staff, the Defence Minister Rajnath Singh, NSA Ajit Doval, and the 3 service chiefs. And the message was very clear that there is a national resolve to deal a crushing blow to terrorism. He also said that all the 3 forces have complete operational independence to carry out a retaliation, carry out a response to the Pahalgam attack. Now, this does indicate that India is working on options which would be a calibrated response to the Pahalgam attack, a calibrated military response. How that happens, when it happens, we don't know. But I think the strategy would be to keep Pakistan guessing. Today, there is an important meeting of the Union Cabinet. There is a CCPA, there is a CCS meeting as well. There was a call from the opposition to have a special session of Parliament to discuss Pahalgam. Let's see if that comes up in the Cabinet meeting. But clearly, there is a political will to have a strong response to what has happened in Pahalgam. But it could be some days before we actually see it. And the government would also have to have a surprise element to that.
All right, Parikshit, thanks a lot for that update. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Well, I'll start with the crude prices, where we've seen 2.5% of decline in the overnight market. It's trading at a two-week lows right now. So the crude oil prices, if you look at the overall month of April, we are down by 15%. This is on the back of shifting global policies. This is weighing on the demand outlook as well. And the U.S. consumer confidence numbers that came in yesterday also fell sharply, weighing onto the prices. And then in addition to that, the U.S. crude inventories have gained. The OPEC and allies will add more crude from the month of May. So everywhere that you look, there is higher supplies and demand uncertainty weighing onto the crude oil prices. A quick word on gold, and that has seen a decline of 1% overnight. Good news really for Akshaya Tritiya buyers today, because gold prices have come off its all-time highs of almost ₹1 lakh per 10 grams to around 94,000 rupees per 10 grams right now. Well, there is also optimism on de-escalation of trade war between US and China, and various strong positive statements coming in, and that is phased out the safe haven buying in gold. So longer-term investors, I think it's a great day to buy, and especially this being Akshaya Tritiya today, you will see those numbers come up today.
Interesting. Manisha, thanks a lot for that. And getting you some important national updates now. President Draupadi Murmu has approved the appointment of Justice B.R. Gavai as the 52nd Chief Justice of India. Justice Gavai is set to assume the highest judicial position in the country. He is the second ever Chief Justice from the scheduled caste community, following Justice K.G. Balakrishnan, who retired in 2010. Justice Gavai is set to take oath on the 14th of May, and the current Chief Justice of India, Khanna, is due to retire on the 13th. And with that, we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for the day's trade.
உள்நோக்கத்தோட அரசியல் ஆதாயத்துக்காக தமிழ்நாட்டோட சட்டம் ஒழுங்கு சரியில்லைன்னு பேசுறவங்களுக்கு சொல்லிக்கிறேன், இது மணிப்பூர் அல்ல, இது காஷ்மீர் அல்ல. உத்தரப்பிரதேச கும்பமேளா மரணங்கள் இங்க நடக்கல, இது தமிழ்நாடு.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Wednesday morning, we're coming to you live from the CNBC-TV18 Motilal Studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi. Good morning. Prashant, all hopes on you. Yesterday, the amount of news flow from the US market, Trump speaking, Lutnick speaking, I think everybody was speaking. At some point, there was obviously the Besant commentary as well. Yeah. I gave up. But I think at the end of it all, it's good news, right? So that's what matters.
So, bolte hain, Saransh kya hai? Saransh is all one thing, which is that India is first in line to get a deal.
Deal ho rahi hai.
That's the one thing.
So that's good
By the
news.
way, they were all speaking because Trump has completed 100 days.
Indeed. Yeah.
So it's 100 days of Trump, and I think...
And lowest ratings ever, I think,
only
of a
100
US
days
president.
and a few more years to go. So, get used to that roller coaster ride. And, overnight, besides all the talk on trade and the tariffs, he also said that maybe he knows a thing or two more than Powell on interest rates. So not stopping short of any kind of action.
Yeah, there was this as well. Knows more than the Fed chief. Nice.
On interest rates.
Let's just quickly take it from the top then in terms of what you need to know as we begin a fresh new trading session. So I'll just sort of quickly wrap up all the comments which came through from the Commerce Secretary, the Treasury Secretary, and of course the President himself on the India-US bit, right? So President Trump said that trade talks with India were, and I quote, coming along great. So that's coming in from the President himself. Then you had the US Treasury Secretary who said that US and India are close to a deal. He basically said this, that is Scott Bessent, he said this because tariffs in India were so high, I mean, they're so stark, and non-tariff barriers, which are much harder to deal with, they are low. So in that sense, I mean, India is kind of a deal is pretty close. Now, Commerce Secretary Lutnick essentially said that have reached, and this was interesting, he said have reached a trade deal with an unnamed country. And he said that, and the quote was, I have a deal done, but I need to wait for their Prime Minister and their Parliament to give its approval, which I expect shortly. These are comments which I think the market read very clearly to mean that this is essentially coming through for India. This is the Commerce Secretary, not the Treasury Secretary, who made these comments. But let's sort of rewind the clock back a little bit more and look at what the US markets did. So equity indices up for the sixth trading session. The S&P up about 0.6, the Nasdaq up about 0.5%. The 10-year was down about 4 basis points, 4.17. That yield, that is. Oil prices, another 3% cut, by the way. This is $64 on oil. And more, I mean, what's the reason behind these drop in oil prices? You've got to sort of, it depends on who you ask. The most kind of widely talked about explanation is the fact that maybe the US has kind of left the talks with China on the side. And they're sort of working with 15 to 17 other countries to arrive at trade deals. But the point is, for global demand, what matters, of course, is a US-China deal which is nowhere in sight. So oil taking a bit of a sort of, a move lower. There was some data as well. Trump, of course, signed an executive order easing the impact of his auto tariffs. Actually, there were 2 orders which came through with regards to auto, but there is some easing which has been done. So essentially to avoid stacking of tariffs on steel and aluminum on top of each other. So in terms of data, Joel's job openings is unexpectedly missed expectations. The April consumer confidence dropped to its lowest level since the COVID-19 pandemic. And all of this will have an impact when we get the GDP numbers, which is later today. So tonight, you'll get the ADP the private employment figure, the first quarter GDP and consumption data, PCE, etc. as well. So all important. But I think, will all of this really show the impact of tariffs, etc.? Because this is slightly all backward looking. So will be the jobs data, which we will get on Friday. And that is the reason why the PMI numbers are being watched more than anything else. Big earnings today, later today, you have Microsoft and Meta, which will report numbers. And I think we'll need to watch those as well. So, yesterday the market here, just to come to levels, ended absolutely flat. We've had a pretty good run. Monday was super strong. Yesterday was flattish, although mid and small caps did better than Nifty and Bank Nifty. So the levels don't really change. The upside level is still the 61.8% retracement of the entire fall, 24,546. Support comes in at about 23,850. The Nifty Bank upside level is the same range which we've been putting out for the last few days, 56.98 to 56.631. And the downside level is Friday's low, 54,176, is an important downside level. GIFT Nifty will come up on your screen should give you a quick sense of how we're likely to start. About 90 points lower on the GIFT Nifty. Remember, a lot of what we heard with regards to US-India, I mean, I didn't find anything really new except to maybe, hammer in the point of urgency that, the fact that we have a deal with an unnamed country seems to suggest that, well, something is done, at least a MOU, the contours, the framework deal is done. The actual nitty-gritties of the deal, I think that may still take time, as I think we've discussed many times in the past. Surabhi.
Yeah, absolutely. But for what it's worth, there's a deal happening, but what those specific tariff lines are going to be and how much lower than 26% will the eventual numbers be, that we need to see. Anyway, markets across Asia, lots and lots of domestic news flow as well as lots of news flow across Asia. Markets in the region are a little somber, very range bound. We're not seeing outsized gains, flip-flopping around the flat line today, a little bit of red, a little bit of green out here. And the reason for the caution is twofold. One is that the Bank of Japan has started its policy meeting. It's a two-day meeting which is kickstarted today. The street expects no change at least in the interest rates. They will be left unchanged at 0.5%. That's the basic assumption. But let's see if the BOJ has something in store given the uncertainty around trade. Japan, by the way, is the other country apart from India. So Japan, India and South Korea are seen as the first in line to get that deal with the US. There's data out of China as well, and that data is telling us that this whole trade conflict is indeed beginning to bite, because look at that number. The manufacturing inputs from China not looking too good. Manufacturing activity, this is the official PMI, the Chinese official PMI that's come in. It has slipped into contraction territory. 49 is the reading for April. The expectation was around 49.8, so it's a little lower than expected. That's on the manufacturing side. Now let's come to the Indian market. What we have seen is actually a very, very good April, given all the ferocious headlines, the volatility. 5% up, that's the Nifty in the last 1 month or so. However, now in the last 1 or 2 sessions, what we're seeing is that the Nifty is getting into a bit of a congestion patch. Even yesterday, we had good cues coming through, strong institutional flows, but it's unable to really take out this zone of 24,400 decisively. That's become a bit of a congestion patch. Yesterday's flows numbers are on your screen and they look pretty good once again. FII is buying in almost 2,400 crores in the cash market, about 1,400 crores coming in from the domestic institutions, so no problems there. So let's see if the Nifty can punch through this slight resistance level or not. Now let's come to the news flow, and there is tons of it domestically. Just some thoughts on the table. Bajaj Finance, of course, we'll analyze the numbers, which look pretty okay, quite stable. More importantly, there is a stock split and there is a bonus issue. Stock split is for every 1 share. Now you'll have 2 shares of Bajaj Finance. So that usually perks up retail demand. And there's a bonus issue, 4 shares for every 1 share is held. So watch out for this. SBI is looking at raising equity capital after quite some time. There's a board meeting on the 3rd of May, and they're looking to raise equity via either an FPO, rights issue, etc., or even a QIP. That's in focus. And IndusInd Bank is going to be a watch point. Now, Mr. Katpalia has resigned. You can argue that's fine. That was coming. It was always known. But when we spoke to Mr. Katpalia in the on-air interactions earlier, he had indicated that he will sort of, see the bank through this period and then, complete his term. That's not happened. The resignation is immediate. And he says, and I quote, if we have the quote, we should have actually put that up. I take moral responsibility for various acts of commission and omission. That's what he is saying. The bank has now sought the RBI's nod to form a committee which will carry on the responsibilities and the duties of the MD and CEO in the interim. So there is a leadership void suddenly at IndusInd Bank. Let's see how the stock reacts to that. And last but not the least, also watching the geopolitical situation. Yesterday, there was a very high-level meeting with the Prime Minister. The Defense Minister was there, NSA, the Chief of Defense Staff, and all the Chief of all the Army staffs. They were all there. And the Prime Minister has said that the armed forces have complete freedom now to decide on the mode, on the targets, and the timing of the response. So this uncertainty continues to loom as well. So lots of cues to digest this morning. Nigel.
Well, that's right. And add to those cues, that's Akshay Tritiya as well today. So happy Akshay Tritiya to all those gold watchers as well. Well, let's focus on the top cues for the day. Well, the top one is going to be about India and the United States. There's a possible deal in the offing. We'll have to keep an eye out on that. Besides that, all eyes on the border as well. And the street is waiting by. There has to be some action on the border, and that could play out in the next few days. So that's why there are select participants in the market that have raised some cash for this event because normally you get a knee-jerk reaction and then in fact the market moves on. So that's the second point. And the third point is today is Nifty weekly expiry. So those are the top factors that we're tracking for the day itself. Well, moving to what the FIs did in yesterday's trading session, they're adding more longs than shorts, and that's precisely what played out yesterday as well. So you have the short positioning that's added around 56%. That's at a multi-month low. Even if you look at it in absolute terms, the net short positions at around 20,000 contracts ballpark, well, that's at a multi-month low out there. Even the client positioning has moved into the net short positions by close to around 20,000 contracts or thereabouts. Well, moving to what went on yesterday, besides the cash market action, there appears there was some unwinding of positions on the Nifty Bank. We've been making this point that the RSI, which is one of those crucial indicators that you track, relative strength index, that has been holding around that 70-odd mark. It cooled off a little bit, but it's still at around that 70-odd mark, which technically suggests that it were a bit of an overbought zone. So there was some unwinding of longs on the Nifty Bank in trade yesterday. The options data should come up, and it's going to be important because today is the weekly expiry. So 24,400 call, 24,500 call, both of them were fairly active in yesterday's trading session. But on the downside, you have this 24,300 put that added a good amount of open interest, and the premium was around 50 rupees or thereabouts. So that brings us to the levels. Now, the last few trading sessions, numerous times you have gone to 24,350 to around this 24,450. Last 5 sessions, we have continuously been going to that range, and in fact, that range has been getting rejected. So this becomes a crucial resistance then. 24,450, 24,500. The bears, they want to defend this mark. On the downside, going by the options data, we're going to be starting off closer to this mark. But that should be the level that you want to defend on the closing basis. 24,200, and you do want the index, the Nifty, to trade below that mark for a longer period of time during the course of the day. Otherwise, the bulls will see some kind of unwinding of position. So we'll keep an eye out on that. The Nifty Bank, for the last many trading sessions, I've been making this point, 56,000 mark. That's a crucial mark. That's a crucial resistance zone. And just look at it. In the last few days, quite a few times we visited that mark, but we're unable to conquer that mark on a closing basis. So this is the important mark that the bulls will be tracking very closely. For starters, we start off in the red, but we're going to be starting closer to around the 24,200 odd mark. On a closing basis, you'll want to defend this mark.
Well, a lot to do and a lot to track in terms of specific stocks, in terms of the broader market. We'll continue to do that. Nigel, thanks very much for that. So let's just play out some of those sound bites, right? Trump, with regards to what he said, Scott Bessent, the U.S. Treasury Secretary, and of course, Commerce Secretary Howard Lutnick as well. Listen in.
India's coming along great. I think we'll have a deal with India. The Prime Minister, as you know, was here 3 weeks ago, and they want to make a deal. We'll see what happens.
India, in a funny way, is easier to negotiate with than many other countries because they have very high tariffs and lots of tariffs. So it's much easier to confront the direct tariffs when, as we go through these unfair trade deals that have been put in over decades, that the non-tariff trade barriers can be much more insidious and also harder to detect. So a country like India, which has the posted and ready tariffs, it's much easier to negotiate with them. So I think the India negotiations are moving well.
Every country in the world, just like Donald Trump has said, wants to do a deal with us. Now, here's the point. I have a deal. Done. But I need to wait for their prime minister and their parliament to give its approval. And then there are country after country where we're just working through the details. But you have to remember, they have prime ministers, they have parliament, they have to work through their process. But all of these are going to be coming. And what they're going to be is they're going to be incredibly smart, incredibly thoughtful. They're going to unleash the ability for us to export to them to grow. And they are going to also protect our industry so we can grow. And I think our GDP is going to pop from there.
Well, a deal is coming, and pretty as clear as it can get. But of course, Lutnick did not name the country in question. John Stolfutz is Managing Director and Chief Investment Strategist at Oppenheimer Asset Management. John, good to have you with us here. Thanks very much. Looks like at least a framework deal should be announced whenever earliest possible. That seems to be the indication from everyone in the Trump administration with India. What do you make of it, John, and what will it mean for India? Because, I mean, it's widely acknowledged here that the impact because of these tariffs to the Indian economy is not that large because we're not a big exporting nation to the US. but the impact is indirect through global markets, etc. So we get a deal, but I mean, there's this. Does it clarify things a lot for investors here, stocks here? What's your sense?
Well, we'd have to think, first of all, thanks for having me on the show. It's great to be with you, especially in these times. Would have to say this, I think what we really need to look, what's the real goal here? And a lot of that has to do with the diversification of the global supply chain, with India likely a major beneficiary of it. So I think in terms of, for India, there's opportunity here. The clarity that was expressed, at least in the point of the view of the administration in the States from Besant, is that it's much clearer what the negotiation points are with. I think it's up to Prime Minister Modi and his team in the meetings that they have with the U.S. and Trump administration. I think is what we'll see. So I'm waiting eagerly to hear how these things work out. But we are very big believers that this is not the end of globalization, but rather is re-globalization away from a one-country-centric global supply chain. And we think it will benefit countries large and small, both developed and emerging in the process. We do, by the way, though, are wary of high tariffs. We're not exactly great fans of tariffs, but we do realize that the administration, at least from the president's perspective, sees it as a negotiating point. We wish it could be done another way, which would be less worrisome to what we've seen earlier to the markets.
Hi, John. That's an interesting point, that this is not the end of globalization. In ways, it's re-globalization. That's an interesting way to look at it as we see those supply chains shift. So as we're dealing with this flux, because it's going to take a while, right? I mean, deals with which countries, where are these trade flows going, where does manufacturing shift? As all this happens, in terms of the equity call, where do you see the U.S. market itself?
Well, the U.S.
Yeah, sure. Carry on. Yeah.
Great question. The U.S. market, it's interesting to note, from the start of the year until February 19th, was up about 4.46%. And then it took a spill where it was down almost 19%. A lot of that on worries related to what would happen in terms of these tariffs. It was after the April 2nd tariffs. A lot of people expected tariffs would be much milder or would be much more exemplary of what might happen, but not so drastic. And then since then, we've seen the S&P 500 rally 11%. And if we look at the sectors that have really done well in here since the bottom so far that we saw, which was on April 8th, the S&P is up 11.6%. Information technology, I mean, I find this hard to believe, is up 16.4% from its low. Consumer discretionary is up 12.7. I'm looking at a Bloomberg terminal here. Materials up 12.27. Industrials up 11.87%. And I won't belabor what the rest are. But if you look at that and Q1 earnings results, which show a number of key sectors, including technology, consumer discretionary, and healthcare, a double-digit earnings growth with only 3 sectors negative a double-digit earnings growth, and those, as I recall, are materials, energy, and the third one at this hour of the night in New York fails me. But my point is, it looks like the market is telling us a great place to be is not joyously optimistic, but certainly constructive on the market. And looking to see where the most damage was done, which is likely where some of the best performance will be in aggregate coming out of this.
So you don't see a major dip. You don't sound too concerned about U.S. equities. That would be the right way of looking at it, right?
Well, the thing is, really, I think that in terms of from observers of this market, I think this was very much, at least in sentiment, was similar to what we saw at times during 2022, when a negative outlook is what really brought the market down, because most of what was predicted by the bears in 2022 A recession didn't happen. Drastic drops in employment didn't happen. The economy didn't fall apart. All of this stuff, what it was remarkable sentiment that was generated from communities within market participants in the States. And it was bought until about October of 2022. And that's when the rally began. The bears still thought there was going to be a recession in 23 and 24. Didn't happen. And the Fed has done a great job, we believe, in that it raised rates 11 times from March of 22. And then it went on to 9 pauses and then began 3 cuts without a recession. And we think a combination of the Fed and hopefully a lessening in the extreme nature of the tariffs and the negotiations will enable a rally here that will be sustainable and economic growth that, if at a modest pace, as we go through the first hit of the tariffs, will be remarkably sustainable.
Sure.
All right, John, appreciate you staying up late for us, but very quickly, if you could tell us, where does India feature in the list? Because if you're talking about the month of April, it's actually belonged to the Indian markets. We have been relative outperformers. FPI flows into India are positive, while other emerging markets haven't seen positive flows. So we believe we're in good space. What's your take? Where does India come in the pecking order?
Well, we certainly are very pleased with it because when in our view of this reglobalization, we see countries that include India, Korea, Japan, that's South Korea, Japan, Mexico, and a variety of other countries across the board will likely do very well from this. And India, because of the scale, size, and the sophistication that it has proven in various areas related to technology, related to medicine and logistical systems and things. This is a real big story, and we think this is still very early in the story, and it's a nice rebound from a period where, like the U.S. markets, it experienced a retracement of significant advancement, and now it's coming back nicely.
John, it's a pleasure. Thank you very much once again for being here with us here on CNBC TV18. Well, let me just quickly run you through what's lined up here in the next 2 hours or so. So you'll hear from N. Jayakumar of Prime Securities at 8:35. We talk markets. We have Jyoti Gupta of Nirmal Bang Institutional Equities Research. We talk about defense there. Stocks, of course, rallied hard yesterday. The index was up 5%, 920. You'll hear from Manish Sodalia on markets and the road ahead, 9:30. This management is see it with us on the fourth quarter numbers. We have Sachin Raole of Praj Industries speaking to us at 9:40. A little later at 9:50, G. Shivkumar of G Shipping will speak with us about the impact of tariffs in the shipping industry. And of course, it's the economy at 10:15. And Lata will be in conversation with the analyst at JP Morgan on how tariff wars will impact growth currencies and commodities.
Well, slip into a short break. Come back. We focus on all the top 10 stocks that we're tracking for you. We're looking at BPCL, Vishal Mega Mart, Star Health, Shuffler India, as well as India Mart Internivesh. That's India Mart that we're looking at. All of them positive news flow. On the flip side, IndusInd Bank, Bajaj Finance, Bajaj Finserv, 5-Star, as well as Praj Industries will be reacting to negative news flow. Slip into that break, come back. We'll get into further detail on all of these names.
Welcome back. So let's just take stock of cues across Asia once again. Those markets are very, very mixed. Last I checked, it was just around the flat line and not much has changed till now. The Hong Kong market is actually slightly lower. Yeah, there we go, 30, 40 points on the lower side. So very quiet across Asia. Let's bring up the implied open. For us, obviously, the geopolitical angle becomes an additional watch point, and maybe that's why 98 down. Remember, there was this meeting, very high-level meeting, Prime Minister, Defense Minister, Chief of Defense Staff, NSA, everyone was there last evening, so it's a wait and watch. Anyhow, lots of stocks to track as well as we're looking at all the market news flow this morning, and our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning to all of you. Lots of numbers. So, Abhishek, let's start with Bajaj Finance and Finserv.
Begin with Bajaj Finance. The numbers were slightly below our poll. However, the key has been that the guidance for FY26 is lower than FY25. So take a look at the NI and PAT. They are below our poll. They have also announced stock split of 1:2, bonus shares of 4:1 ratio. And now FY26 guidance, they have guided for 14 to 16 million customers addition. This compares to 18.2 million customer addition that they had in FY24. AUM growth rate to be at about 24 to 25%. This is lower than the long-term guidance of 25 to 27%. Net interest margin to remain stable in FY26. They expect the cost of funds to decline by 10 to 15 basis points, YOY. Fees and charges will grow at 13 to 15%. This is lower than the AUM growth guidance. Credit cost to be in the range of 1.85 to 1.95%. Last time they had guided for around 1.85 to credit cost, but they have overshot it. And for FY24, the credit cost has come in nearly at 2% x of one of pools that they have created. So ROA guidance has been lowered down to 4.4 to 4.6%. Earlier guidance was about 4.6 to 4.8%. And ROE guidance has also been trimmed down to 19 to 20% range versus the 21 to 23% that they had earlier. In terms of Bajaj Finserv, the basic was our general insurance business that disappointed. The total premium declined by nearly 10% YOY and about 27% sequentially. The gross written premium in that was down nearly 13% YOY and around 35% sequentially. The claim ratio is the heartening point to see. That's improved to 62.9 versus 77.7% in the previous quarter. PAT came down by 4.5% YOY and about more than 9% sequentially. With respect to the life insurance business, that saw a good momentum on a sequential basis. So the gross written premium and the renewal premium were up 45% and 51% quarter-on-quarter respectively. However, the PAT declined by 61.3% YOY and about 81.5% on a sequential basis. Back to you.
All right, Abhishek, thank you very much for that. So that's a comprehensive look at the numbers from the Bajaj companies. Let's talk about BPCL, which reported numbers as well. Suraj here with details. Good morning.
Morning, Prashant. So surprisingly, it's reported a very strong set of earnings led by refining segment. It's likely that both its major refineries, that's Kochi and Mumbai refineries, have seen normalization after the planned shutdown that these two refineries had seen in Q3 of FY25. Even marketing segment was aided by the inventory gains. Now coming to the headline numbers, while revenue was down 2%, but it's almost in line with the estimate of rupees 1.14 lakh crore. EBITDA was up 2.4% and has come in at rupees 7,765 crore against our poll of 5,260 crore. Margin has improved to 7% against our poll of 4.6% and against 6.7% that company reported in the last quarter. Now coming to GRM. It has seen a sharp improvement in GRM, and as I said, because of normalization in two major refineries, the reported GRM has come at $9.20 per barrel against our expectation of $5.60 per barrel. Also, it has seen an improvement on a sequential basis. Now, inventory gains that company has reported was of rupees 520 crore and Citi was expecting of around rupees 50 crore. Now, all the eyes regarding OMCs would be on LPG compensation amount.
Okay, all right. Thanks a lot for that, sir. Well, let's hop across to Mangalam. He's here. He's tracking Vishal Mega Mart. Morning, Mangalam.
Good morning. So good numbers coming in for Vishal Mega Mart. If you look at the revenue growth at 23%, it's largely in line with the company's own historic trend of 24 to 26 odd percent. But the margin expansion is something that really stands out. So, year on year, the revenue has grown 23%. The EBITDA, however, has grown 42%, margin expansion of 200 basis points. And the net profit has nearly doubled, an 88% growth coming in from 61 crores to 115 crores itself. What is it that led the growth? Revenue growth was led by same-store sales growth of around 13.7%. But importantly, margins expanded because of one, revenue from own brands came in at 73%. The number last year was 71%. Sales from apparel are close to 26.5% higher. So that's growing faster, and that's reflected in their gross margins as well, which from 26.5% have increased to 28.4%. So more sales from their own brands, higher sales of apparel have led to a bigger margin expansion than the revenue growth itself. So see the stock in the green today.
Okay, all right, got that. So Vishal Mega Mart, stupendous performance. And I was just remembering, actually, as a contrast, Shoppers Stop has had another rough quarter. So study in contrast these two companies, catering to obviously different segments. Got that, Manglam. Thank you very much. Let's move on to the big news. IndusInd Bank, Mr. Katpalia has resigned from the post of MD and CEO. And Sudarshan, this is immediate, right? And they haven't even named a successor.
They have not named, they have just formed a committee. So first, there has been uncertainty around this bank because after Deputy CEO resigned just 2 days ago, now CEO has resigned. But talking about the stock, it's up 40% from the recent lows that it had hit on March 12 of rupees 606 per share. Now, company has announced that its CEO Sumant Katpalia has resigned effective 29th of April. And just 2 days ago, its Deputy CEO Arun Khurana had resigned. Now, RBI has formed committee of executives. It has named two people. First, Soumitra Sen, who is currently head of consumer banking, and the second member is Anil Rao, who is chief administrative officer. Now, these two members will be part of committee of executives, and committee of executives will work under the guidance of oversight committee of the board, and that oversight committee of the board will be chaired by the chairman, and currently Sunil Mehta is the chairman. Now, this committee will oversee the operations of the bank at least for 3 months or till the new MD and CEO takes charge. So just because of uncertainty around this bank, I'm going with red for today.
All right. So thank you very much for that. Well, 5-Star Business Finance is the next one we want to focus on. Abhishek is here with details. Abhishek, morning.
Morning, Prashant. So to begin with, the business momentum has slowed down a bit and the asset quality has deteriorated for them, which doesn't augur well in Q4. So disbursements are up 55.2% on a sequential basis. AUM growth has fallen below the 25% year-on-year mark. It's coming at 23.2% YOY and about 6.25% sequentially. Asset quality has deteriorated. Gross NPA ratio has inched up to 1.8% versus 1.6% in the previous quarter. The NII growth is at 21.5% YOY and about 4.5% sequentially. However, elevated provisions have meant that the PAT has grown by almost 2% on a sequential basis. PAT has lacked the NII growth on account of elevated provisions. Back to you.
Okay, all right, got it. Thanks very much for that, Abhishek. On to Star Health Insurance. Yash is joining in. Yash, how are the numbers?
Well, the numbers don't look good for Star Health Insurance in the fourth quarter. The premium growth, net earned premium, has grown at a decent pace of about 12%. The number that has come in here is about 3798 crore rupees. But operationally, the result seems to be really weak. Underwriting loss, that has increased 200% in the fourth quarter. The loss that has come in is 275 crore rupees versus a loss of 92 crore rupees. Operating profit and loss, the company is moved to loss of 87 crore rupees versus profit of 90 crore rupees. Combined ratio on a year-on-year basis has jumped by 642 basis points, coming in at about 99.19% versus 92.77%. PAT is just about 50 lakhs in the quarter as against 142 crore in the same quarter last year.
Okay, Yash, thanks for that. Well, let's hop across to Reema. She's here to tell us about India Mart. The stock was sensing, I think, good numbers, ended virtually at the high point yesterday. Reema?
Indeed, the stock was up more than 4% yesterday. Well, the numbers are not great, but they're not bad also. There are a few positives. So the top line growth is flat quarter on quarter, but year on year, there is a growth of about 12.8%. Margins have expanded year on year, but they're down on a quarter on quarter basis. And a higher other income has boosted the profitability of the company. So the profits have gone up by nearly 50%. But the problem for the company is their paying subscriber. That has been very anemic, and even this quarter, the growth is just 1%. The only silver lining is last quarter, the paying subscribers declined by 3,700. This quarter, they managed an addition. But it's still a far cry from the earlier run rate, which used to be about 4,000, 5,000 addition. This quarter, they're only at about 2,100. Collections on a consolidated basis have also picked up compared to the prior quarters at 11.8%. Back to you.
All right, Rima, thank you very much for that. Praj Industries and Schaeffler India in focus. Next, Vamakshi's got those. Vamakshi, morning.
Good morning, Prashant. Praj Industries reported a miss across the board. It was a weak set of numbers coming in from the company. When we look at the revenue, that saw a downtick of almost 16% on a year-on-year basis. The other expenses as well as the employee expenses, both of them saw an uptick of nearly 17%, and resultantly, the EBITDA margin came under pressure, down nearly 424 basis points. The EBITDA too came in nearly 43% lower. When you look at the net profit, that is coming at nearly 40 crores. This is a downtick of almost 57%. It's a miss across the board. But on the flip side, when you look at the order intake as well as the backlog, the order intake was up nearly 11.7%, while the order backlog was at 4,293 crores, an uptick of nearly 11%. So therefore, it seems like there was an execution-related issue which caused the miss on the numbers. But apart from that, the company also made another announcement. They said that they've joined forces with ThyssenKrupp Uhde. Then together they will be working on end-to-end offering for PLA, that is polylactic acid production. So therefore, on the back of weak set of numbers, going with the red for Praj Industries. But apart from that, keep an eye out on Schaeffler India as well, going with the green for this counter, and that is mainly on account of an improvement in the margins. Let's look at the numbers then. Revenue saw an uptick of almost 16%. The margins have improved from 17.6% to 18.5%, and the net profit has come in nearly 14.5% higher.
Okay, all right. So Praj, not that great. Schaeffler seems to have done better. Vamakshi, thanks very much. Let's quickly recap our list of stocks to watch. The ones that have positive news flow or positive earnings are BPCL, Vishal Mega Mart, Star Health. Star Health actually on the lower side, should be in red. Schaeffler India and India Mart Intermesh. Stocks with negative news flow are IndusInd Bank, Bajaj Finance, Bajaj Finserv, 5-Star Business Finance and Praj Industries. Okay, that's the stock list for the morning. Now let's move on to commodities. We've got Manisha Gupta joining in with a roundup of all the overnight action. Manisha, good morning. Trade deal with India is happening, but what else is moving the commodity markets?
Well, I'll have to start with the crude oil prices because we've seen 2.5% of decline in the overnight markets. And with this, crude is down 15% in the month of April, and it's trading at a 2-week close right now. The U.S. crude oil prices just about holding $60 a barrel right now. That is because of the shift in global policies, and that's weighing on demand outlook. The U.S. consumer confidence numbers came quite sharply yesterday. And then the markets are dealing with higher supplies as well. Remember, the OPEC will add 411,000 barrels from the month of May. And the U.S. crude inventories have risen by 3.5 million barrels. U.S. also is producing record numbers of oil right now. So everywhere that you look, you have higher supplies and demand uncertainty, and that has been weighing on crude oil prices. A quick word on the gold prices, and it's Akshaya Tritiya today, and the prices have seen a 1% decline in the overnight market. Well, that really leads to better buying expectations in the Indian markets right now. But the global crude price is clearly reacting to the optimism on the escalation of trade war between U.S. and China. Also, the U.S. global investors do believe that the gold price estimates will be on the higher side by the time this year ends. We still have those banks reiterating 3,500 to 3,800 by the end of this year.
All right, Manisha, thank you very much for that. So that's gold and Akshaya Tritiya today. So we've been, of course, telling you about the stunning rise in gold prices for a while now. And of course, we'll continue to put the spotlight there. We have N. Jayakumar, Group CEO and Managing Director at Prime Securities, joining in for some market conversation. Stay tuned, coming up. Welcome back. There's 20 minutes to go for the pre-open session. N. Jaikumar is now with us, Group CEO and Managing Director at Prime Securities. Jakes, good morning. Good to have you with us here on the program. You know, the last time we spoke, you were very confident that to get a deal with US done is going to be straightforward. And you kind of sort of presented that calculation about how we could knock off the trade deficit with the US by buying from the US, some of the stuff that we have to buy anyway. And I think all the confirmation which is coming in from Trump downwards in the administration seems to suggest that we are first in line to get a deal. So bang on there. We'll come to that in a bit, but let's just start with an individual situation which I think is top of mind for viewers today. IndusInd Bank, Jakes. What is your sense? I mean, trouble at the bank with the derivatives portfolio. Now we are seeing top leaders leaving, a committee being appointed. Your thoughts on the stock?
Good morning, and thanks for having me over. As far as IndusInd is concerned, I actually believe that, like markets discount bad news ahead of time, this is actually the beginning of the resolution process in a sense. This is not, this is not something to be viewed, separately from what's already been happening. The change of guard or the change of leadership was a matter of time, and it's happening. In fact, if anything, clarity will emerge going forward. And my own assessment is the beginning of the end of the troubles, in that sense, is the way I'd look at IndusInd Bank.
But, Jakes, you won't see this leadership vacuum as becoming a bit of a concern at a time when banks will be sort of powering ahead with rate cuts, etc., moving on the growth pedal. Basically, is there downside to the stock? Because now suddenly, this is a new situation. The fact that he was going to leave was always known. But now that there is a sudden vacuum because of this.
Vacuum may not be for long. I mean, I'm fairly sure that the management board and RBI included would not have been sort of sitting back and waiting for this to happen before starting a search. My own assessment is that the search is probably already underway and probably close to coming to an end. Wouldn't surprise me to see a new person at the helm being announced pretty quickly.
All right. Hi, Jakes. Morning. Good to see you in. And I think RBL Bank is another stock that you've been tracking closely. Is the worst behind for them?
Don't like to talk stock specific in that sense, but yes, I have been pretty public in my pronouncement of the same. They've been ahead of the curve on a whole bunch of things, including provisioning, etc. And I think the management commentary post results were very heartening. And that apart, the disclosure that I would have a vested interest, as would Prime, and in terms of investments and other mandates. But to put it simply, I think the worst is well behind.
Okay, all right. Jakes, in the past, you've got the timing on a couple of Ferris names as well, very correct. Now you have a special situation that's playing out on Vedanta. And that's something that you've liked. Besides what's happening on the globe, actually the stock appears very, very well placed. Even if you take into account what Mr. Agarwal does next is anyone's guess. But this demerger seems like a value unlocking proposition. What's your take?
To put it very simply, yes, it is value unlocking. Equally, a lot of institutional investors will actually find the split pieces, 3, 4, 5 companies as the case might be, too small to hold. So like ITC Hotels got sort of, in a sense, sold off by people who found that the value of that particular piece was much smaller than what their portfolio would permit. So you could have a technical situation post in terms of institutional investors, but you could have a great situation in terms of individual and HNIs who would find the individual pieces far more value accretive than an agglomerated whole, as is the case as of today.
Got that. Jakes, so 2 questions. One, apart from individual stocks or areas that we've discussed, where else are you finding, where else can one take positional calls from here? And second, we've seen foreigners coming back. What's the feedback that you are getting? Because it seems to be a step change, very different from what they've been doing for the last several months. And the problem, though, is very quickly the market gets into, people start complaining about valuations once again because earnings growth is still anemic. So your thoughts on these two?
My resolution and also the mandate from you was to keep the answers short, shorter than the length of the questions. So
that's a nice one, Jakes, but go on.
It's clear the foreigners are coming back big time. Yeah. B, we did talk about the end of American exceptionalism, if you will, or at least a shift from America to the rest of the world, where the dollar index is a leading indicator of what's happening. So if you want to look at something, forget looking at the stock markets in the US, look at the dollar index, and I think that's telling you where the money flow is. And it's well and truly below 100, in fact, straddling 99 as we speak. Number three, for the first time, you have a confluence of three factors. Locals continuing to buy, which means that the flows into the local institutions is continuing, and a lot of people who are sitting on the sidelines in terms of funds with larger allocations of cash are redeploying that. This confluencing with foreigners coming back and the heightened panic or the heightened nervousness there is amongst HNIs and individuals. I've never seen a confluence of these three, foreign and local flows, plus individuals and HNIs actually fearing war and so on and so forth, and portfolios having gotten lightened over a period of the last few weeks. And all this points to a much higher markets in the weeks to come.
Okay, sounding good. When flows are in, then all bets and all arguments pretty much fail. Finally, Jakes, PSUs and specifically defense stocks, they told us when we were going through this 5-month correction that the new bull market will have new leaders, etc. But look what's happening. I mean, Mascot Dock in blue sky territory, many of these stocks barely off their 52-week highs now. What would you advise here?
I think the issue with PSUs has been order execution, at least in the spaces that you mentioned. So that will continue. Simply because there's a greater threat of war doesn't mean that something has changed overnight. Some of these things take time for orders to come and orders to get executed. So I think that continues. Most of them had good order books in any case, and spending on defense was already on the rise even before this particular set of events in recent times. So keeping that in mind, I think the PSUs are still a bottoms-up story. You need to go into individual spaces, not sectors as a whole. But I also think the government will use the next 12 to 18 months to actually divest their stakes and get divestment targets going in a lot of the PSUs.
Okay.
Got that. By the way, the last point, I just wanted to clarify, Jakes, you said, so institutions, both local and foreign, are buying, but you're saying amongst HNIs, there is a bit of a panic. The need to get in that panic, or are they worried about this escalation at the border?
I think there's a lot of worry. I think a lot of talk in recent times that I've heard about preservation of capital, uncertainties in the world, paradigms have shifted. We can't expect things to happen when the world's number one person is sitting on $400 billion of cash. Who are we to make a call on the markets? So this kind of conversation has been on. And more recently, of course, the war and the attendant fears around the war. So for the first time, macro issues are dominating micro investing. And I think that's a good call if, large sections of the audience are worried. And you have foreign investors with allocations coming through. For the first time, I may say, in many quarters. I think it's a sign that, we are where 21,900, 22,000 got defended. Maybe 23.5 to 24 has become the new 21,900, 22,000.
Ah, there you go. You left us with some sort of a, price understanding of these issues as well. So perhaps 24,000 is the new base for the market. Very helpful conversation, Jakes, this morning.
Surabhi,
Thank
just
you.
wanted to say that, Jakes, all the best for the conference tomorrow, the Springboard Conference. This is, I'm looking at the schedule, a pretty interesting one. And of course, we are partners, CNBC-TV18 are partners as well. So pretty good lineup of guests, etc. So wish you all the best of luck. And I hope this is the first of many that we are.
Thank you. And, delighted to have CNBC as partners. In fact, I may add the best in class in that sense from a media perspective and from a venue perspective that the Indian Hotels is also part, is the venue for this. So quite looking forward to this and hoping to make this an annual startup convention.
All right. Absolutely. Thank you very much, Jakes, and good luck with that particular conference. The GIFT Nifty should come up on your screen quickly, and we should just see if it's still down about 90, 100 points, as it was indicating, about 100 points still lower. And I think the last point was instructive. The fact that HNI seemed to be a little worried about all kinds of things. And of course, at the margin, the latest new thing is this India-Pakistan escalation, potential escalation, which they seem to be worried about. But I think we have Prakash Diwan with us, guys.
Yes, we do, Nigel. So lots of earnings, lots of stocks to discuss.
Well, that's right. Let's focus on a couple of big earnings that came in overnight. And in fact, let's talk about the result actually that came in towards the end of close. That's Trent. Prakash Diwan joins us. Prakash, what do you think of those numbers? The fallen angel from 8,500 all the way to around 4,500. But yesterday, the street really liked the margin performance. You know, the gross margins were under some pressure, but the absolute reported EBITDA margins was something that pleasantly surprised the street. What's your take on the stock?
Good morning, Nigel. So definitely there's some silver lining to otherwise what would have been a disappointment. There is this very clear indication that value retail has been doing well. You saw how Vishal Mega Mart also kind of reported numbers, some of the other numbers that have come through. So there was very less likelihood that Trent would also manage to do it. But I think the Zudio magic continues to work. And you know what they've also done, if you notice on the ground, they've rationalized a lot of their stores. What is working well for them, they've expanded, doubled sizes in certain places. What's not working, they've actually moved out. And it's a very serious long-term plan that's kind of now getting to be unveiled. So we've seen Jio numbers, the retail numbers from Reliance. So there is a very clear unaddressed segment that's kind of getting into that organized space. Trent's taken advantage of that. Is it expensive after this fall? Yes. The numbers are great, but it's always been priced at a PEG basis where you try to kind of make it look reasonable. But I think it still looks a bit unreasonable to me. It is expensive. You'll have to wait for dips to add to it if you're a serious Trent fan. But the numbers at least give you that respite that something could happen very soon on that.
Okay, got that. Prakash, hi, morning. State Bank of India. SBI is looking to raise fresh equity capital. Doesn't happen too often. That, and of course, we'll be hearing numbers. In general, banking is the flavor of the season. Your thoughts on the stock?
No, I think, good morning, Sumesh. I think they're gearing up, building the war chest for the next phase of growth. Remember, SBI has been fairly consistent with credit growth even when the others struggled, for the simple reason that they sit on a very advantageous position as far as CASA is concerned. But the book that they run and the book that they could possibly run, given all the improvements that they have done in technology and the back end, is very clearly, and you'll be surprised if you look at the gold loan portfolio, that has grown so significantly, and we'll wait for the final numbers for the quarter to come through to see these metrics. But I think it's a very positive move. It will get a lot of opportunity for people to participate, particularly institutions who would be wanting to allocate much more money. I mean, I wouldn't be surprised if this fundraise gets completely overwhelmed by FI participation as well. I mean, of course, subject to limits and all of that, but there'll definitely be a very, very decent appetite for this paper.
Okay, all right. Prakash, very quickly, if you could tell us about Bajaj Finance. The numbers came overnight. They're also going to make the stock more affordable for the retail audience, post that corporate action. But the problem is that the stock has seen a big run in the last few months. So it's not as cheap as what it was. What's your approach to the name at around 9,000 rupees?
No, I do agree. I mean, even if it kind of comes down to 900 and starts looking affordable, there could be accumulation in different pockets. But remember, this is a space where beyond this, to grow is always going to be a challenge, and especially growing with a quality book to boot. We've seen the likes of Poonawalla Corp, all of these which have been very aggressive in terms of growth. So growth, which was one of the advantages that Bajaj Finance got, is no more kind of getting its premium. Quality is probably the other thing which it still has. But my concern is if you're on a treadmill and if you keep increasing the pace, at some point it's extremely difficult to get off without an accident. So that's where it is. But yeah, let's see if once the retail participation comes in, there could be distribution which could give some solidity to the stock in terms of these moves ups and downs. But right now, I think the up move needs to get digested after these numbers, and you will see this kind of petering out for some time.
All right, Prakash, got that. we'll say thank you for now, but we have more questions. Whirlpool, for example, is something I want to ask you. Stock was up big time yesterday. There is, of course, that potential stake sale which is going to happen. But last night, out of the US, there is news on Whirlpool that Moody's has cut their credit rating to junk for Whirlpool, the global entity. Any implications here, etc. We'll come back to this in a bit. We'll take a quick commercial break here. We'll come back with Sudarshan and Mitesh in terms of specific trading ideas. Stay tuned.
Welcome back. As promised, let's get our technical guest on the show. We have Sudarshan Sukhani as well as Mitesh Thakur who join us. Good morning, gentlemen, and good to see you all in. Well, we've got a market holiday tomorrow because Maharashtra Day, it's Labour Day as well. What's your take? The GIFT Nifty suggesting a 100-point downtick. Buy into that dip. Mitesh, you go first.
Morning. So yesterday I talked about taking profits around 450, 500 zones, and I think we got a high there. Broadly, my sense still remains that it will be a market which will go through a phase of consolidation with 24,500 broadly as the upper end of the range, while 24,000, or in the worst case scenario, 23,850 as the lower end of the range. Given the fact that we just hit the upper end of the range, I think today I won't be very eager to buy into the markets. But yeah, if we get more declines over the next couple of days, we get closer to the lower end, that's the time to buy the index.
Okay, got that. Mitesh, Sudarshan, morning. What is your call on the index?
Yeah, good morning. See, the market is in an uptrend. Now, within that uptrend, we will have small setbacks as we had yesterday, a small dip, as implied open suggests today. That's part of the normal. So my trade is still to go and buy any dip. The problem here is something else. We have only one working day in the next 4 days. So whether you want to buy that dip and take the risk is a personal preference. I would still say buy call options on for the next week and stay long.
Okay, all right. What we'll do is we'll take a quick commercial break here. We're going to come back with Sudarshan and Mitesh on the other side, and we'll ask them for their specific stock trades as well. Stay tuned.
Welcome back. Let's go back to our technical experts and get some specific stock ideas for the day as well. Mitesh, what's your stock list looking like today?
Honestly, after many days of all buy list, today I have a mix of buys and sells. Adani Enterprises is on the sell side with a stop at 23.70 for targets of 22.50. And BEL, mild decline. Say if you get a rupee and a half kind of a decline around 316, 315. Buy with a stop at 309 for targets of 330. A sell on Gold India with a stop at 395 for targets of 375, and a buy on Prestige. That had a big breakout yesterday. So Prestige is a buy around 1365 with a stop at 1320 for targets of 1450.
All right. And Sudarshan, let's come to you. Stocks for the day?
Yeah, it's a mix. It's a buy list, and there are two major sectors: financials and well, so-called defense-related stocks. So Tube Investments, which comes rarely in my list, is a buying opportunity with a stop under 27.67. AU Bank is a buy with a stop under 690, and then we come to those defense stocks. BEL, same as Mitesh, is a buying opportunity with a stop under 310, and HAL. And let me say that I have a very modest buying, portfolio in HAL. It's a buy with a stop under 45.17.
All right. Fair enough. Sudarshan, you may want to listen into the next sort of conversation. We are talking defense here. But thank you very much, Sudarshan and Mitesh, for joining us with those individual trades. Now, Prime Minister Narendra Modi asserted that the armed forces have complete operational freedom to decide on the mode, targets and timing of India's response to the Pahalgam terror attacks. He chaired a meeting with the top defense establishment yesterday evening. Those are visuals which came out of that particular meeting. Parishit is here to tell us what happened and, of course, what's the thinking now in New Delhi. Parishit, morning.
Well, the aim of the meeting was to give a complete freedom to the three forces to take any kind of operational decision to respond to the Pahalgam attack. So clearly, this means that there will be a calibrated response, which was expected. When that happened, that remains to be seen. But that was a show of strength. We've also been seeing how the Indian Army, the Air Force, the Navy, they've been carrying out military exercises in the country. There are very intense counter-terrorism operations happening all across Jammu and Kashmir, even as we speak. And this is ever since the Pahalgam attack. The situation at the border also remains tense. We've been seeing at least 5 or 6 ceasefire violations by Pakistan along the line of control since the Pahalgam attack. And just last night, we have seen a ceasefire violation along the international border as well. So there was small arms firing by Pakistani forces and Rangers. The Indian Army has been retaliating effectively. What is also happening is that there is an international pressure to de-escalate. The U.S. government has spoken to both Pakistan and India to de-escalate the situation, resolve things diplomatically. The UN Secretary General also called the Prime Minister of Pakistan, Shehbaz Sharif, yesterday, and the Indian Foreign Minister about reducing tensions as soon as possible. Clearly, there is international worry about any kind of major conflict between India and Pakistan. Everyone would like to avoid that, and that international pressure is also playing on India.
All right, Parikshit got that, but let's see. I mean, all the comments that are coming in are talking about what India needs to do to secure itself and, of course, avenge the death of 26 civilians here. Thank you very much for that. By the way, before we invite our next guest to discuss defense stocks, all of them were soaring, going through the roof yesterday. Before we get to that conversation, hear out what the defense secretary had to say as well. He was speaking on the reforms ahead for the sector, working towards cutting the acquisition timelines, as the defense acquisition timelines, and also talks about the GE HAL F414 engine deal, saying that the government is hopeful of seeing the manufacturing line kickstart by the end of the year. Take a look.
We've identified that there are various sort of processes involved in our procurement, which includes everything from cost negotiations to field evaluation trials to preparation of RFPs. All of these had certain timelines that were often very, very elongated. We've, through the DSC, we've already taken a view that many of these timelines are going to be compressed. Essentially, what we are trying to do is ensure and accept higher accountability within our system for the various collegiates and groups which are, for example, doing the FATs or doing the RFPs. As part of that, the DSC has already taken a decision in terms of compressing many of those timelines so that we take us several weeks out of this procurement process. Technology transfer for the General Electric 414 engine, that is a negotiation that is ongoing between the HAL from our side and GE on the other. That is making progress, and that will help us meet the requirement of a jet engine for the time being in the interim. This year, I hope so. This is being led by HAL. We don't get into the nitty-gritty of that negotiation, but on our part, we've been asking both players, GE as well as HAL, to try and expedite this so that our production schedule for the future Tejas, I think it's Mark II, doesn't get affected. So yes, that is something that we are nudging from our side, but the nitty-gritty of the negotiations we are leaving to these two agencies.
Okay, all right. So that was the Defense Secretary giving us an update on a lot of the critical contracts. Also spoke about the latest order with Rafale, the Rafale M fighter jets that the Navy has inducted, talking about a lot of opportunities there as well in the entire ecosystem. Let's quickly discuss this and more with our next guest. We have Jyoti Gupta, research analyst at Nirmal Bang Institutional Equities, joining in, who has, of course, coverage on the entire sector. Jyoti, thanks for being with us. You know, the pullback in defense stocks has been absolutely astounding. Many of them, like Mazagon, are already at all-time highs. BEL, I was just checking, is 6% away, and most others are between 15 to 20% away from reclaiming their old glory. Now, do you think this rush back into defense names is because of the environment and the mood and the sentiment right now? Or would you say there's a lot of fundamental reason to go and buy defense stocks as well?
First of all, thank you so much for having me here. The initial rally was basically on the order book, which I traded many times. Now it is the step up in execution. In defense, what we've really seen is the execution has never been more than 30 to 33%. Now, this is actually going to culminate into, actual deliveries of platforms and equipments. And that is, so fundamentally, yes, there is a huge reason why the stocks are moving up. The other thing is the kind of order book that we are seeing. While the government has locked in 193 contracts worth around 2 trillion rupees, and which is going to grow at 20% CAGR till 2030 to 3 trillion, I think this itself from 20% should actually increase to something like 25-30. Other thing is the kind of orders that we see is what we know in the public domain. So there's some companies, what they are actually announcing, the order book could be actually seriously quite higher than what is actually being announced in the press. So
Jyoti,
yes, and eventually when the execution starts happening, you'll be surprised the kind of numbers we'll be seeing going forward for these.
So Jyoti, I'm straight away getting down to stocks, because that's what everyone wants to understand. The opportunity we know and the order bookings we know, but it's going to boil down to soundness of execution, pace of execution, and reasonable comfort in valuations. You like a whole host of companies, including private sector names, as I can see here, Data Patterns, I think Bharat Dynamics as well. So just take us through some of the topics and why.
So my topic actually is HAL, if you see, and in fact, just a moment back when the Defense Secretary also said that we are stepping up pace of execution. So while we were not even anticipating one LCA being delivered, you could see maybe some higher number of LCA Mark 1s being delivered in FY26, and the timelines for Mark 2 is also being reduced. So therefore, while we are looking at, a book of, somewhere like 180 billion is what we were looking at HAL, this could actually be somewhere much higher than what it could be in FY27. By the time we even reach FY27, these numbers, the growth itself could be 30-40% revenues, while we have just factored in something like a 14%, very meager growth of 14%. The other thing is solar. Now, if you look at solar is a sole company which is making warheads and initiating systems. While they're saying a 135 billion book, the book is already crossed something like a 150, and I believe they would be sitting at a much higher order book. And when it comes to warheads, it's the only company in the country which is making for BDL, Larsen Toubro, and going forward for Adani as well. So you can imagine the kind of workload they will have in the next, 3 to 4 years. And, the timelines where we used to see something like 8 years, 10 years timeline, it is no longer there. You need, one, you have huge foreign orders, coming in to these companies, and the delivery timelines have been shrunk to almost like 2 to max 4 years. So one, there's a huge pressure of delivery and execution in these companies. The third company that I like is BEML. Now, in case of BEML, what you see is the execution delays are there. This quarter also, you will not see very great numbers, in fact, for a BEML. But FY26 should be a good year for BEML with the deliveries of the posters and the launch systems, because this is the only company which is providing launch systems to BDL for its missiles. They're not into anything else. Now, if BDL has to deliver missiles, they need launch systems, and therefore both have to work in collaboration and ensure that the timelines are met. So therefore, just...
Jyoti, running into market open, sorry, it's a fascinating conversation. Always great to speak with you, and you bring such perspective and depth into these sectors. I mean, cement and defense now, of course, as well. Which one is a portfolio stock? I use that word, which can be part of your core holdings, right, for the long term, and which gives you maximum kind of upside, in that sense, like more tactical. What's your sense?
Okay, so if I look at the 9 stocks that I cover, now within that, if you ask me surprise factors to come from, that will come from HAL, BDL. If you want me a stable growth, something which is going to give me an average growth of something like 8 to 9%, that will be BEL. Now, Data Patterns, another company which is going to do while people have concerns over their working capital. I think that's a short-term, concern which was there. This is going to improve for Data Patterns because the kind of, forward look, the thinking that they have in terms of the EW product platform, I really like it. I think Data Patterns, another company which will perform extremely well. You've seen 3 quarters of sluggish growth, but I think going forward, you'll see very good numbers for Data Patterns. Then Masgaon, which has done peak in FY25, that the government is going to be, finalizing orders of Scorpion. Obviously, the orders will be broken up between L&T, Garden Reach, and Masgaon, depending on the technical capabilities and, the facility. So eventually, there's a huge order book pipeline which is still there. Execution, what we have seen, like 15 years, is going to shrunk to like 5 years.
Got it.
There's a huge
all about execution, and we can go on, and we will. So we'll invite you back, Jyoti. Thank you very much for joining us. HAL, BDL, core in terms of portfolio, and of course,
Solar as well. Don't forget Solar.
And Solar as well. Yeah, there's just very, very good company. There's Pinaka orders, etc. But of course, others as well. Thank you very much, Jyoti. Appreciate it. 3 minutes to market open, 2 minutes now. Trent is something more to quickly put the spotlight on. Numbers came in towards the fag end of the session yesterday. Mangalam is here with more. Mangalam.
Numbers came in at the fag end. The presentation came in much after that, so which is why there were a couple of internals from there. The first one is that the fashion portfolio like-for-like growth has been mid-single digits. A lot of people would call that disappointing, but importantly, the company said the appropriate strategy is now to pursue revenue growth across micro markets versus just the stores, because the store density is increasing. So overall revenue growth is important to track. The other growth drivers, beauty, personal care, innerwear as well as footwear, are now 20% of their overall sales. And online, they've been fairly mindful of their online expansion because of the profitability. That contributes about 6% to West Side sales. The key number for me was, however, Star Bazaar, where the revenues grew from 735 crores to 857 crores quarter on quarter. Like-for-like growth at 2% out there. But importantly, contribution from own brands for Star Bazaar came in at 70%. That's margin accretive, so that's a positive. The stock has fallen about 35% from highs, trading at around 72 times. But remember, the peak was close to around 111 times itself. Brokerages. Morgan Stanley has an overweight call, target of 63.59. They're saying that gross margin compression implies some inventory write-off. Jefferies as a whole call, they've raised their target to 5,900 rupees. They expect 35% compounding in standalone revenue over the next 3 years. So we'll keep an eye out on trend today. Saw some short covering in yesterday's trading session. The question is, does it continue today?
All right, we're just sort of a couple of seconds away from market open, and we'll have the rates come up on your screens in a bit from now. So it's absolutely flat, nothing on the Nifty. It's actually like yesterday. We started with very, very flat prices, about a quarter lower though on the Nifty now, about a quarter lower on the Nifty Bank as well. The Sensex is down about 0.25%. Small cap and mid cap indices were up about a quarter yesterday, while the other indices were flat. This morning, there is, I think, a little bit of pullback here as well, but nothing large, nothing noticeable or something you'd quibble about after the gains and the pullback that we've seen come up recently. Let's quickly look at the Nifty heat map, which should give you a quick view of the lay of the land in terms of how stocks are opening up and down, at least on the 50 stock index. So it's mostly all down, 35 odd names lower, and the rest of the 15 odd names are starting the day in the green. And I do spot one defense name, BEL. in the green, at least on the Nifty, and I think there'll be more outside of it as well. Surabhi.
I was looking at exactly that. Are the defense stocks continuing their show from yesterday? Yes, they are. Look at Para's defense. I mean, straight away 9% on Para's defense as the market's opening up. Garden Reach Shipbuilders again 3.5%. Mazgaon, the Cochin ship, the whole move has started after a 10 to 20% surge on these stocks just yesterday. So watch out for this space. Very, very hot. Anyway, back to the frontline indices. What's up is a little bit of pharma. Sun Pharma, Dr. Reddy's, Cipla, all of them on the higher side. HDFC Bank is ensuring that there is no wider fall. L&T and HDFC Bank, along with TCS, are the three big boys that are batting for the bulls. Otherwise, it's becoming a little quiet. Of course, BEL, as part of the defense pack, continues to do well. But otherwise, there's a big casualty in the Bajaj twins. Finance and Finserv are really taking it on the chin after the numbers. 5.5% lower on Finserv, 4.5% lower on Bajaj Finance. Trent is down 3%. Now that the markets had a chance to look at the numbers in detail. IndusInd Bank itself is down 1.5%. So this is interesting. There's no panic around IndusInd Bank just yet. The market is taking this exit in its stride. SBI, which is looking at an equity fundraise soon, stock down 2%. Overall, the market is quiet. And the Nifty is nursing a cut of 50 points at the start, but mid-caps falling a little more, Nigel.
Well, that's right. A few mid-caps are actually under pressure in today's trading session. Just a quick point on the Bajaj twins. The problem is the stocks are up 25 to 30% in the last 6 months or so. So in respect of what the numbers would be, they have to be really, really good to see some kind of follow-through. From stocks in the broader markets that are moving around, Paras Defense, as you mentioned, Vishal Mega Mart, that's up close to 3.5%. You have the tailwind coming in for the OMCs, BPCL, IOC, HPCL. All of them are up to around 2.5% because of, crude oil prices as well were down overnight. So those are a couple of counters that we're looking at. Tata Motors has come in for profit-taking. You have Sambandhana Motherson as well that's come in for profit-taking. And Suzlon, that's the other name that's in there with a bit of a cut. Volume's pretty high on all of these names. A few more stocks just to note. PB Electroplast, that stock is up close to around 3.5% in a market that's a little bit wobbly. So that's one of the movers on the upside. VMart Retail as well is up close to around 2.5%, so good going out there. And Fed Bank Financial, that's the other stock that's actually a little bit higher. Trying to find some winners, so just thought I'll highlight a few. Jana SFB, that's down 7.5%. Praj Industries, we'll get the management soon. That's down close to around 7%. Shopper Stop, down close to around 5%. So just highlighting a few movers from the broader markets. After a while, though, the breadth of the market is firmly in favor of the number of stocks that are declining. You have close to around 1,400 stocks declining for around 400 stocks that are advancing.
All right. So that's basically the start. It's more decisively down now. If you look at the small cap index, it's down 1.25%. The mid cap index is down 0.6%. So a little bit more as compared to the Nifty and the Nifty Bank, which are down about 1/3% and 0.13% respectively. So that's a start this morning that we are able to work with. And of course, most of the result reactions are all mostly on the downside. News and news-related stuff is all on the downside. There's not very little except BPCL maybe, which is showing some green, 320 on BPCL right now. Manish Sontalia is with us, Chief Investment Officer at MK Investment Managers. Manish, good morning. Good to have you here. Thanks for your time. You've been bullish. You've been saying, well, the market's going to bounce. It's bounced and bounced sharply. What's your sense, Manish? Is there enough to do in terms of individual stocks from here, given earnings and growth visibility, and in which areas?
So, Prashant, 22,000 has held, and I maintain that 22,000 won't get decisively broken. That's played out. I think for the next 1-2 months, till the point in time you have clarity on the tariff, and basically that 90-day pause, out of which 15-20 days has already gone. So next 1-2 months, I think markets are going to be range bound between 22,000 and 25,000. Can't really be seeing an outbreak beyond 25,000 given the macros that we are in, given that earnings season is somewhat okay, not very great. So I would believe that we'll consolidate, and right now it is more about institutional buying. The banking space, the heavyweights, Reliance. You have the technology space after the correction. So I think it's more to do with smart money buying in and around the indices, the heavyweight indices level, rather than individual stocks at this given point in time. So it's more to do with index management. Currently, now that we have bounced back 10% from the lows,
I would believe that, you'll see broadly the heavyweights on the index largely play out on the positive side till about that 25,000. And then we'll be basically consolidating around that point.
Manish, hi, morning. Great to have you on. I know you won't talk stocks, but maybe we can get a indicative direction. I'm looking at Bajaj Finance this morning. It's down 4.5%, almost 5% actually. And the only, I think, crease in the earnings, if one can find, is maybe the fact that they have taken certain ECL provisions. And I think, that's the talk point, whether credit cost indeed is peaking out now or not. 1.85 is what they're guiding for. But in general, I mean, the stock has done so well, right? I mean, look at the way NBFCs have rallied in the last 2 odd months. What would you do with the NBFC space? Would you go here? Would you stick to banks? And how does one look at, and Shriram Finance was the other casualty in this earnings season. So it's been a little odd for these large non-bank lenders. Your thoughts?
So first of all, numbers were pretty okay for Bajaj Finance. I would believe it's to do with, the maverick, Mr. Rajiv Jain, who is now becoming the vice chairman. He has led the company from the front over the last 20 years. And now, he is going to be the vice chairman. So I think market is somewhat, not used to not hearing Rajiv Jain on conference calls say and so. So that's one point. Secondly, credit costs are definitely, something to worry about as far as the Bajaj Finance numbers are concerned. Nothing alarming because they are still guiding for AUM growth of 24-25%. It's to do with valuation. The stock has run up so much. But I think, it's nothing fundamentally wrong with the company. They are guiding pretty good growth. The valuations are pretty full at these prices. So maybe that's the best time to take profits. I could read just that into, Bajaj Finance. I mean, the NBFCs as a whole, whether you look at Chola or Shriram, there's some concerns around the NPA numbers. Even Chola numbers, NPAs were slightly elevated. Bajaj was already a disappointment as far as the ECL provisions are concerned. Of course, they called it out as one-off, but markets have their own reading of the same. And similarly with Shriram Finance. So, the sector remains in a sweet spot because repricing of deposits are happening immediately for NBFCs in line with lending rates. So they are able to maintain their spreads much better than banks because, liabilities on banks will come down over a period of time. Whereas lendings, reset on MCLR, EBLR is happening immediately. So,
so to buy or not buy? Sorry, coming in over here to try and sort of squeeze in more in the time. Point is, when you see these sharp dips, whether it's, Chola, more importantly, Bajaj or a Shriram, is it all passing, manageable? So buy the dip or stay away?
Let's buy the dip. There's no doubt about it. There's nothing alarming about these banks or NBFCs, just that out of profit taking after they have rallied 20-30%. That's about it.
Okay. Hi, Manish. Good morning and good to see you, Ben. If I remember correctly, you were quite positive on capital market related plays as well. And from that space, a couple of stocks have done very, very well. But now valuations, they could be a bit of a headwind. Currently, what are you bullish on from here on? Because a BSE, well, it saw a sharp correction of 30%. Guess what? It made a fresh all-time high yesterday. So what are you bullish on this theme now?
So, it's got to do... I can't understand the valuation difference between unlisted NSE and the listed BSE. BSE is trading at 90 PE plus and, unless and until earnings surprise massively on the positive side, for BSE, even that's not, quite doable currently, given the regulation change around settlement dates. So difference in NSE and BSE valuations, 30 PE out there, out here you have 90 PE. There you have 90% market share, you have broadly 10% market share. I think on the BSE side, it's more to do with bonus stripping, all of that just comes about. But capital market plays, etc., looks quite decent in this downfall. I'm particularly more bullish on the depositories, RTAs, asset management companies, whatever asset management companies have reported numbers. They have all gone up from their lows. And I think from a medium-term perspective, they all look quite good. Even the broking platforms, selectively, wealth management platforms, I think they are all investable from a medium-term point of view. You're getting it at lower prices, but just keep in mind the valuations, exorbitant valuations, 50, 60p won't hold. But anything like 25, 30, 35p, these platform companies are likely to create wealth in the medium.
Okay, all right. I think if I remember correctly, you're also positive on health insurance.
Yeah.
That theme has not yet played out, I think so. Tell us more.
So Star Health reported numbers yesterday. Underwriting profits were disappointing. Investment gains were pretty okay. I think it's a work in progress. The fact is that you are getting at 15, 17 PE multiples, and increase in premium rates around the corner. So claims ratio for some of these leading health insurance plays are best in the industry. 65 to 69 odd %. And plus, you're looking at increase in premium rates. That would mean that you are looking at implied growth rates of around 25 to 30%, and you're getting it on multiples of 15 to 18 times, which is basically less than 1 PEG. I think a good investable idea, without too much of risk.
Sure. All right, interesting call out there, because the IPO was at around 900 rupees. The stock has come down to under 400 rupees. But you believe post the correction and given the tailwind that it has, you believe valuations now are more palatable. So that's in Star Health.
Okay. Okay, got it, Manish. We're really, relishing it this morning. You're giving such wonderful perspective on these, big movers, which are of all, earnings driven. So I'm going to take my chance with one last one with you. Trent. Just your take on the business. Dream run, but is it over? Is it really over? Because you cannot sustain at maybe 70, 80, 100% growth rates. And the stock is still at 70 times forward earnings. What should current investors do? I mean, same question. Buy the dip or just stay away?
Trailing 12 months is 100p. So I think it's it's got to do with valuations. There's nothing wrong with Trent. Great company. But 15% margins, this time around they have reported 16% margins. Whether that's going to sustain, that's the big call. But execution holds and valuation holds. If the valuations come down to less than 3 times price earnings growth, it could be an investable idea. But currently, valuations are concerned.
Which would be where 3 times PEG for Trent would translate into what sort of CMP, roughly?
100p, so it's grown at 35% on the top line. So multiplied by 3 times, you get 100p multiple.
Okay.
Right. Zomato, Manish, any thoughts? Zomato, Swiggy?
I think, whatever narrative is coming around in social media regarding, problems at Zomato, still I think they would be the last man standing, given everything. A lot of positives as far as operational leverage is going to play out for them. And yes, opening of dark stores and discounting by competition would take some sheen off the Blinkit SOTPs. But even then, there is some margin of safety from where we are in Zomato. So I'm not negative on Zomato at all. In fact, it's one of our portfolio holding stocks. And the simple understanding is that, this is basically irreversible. The quick commerce and food ordering that has become a habit. India wants everything in 10 minutes. That's become a habit. It's not reversible. That's one. Secondly, if there's anybody who's going to have the economies of scale and would be the last man standing, it's going to be Zomato. Yes, Amazon has deep pockets. You have a Flipkart which has deep pockets. But to get the unit economics right, you'll have to burn a lot of cash. And it's an evolving situation, but currently it looks like that, Zomato is in the best form and shape as far as the growth and the valuations are concerned.
All right. Thank you very much. And just platform companies, right? I mean, you start with capital market plays. And these are, of course, in the different space, but all kind of tying in with broadly consumption and consumption growth. Thank you very much, Manish, for joining us. A good conversation as always. Let's get on to the earnings treadmill. And I think CEAT is the first one.
Well, that's right. Let's focus on CEAT. That's the management on our radar. Earnings were better than estimate. The revenue growth has been good, driven by domestic demand, both in OEM as well as in replacement market. But margins, they've slipped a little bit on higher input costs. To discuss this and more, we're joined by Mr. Arnab Banerjee, the Managing Director and CEO at CEAT. Hi, Mr. Banerjee. Good morning and good to see you in as always. Congratulations on a good showing actually in the past year. Double-digit revenue growth, double-digit growth even for Q4. Give us the outlook though from here on. For FY26, can you continue to grow in double-digit on the revenue parameter? And since you get more than 50% of your money coming in from the replacement market, what's the signs in terms of the economy? How are things on ground? Please go ahead, sir. Mr. Banerjee, I think you'll have to unmute yourself, sir.
Going forward, we would definitely like to carry this momentum of double-digit growth overall right through the year. The trends that I talked about last time when I was around continue. In domestic aftermarket, the urban market is urban areas, which is greater than 50,000 population towns, is a little soft on demand. Rural areas are doing much better. There is a clear delta of 4 to 5% incremental growth in rural for us, and we have the distribution reach to tap into that, so that's positive. OEMs, we expect the approvals to keep coming in for larger rim size tires and passenger, which I've been talking about, which we are focusing on. And we would like to see our share going up in that area, as well as in truck bus radial and two-wheeler. So OEM, we are bullish vis-a-vis visibility that we have on approvals and the sale of those vehicles going up in this FY26. Globally, it is uncertain, as you all know, because of the tariffs and even other ongoing things, the war and some of the tariff and non-tariff barriers. So it will continue to be uncertain. So in balance, I would see most of the trends of FY25 continuing in FY26.
All right, so double-digit growth is what you're gunning for. Could you tell us what about the inorganic growth? You had made that Camso acquisition, and as you said, I think it would add roughly around, ballpark, I think 2,000 crores on your base of close to around 12,000 crores approximately. Does it start contributing in this year? And what are you penciling in out of that? And this double-digit doesn't include Camso, or does it include it?
This is standalone.
Standalone.
Yeah. So Camso would be integrated into our business in Q2. All the antitrust issues are now done away with. All regulatory decks are clear. We are in accelerated mode of integrating the business. Q1 will not have any consolidation from Camso side. Q2 onwards, we will be starting to consolidate the Camso results into our system line item wise. It's too early to say how that will pan out because there is some turbulence always when a new set of owners come in. But we would like to focus on business continuity, retention of talent, retention of customers in the first 2-3 quarters, and then we'll take it up from there.
All right. Mr. Banerjee, good morning. How's demand for the recently launched 3 tires targeting the premium segment? And what's the market share in that segment currently?
The 3 tires that we launched are Run Flat tire, which is the first time an Indian manufacturer, Indian brand is bringing to India. 21-inch rated tires and Calm tires, which is very relevant for the electric vehicle trend. These are niche products right at the top end for top end cars. Volumes are very small at this moment, but we expect to take a pole position there. This is going to grow in future. And this is especially 17-inch plus volumes in PCU passenger car tires is just going to skyrocket as a proportion of the entire aftermarket. So volumes are still small. So, market share doesn't make any sense to talk about right now, but we expect to have a leadership position going forward.
Mm-hmm. Mr. Banerjee, in the third quarter, I think at the end of that quarter, in the analyst call, you had pointed out that your overseas business was growing really well. You were seeing good demand from Europe. Now, with this whole trade disruption, what is the expectation? If you could just give us the split between the international business and the domestic business, and then also the split between the growth trends, volumes that you're expecting on both fronts.
So about 19 to 20% is coming from international business. This doesn't include Camso. This is CX standalone. And that ratio is being maintained right now. You're right. We have done very well in the EU area. And we continue to do well. And that's the most stable part of the business. Good on margins, good on growth. In all categories, in farm, OHT, passenger, as well as truck bus radial. The US business is small, but that's a future growth area. So the risk there is to future growth. But as of now, the exposure to US and therefore the impact of what's going on directly because of the tariffs proposed by US is not going to be material in FY26. There are headwinds in other parts of the world also, for example, Latin America. The areas which are doing well, apart from Europe, are Middle East and Southeast Asia.
Mm-hmm. Just to follow up on this, are you hearing any of your European clients, the big OEMs, talk about delays or deferring, any of their plans? Because, for instance, I mean, look at Tata Motors. They announced a halt on all JLR shipments when this tariff news broke. So are you expecting any sort of a slowdown in the European business? And also US, since you mentioned it's still an opportunity, just tell us what sense you make of the tariffs. The news changes every day. Now we understand that they're quite open to components still coming in. So would you look at expanding your presence in the US at all?
No, US is definitely a future growth market. As I mentioned, we are already present with our OHT business, which has started taking shape. We have just launched our truck bus radial and going to launch our passenger car radial this year. We are setting up our network. So nothing is stopped. We'll have to see the business model and the profitability and the product range that may get altered. We are hopeful of suitable, free trade agreement between the two countries coming along by the fall season. But if things stay where they are, India as a country doesn't have a competitive disadvantage vis-a-vis the US market, vis-a-vis other country as competition, which is, let's say, China, Thailand, Vietnam, etc. But things are fluid. It will evolve. We'll wait and watch. And as I mentioned, no material impact in FY26, but it's our growth market, and we are keen on investing in US.
Okay, all right. Mr. Banerjee, the raw material costs have cooled off, and that's what's helping your gross margins improve. I think the last time around as well, we briefly spoke. Your target, I think, is to get the gross margin back above 40%, and that could happen in the coming quarters. Given that, what kind of a EBITDA margin should we be working with for the coming quarter? Will quarter one be better than quarter four? And from then on, do we see some kind of stability, a margin band, if I could request you for one?
Yeah. So let me first talk about the raw material situation. Quarter four on quarter three, the crude prices actually didn't change much. Quarter one is definitely cooling off. So crude derivatives will gradually come off their current price levels going forward. Natural rubber international prices have come down to about $1,700 per ton, but domestic price is still holding steady at around just lower than 200 rupees mark. So that has not come off. Rupee has just now started appreciating, but it was depreciating earlier. So there are various factors at which we are looking at. The entire basket, if you see, quarter four and quarter three, it was almost flat. Minor drop. Quarter one on quarter four will see a very little drop, almost flat. Quarter two onwards is when we see raw material prices probably cooling off significantly. And that is when margin expansions may happen. And you are right, we are comfortable operating at 40+% margin. So it will take a while to get there.
EBITDA margins should hold in that vicinity of around, say, if you want to give us a range for the year, given that the benefits will flow in from the second quarter, should we be working with a rough number of, say, around 12 to around 13%?
We would like to go there, but it's too early to sense of what it will be at this point.
Got it. Just a quick question as well with regard to your capacity. Last year, I think you spent close to around 1,000 crores on capex. This year, what is that number that you've laid out in terms of a capex? What is your current capacity? Where is it headed? And what does it mean in terms of your debt?
Right. So on a standalone basis, again, I'm taking the Camso thing out. We will continue to spend around 1,000 crores, maybe 900 to 1,000 crores or thereabouts in terms of capex. About about three-fourths of that will be growth capex, and all will be continuing on the same brownfield expansions at Chennai, both passenger and truck bus radial, at Ambernath for OHT, and maybe a little bit in Nagpur as well for two-wheelers. So mostly brownfield expansions is going to continue. And capacity utilizations are around 75, 80. In some cases, it is close to 85, 90% passenger car tires, which is why we will expand at Chennai.
And debt numbers, sir? What is it? Where is it headed?
Debt numbers have gone up by about 100 odd crores, little less than 100 crore vis-a-vis Q3, as you have seen at the end of Q4. So as far as standalone business is concerned, it will be around similar range because we expect cash accruals as well. And with the capex at 1,000 crores, not much imbalance is expected in the overall debt. Minor change maybe there.
Mr. Banerjee, you used the word this was in relation to the answer on premium tires, the newly launched top-end segment. You used the word skyrocket for one category. What was that? Which one was that?
All the premium, the entire premium segment, which is large rim size tires, is going to, right now it is just about 10% of the market. In terms of salience, this is going to really grow very fast in the next 3 to 4 years.
You know, Mr. Banerjee, allow me to ask a tongue-in-cheek question. This is coming in from a viewer, a very troubled viewer who's got to drive on Mumbai roads. He's asking me to ask you whether there is any bump in demand, especially for what you sell in Bombay, in terms of replacement demand or otherwise, because of the condition of roads.
Yeah, can I add a question to that, Prashant sir? Also, can you invent a tire that remains absolutely puncture free, resistant to Mumbai roads? On a lighter note, we're just joking here.
No. So run flat is very close to that. Flats are supposed to take care of any such issues, and you can travel up to 80 kilometers till you tend to the tire. So there's a very big consumer proposition, especially for the higher end cars. So yeah, it sort of addresses that problem, Mumbai or otherwise.
You've tested those on Mumbai roads, Mr. Banerjee?
We tested them on much worse roads.
All right. Well, we'll leave it there. Thank you very much for coming on and being a sport about it, and of course answering all those questions with regards to demand, etc., and the outlook at CEAT.
You know, Prashant, over the weekend sometimes we used to go on these bike rides. A group of bikers, because we wanted to test
off-roading.
Off-roads.
Now off-roading is in front of your house.
You don't have to go anywhere.
It's all off-roading throughout the city.
You should go 300-400, very far, 3-4 hours away, just to go for off-roading. But now it's just done.
No, actually, if you think about it, somebody should make an estimate. Actually, the actual cost, right, to cost of maintenance of cars, man hours, forget about it.
Yeah.
Even, the number of backs which are bodies. It's just a terrible sort of situation if you've got to drive and be on roads for a long time here in Mumbai, as many have to be. We'll take a quick commercial break here. We're going to come back. We'll connect with the management at Praj Industries to discuss the company's fourth quarter earnings. Stay tuned, coming up.
Welcome back. We're still analyzing lots and lots of numbers and earnings that have come in over the last 24 hours. Praj Industries is the next company on our radar. And before we get started, let's just go over the numbers very quickly. It's been a tough quarter for Praj once again. Q4, the revenue is down 16%. The EBITDA has declined by about 43%. And the margin has come down from 12.8% a year ago to just about 8.6%. So it's been tough going, and not just that, it's been a fairly tough year as well. Full year numbers, if you look at FY25, it's not a one-quarter situation. Revenue down 7% for the year. EBITDA has declined, quite a bit, and the profit is also down 23% for the year. So what is plaguing the performance? Let's find out. Sachin Raole, Chief Financial Officer and Director Resources at Praj Industries, is with us. Sachin, good to have you on. And that's really the question. We want a slightly bigger picture perspective here, because this is not a Q4 phenomena. It's been a tough year, degrowth this year, and I think there was some degrowth last year as well. This is despite the fact that you keep announcing a lot of new big wins. like the one with BPCL, like the one with your overseas clients. So why are these big contracts not translating into the P&L performance that shareholders would like?
Hi, good morning. Let me just tell you the story, what is happening or unfolding at our end over a period of last 1.5 years, when we actually started talking about how we are looking at a longish picture of 2030 and how we are growing other vectors of the company beyond the ethanol. So over a period of last 1 year or 1.5 years, to be precise, we are actually in a very big transition phase, which we are right now witnessing. And this transition phase is on multiple counts. One, how the business vectors are supposedly to keep on growing. And you must have seen a large amount of investment which we have made in the new facility built up over a period of last 1 year. That facility is now operational, has started working on the ground. The investment is very, very huge. It's more than 100 crores as per the standard of Praj. The last year we have seen the investment happening through profit and loss account because the facility is operational. It was made operational for getting the facility audited and approved by the international customers, which has just happened. And now the order booking will start happening in that facility. So the last year has actually witnessed a big investment going in that facility. And that investment is actually rooted through P&L and profit.
If you could just allow me to understand, you're talking about Praj GenX, right? That is where all the investments have happened and you finally commissioned, and now you're expecting that to flow through. So some numbers, year one in terms of revenue, when does this facility break even? And again, I'm going back to the big number, top line growth for the company, EBITDA growth for the company as a whole. Will we see that in FY26?
Yeah. So 26, we will be actually seeing the order booking happening for Praj GenX. The numbers which we are looking at are going to be very different than what we had done in Praj Industries itself. So those numbers are going to be definitely on a very large scale because that capacity is almost 4 times of our existing capacity. This was built up to take up large modularized projects, especially on the export side. So the numbers are going to be different for order booking and also for revenue. So we are expecting next year, FY26, we should actually be breaking even on the GenX side.
27, not 26. This is 26, sir. So you're saying Praj GenX will break even in 27. Give us some sense of the revenue scale up. Some idea in FY27, how much does it start contributing to the revenue, and when do we see the top line growing again?
So in FY25, the year which has just gone by, the revenue on the top line is around 28 crores for GenX, but the bottom line is almost down by 80 crores. Because there were no enough operations to compensate for the cost which we are incurring for building up this facility. So there is a 80 crore kind of a pressure on my bottom line in the current year, and this is what is getting reflected in my consolidated numbers.
All right. Hi, Sachin. Good morning. Good to see you in. This is Nigel on this side. Now, for your shareholders, they appreciate you giving us some color on segments of the business.
Sure.
But for the company on the whole, what kind of a revenue growth number can we work with for FY26? Give us a broad range as well. That is doable. And margins have been steadily, coming down. Used to do early teens margins. That's come down to around 9%. What should be the range on an average for the year? 2 numbers, revenue growth and margins. Please go ahead, sir.
Sure. So if you look at my current year's turnover is around 3,200 crores on the top line.
Yes.
And the carry forward order book which we are carrying on our books right now is 4,200 crores.
Correct.
It can give some kind of an idea what kind of a revenue growth we are expecting in the next year.
So you'll execute the full order book, sir? This 4,200 crores, most of it will get executed in the next 1 year?
I think at least 75% of this definitely should get executed in this year because some of the orders are long-term orders. And there will be some order booking which will be happening in the first half. So generally, if I look at our trend, some portion of our first half of the year also gets executed during the year. So it is not only the backlog which contributes to my revenue. So it is a combination of both. So it can give you some kind of a sense.
So 75%, sir, we have done the maths, sir. 75% of 4,200 crores is approximately 3,200 crores.
That's
Plus
right.
there will be some more revenue recognition. So on the base that you delivered last year, at least a high single digit to double digit revenue growth is something that we could work with?
That's right.
So should we take it at approximately 10%, sir? That could be...
Yeah, you can consider that kind of a growth rate at least for the next year.
Got that. What about margin, sir? You were making that point. Please go ahead. What is the number we should work with?
So margin, according to me, on the EBITDA side should be somewhere in the range of double digit. For a reason, because the orders which we are going to execute in the next year are going to be majorly on the international side as compared to the domestic side. So that will be EBITDA accretive for the next year.
Got it. Okay. All right. And the 10,000 crores of, the target that you have by 2030, that is still on, right?
Absolutely on. Absolutely on.
Sir, just a question on the specifics now, the alliances that you've announced, the one with Sensex on PLA, polylactic acid. Just tell us a little more about the contours of this deal. What is the revenue share? When does the money come in? I mean, when do the revenues accrue?
Okay, so last year we have put up our demo facility for polylactic acid. We have gone into this kind of a partnership with Sensex for the polymerization of polylactic acid, which we are going to produce. So the idea is to provide a solution, end-to-end solution, starting from a feedstock to polylactic acid under one umbrella. And the Praj is what is going to execute the entire project for our customers. This is just the beginning. It is now ready for commercialization. We are speaking to our customers for putting up this kind of a facility. There will be some development in FY26 on this front. What will be the revenue and what will be the number? Unfortunately, I will not be able to divulge right now. But yes, there is a big activity which is going on in development and a commercialization of PLA at this point of time.
Right. Sachin, good morning. This is for the biopolymer production, is it?
That's right. It's a biopolymer production.
Okay. This is the same thing which Balrampur is now getting into, right? They have a plant which is coming up for commissioning as well.
Right. That's right.
It's a up and coming sort of sector. Lots of demand, of course, long runway for growth.
Yeah.
This has all been cleared, right? I mean, in terms of the end markets. I mean, regulatory approvals, etc. The products, yeah.
So this is basically replacing a normal plastic.
Correct.
So we are getting into bioplastic. So you are replacing the fossil-based plastic. So this is an upcoming market, definitely from a sustainability point of view. There is a lot of interest because there are very, very minuscule number of players who are in this field. And Praj is right now completely ready in providing the entire technology, end-to-end technology with the help of Thyssen Group. So you
will set up this plant, is it?
No, we will be providing the technology and we'll be putting up a project or the plant for our clients.
I see. So, for example, if Balrampur wants to do it, you would go in as a supplier. Got it.
Just a quick ratio here, since you're talking about the company going through a transition and you want to move away from ethanol. Give us the roadmap, sir. In FY27, when your GenX facility comes on screen, by FY27, how much revenue is going to be ethanol and how much non-ethanol?
Okay, so our stated target for 2030 is that 50% business will be bioenergy and 50% business will be non-bioenergy or the engineering business. Within this 50% business of a bioenergy, we are not saying that we are going away from ethanol. We are saying that we will be adding more layers of other bioenergy segment also apart from ethanol. Within ethanol, we are saying that we will not remain only because the domestic wave for last 2-3 years was very, very high. We are saying that we will create an equal wave for ethanol business in the international market also. So ethanol is not going away. Ethanol is going to be there. There will be some different applications because we have gone for some valorization, some product development within the ethanol, which are ready for the commercialization in FY26 itself. So by FY27, according to me, ethanol or the bioenergy segment will be still on a higher side, but a major portion will start coming up from the engineering business also. And the trend we have already started seeing in this year. And that will get accelerated over a period of 27-28, and by 30, we will be having 50% bioenergy and 50% non-bioenergy.
Okay, all right. Sachin, you've given us quite a few numbers and we get a sense about how business is progressing. Request you for one more. Your order inflow has been roughly around 1,000 crores on a quarterly basis. What kind of a number are you working with on a quarterly basis, or you want to give us for the entire financial year FY26?
Oh, Generally, we
don't
don't
disappoint
give
us. Don't disappoint us, Sachin. You have given us so much. Just one more number.
No, I can imagine that you are looking for some kind of a number from me. Unfortunately, we don't give that kind of a guidance. But let me tell you, on all the business verticals, the inquiry basket is very, very strong for us. And naturally, we are looking for a growth. We are not looking for a growth on the order booking next year.
Got that. We'll leave it there. Good conversation, lots of details, and look forward to the next one. And good luck as you continue to execute. That's Praj Industries with some amount of guidance and some forward-looking statements for their business coming through. Well, let's talk about global shipping. Amidst the US-China trade tensions, and of course, global trade tensions, shipping as a sector is in focus. We have Mr. G. Shivkumar, Executive Director and Chief Financial Officer at G Shipping, who's with us. Mr. Shivkumar, good morning. Thank you for joining us. So let me just get this data to you, right? This is data on global TEU containers. I know you're not into containers, but just to give you a sense of the, what's happening globally. This is as of the 14th of April, week ended 14th of April. US, this is, week on week. US imports are down 12%. China to US movement is down 22%. On a year-on-year basis, the numbers China to US is down 45%. So this obviously is a sharp slowdown that we are seeing as far as global trade is concerned. As I began by saying, containers specifically don't affect you, but the indirect second order, third order effect on tanker market, oil prices have fallen sharply. Tell us what you're seeing.
Morning, Prashant. Thanks for having me. Yes, we're not in the container business, but I think it's fairly logical, the outcome that we're seeing, which is that container trade has sort of, especially the China to US trade, has fallen off a cliff. Yes, that doesn't bode well for the container business if things continue the way they are, which is with very high tariffs on Chinese goods. But coming to, as you put it, the second and third order effects on the rest of world trade. One is, of course, if you have more inflation picking up or in the US, which leads to potentially a recession in the US, or at least slower growth, and which again leads to poorer growth worldwide. You would have a slower commodity demand as well, which would affect us. Coming specifically to US and China, there are only two commodities or two sets of commodities really which affect the commodity business in any significant way. One is propane. About 14% of global LPG trade goes US to China. And this is a trade route which has developed in the last year or so, in the last decade or so, as US shale output went up a lot. And the other is ethane, which again is a new developing trade. We are not in that at all. And dry bulk, which is grain from US to China, is a small part of global dry bulk trade, probably 1% or so of global dry bulk trade, so not as much of an impact. But yes, the signs for the global economy are not great if we have this kind of uncertainty going.
I think last night, I think propane or ethane, China has kind of cut tariffs, right? They've allowed tariff-free imports to come in.
That's right, ethane.
Ethane, yeah. But you're not in that segment, right? Could you give us a sense? Is there any way to estimate, what are rates like, tanker rates like right now?
So no impact at all on tanker freight rates so far. No impact on either crude tankers, product tankers, or bulk carriers. We had a sharp drop in LPG rates. Again, this is that propane trade going from US to China. So that's a VLGC trade, that's very large gas carriers. Those spot rates dropped off very dramatically in just the week or 10 days following the Liberation Day announcements. They've bounced a bit now because, again, if the product is being, if the commodity is being produced, it will tend to get transported somewhere and you will find the clearing price for it to go to find a buyer. So that trade is bounced after that. Is bounced substantially from the lows that we saw immediately after Liberation Day.
This in the past we've spoken to you. The other thing which is going on is Russia-Ukraine, and you've maintained that shipping rates will fall sharply as and when that kind of some sort of a ceasefire is reached, and Russia-Ukraine is much more material for crude product, etc. Again, there's been some talk for a while, but some talk that something may come in terms of a ceasefire. You want to provide us with an updated assessment?
Yeah, that's geopolitics and we're not really experts there. But yes, if there is a rapprochement between Russia and the US and NATO on Ukraine, we think that it'll bring tanker rates down because that was a significant ton-mile impact. However, I don't think it's going to normalize so quickly, even if there is peace there and there is some kind of ceasefire or a peace agreement which is brokered. So it'll take time to feed through, but yes, you could have rates coming off if that full impact reverses.
Sorry, just one more broader question with regards to India specifically, Mr. Shivkumar. I mean, this, and we will hopefully over a period of time benefit with more trade as there is a shift away from China. I mean, does your business get impacted at all in any way?
No, not really. The one thing that I should mention on Russia, because we mentioned Russia, that the US is tightening sanctions on a lot of ships, whether involved in the Russian trade or the Iranian trade, both of which are sanctioned, subject to sanctions. And that's affecting the supply of ships. Now, these are tankers that are doing the trade. And so those ships are getting taken out of the system and therefore making the system less efficient. So it's not just on the supply side or where you need ships, which is from the ton-mile impact of the Russia-Ukraine war. The US is also putting pressure on the ships which are doing that trade, so you could have those ships getting taken out of the market as well.
Mr. Shivkumar, please.
Sorry, we've also seen Indian imports went down a bit from Russia immediately following those sanctions which happened in January 2025. But now they've bounced again because we are down below the EU price cap of $60 per barrel for crude oil.
Interesting. We are hearing a lot about, a lot of focus in the US, for example, with regards to shipbuilding, focus on shipbuilding, right? I was looking at data last 5 years. Actually, US has hardly made any ships. I mean, of course, it's a cost thing. Japan, Korea, South Korea, and China. Of course, China is the biggest. As an operator, because this is a long drawn story, but are you expecting a lot more supply? What's your sense?
Shipbuilding capacity in the US is very low. And as you mentioned, they are very expensive. So they don't compare in price with the ships produced from the three main producers of ships now, which is Japan, Korea, and China. So it's tough for them to compete, and it's not a huge amount of supply really. India itself is looking to boost shipbuilding, and we are probably closer on the cost curve to the big three than the US is. We are much closer if we can get those capabilities done.
And no decision on buying. Are you closer to buying anything, doing anything?
No, not really. Prices are down a little bit, but not really. We are still waiting to get those attractive prices.
Okay. As you look at FY26, how does it look compared to the last year?
So I'm not going to give
earnings wise, yes.
Yeah, so markets are a little lower now than they were a year ago for tankers. So that's all I'll say. We have a board meeting coming up in about a week's time. And we'll discuss those after that. But again, uncertainty, there is so much uncertainty around everything. as we started with what's going to happen to the world economy, that it's getting even tougher to forecast these days.
I understand, and we'll speak once you sort of come out with those numbers, Mr. Shivakumar. We'll talk numbers then. Thank you very much, but interesting perspective on the space. That's the GE Shipping Management there. Well, 20 points higher on the Nifty, which means that it's a bit of a turn that we've seen coming through on the index. Absolutely, from the opening lows, we've come up pretty smartly. Mitesh is with us with what he'd want you to do. Mitesh, good morning. What's on your radar?
Yeah. So, Prashant, I think on the index, we continue with that kind of subdued kind of view, when the markets will still consolidate and you will see supply emerge at 24, 450, 500 zones. But on the stock side, you'll have some opportunities. And I have a sell on Adani Green. Actually, it's just about to break below the support pivot of 905. It made a low of 911. So, sell below 905, take a stop at 925. And look for a target of around 870 to about 860 on the downside. And on the buying side is APL Apollo Pipes, I think. That's a buy with a stop below levels of 1605 for targets of 1690.
Okay, all right. Fair enough. Mitesh, we'll leave it there. Thanks very much. We'll take a quick commercial break here. We're going to come back with what's happening as far as commodities are concerned. Manisha on the other side.
Welcome back. It is Akshay Tritiya. So what else? But we have our commodity queen coming in the house now to talk gold. And Manisha, I have to start with this. Sona, kitna sona hai? What a run! I mean, on the metal this Akshay Tritiya.
Oh well, absolutely sona hai. And the kind of gains that you've seen in the last 1 year absolutely have been glittering. You know, Surbhi, it is said that whatever you buy this day does not give you losses going forward. So it can be a business, it can be gold, silver, diamond, jewelry, but these are the things that are mostly bought. These are the numbers that I have gathered from the industry, where we understand that usually on an Akshaya Tritiya day, you see a buying of between 18 to 20 tons of gold. This time around, because the prices are at all-time highs, near a lakh rupees a 10 grams, so the industry anticipates that 12 to 15 tons of buying, even then, even at these prices, is what you can anticipate in the day-to-day. We do understand that the Akshaya Tritiya started last evening and it continues until tomorrow morning. So there are various auspicious hours in there where you will see people buying gold. This is a chart that tells you on how the gold prices have behaved during Akshaya Tritiya in last 5 or 6 years. I mean, as you can see, from 47,000 in 2021 or even 50 in 2022, we have seen the gold prices surge quite higher. Last year, same time, the gold prices were trading at around 72,000. They're trading at 96 to 97,000 at this point in time. So nearly 23, 24,000 of a jump up in last 1 year itself. And people do buy silver as well on Akshaya Tritiya. And because the gold prices are so expensive, you could be looking at silver buying picking up as well. And here as well, as you can see, silver mostly has trended between that 70s and 60s for the last 3 or 4 years, making higher highs. And this year, on 13th of March, we saw silver prices gain beyond above a lakh rupees a kg as well. So very strong gains, as you can see, in over Akshaya Tritiya's for gold and silver prices there. There are various ways to buy gold as well. For the longest time, it was physical. Even now, 60 to 65% of buying in gold happens in the physical markets, which is by jewelry, bars and coins, etc. But the gold ETFs have picked up quite strongly in the last couple of years, especially in last 6 months. We have seen lesser redemptions and more net inflows. Gold mutual funds and digital gold also seems to be picking up, where you can buy gold for as less as 10 rupees and start building it up from there. So various ways of buying gold at this point in time. I also want to take you on what we've done in sense of gold prices and price rise. So for 2025 till time, we're up by 27%. Last year was 28% of gains, and in 2023, 15% of a jump is what gold prices gave you. Interestingly, it has to do with the central bank buying, which has been very, very supportive. If you look at global central bank buying, 1,082 tons was an all-time high buying. But in the last 2-3 years as well, as you can see, it has been above 1,000 tons as well. For 2025 till Feb, it has been 44 tons. But we do understand that 800 to 1,000 tons of central bank gold buying is what the street is anticipating for this year as well. So while there is support from central bank buying, investment buying, global trade tensions, markets do believe that while there could be a correction coming in for gold, but by the end of this year, you could be looking at gold prices yet again at all-time highs. The Indian markets, in the meanwhile, have seen a lakh rupees for the gold prices and a lakh 3,000 for silver prices. This is without the GST. So we've seen much higher prices when you add GST and making charges to this as well. Let's talk about the final plate now, and this is about the gold price outlook. Well, most people believe that you wouldn't see the 40% kind of gains that we've seen in the last year in the next 1 year as well. But having said that, it will keep up with the inflation. And if there are trade tensions continuing and inflation is high and you see more interest rate cuts coming in, then you could be looking at higher gold prices. Bank of America is still talking about an average of 33.50 in this year. Deutsche Bank talks about 3,700 by the end of this year, and ANZ talks about 3,600 as well. JP Morgan says that prices can surpass $4,000 an ounce as well on the higher side, so holdings are on the stronger side. BGS also talks about 4,000. John Paulson talks about 4,000 by the year 2027 or 28. So next 3 to 4 years, until the time the US president is Donald Trump, the markets believe that the gold prices will have a strong run.
That's a rather astounding correlation between the US leadership and the price of gold. Very interesting one. And Manisha also said, Prashant, that whatever you buy on Akshaya Tritiya, typically you never make a loss. What are you buying today?
Manisha will fund me.
Oh, really? I'll get it for you.
Thank you, Manisha, for that. And of course, we'll continue to shine the spotlight on gold. Not that it needs the spotlight, but it's shining all the way. We'll take a quick commercial break here. We'll come back with our special segment. It's the Economy Lata in conversation with the analyst of JP Morgan on how tariff wars will impact growth, currencies and commodities.
Welcome back to It's the Economy. Tariffs seem to have begun to hurt the US economy. I'm referring to the latest data. In the overnight JOLTS data, job openings for March missed estimates. Consumer confidence for April has dropped to the lowest level since the pandemic. But GDP numbers will be due. A lot of numbers are due today. How will growth be impacted in the US itself and globally, in Asia in particular? Today on It's the Economy, I have with me a veteran from JP Morgan, Louis O'Ganis, head of global macro research. He manages teams of researchers covering currency, rates, commodities and emerging markets. Thank you very much, Louis, for joining us. Well, as of now, including the 10% across the board tariffs and the 25% auto and steel, the US tariffs are averaging 25%. Versus only 2.5% before April 2nd. What will this do to US growth itself, and will it mean stagflation?
I think that, beyond the level at this stage, honestly, is not known. We have a situation where a big chunk of the tariffs have been reduced to 10% for 90 days. That 90 days are going to be completed sometime in early July. And it's an open question what comes afterwards. There is obviously some discussions with individual countries. India is actually included in there about reaching some kind of trade agreement that would potentially reduce on a permanent basis some of these tariffs. But we don't know. So quantifying that, I think, is still very, very difficult. What we do know is that all these backs and forths are generating a lot of uncertainty for those that need to make decisions in the real economy, decisions about investment, decisions about hiring, decisions about how much to produce. And we think that that uncertainty is probably going to lead to some cool down in growth. Whether we get to a recession or not, to be honest, at this stage, it's almost like a semantic discussion. The starting point is a good one, which is so far the data flow in the US is actually quite resilient, quite good. But, we could have a deceleration that stays just above zero or drops below zero, in which case it is a recession. But I think that you're going to start to see indicators of growth in the US weakening, indicators of inflation accelerating, and that's going to be a very complicated macro picture for the US, regardless at this stage of what happens at the end of the day with tariffs.
Okay, so uncertainty to kill growth. What about global slowdown? And which parts of the globe or the world will be more impacted than others?
Well, strictly speaking, to the extent that there's an element of self-inflicted wound, it is possible that the US falls into a sharp slowdown / recession, and maybe the rest of the world per se, on average, doesn't. That said, there's going to be a wide variation, dispersion of country experiences. Certainly those that are more integrated trade-wise with the US, starting with its neighbors, Mexico and Canada. Probably those two economies are already in recession or will fall into a recession in the coming months, in the coming quarters. Just because right now, everyone is holding their breath. We don't know the outcome of the renegotiation of USMCA that is going to happen potentially in the second half of this year. But then when we start to go around the world, you have countries like Vietnam, like Cambodia, quite integrated, sharing a lot of the exports going to the US, that even though the tariffs right now are 10%, we don't know, and these countries don't know, producers in these countries do not know what will happen at the end of this 90-day reprieve. So I think that is probably going to lead to lower growth, regardless, again, of what the outcome is. Other countries, obviously, may eventually benefit, but I think that right this minute, you're going to see a global growth slowdown pretty much happening everywhere, some places more accelerated than others. And it's only clarity that is going to lead eventually, hopefully soon, to some reprieve and some rebound. For the time being, we're all holding our breaths here.
Okay, yes, more integrated countries, more impact, and of course the neighbors already in recession. Now, what about inflation? Economists are telling us that there will be disinflation in Asia because, exports that don't go to the US will find a market here. Manufacturers are telling us that they're already seeing higher steel prices, for instance, because of anti-dumping duties and possible supply chain issues. What's your guess on whether here in Asia we are going to have more disinflation or inflation?
Well, I would say again, different experiences. In the US, we think that inflation is going to be higher for the mere fact that imports are going to be more expensive, and they're not. I mean, the path to replace imports, particularly those coming from China, takes a while, right? To reorient your supply chains, to look for alternative sources of supply, of production, of imports of consumer goods. That will take quite a while. In the meantime, we're going to have inflation pressures. Again, the magnitude is very difficult to estimate. With the latest postponement until for 90 days of some of the harshest numbers of tariff increases, our economists are penciling in inflation, maybe staying inside 4%, maybe 3.8% by the end of the year in the US. In the rest of the world, we're going to see a mixed bag. Certainly, less growth in the US, less growth around the world means there's deflationary pressures coming just from weaker demand. But as you well say, there is a lot of fear that China, whatever they cannot sell to the US, they're going to turn around and try to sell it somewhere else, and they're going to flood the rest of the world with cheap exports, which is deflationary for many of these countries. That's one thing. The other one, and some countries may be forced just to protect their domestic industry to actually increase restrictions, tariffs themselves on Chinese imports from China. So again, very difficult, depends on the policy response to assess what the impact on inflation is. The one thing that is going to help at least the energy importing countries, oil importing countries, is the fact that oil prices have declined, right? India is certainly in that camp. And so long as authorities allow some of the pass-through from lower international oil prices to fall through domestic fuel prices, maybe that turns into a little bit of a offsetting factor for inflation when it comes to compare to whatever response there is on the tariff side.
Oh yes, crude will be a major offset for India. I'll come back to crude in detail, but first let me finish currencies. The dollar index has already fallen below 100, staying there. Do you expect dollar to weaken more? And what about Asian currencies?
So, in a way, for quite some time, we have had this narrative in markets and in the global economy of US exceptionalism, in which the US was the economy that was growing at the fastest pace within the developed world. It actually had interest rates, both in nominal and real terms, being among the highest across developed countries. Of course, the equity market was on a very strong upward trend. So there was nothing to dislike, right? And investors, I would say, globally were quote unquote overweight US assets, overweight dollar-denominated assets. Many of these pillars are changing, right? We're discussing now doubts whether the US economy could actually fall into a recession. We are talking about the equity market being a lot more volatile. Interest rates, the Fed at some point is going to start cutting rates. The acceleration of inflation is going to be eroding the so-called real interest rate. So the dollar, I think, probably has more to weaken here. We're not necessarily in the camp of those calling, this is a mega de-dollarization trend, and that it's the end of the story for the dollar, for the mere fact that there's actually no other currency ready to replace it. There's no other bond market like the US Treasury market that is as large and as liquid to take it over. So I think that this de-dollarization probably and this reduction in dollar exposure by the investors around the world will continue, but it's going to have a limit. But in that continuation that we're talking about here, in moving, let's say, from overweight to neutral, the dollar, probably the dollar has more weakness to experience. We have, for example, a forecast for euro dollar going to maybe 120, 122 by the end of the year. We had a forecast that was already out of consensus of 114, 116, and literally we saw that being hit last week already, right? And we're still in April. So I think that probably for the time being we see weakness for the dollar.
Okay, so euro strength and more dollar weakness. Well, let me come back to the commodities. There are two key commodities that are important for India, also for the world. First, gold. Actually, today is a festival called Akshaya Tritiya when Indians buy gold. So what are your gold targets for the year? Also, what are your crude targets for 2025?
So for crude, we had a situation where oil markets were relatively, let's say, balanced, meaning supply and demand were at equilibrium up until last year. And this was because there was more production coming from the supply from non-OPEC producers, be it the U.S. shale oil production, reaching historical highs under the Biden administration. You had producers like Brazil, Suriname, Guyana, Senegal, that were increasing production, forcing OPEC plus countries to actually reduce production in order to preserve some kind of price floor and some stability, with mixed results. Now, and the demand side was okay. Now we're talking about all this trade war leading to potentially a U.S. slowdown, recession that could turn into a global slowdown / recession, in which case demand for energy, of course, will go down. And curiously enough, OPEC plus countries on the same day that the U.S. announced its tariffs, the so-called Liberation Day, April 2nd, they actually announced that they were going to be increasing production, right? So it looks like they are now in the camp of looking to regain the market share that they lost. So we're looking at basically an oversupplied oil market where we're expecting oil prices to potentially continue to go down. So last year, Brent was in the mid-70s on average. This year, we're expecting it to be in the mid-60s. And by the end of the year, going into 2026, potentially fall into the high 50s. So the direction of travel is, we think, it's an oversupply market that is going to lead to lower prices. Obviously, that is bad news for exporters, but good news for importers, and India counts itself among them. In the case of gold, that has become the ultimate safe haven amid all the uncertainty that we're discussing here, right? We had seen that it took around 12 years for gold prices to increase from $1,000 to $2,000 per ounce troy. It took 4 years to go from 2,000 to 3,000. And it may well take less than 1 year to go from 3,000 to 4,000. We're halfway through it. Can we see 4,000 later this year? Absolutely, unless magically happens that reduces all these global geopolitical risks that we're discussing here.
Okay, $4,000 on gold. You're giving us a very big number on a day when people will be lining up to buy gold. Thank you very much, Luis Organis, for giving us a 360-degree perspective on commodities, currencies, and growth. Thank you very much. We have to wrap up Bazaar on that note. Chartbusters coming up after the break.
The Bajaj twins, Bajaj Finance and Bajaj Finserv trade under pressure after reporting their fourth quarter results. Bajaj Finance sees numbers miss estimates while the management also trims guidance for FY26. Bajaj Finserv's total premium declines nearly 10% from a year ago.
Trent is down close to 3% as the fourth quarter internals reflect mid-single digit like-for-like growth in the fashion portfolio. The stock sees some profit-taking post yesterday's run.
IndusInd Bank trades lower as the MD and CEO Sumant Katpalia steps down, citing moral responsibility over the derivative accounting lapse. The stock down 2.5%.
BPCL climbs more than 2.5% after reporting good numbers. The strong earnings were driven by a beat in the refining segment. The marketing segment was also aided by inventory gains.
Vishal Megamart rallies almost 10% following a good set of fourth quarter numbers. The revenue growth comes in largely in line with past performance, but margins climb nearly 200 basis points, leading to a net profit jump of over 88%.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And as we speak, the market's a little bit under pressure. Some profit taking is what we're seeing. The Nifty is down close to 30 points. The Nifty Bank is down close to around 250 points. That seems to be weighing on sentiment.
We'll keep an eye out on all of that. There is expiry, so some consolidation for the frontline index as well. For the Nifty Bank, however, it's SBI, which is, under a wee bit of pressure. We'll look at SBI down about 2.5%. That's causing a big cash on the Nifty Bank in today's trading session. But remember, the kind of rally that we've seen on the Nifty Bank itself, some bit of profit taking not ruled out. By and large, the indices largely consolidating. Good time to get in Chandan Taparia of Motilal Oswal Financial Services for a quick technical check on the market. Chandan, first up, a happy Akshaya Tritiya to you, your family, and your view on the markets. There is some consolidation right now. Do you think this is a consolidation to buy or a consolidation to perhaps book profits?
Yeah, good morning. Happy Akshaya Tritiya to you and entire team at CNBC and all the audience. May this festival brings prosperity. Talking about the market, we have seen some consolidative move. Nifty got stuck in between support of 23,850 to 24,450 marks. The good part is that supports are intact, but multiple hurdles are visible from last 6-7 trading session. But on the weekly chart, the trend remains intact with buy on decline stance. So I believe till Nifty holds above 24,050 marks, buy on decline could continue to take the index towards 24,500 to 24,650 levels. Talking about Bank Nifty index, it really witnessed a decent run up in last 14-15 trading session from 49,000 to 56,000, but now has been consolidating in a range from last 7-8 trading session. Multiple supports are visible near 54,500, 54,750. However, after the recent rally, the Bank Nifty to Nifty ratio has gone to 2.25. So because of that, some consolidation could be there. But I believe 54,500 could provide a support to the banking index.
All right. Hi, Chandan. Good morning. What about individual stocks?
Yeah, good morning, Nigel. Thanks for having me. Talking about the stock-specific trading idea, first is buy on SDFC Life. This stock has been making higher tops, higher bottom on the weekly chart and has given a consolidation breakout by holding well above 725 zone. We have seen some built up of long position and this sector is comparatively doing well. We have seen a better rollover activities, which also indicate some positive up move in the counter. So with support of 720, one can look for an upside target towards 765 in SDFC Life. Second trading idea, there is buy on Cipla. Selective pharma counters have seen the buying interest. Cipla is giving the consolidation breakout of last 22 weeks. It has been consolidating from last 5 days, but supports are intact at lower zone. So positive price can be seen here with support of 1535 for an upside target towards 1620. Last trading area, that is sell on Voltas. This is the weakest counter which has been making lower top, lower bottom. It has given a fresh breakdown with build-up of short position. We have also seen a sustained call writing in the counter. The stock is trading at multiple week or month low, and a small selling can trigger the downside move of 4 to 5%. So one can sell Voltas with hurdle at 1262, and this counter can go down towards 1180 marks.
All right, Chandan, thank you so much for joining in and giving us your views on a bunch of stocks. While we spoke, a bunch of stocks also started to move higher. It's Akshaya Tritiya, so a lot of these gold stocks, Titan, for instance, has moved to the high point of trade. But look at CEAT. That's big up move is what we're seeing on that countered after the numbers that came by. There was a margin compression, but will that sustain or not is the big question. Maybe from here on, the margins will only expand largely given crude prices have been moderate. So demand and margins are something that we'll have to keep an eye out on. We had the management join us earlier as well on the channel. The stock has seen a big recovery, up nearly 6%, and a lot more from the lows of today. With that, let's get you some more ideas of profit. Let's get in our colleagues from Money Control Pro. We have Kanchi Shah joining in with a stock.
So the company that I've chosen for today is Mahindra & Mahindra. Mahindra is making quite bold moves across the mobility landscape, reinforcing its leadership in multiple segments. In the passenger vehicle space, the company continues to shine amidst rising competition in the SUV category. With an exclusive focus on SUV, Mahindra holds the top spot, commanding a 23% of the market share. With the launch of VE6 and XUV90, Mahindra has debuted in the EV market and has branded them as lifestyle SUVs, thus setting them apart from the traditional fuel-saving SUVs. In the tractor segment, Mahindra retains its #1 position with a 43% of the market share. Growth in this sector is expected to continue, backed by strong reservoir levels, smooth rabi sowing, and a record kharif crop output. On the commercial vehicle front, the company has announced a strategic acquisition of 58.96% stake in SML Isuzu Limited. This move marks a significant push into the over 3.5-ton segment, where Mahindra currently holds a mere of 3% of the share. The company aims to double this to 6% in the near term and then scale it up to 10 to 12% market share by FY31 and over to 20% by FY36. According to the sum of the part of the valuation, Mahindra's stock holds a potential of 10% upside, signaling a promising opportunity for the long-term investors.
All right, Kanchi, thanks a lot for that. With that, we'll step into a short break. On the other side, Manoj Tulsian, who's the Joint Managing Director, CEO of Greenply Industries, joins in to discuss their quarter gone by. Welcome back. You're watching us here on Chartbusters. The stock on our radar is Greenply Industries. It reported a good set of numbers, 8% revenue growth. We had a decent 12%, 18% EBITDA growth that came in as well. Margins improved by about 100 basis points too. The stock, while currently lower by about 2%, yesterday saw a gain of almost 4%. We do have Manoj Tulsian, who's a Joint Managing Director and CEO of Greenply Industries, joining in now. Thanks a lot, Mr. Tulsian, for joining in. You know, your revenue growth and EBITDA growth were led by both plywood volume and realization growth in particular in the MDF business itself. So let's talk about FY26. What kind of revenue growth do you foresee? And if you could break that up into volume growth for both plywood and MDF for this year?
Hi, Mangalam. Thank you so much for having me on the show. And thank you for, congratulating us on quarter 4 numbers. I think this is just the beginning. And, as I mentioned in my last call also, that we see a lot of traction, going forward because of the BIS implementation in the country. And basis the same, we have also given a guidance that this year we are looking at a volume growth in plywood Actually, revenue growth, I would say at this point in time, more than 10%. Most of it would be because of volume, because, price, I am not very sure which way it will go. And also in MDF, in double-digit growth. Last year, of course, we grew at 50% because the base was small. But this year, for sure, a double-digit growth is there on the cards.
That double-digit is volume or realization?
Sorry?
MDF double-digit growth this year would be volumes or realizations? If you could break that up for us.
No, double-digit growth will be volume actually. So again, I'm not really considering price at this point of time.
Got it.
But yes.
Okay. All right. Hi, Mr. Tulsian. Always good to see you on the show. Mr. Tulsian, give us a couple of details then. What's giving this confidence about MDF double-digit growth? Because in the Q4, actually, there was a bit of a degrowth. So if you could tell us on that, point number one. Point number two is, on ply, you are guiding for margins of 10% odd. How is this going to happen? Will it be because of operating leverage that plays out? Is there a product mix element that you're working out there?
Okay. So good, interesting questions, Nigel. So first on the MDF, you're talking about the confidence on the volume growth, right?
Yes. Yes.
So if you really see, Q4 is the only quarter where, we were not able to show significant growth in the volume. One of the reasons for that is this BIS implementation has taken in the month of February. And because of that, there has been a lot of import which has come to the country. Now, having said that, at this point of time, the OEMs and even the importers have flooded the market with that inventory, which we think will get consumed in the next, couple of months more. Now, once that is done and the imports stops, import has already stopped. So that gives us a good visibility during the year to grow. For the full year also, I would mention a growth of 10% plus, because this year what happened, we had 2 unscheduled breakdowns which happened in Q3. That also led to a drop in our overall volume. So which we are not, anticipating any further. So keeping that in mind, and that our utilization is somewhere around 73 to 74% in MDF at this point of time. And, the model of the business is such that we'll continue to ramp up on the production side. I'm sure that this year we will be able to do 10% volume growth.
All right. That explains the MDF bit. And the plywood margins, if you could give us a sense on that.
Margins, last quarter I said, and I was exuberating some level of confidence because we have done a lot of corrections. One, in the market, wherever we saw a gap in terms of competition price versus our prices, those small minor tickles we did. Second thing, on the cost side, we have tried to rationalize costs wherever it was possible, so that we are able to make the business more efficient. Third, if we are able to grow at 10% plus, we'll also have an operating leverage in play. Fourth, on the marketing expenditure, we have been spending, as I said, that we have increased the marketing expenditure from almost around 3% earlier to around 4.5%. So maybe on a larger base, if we are able to manage it at 4% also, maybe incrementally I'll get 0.2, 0.3% margin addition from there also. So we are quite confident that 10% margin plus for the full year is visible.
All right, 10% plus margins are visible. You did speak about ramping up your capacity or production in MDF. You're currently at 73, 74%. With the BIS having been implemented, do you foresee any more capex in the MDF space? And also on plywood, if you could give us a sense?
So on the MDF space, our initial capacity, which we had established, was 800 CBM per day. We have a line extension, which was planned when we did this capex of 200 CBM. But for that, we'll have to take a shutdown of almost a month to implement the same. We have started building up the inventory so that there is no disruption of supply in the market. If you are able to build up the right type of inventory, then we'll go for this line extension implementation, which means then, we have no challenge to even augment additional usage of our capacity even for the next 2 years. So we will be very much comfortable for the next 2 years.
Go ahead, sir.
As far as plywood is concerned, we have already announced in our last quarter, approved by the board, that we are going with additional capacity in Odisha, which is to the extent of around 13.5 million square meter, which gives us an additional 25% capacity on our base today. Having said that, we have already done a lot of line balancing in the previous year in all our plants. So for this year's growth, I have absolutely no worry in terms of any challenge from my supply side.
And what's your next year's target then, once you implement all these capacity expansions?
So, for MDF, the best time to do it is in the rainy season, because that quarter is slightly timid in terms of, the overall offtake. So possibly we'll be able to use better, inventory and create inventory. So if it happens, truly speaking, it will happen between, let's say July to September or October. If we miss that, then possibly we'll have to wait for another year. And in terms of plywood, we are waiting some approvals to come from the government department. Once that happens, then our construction work will start in Odisha. So I think that capacity possibly should be operational sometimes by end of Q1 next year, or maybe beginning of Q2.
Okay, all right. Very quickly, Mr. Tulsian, before we let you go, BIS implementation, you're seeing it on MDF as well as on plywood, or is it on both, or is it just in one?
It's on not only on both, Nigel, it's actually also on our hardware business.
Okay,
so and it's in terms of timing, we are on the right side of the time.
The right side. Okay, I just was confirming that implementation is taking place as well. Last couple of numbers before we let you go. Any debt reduction plans for this year? If you could quantify, what do you end this year with in terms of debt? And also, the last time around, you were briefly hinting that maybe there was, some payment delays from buyers. How are you managing your working capital cycle?
So two things have happened. One, in terms of debt, I would say last year also we reduced our debt overall by 50 crores. And our debt equity ratio is now very healthy, around 0.57. I think this debt equity ratio in the next couple of years should drop to around 0.3, if not less. That is one. Also, during Q4, we have also built up inventory, because we were also not sure about how this BIS implementation and everything will go up. That was a call which we took, because of which additionally we built up an inventory, raw material inventory in the system of around 50 to 60 crores. This will get liquidated by September. So for sure, this year also, by the end of the year, we will have a net debt reduction of around 100 crores from the existing 450. And the subsequent year, I am sure that, if you're on the growth trajectory, we can reduce the debt by around another 100 to 150 crores. So in 2 years' time, our net debt can come to around 200 to 250 crores.
All right, 200 to 250 crores by FY27. Quickly, working capital days, what's the outlook for this year? Because you'll also have to build inventory for the MDF extension, right?
So that is, part of it is already built up to March, so that will only help me to liquidate cash flow during the year. Because, if that implementation happens, let's say by September, October, then we start utilizing that inventory. Actually, it will get utilized in the month of shutdown. So we will be back to a normal inventory, post the implementation of this extension line on MDF.
Okay, all right, Mr. Tulsian. Yeah.
Working capital days is what I was asking. Yeah.
Working capital days, yes, on receivable, Nigel, what you asked, there was some pressure which we felt in the month of, in Q4, where some of our regular dealers also, who were always very regular, also delayed their payment. So keeping that in mind, and, keeping that we'll have to maintain this discipline to some extent. Maybe we compromised with growth in Q4 again. Maybe to the extent of 2%, we could have done better in terms of the top line, but we felt it is better to have this discipline in place, which we have been now following for last 5 years. And but I think, these things will ease out, because I understand there's a lot of support. Government has released a lot of money on the project, so that money will come back to the trade, and then from trade it will come back to us also. So I'm not much worried on the same.
Thank you so much for joining in. Wish you good luck for FY26. Hopefully your double-digit margin trajectory, double-digit volume growth trajectory continues into FY27 as well with your production. But more importantly, the environment should be amenable for that. But before we slip into a short break, here's some good news. Network 18 beats Times Internet to become the #1 news publisher on ComScore. News 18 races past the Times of India to be the #1 news brand in the country. That's not all. At the social plus on-platform leadership network level, Network 18 is the runaway leader as per the Social Plus MMX ComScore report for March 2025. 315 million unique views, which is 55% more than the nearest competitor, that's Times Internet, at 202 million itself. News 18 also races past Times of India in terms of social plus MMX cumulative reach, news18.com, overall clocked 251 million unique views to beat the Times of India overall with 183 million unique views. As per Comscore report for March 2025, and as per the Comscore social media metrics report, Network 18 is 2 times bigger than its nearest competitor with a 54% reach within the 389 million overall social population. And speaking about Indian languages in terms of social plus MMX cumulative reach, News 18 Indian languages is the clear leader in the category with 182 million unique views too. And this as per the Comscore report for March 2025.
Welcome back to Chartbusters. Let's focus on the Bajaj twins. Both of them are under some pressure. Abhishek joins us to dissect those numbers. Abhishek?
Well, both Bajaj Finance and Bajaj Finserv reported the numbers yesterday. Bajaj Finance, the ANA and PAT were a tad below our poll. However, the FY26 guidance is on the weaker side, and that's what spooked the investors in trade today. So take a look at the customer addition. It's expected to be at 14 to 16 million in FY26 versus 18.2 million that they have done in FY25. The AUM growth guidance has been lowered down to 24 to 25% from the earlier long-term range guidance of 25 to 27%. Net interest margin to remain stable as they expect the cost of funds to improve by 10 to 15 basis points in FY26. Fees and charges that will grow at lower than AUM growth of 13 to 15% in FY26. Credit cost to be in the range of 1.85 to 1.95%. Remember that in the previous year they have got credit cost of nearly 2% higher than their guidance as well, and this time around 1.95% continues to remain on the higher side as well. So return ratios have been lowered down with respect to expectation for FY26. ROA guidance has been cut down to 4.4 to 4.6 versus 4.6 to 4.8% earlier. ROE guidance has been cut down to 19 to 20% from the earlier guidance of 21 to 23%. With reference to Bajaj Finserv, the general insurance reported a weak show. Total premium over there was down about 9.65% YOY and 27% sequentially. In that, the gross written premium was down 13% YOY and more than 34.5% sequentially. With respect to the claim ratio in the general insurance, that saw massive improvement to 62.9% versus 70.3% on a year-on-year basis and 77.7% on a sequential basis. The PAT was down over there 4.5% on a YOY basis and about 9.25% on a sequential basis. With reference to the life insurance, that reported a good show. The income over there has increased massively on a sequential basis. However, the PAT was down both YOY and quarter-on-quarter. Back to you.
Right, Abhishek, thanks a lot for that. So that's about Bajaj Finance and Bajaj Finserv, the top Nifty losers today. But Scheffler India is buzzing in trade today as well after a strong quarterly performance. Sudarshan joins in with more. Sud.
So same quarter last year, 2 of their 4 segments had reported a decline. Now from there, in this quarter, all the 4 segments have seen a growth in double digit, and it's the 4th consecutive quarter of double-digit year-on-year growth for the company. Now coming to the main numbers, EBITDA was up 19%, even margin has come in at more than 18%. Domestic business had seen a growth of 13%, and exports business had seen a growth of more than 23%. The one segment that forms nearly 40% of revenue, that is the bearing and industrial solutions, had seen a growth of more than 13%. Another major segment is automotive technologies that forms around 33% of revenue. That also seen a growth in the range of 15 to 16%. And considering the healthy growth that company has been reporting on a continued basis, and that's the reason you are seeing a big move in the stock and currently up around 7 to 8%.
Okay, all right. Thanks a lot for that, Sud. Well, on that note, we'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.
Good morning. Welcome to Trading Hour.
It's a Wednesday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Hormuz Fatakia. And markets are fluctuating between modest gains and modest losses. But in the last 10 minutes, I think there was a bit of a pickup. At about 10:30, 10:45, when I was walking up, the markets were down. Banks were, the Nifty banking index was down close to about 0.5%. So there has been a bit of a recovery if you pull up that intraday chart. But again, not much to show in terms of the index, in terms of moves. There you have it. A little bit of a spike. But lots of stocks are moving around. For starters, banks are dragging. The Nifty PSU banking index is under deep pressure. And in terms of individual financial names, Bajaj Finance, in fact, the Bajaj twins, but Bajaj Finance in particular has cut the guidance on the return on assets, which basically indicates that the company expects some impact on profitability, some pressure on profitability, and they may be looking to introduce lower ROA products. So Bajaj Finance ROA guidance cut has disappointed the street. IndusInd Bank is the other one. For starters, it had a massive 40% rally, but Emkay today has downgraded the stock to a reduce, and they say the CEO resignation derails hopes of a smooth turnaround. And SBI, that's the other laggard in the banking space, board meet on Saturday where they will consider results and some fundraise. Trent is losing ground. Remember here, valuations are very expensive, 70 times forward FY27 PE. On the gainers list, you've got a BPCL post numbers, Power Grid, HDFC Bank in the banking pack is holding up in the green. And not to forget, today is the Nifty weekly options expiry.
The index has been taking a backseat for the last couple of days, and there has been a lot of stock-specific activity that's been going on.
Actually, yesterday and today, because Monday was a good session. Monday, we were up more than 1%.
You're going into a holiday as well. There is a lot of global macro data that is lined up that we'll now be reacting to on Friday. So we'll have to digest 2 days of global cues as well, and very heavy ones at that. So we keep an eye out on all of them. And of course, as Reema was highlighting, a lot of stock-specific activity. Some good earnings reactions. Vishal Mega Mart is now the top gainer on the Nifty 500, 10% higher on the stock. There have been multiple blocks that have also taken place on the stock at around 116 rupees a share at an average price, that is. So 9.5% higher on Vishal Mega Mart, and CAT 2 is now trading 7% higher. And the good commentary, the good management commentary from CAT is rubbing off on the other tire stocks as well. Say the likes of JK Tires, that's up 3.5%. For the likes of Balkrishna Industries, that too is up around 3% in today's trading session. What's coming off slightly is defense as a theme, and they are seeing some profit booking after the stocks had seen a massive run up over the last 2 trading sessions. So a lot of these defense names are seeing a bit of a cool off in today's session. Hindustan Aeronautics is down a couple of percentage points. BEL is down around 0.5%. Pull up Paras Defense, that's the one that needs to be kept an eye out for, because the stock was up 30% in the last 2 trading sessions. Mazgadoc is already...
And today, by the way, Paras Defense reporting
results as well, but that is continuing to move from another 5.5% on Paras Defense as well. So defense is recovering from the lows, but otherwise it's a very stock-specific market so far.
Oh, indeed. Let's straight away get to the first corporate then we have on the show. Jana Small Finance Bank is on our radar. The company's Q4 profit has declined by 61% on a year-on-year basis. The net interest margins declined both quarter-on-quarter and on a year-on-year basis. We have with us Ajay Kanwal, Managing Director and CEO of Jana Small Finance Bank, on the show now. Thank you very much, sir, for joining in. If you could give us some indication of how you expect FY26 to pan out in terms of growth, in terms of margins, and even the asset quality. What do you anticipate?
So first, a very good morning to you, Reema and Hormuz. I would like to start with a request that you please change the reporting on the Q4 in the year. And my submission to both of you would be that take away the deferred tax asset out of the year-on-year performance.
Okay.
Because your deferred tax asset doesn't tell you how the institution is performing. So it tends to mislead folks, which is what you're showing on the screen, which is fall of 61%. And deferred tax asset goes with, what we've been carrying from the past. And so I'll give you a simple number. Between the 2 quarters, DTA in Q4 last year was 155. So it was adding to the profits by 155 crores. Deferred tax asset this year is 28 crores. So you see just 4 crores for the quarter. So it's a 151 crore difference in deferred tax asset between Q4 last year and Q4 this year. If you just add that back, the profit is positive. So that's the first most important thing. The second most important thing for everybody who's following that is we have accelerated provisions. The reason we have accelerated provisions is purely because we would like to keep our net NPA below 1%, gross NPA below 3%, and that allows us to apply for the universal bank. the criteria for universal bank application is 2 years in a row, we have to be 3% and 1%, below 3 and below 1. And to meet that criteria, we have to accelerate some of our provisioning, which is also what we have done both in the Q4 and the year. So I'll just give you the other number on accelerated provision, which is very important to hear. This year, we have done accelerated provision of nearly 305 crores, over and above our PAT. So my first submission to both of you and to the analysts who are helping write these headlines, that it will be probably better if you just look at these two aspects and then do the reporting, because if you just report fall in 61%, then the people who don't really go into the details, which they expect that you all will not be getting a good picture or probably the correct picture.
So we got that point. We look at the profits X of the deferred tax assets. But can we focus on some of the other, what you expect in terms of growth and even in terms of net interest margins? Because we've seen a sequential decline and a year-on-year decline there.
So, Rima, growth this year was 19% on the asset side. We have guided that we'll do 20% on the asset side next year. But let me tell you the most important part. This year, our growth in secured assets was 40% year on year. We had a decline in the unsecured book, which was largely MFI, by minus 11%. So I really want to say this again. We grew 40% secured asset, minus 11% on unsecured. For this financial year, we'll do literally similar. We don't expect a decline in unsecured assets anymore because the worst is over. But we do expect a very healthy 30% plus growth in secured. So we will grow assets by 20%. On the deposit side, this year we have grown 29%, CASA at 18%, retail at 19%, and the rest is bulk growth. So we have had a very strong deposit growth this year. Our surplus cash is about 2,800 crores on our books on 31st of March. So yes, we should see very strong asset and deposit growth this year. Focus areas will be secured assets, focus area will be CASA and retail deposits. On net interest margin, we have declined to 7.7%. And like I mentioned, we have had a negative growth on our unsecured book, which is largely MFI, which has caused a decline. So the MFI book doesn't decline this year, which it should not, or grows even slightly positive. NIMs will improve. Cost of deposit will get better this year. As you know, there was stress in MFI last year. So interest and suspense should be less this year. So if we take a combination of all three, our NIM should get better this year. Also, I must add, every passing year, our secured book is growing. So the number is March 24, we were 60% secured. March 25, we are 70% secured. So yes, as we grow more and more secured, NIMs will start compressing. But the compression this year is largely due to negative MFI growth, which should get, a lot of it should pull back during this year.
Mr. Kanwal, good morning. Thank you for joining in. So 70% secured by in FY25, so 80% secured by FY26?
Almost I wish. But as you know, our balance sheet now is roughly about 30,000 crores in assets. Every percentage point is difficult to move. Last year was a bit more sweeter because of the negative minus 11% growth on microfinance, which is not what we normally do. We normally grow by 1% or 2%. So if you take our microfinance to...
We seem to have a patchy line there. Mr. Kanwal, please finish your point, sir. We just had a patchy line with you.
Sorry, what I said is it will not become 80 so fast because the size is much bigger of the balance sheet. Also, this year we had a minus 11% of microfinance, which we don't anticipate this year. So yeah, expecting between 73, 74, 75%, that should be the range where we will finish secured.
So the worst of the MFI's stress is over, is what you're saying. So would that stay in FY26, saying that the worst is over, or would you start see things turning for the better in this segment that has seen a lot of stress over the last 12 to 15 months?
So I think for the better, I would probably put in second half next year, purely because we had some blip coming across the industry from Karnataka. So we have a few geographical pockets which don't seem to be, wasn't a problem in the past, seems to be indicating some challenge. So I would think that, listen, hard work continues, at least for the first half. Good news is in Q4, our microfinance book has actually grown by 0.2%. Now, I'll tell you what growth means for us. It doesn't mean the book is growing in the profit. That's all secondary. Primary is my collections people who are responsible for giving more sales are feeling comfortable doing sales, which is why my book is growing. That means the last mile Jana employee who's in touch with clients is now comfortable to grow. That is a most positive sign you should see. And which is why we are very enthused that yes, microfinance will have a much better year than last year. But would I take my eye off the ball? Am I very comfortable? Am I doing 99%? No, we are still at 98.5, 98.6. I just need the last bit to come in. Then I'll be a lot more comfortable.
What about asset quality? You managed to bring down your gross NPA in the March quarter to 2.71%. Does the downward trend continue?
So listen, our asset quality primary driver from, we were lower last year. It became a bit more deteriorated primarily for microfinance. So as microfinance changes, we will obviously get better this year. Second, I must tell you is that the secured assets are very predictable and very clear in how they operate and what to expect. So I would suspect that yes, our gross NPA and net NPA should be on a better trend this year too.
Have a number in mind? Do you think it can head down to say 2.5?
We'll try as hard as we can. I don't want to commit a number because, I'm a bit more like, let's watch MFI for first half. But I'm sure we'll catch up again. And then I'll tell you more of it. I only have one request, and I'm sorry being repetitive. This falls 61%. Every time I see it, I feel very bothered. Please have someone have a look at it.
Yeah.
Sure, Mr. Kanwal, thank you so much for sparing time and joining us today. Wish you good luck for
thank you so much
the full FY26. That was the management there of Jana Small Finance Bank. And the stock, though, recovering from the lows of the day. We'll take a short break. Up next, we discuss what's buzzing in the commodity space. Manisha Gupta joins in. Stay tuned. Welcome back. Flat as flat can be on the index, but the focus is on specific stocks, and that is where the actual action lies. Westlife Foodworld is now down 5%. KFin Tech is down 5%. JSW Holdings is down 3.5%. And a lot of the other movers in today's session, Tejas Networks is down 3%. BSC is down 3% in today's session. Also, just pull up Samvardhana Motherson and to check if there has been a reaction with news just breaking a couple of minutes earlier about Volkswagen's first quarter numbers that have seen a 37% drop in profitability for the first quarter. Samvardhana Motherson down around 1.5%, one of the key suppliers to the company there. And almost all of the other auto names as well, Rima, they have been affected because there was a lot of anticipation that there might be some relief on the auto tariff front, and the executive order that Donald Trump signed last evening does not provide that kind of relief as was anticipated because the tariffs still stay.
25%.
And they still stay, and instead of simplifying the process, it just complicates it because it involves rebate and reimbursements and a lot of other things, and has a lot of moving parts to it. So no such relief for auto companies, and it's showing up on names like Tata Motors as well, because Tata Motors too is down around about 3% in today's trading session, as are some of the other auto names as well, barring tire stocks. Of course, Tata Motors at the lowest point of the day down around 3%. But shifting focus now to the commodity space, and Manisha Gupta is joining in on the auspicious occasion of Akshaya Tritiya. Manisha, good morning.
Well, thank you for that, Hormuz. And it is believed that if you buy gold today, it will never give you a loss going forward. It hasn't actually given you a loss ever in the last 20, 25 years, or the history shows that it clearly has kept up with the inflation and continues to be a very strong safe haven as well. So, usually this is what I've got as numbers from the industry, that usually that you see sales on Akshaya Tritiya is anywhere between 18 to 20 tons. But now, because the prices are so expensive, the markets anticipate that 12 to 15 tons of a sale on Akshaya Tritiya, that's today, is what you perhaps could see. This is what we've seen in sense of Akshaya Tritiya prices over the years. So as you can see, we've clearly doubled from where we were in 2022. And in the last 1 year, we've seen 25,000 rupees per 10 grams of a surge coming in for the gold prices. We also did see a lakh rupees, 10 grams coming in the month of April for the gold prices there. And it's not just gold. When you look at silver, and that is another thing that is perhaps being bought on Akshaya Tritiya, as you can see, the last few years have played anywhere between 60s to 70,000 in cents of a kg for silver. But last year, we've seen higher highs come in. And this year, we've seen a lakh rupees a kg come in for the silver prices also. This was somewhere in the month of March there. So very strong gains is what we are dealing with in sense of gold and silver since the last year, or last Akshaya Tritiya, that is. So when you look at the numbers, they have been quite on the stronger side there. Where there are various gold buying options, and majority, 60 to 65% people still buy it in physical in sense of jewelry, bars and coins. But when you look at financialization of gold, gold ETFs, mutual funds, even digital gold seems to be doing quite well right now. And one of the major reasons that you have seen gold prices gain in this year because of the tariff concerns and also inflation concerns as well. This is the data for last 3 years. While this year we are up by 27% in case of gold prices, we've seen prices gain up by 28% in the last year and 15% in 23 as well. So it has been a good going. Global central bank buying has been the major reason that you have seen the prices sustain on the higher side. So 1,082 tons was an all-time high buying by global central banks in 2022, but they have kept it above 1,000 tons for the last couple of years as well. And this year, while the month of Jan and Feb has seen 44 tons, but the belief is that you could be looking at 800 to 1,000 tons being bought by global central banks in this year as well. So while the support comes in from central banks, ETF buying and trade tensions, the markets do believe that the kind of highs that we have seen in gold are kind of going to sustain on the higher side. I want to talk about the gold price outlook, and Bank of America, for one, expects the 33.50 would be an average price for this year. You also have statements coming in from Deutsche Bank, ANZ talking about levels of 3,600, 3,700 by the end of this year. And then it is about JP Morgan, which says that the gold prices could surpass $4,000 an ounce as well. That is by the year 2029. And that's exactly the kind of outlook that we have coming in from BGS, John Paulson, which believe that the next 3 to 4 years are going to be very, very bullish for the gold prices. Some correction in the near term, of course, could be seen, but the longer term still continues very strong. Well, we are joined by Khushbu Ranawat. She's chairperson, Western Region at GJPC. Khushbu, hi. A very happy Akshaya Tritiya to you. And the way the gold prices clearly have been moving makes for a very strong case for investment from where we stand right now. What is your sense on this Akshaya Tritiya? What kind of a buying are we anticipating for the Indian markets and, of course, for the international diaspora?
So gold has definitely proved to be reliable throughout. It's increasing, and people are loving the sentiments. But it's become a sudden increase. So there's a tightness, what money can the customers pull in. But what we're really glad about is our retailers. They're really focusing on the strategies, how they can pull in the customers, how they can encourage customers to invest in gold. So yes, we should all be out there buying gold.
Oh, well, absolutely. Khushbu, with the way the prices are, almost a lakh rupees at 10 grams, what is it exactly that the consumers are buying, and what kind of footfalls are you anticipating in sense of a percentage increase or even a decline as compared to last year?
Fingers crossed, gold is high, but there will be a trend in lightweight jewelry, millennium collections, and people will keep buying, yes, because gold is there to stay. And looking at the situations globally, it's not going down because all the economies of the world have reserves in gold.
Khushbu, what's your sense on exports this time around? I mean, does the Indian diaspora outside also believe in Akshaya Tritiya? Do you see those buyings coming in as well?
That's a little bit sentimental right now due to the tensions between Trump and China. But hopefully, if that goes down in a few weeks, there will be a big pull-in for sure.
You talked about lightweight jewelry, which really seems to be doing well right now. Is it also about light caratages? Is diamond doing better? Is studded jewelry doing better? Or are people buying more coins and bars?
Akshaya Tritiya is definitely more about coins and bars, but we have seen a rising trend in natural diamond jewelry now also. So hopefully everything will do, all the commodities will do very well this Akshaya Tritiya.
Khushbu, do you also see a spillover on silver, or do you think gold it is?
Silver also, yes. Silver also, yes.
Any number that you're willing to put out on what kind of tonnages or what kind of a percentage would we see in sense of sales? Because I was talking to a lot of people and they said 20 tons thereabout average is what we sell on Akshaya Tritiya. With the way the prices are on where they are, what's your sense?
Hopefully we'll reach the same mark. 20 tons it is.
Khushbu, any sense on prices that you have going forward?
No, I don't think it's going to rise more. Hopefully we see some correction soon. So that will be nice, but not too dip and not too high also. It'll be pretty much stagnant now.
Khushbu, also it really seems to be turning into a long weekend with a holiday tomorrow. So are you anticipating the Akshaya Tritiya spillover tomorrow and then towards the weekend?
Yes, could be, yes.
A final question then, Khushbu. How long are you working today? Because I spoke to some jewelers and they said they've opened their shops from 6:30 a.m. would continue until perhaps midnight or 1 a.m. as well. What really is the sense that you're getting in from various DJPC members and jewelers community?
Yes, a lot of our retailers in the south, a lot of the retailers in Maharashtra have also opened their shops very early. So hopefully we'll soon see a lot of pictures of the long lines awaiting for them.
We need shops to be open for longer, right? Because we are sitting here in the studio and we'll be here.
Now we buying is the question.
Oh, yeah, that's a more pertinent question too. But Khushbu, thanks a lot for joining in. Manisha, thank you for stepping in as well. We take a short break. The index still remains flat, as absolutely on the flat line. But Praj Industries, though, is at the lowest point of the day now, 6.5% lower, and an earnings reaction there as well. We take a short break. We come back with market technicals and trading ideas with Mitesh Thakkar. Stay tuned.
Welcome back. You're watching Trading Hour, and Vamakshi is now joining in to talk about the rise, the surge seen in Vishal Mega Mart post their numbers, and the decline seen in Praj Industries. Vamakshi.
Well, Reema, let me first start off with Praj Industries. A weak set overall coming in from the company. When we look at the numbers, it's a miss across the board. The revenue has declined by 16%. The employee expenses as well as the other expenses, on the other hand, saw an uptick of almost 17%. Resultantly, the EBITDA margin was under a fair bit of pressure. Even in fact, the EBITDA margin declined by almost 424 basis points, and this could likely be on account of scale-up related expenses of Praj GenX manufacturing facility, wherein they incurred a loss on the PBT level of somewhere around 80 crores. The net profit, on the other hand, also saw a very sharp fall of almost 60%. The ordering activity, on the other hand, was good. Order intake saw an uptick of 11.7%, and the order book stood at 4,293 crores, an uptick of almost 11.3%. So therefore, it's largely an execution-led miss this time around for Praj Industries. In fact, the management also joined us, and they said that they're expecting 10% revenue growth, double-digit margins going into FY26. They're maintaining their 2030 targets, 10,000 crores of revenue, 50% from bioenergy and 50% from the other segments. And they also said that Praj GenX received approval from international customers and they will start booking orders in FY26. But overall, it's a dismal performance from Praj Industries as compared to analyst estimates, and therefore the stock is down and out in trade. But on the flip side, when we look at Vishal Mega Mart, it's a completely different story. Revenue is up nearly 23%. The margins have improved to almost 14% from 12.1%, and the net profit has seen a very sharp surge, up nearly 88%. As far as internals are concerned, same-store sales growth stood at 13.7%. Revenue from own brands was at 73%, so higher share coming in from there. Sales from apparel also saw good uptick, and the gross margins too improved to 28.3%. So good results for Vishal Mega Mart. Resultantly, the stock is higher today.
Well, stock is doing well for itself, among the top gainers on the Nifty 500, 8.5% higher for Vishal Mega Mart, and one of the highest price targets for the stock is at 161, and that's, I guess, from Morgan Stanley. So good going for Vishal Mega Mart. The other pocket, though, that is having some mixed trends, with some stocks doing well and some not so, is the real estate stocks, and with Prestige Estates extending its gains from yesterday's trading session. After that CLSA report, and now the official announcement of the foray into the NCR market as well. Rhea is here with more details on that. Rhea.
Well, yes, a lot of real estate stocks are in focus once again today. First up, we have Prestige Estates, since they have announced their entry into the NCR residential market with the launch of the first phase of their project in Indirapuram. Now, the first phase of this project has a GDV of over rupees 9,000 crores, and once the second phase is launched, the GDV for the total project is going to reach rupees 12,000 crores. So this is a big launch for Prestige Estates. Now, on the back of this, Morgan Stanley has upgraded the stock to an equal weight rating, with their target price actually being cut to rupees 1,370 per share. They've said that the worst is behind for the stock, and the recent RERA approval for the Indirapuram project could result in strong pre-sales in Q1 and Q2 of FY26. CLSA also yesterday, they had maintained the outperform rating on the stock, target price of rupees 2,380, saying that they believe that this launch will lay the foundation for strong pre-sales in Q1 and 2 of FY26, and it will also allay concerns over the miss on its FY25 pre-sales guidance. Now, remember, the company had only achieved rupees 17,000 crores versus their guidance of rupees 25,000 crores for pre-sales in FY25, and the approval delay for this Indirapuram project was the key reason for the miss in this guidance. And CLSA has also said that they believe that the company can sell up to 60 to 70% of this project in FY26 itself. Now, some other real estate stocks are also buzzing away in trade today, and this is on the back of commentary from Oberoi Realty's management in yesterday's earnings call. Oberoi Realty management has said that the luxury segment is agnostic to the economy, and they don't see any slowdown at all in the luxury segment, and that there is a large appetite, and the consumption per person per square foot has also gone up substantially. So they are seeing no slowdown in the luxury market, and on the back of this, we have Godrej Properties, Macrotech, DLF and Phoenix Mills trading around 2.5 to 6% higher today, with Macrotech and Godrej Properties being the big gainers. Now, there has also been some negative commentary from Oberoi Realty in the earnings call yesterday. The management said that the next quarter won't see any launches because of the monsoons, and all of the launches are lined up in H2 of FY26 as demand will pick up in the festive season. So a bit of a negative view for Oberoi Realty, and the stock is still trading slightly in the green.
Thank you very much for that. Mitesh is now with us for a quick technical check on the markets. Mitesh, things are very quiet on the benchmark, just like yesterday. But the Nifty Bank continues with its weakness, 230 points lower. What have you made of the trade?
So my understanding is that we are possibly looking at some kind of consolidation. The lower bound was established on Friday when we got a dip around 23,850. There is also a pivot at 24,000. So I don't know which one is correct, but I think the broad understanding is that on the upside, 24,500 is the upper end of the range. They will take a few points, and on the downside, it's either 24,000 or 23,850. So broadly, I think the market might just be sideways in this kind of range. Having said that, the stock calls that I have are both tire stocks, Balkrishna and Apollo. Balkrishna is a buy with a stop at 26.35 for targets of 27.70. And Apollo Tires is the other one which I like. That's a buy with a stop at about 462 for targets of 485.
Mitesh, what about some of these earnings reactions as well, right? There's the extreme earnings reactions that you're seeing. Bajaj Finance in particular is down 5.5 now. What are the charts indicating here? You'd use this dip to buy now at 8,600?
See, Bajaj Finance has had a very good rally from levels of around 6,800 to about 9,600. And now I think it's going through some kind of first level of correction of profitability. I would wait for slightly lower levels. Preferred levels on the entry would be around 8,300 or 8,250. So another 200-300 points and you might want to look into the stock.
All right, Mitesh, thank you so much for sparing time and joining us today with your views on the index and on specific stocks as well. Take a short break. We discuss market fundamentals on the other side with Jyotivardhan Jaipuria of Valentis Advisors. Stay tuned. Welcome back. And the Bajaj Finance twins are the big casualty of today's trading session on the Nifty, at least. Both of them down 5.5 to 6.5%. Be it Bajaj Finance or Bajaj Finserv in reaction to the results. And no comfort whatsoever provided by the bonus issue, the stock split, the dividend from Bajaj Finance. So no bottom fishing at all. Both of them still at the lowest point of the day. Abhishek is here with more details on that. Abhishek.
Well, both Bajaj Finance and Bajaj Finserv reported the numbers yesterday. Bajaj Finance, the ANA and PAT were a tad below our poll. However, the FY26 guidance is on the weaker side, and that's what spooked the investors in trade today. So take a look at the customer addition. It's expected to be at 14 to 16 million in FY26 versus 18.2 million that they have done in FY25. The AM growth guidance has been lowered down to 24 to 25% from the earlier long-term range guidance of 25 to 27%. Net interest margin to remain stable as they expect the cost of funds to improve by 10 to 15 basis points in FY26. Fees and charges that will grow at lower than AUM growth of 13 to 15% in FY26. Credit cost to be in the range of 1.85 to 1.95%. Remember that in the previous year they have got credit cost of nearly 2% higher than their guidance as well, and this time around 1.95% continues to remain on the higher side as well. So return ratios have been lowered down with respect to expectation for FY26. ROA guidance has been cut down to 4.4 to 4.6 versus 4.6 to 4.8% earlier. ROE guidance has been cut down to 19 to 20% from the earlier guidance of 21 to 23%. With reference to Bajaj Finserv, the general insurance reported a weak show. Total premium over there was down about 9.65% YOY and 27% sequentially. In that, the gross written premium premium was down 13% YOY and more than 34.5% sequentially. With respect to the claim ratio in the general insurance, that saw massive improvement to 62.9% versus 70.3% on a year-on-year basis and 77.7% on a sequential basis. The PAT was down over there 4.5% on a YOY basis and about 9.25% on a sequential basis. With reference to the life insurance, that reported a good show. The income over there has increased massively on a sequential basis. However, the PAT was down both YOY and quarter-on-quarter. Back to you.
Abhishek, thanks a lot for that. And taking this conversation forward, we've been joined by Jyotivardhan Jaipuria from Valentis Advisors. And Jyotivardhan, good morning. Thank you for joining in. There's been a lot of this stock-specific earnings reactions that we are seeing. We'll get to individual names as well. But starting off with the Bajaj twins, right? Bajaj Finance, Bajaj Finserv, both. The street has become so used to them reporting growth in the high 20s that even a moderate guidance cut has left them disappointed to such an extent. What do you make of this now? Do you use this as an opportunity to accumulate names like Bajaj Finance, or would you wait and see for things to normalize first and then take action?
Yeah, so in general, what I'll say is that a lot of stocks where valuations are high, there the margin of safety is very low, the margin for error is very low. And when you have that sort of valuation, what tends to happen is people are always building in a very optimistic scenario. So anytime where the optimistic scenario is not so optimistic also, it still looks good, but it's not as optimistic as people thought, then market tends to go down. The other is, you've seen a fairly good rally if you've seen the markets in general over the last few weeks. So to that extent, anywhere where you've seen a rally coming, I think in general, we'll see some consolidation happening. So a lot of times you may see earnings doing well, but the stock correcting because, the stock had run up already in anticipation of good earnings.
Jyoti, hi, morning. So what has been your approach to trade? We've seen a lot of the not volatility, but the markets have recovered considerably. They've snapped back up. And trade tensions to some extent have thawed. Even the global markets have recovered. I think it's been up now, 5-6 days in a row, and the Nasdaq is back to the levels that it was on April 2nd. So what's the call on the markets now?
Yeah, Rima, so, I guess what we've seen is after that April 2nd, when we had this massive reciprocal tariffs, to some extent, I would think that, the Trump administration is going back, getting a little easier on these tariffs. Because if you see even probably a fourth of China's imports have got duty-free, all the electronics and that sort of stuff. The noise from there is always been more positive in the last few days, saying this China tariffs are not sustainable, a deal will happen. We're going to do a deal with many more countries very soon. So it seems like, they're getting a bit more relaxed on it. They're, they figured that what they did was probably the extreme position and that was like a bargaining tool. But that's not what they can really sustain. They want to get back to more normalized scenario. So I think the market's taking cue from that, saying that, we've seen the worst of tariff play out. And that is the reason markets everywhere is corrected. From where, we've corrected and where we've rallied to now, we've probably seen like a 10% sort of rally from the lows. I think we are probably due for a bit of consolidation now, where markets will hang around waiting for the next really positive news to come. Probably in India, the specific concern is this whole border situation and how it plays out. Because our views, it probably will not be a long drawn-out battle, but probably some very short strikes which we'll have. But, markets are a little concerned about that. But I think, the general thought is probably it's going to be a very short and swift surgical strike and nothing very major.
Sticking to that tariffs bit, Jyoti, what do you do with these tariff-related sectors now, considering all the uncertainty that's around them? There is still no clarity on how much or whether there will be tariffs on pharma. There is now some clarity emerging that the 25% tariffs on auto imports will stay. And there has been some back and forth here with regards to auto parts as well. What do you do with both autos as well as pharma? For autos, at least, there is also no help from domestic demand either. So what about these two sectors?
Yeah, so, in general, what we had done with autos is, our whole auto exposure was in auto ancillaries, which don't have export component. So this was even before the tariff, because our view was that, the international scenario is not looking great. So we don't want to get too much into companies which are very dependent on the international demand. So the domestic companies are fine. Where we'll see is there'll be some slowdown coming in the whole, OEM space. So, if you're looking at auto ancillaries, which either, got new products which they have just entered into, so that helps ensure demand, even if, the overall OEM demand doesn't grow, or they are diversifying into some newer markets. Those are the things which we have been really focusing on. So we are comfortable with the auto ancillary exposure, but, most of these are not geared to US. Pharma is the other sector where we are very overweight, and we have exposure to the US generic pharma. So far, we have not trimmed any of that. In fact, we've been like very steady over there in pharma. Our call is that, even if the tariffs come, and we don't even know whether it's coming because it's been all over the place. Tariffs are coming, not coming. Then he said in 1-2 months it will come. But just now the move doesn't seem to be like tariffs are coming. Even if it comes, the generic sales to US are quite high. And the way the margin profile is, I don't think, Indians can absorb too much of that tariff increase. So ultimately, it will be passed on to the consumer. And that's where I think we'll get some relief coming, because once medicine prices go up in the US, then we'll probably see some rollback of the tariff. Hopefully, but before that comes, because India is already talking to US, and I think all the statements coming from there are India is probably going to be one of the few countries who will do an early trade pact with them. So hopefully, as part of that, Indian generic pharma exports will get a favorable treatment from the US.
Jyoti, you also added your exposure to a chemical company in the quarter gone by, given the sharp fall in the stock price and expected recovery. With the appropriate disclosure, you want to tell us which company is this and what made you like it?
So, without getting into names, essentially for us, it was like a company which is into exports. So in general, if you look at the chemical market, what happened in the last 18 months was it was getting dragged down because there was a destocking at the dealer level. Demand was weak, plus the destocking was happening, so the demand environment got even weaker. So our sense is that the dealer inventory levels are very low now. And with that, you probably are starting to see volume growth, which is in line with what the demand growth is. I think over the next 6-9 months, probably we'll see some dealers restocking happening also, which will boost demand. So that's like, the overall macro scenario for chemicals. Secondly, the stocks have done badly. So they're not very, very cheap at the moment, but they've been one major underperforming sector. So given that there are companies which now on a valuation basis are starting to look good, we are looking at some companies where new capacities have come up, and basically there's a volume growth which is there. The market is able to absorb the volume growth today because, the demand environment is picking up. So just the higher utilization of the existing assets will lead to higher ROE, higher margins, and, higher profit growth. So that's what we are counting on. Now, this is, since we were talking about tariffs, this is one segment which is vulnerable to US tariffs, because, one is like anybody who exports to US is a problem. But even if, let's say, China is exporting to US and they stop exporting, they may start dumping all over the other parts of the world. And so, chemicals is something which we are a little worried about on the tariff environment. And that's the reason we've been nibbling at the sector at the moment, but maybe not taking a very big position on it.
So your big overweights are pharma right now and?
Pharma and financials. So as you know, for the last 6-9 months, we've been talking a lot of the financials and the banks, and that remains one of our biggest overweights.
What about retail, Jyoti? Because a lot of these companies like Vishal Mega Mart, D-Mart, numbers for Vishal Mega Mart at least were on the good side, and you're seeing that in the stock reaction as well today. But as a domestic oriented sector, what would your analysis be on this retail hyper-local market space?
So, retail as such, we actually don't have exposure in retail as such. And most of it is because we are very, very fussy on valuations. So, our whole 3U's philosophy is we like to buy stuff which is very undervalued. And most of the time we want it as underperforming and, under-owned type of sector. So retail doesn't fit in it because most of the time we grapple with valuations in the segment. And we find the valuation very expensive. So we generally stay away from it. There are some other ways we play consumer, which we find which much cheaper, at least, or not very cheap, but much cheaper than what the retail space is about.
Okay, just one final quick answer from you, Jyoti. You've done a lot of analysis of the correction seen in small cap indices. And this time also, we've seen the small cap index correct more than 20% from its record high levels. So tell us, what does history tell us about the way forward?
Yeah, Dima, so, history tells us that you should buy the dip. And most of the time, like even today, when we look at it, we are like small cap is looking expensive, probably not make money. But, the index has been there for 21 years. The median correction in the small cap index is 23%. And the median recovery a year later is close to 40%. So essentially, what you have is that, the index goes back to the peak in whatever 12 to 15 months after the correction. And so, somewhere you end up thinking that probably big money can be made if you really bought these dips. You don't know exactly which is the bottom of the cycle. But at some point, if we start to get earnings, and get a little better, then we'll probably start seeing small cap starting to do well. A year later, we'll look back and think this was like a big buying opportunity.
Indeed. Jyoti, thank you so much for sparing time and joining us this morning with your views on the markets and on specific sectors as well. Take a short break, but before we do that, here's some good news. Network 18 has beaten Times Internet to become the #1 publisher on ComScore. News 18 races past the Times of India to become the #1 news brand in the country. And that's not all. At the social plus on platform leadership network level, Network 18 is the runaway leader as per the social MMX ComScore report for March 2025 with 315 million unique views, which is 55% more than the nearest competitor, Times Internet, at 202 million. News 18 has also raced ahead of Times of India in terms of social plus MMX cumulative reach. News18.com overall has clocked 251 million unique views to beat the Times of India overall with 183 million unique views as per the ComScore report for March 2025. Now, as per the ComScore social media matrix report, Network 18 is 2 times bigger than the nearest competitor with a 54% reach within the 389 million overall social population. And speaking about Indian languages, in terms of social plus MMX cumulative reach, News 18 Indian languages is the leader in the category with 182 million unique views as per the ComScore report for March of 2025.
Investing.
Welcome back. Let's talk about the big earnings expected today. Vedanta is right on top of that list, and Nigel is now giving us the key expectations.
Well, that's right. Vedanta will be coming out with its set of numbers and we'll be speaking to the management as well. More than the numbers, the management commentary is something that we'll be tracking very, very closely. To run you through the big consolidated numbers, which include Hindustan Zinc, and those numbers we already have, and that's already in the price. Well, the revenue should jump up by close to around 10%. On a year-on-year basis, the EBITDA number as well will look quite good. There will be some margin expansion that we're working with. And profit number, remember, it's all over the place because Vedanta has a couple of one-offs below the operating performance. But the operating performance is something that we'll be tracking. So the higher volumes, both in Hindustan Zinc as well as in the aluminium business, that's what's going to aid the top line growth out there. The power business, well, it will be impacted by lower generation, but that's known. And from the steel business, we like to see some kind of improvement, particularly on a sequential basis. On a sequential basis, though, we'll have the margins that will contract a little bit. And that's because they source some part of their alumina requirement from the third party. And alumina prices did move up. Remember, as of now, they're much lower. But as of the past quarter, alumina prices were higher, which will increase the cost of production, which in turn will hurt the margins on a consolidated basis. The key numbers you need to track is the aluminium, oil, as well as the international zinc business. And all those three are up for you in the screen because Hindustan Zinc is in the price. A rough EBITDA number. You have brokerages like Philip, like Kotak that have given estimates. So that's why we have got those numbers up. That's the prime importance that you're looking at. Besides the numbers, as I said, we'll be looking forward to the timelines with regard to the demerger. The street is running out of patience because earlier it was supposed to take place in the first quarter of the new fiscal. Now they've guided for the second quarter, so we'll have to wait by on that. How is the promoter on the debt front and what is the debt reduction plans as well? Some kind of guidance for the remainder of this year. So that commentary will be monitored as well as the numbers. Back to you.
Okay, thank you very much for that. And IOC is the next one that we'll be looking at. Remember, BPCL was a positive surprise. The stock is holding up. There was a refining beat. What will IOC show up? Sudarshan is here with the expectations.
So our estimates suggest a mixed set of earnings, but as you have said that BPCL has thrown a positive surprise, especially led by refining. And if that is the case, one company that is likely to be benefited the most on an improvement in refining is IOC. So we'll have to see what exactly numbers that IOC comes out with. So as far as estimates are concerned, profit is seen slipping 17%. Revenue may be flat and can come at rupees 1.91 lakh crore. The numbers that matter the most, first one is EBITDA. That might improve by 10%, come around rupees 7,800 crore, and margin too can improve and can come at 4.1% versus 3.7% last quarter. As far as GRM, that is gross refining margin, is concerned, it's likely to be in the range of $4.50 to $6.50 per barrel. And last quarter, the company had reported GRM of $2.90. Crude throughput also may increase by 2%. While marketing sales were down in the last quarter, it was at 24.2 million tons against 24.8 million tons. So what exactly we'll be watching in the commentary? What does company say on the volume front? And if company has heard anything related to LPG compensation. If you remember, it's the one company which is the highest exposure as far as LPG compensation is concerned. But on the earnings front, after BPCL's strong set of earnings led by refining, the expectation of an improved earnings from IOC has increased.
Indeed, we'll watch out for improved earnings potentially from Indian Oil Corporation after the strong performance that BPCL has delivered. And it's showing up on the price as well. BPCL is among the few that's doing well for itself in today's trading session, and among the stocks, among the earnings reactions, of course. And RR Kabul now has moved to the high point of the day, 6.5% higher on the stock, although BPCL has come off the highs of the day. But RR Kabul has moved to the highs of the day after opening lower, 6.5% higher. IGL too has moved to the highs of the day, 5.5% higher there as well. Real estate as a pack, as Rhea just mentioned earlier in the show, Godrej Properties is up 4.5%, Macrotech is up 4.5%, and they are doing well for themselves in today's session. Not to forget Sobha as well, that too is trading with gains of around 2.5%. Take a short break, but a small programming note for our viewers. CNBC-TV18 and HSBC India are back with Season 2 of the SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact, and are shaping the future. Nominations are now open. You can scan the QR code and submit your entry for the SME Champion Awards Season 2.
Years to go from starting from scratch to being able to take this business global. I mean, it's a turbocharged journey.
The first US thought came to us back in 2019 when Trump 1.0 and there was 25% tariffs on China. Okay, now with this 25% tariff, can India compete with China? Because we have this 25% delta. Started with like one person spending like full time into that market, talking to a bunch of customers. The second wave of COVID is when we experienced acceleration.
We're now at Trump 2.0. Tariffs are playing havoc at this point in time. How do you read the latest set of developments in the US.
These kind of opportunities like tariffs, etc., they really allow you to shortcut your sales cycle. So what you would have otherwise achieved in 1 to 2 years, you're able to achieve it in 1 to 2 quarters. I would say in 3 to 4 years from now, these things should be good for India and by extension us.
Welcome back. Now, according to a first of its kind survey done by the Ministry of Statistics, private sector capex is likely to witness a 25% lower growth in the current financial year. Sapna is joining in with more details on this. Sapna.
Absolutely. This is the first of its kind done by the Ministry of Statistics, and basically the sample size was pretty large, over 5,300 odd private sector corporates. And mind you, these are the large corporates with a sizable net worth and a sizable capex plans for their own individual sectors. But what the survey throws up is the fact that as far as the intentions of capex are concerned, for the current financial year, there is likely to be a 25% drop. There is already a drop. That's what the survey shows in terms of the corporate sector intentions for capex for the current financial year. And the numbers are something like this: around 4.88 lakh crore is what they're planning to invest. The number was much higher than the 6 lakh crore in FY25. So that's one big indicator. More importantly, out of those 5,380 odd sample size, 43% of the corporates do not have any capex plans or intentions as of now for FY26. Now, that's a big number that we're talking about. And as I just said, these are not small ticket or small time companies. These are all, net worth heavy companies. So that's a big number to look at. And what are those sectors where you may see some kind of capex not coming in? Basically mining and quarrying, electricity supply, gas, air conditioning supplies, then retail and wholesale trade, repairs of motor vehicles and motorcycles, these sectors. However, on the other hand, if you look at the sectors, so like 3 of them: education, health, and manufacturing, most important. Here, it's intended by the corporate sector that they plan to step up the investments quite a bit, as much as by 50% year on year. So, there is a bit of a balancing act, but the fact remains, if it's 25% lower, the intention, then that's a number to watch out for. And 43% of the respondents are saying they have no capex plans in FY26. This is somewhat that ties up what Finance Ministry has said, that we need to watch out for the global development uncertainty, because that may actually impact the capex plans for India in the current financial year.
All right, Sapna, thank you so much for joining in with that update. By the way, Varun Beverages numbers were flashing on your screen just a few minutes ago. We'll take that and more forward on Halftime Report. But from Rima, me and the team that put the show together, it's a wrap on Trading Hour. Thank you so much for watching.
Stocks move in a narrow range, manned ahead of May Day and rest. Amid expectations of an India-US trade deal, realty and healthcare are the prominent gainers, while consumer durables and financials drag.
Bajaj Finance skids after it pairs its guidance on growth and return ratios. Stock boosters like a 1:1 stock split and a 4:1 bonus issue fail to prop sentiment.
A day after IndusInd Bank's deputy CEO stepped down, CEO Sumant Katpalia resigned, taking responsibility for the derivatives deviance. Till then, a new CEO steps in. A committee of 2 executives will run the show.
US President Trump points to a likely trade deal with India. US Commerce Secretary Howard Lutnick says a trade deal will be announced soon. Even US Treasury Secretary Scott Bessent joins the chorus.
You're watching us here live on Halftime Report. I'm Mangalam Malu. We come to you live from the CNBC-TV18 Motilal Oswal studio. And after nearly 6 months, we have, Ekta joining us as well. Obviously, she anchored the show yesterday, but the first time Ekta and I come together on Halftime Report in 6 months. In the interim, though, in your full disclosure, I must say, we played a couple of games of paddle. So here's my paddle partner, Ekta. So I hope the chemistry from the court comes back onto the, onto the studio as well. And that's where all the synergies happen, as they say in business.
Well, absolutely, Mangalam. I only have one thing to say, that we're the winning team, and that shows on the court and off the court as well. But nonetheless, it's been 2 days of consolidation right now in terms of the markets. As you can see, the Nifty is just about buying time at this point in time. We have the mid caps also just about higher by around 0.2%. It is a lot about stock-specific action this afternoon. We do have financials, which seem to be a big bunch, which is in focus. So, for example, Bajaj Finance reacting to its guidance, its credit cost guidance, which it didn't manage to meet in the fiscal. We have IndusInd Bank because of the resignations that have taken place there. State Bank of India is in focus on account of its numbers coming out on the 3rd of May, and separately fundraising that they will be considering on that day as well. Reliance Industries, watch out for that stock. It's up 7% on a week-to-date basis. So Reliance Industries in focus, and separately something like a Paras Defence. All the defence stocks have been focused, and that continues to surge up around 35% plus on a week-to-date basis. But you have a lot of stocks to focus on. Let's in fact focus on Trent. The company reported a 28% year-on-year growth in its Q4 revenue. Margins expanded, but the growth in the fashion like-for-like business disappointed. Mangalam, tell us more.
That's correct. So Trent surged after the numbers yesterday, and that was on account of the margin beat that came by. But thereafter, once the market closed, we had the presentation that came by as well, and that told you that the like-for-like growth in their fashion business was mid-single digits, and that tells you that maybe the street was slightly disappointed with that. Though the company has clarified, given the density of store opening that they are doing, maybe there could be an element of cannibalization. If you're opening stores across each other or very close to each other, then chances are that maybe there would be some cannibalization. So the appropriate thing to do would be to look at overall revenue growth as against just the stores itself. That's what they've said. But there have been a couple of growth drivers and, green shoots in Trent as well. The most important one is the growth that we saw in their beauty, personal care, innerwear and footwear business, which are now contributing 20% to their sales. Online, where they've been fairly, measured out here. For Westside, it contributes about 6% of sales. Zudio isn't online. Star Bazaar saw a good growth in their revenue, even though LFL growth was just 2%. The thing that stood out was contribution of own brands was nearly 70%. So that is a positive. On the back of all of this, we've had management speak about all of this, and we had brokerages write too. Morgan Stanley, for instance, is positive on the stock. They believe that there have been inventory write-offs, and that has impacted gross margins. Jefferies, on the other hand, they've also increased their target price, and they have a hold rating. They believe that on a steady state, the company can compound revenue over 35% over the next 3 years. Just a word on the stock valuations, though. It's down about 35% from the peak. At peak, people argued about the valuations. It traded at around 111 times. Now it's trading at around 71 times. Not particularly cheap, but definitely cheaper than what it was at the peak.
Okay, all right. So that's on Trent. But we do have Schaeffler India, which is buzzing as well after a strong quarterly performance. Sudarshan is here to tell us more about Schaeffler India. And what's keeping the stock in focus today?
So it's a strong set of earnings from this auto ancillary company, and it's the fourth straight quarter that company has reported more than double-digit growth in a quarter. If you talk about the revenue, it was up 16%, EBITDA was up 19%, margin too has come in at more than 18%, and domestic business was up 13%, but it was largely led by the export business, which was up more than 23%. Its biggest segment, that is the bearings and industrial solutions, that saw a growth of more than 13%. Another major segment, that is the automotive technologies, which forms nearly 33% of its revenue, that was also up more than 15%, and other two segments also saw a growth in the range of 15 to 20%. I remember same quarter last year, two of their four segments had seen a growth decline, and from there now company posting a double-digit growth in all the segments is a noteworthy, and that's the reason you are seeing a big move in the stock price today.
Take that point, Sudarshan. Thanks a lot for that. Meanwhile, just before we move ahead, would like to keep an eye out on Varun Beverages. Reported numbers just a short while ago, but more importantly, the stock, while it has taken a bit of a nosedive, will be enthused to know that the organic volume growth for the company this time around in India has been 15.5%. Consolidated sales volume grew by about 30%. They've said that the integration of the SA territory has progressed well, and that has seen a growth of over 13% from the same time last year as well. Add to all of this, they've commenced their operations at the new greenfield production facilities in Himachal Pradesh as well as Uttar Pradesh. All of them would enhance their capacity ahead of the peak summer season. So it's not the previous quarter which is as important for Varun Beverages, which has been good in terms of volume growth, also led by, Mahakumbh, where Coke also did say that they've served over 180 million cases this time around. But for the quarter that is ahead, because of the heat wave, we might see strong volume growth on account of increased capacity for the company as well. So the stock, which is currently seen a nosedive, will be very interesting to see if the street looks past that and we see a recovery on this one or not. That's about Varun Beverages. But let's move on to a CNBC-TV18 exclusive. Sources tell CNBC-TV18 that general and health insurance CEOs will have to meet the DFS secretary on May 7th. For what? Yash joins in.
Well, Mangalam, as you rightly pointed out, all general and health insurance CEOs are expected to meet the Department of Financial Services Secretary M. Nagaraju. Now, there is one very important demand which is expected to come from all the general and health insurance CEOs, and that is with respect to removal of the obligatory premium, which currently all the general and health insurance companies pay when it comes to GICRE. What happens today, just to quickly explain, on every health insurance or any other general insurance policy sold, 4% of the total premium collected has to be paid to GICRE, and of course reinsurance for that policy is secured against that 4% premium which is paid. General and health insurance companies are expected to ask the DFS secretary and hence the government to remove this obligatory premium of 4%. Now this is as far as the demand is concerned, but the story behind the demand for GICRE is a big negative, because just in FY24 GIC collected about 1500 crore rupees in the entire financial year from obligatory premium itself. If this is to be removed, that 4% obligatory premium, it could be a big dent as far as GICRE is concerned, considering it'll lead to a removal of that 1500 crore in a scenario where the competition in the reinsurance sector is only increasing as against the foreign reinsurance players as well.
Okay, but Yash, give us more information about your story, where sources tell CNBC-TV18 that general insurance industry will launch a new awareness campaign next week. Give us more details on that.
Well, we've heard enough of mutual fund sahi hai, and it seems like now the general and the health insurance industry, on the lines of the campaign which was undertaken by India's mutual fund sector, is expected to take a similar campaign for itself. What we've been given to understand is that this new awareness campaign will run with the tagline of Acha Kiya, Insurance Liya. A total of 120 crore is what is earmarked for the first year itself. When it comes to the contribution towards this insurance campaign, as far as this 120 crore crore is concerned, it will be contributed by all general and health insurance companies, and it will be proportional to the market share which they currently have as far as the entire sector is concerned. Awareness campaign in its first year will focus on health, motor and home insurance, and as far as the campaign rollout is concerned, it is expected to happen in the first week of May itself. Initially, the awareness campaign will focus on IPL matches, and once that gets done, then it will be rolled out across all the general entertainment channels.
All right, Yash, thanks a lot for that. You said Acha kiya insurance liya. I would say Acha kiya bata diya. On that, we'll take a short break. And as we speak, Varun Beverages as a stock is recovering from the lows after the initial drop that it saw post numbers on account of the volume performance and perhaps on account of better season being ahead for the company. We're seeing a recovery on the stock. Take a short break. On the other side, Ashok Atluri of Zen Technologies joins in to discuss the trends in the defense sector. That space was abuzz all of yesterday.
Today, 6 years on, a much more real possibility going to the Lal Street listing. Work has already begun on that.
We have started that work. The question keeps coming. I would say sometimes unfairly because we are a young business. We get compared with other companies which are higher vintage. We are more serious about it today than at any point in the last few years.
Given the fact that you have expansion plans at this point in time, what are we talking about in terms of the kind of capital that you will be deploying in the next few years?
So we've publicly announced our plans to deploy close to 1,500 crores across not just capex but generally investments in totality across renewables and electronics. I would say we're halfway there. Time for Indian manufacturing is here to stay. I think India can become a $1 trillion economy in manufacturing alone. What is happening today will probably happen only once in our lifetime in terms of the shift that is happening globally. Will hopefully create a bright spot for the economy.
Welcome back. Well, for the markets, it's quite quiet at this point in time. We have the bank Nifty. Like I mentioned, the financials are underperforming today, so down around 0.6% currently for the bank Nifty. Advanced decline ratio as well is currently at around 1:2 on the declining side, so favoring the declining stocks at this point in time. But let's talk about defense, because that seems to be the big theme that is playing out. As of 2024, India is the 4th largest defense spender in the world. India aims to become the 3rd largest defense spender globally by 2047, following US and China. To talk more about the opportunity in the defense sector, we have with us Mr. Ashok Atluri, who's the CMD of Zen Technologies, joining in on the show now. Mr. Ashok, thank you very much for taking the time out and speaking with us. Well, if you could just start by giving us a sense in terms of the near and the now.
is there any sort of incremental increase in terms of, say, order inflows, queries just in the past couple of weeks, based on, all the geopolitical developments which have taken place in India itself?
Yeah, I think we are waiting for the government of India to, give us instructions on what to do, what actions to be taken. We are completely on standby at this point in time. And the government is, seized of the matter, and they are having discussions. Whenever they require anything from the industry, not only Zen, but the whole of industry is absolutely alert and on standby.
Yeah, that they are on the standby, Mr. Atluri, but the thing is that, typically if and when these things happen, they don't, immediately amount to any sort of business from a defense company standpoint. The street is abuzz with maybe perhaps increased orders, etc. for the next couple of years, stray incidents notwithstanding. We'll keep an eye out on what takes place in terms of immediate developments at the border. But from the defense industry standpoint itself, if you could give us a sense of, what sort of ordering activity have you seen for the industry in the last couple of quarters, and what kind of execution lies ahead for players like you and others?
Again, we said that, we are expecting, last quarter we said that some orders we were expecting the first quarter, our expectations still remain the same. But overall, even the industry is, it's a very, very positive vibe at the ground level. And we think a lot of orders are going to come the way of the Indian industry, we can feel that, and we are interacting with the government. And I think to your answer, the answer is the vibe is very, very positive, and we expect orders to come through to the Indian industry.
So you, I remember, had said that by the first quarter FY26, you would have 800 crore worth orders coming in. You still hold on to that. Is there a possibility of a delay there?
No, so I had said for the first half, I had said that we should be having 800 crores. Yeah, there is no revision in that expectation.
Oh, okay. Just give us a sense in terms of, you have closed the year with a record profitability as well as an order book. Do you expect this kind of momentum to continue for the next couple of years? Give us a visibility, probably not only for the next 1 year, but what might be the 5-year plan for the company in specific and the vision that you might have?
What we projected in the past is that in the next 3 years, starting FY26, 27, 28, we would be getting orders worth about 6,000 crores. And we should be, able to execute them. So that's our expectation in terms of the next 3 years. And there may be a difference in a year, there may be a dip in a year, but, overall, I think we are on track to achieve that CAGR of 50% that we have been saying. On an average, that should be achievable.
And financial year FY25, you will end with that 900 crore guidance. Qualitatively, you can say that, right?
We haven't revised that guidance at all till now. So,
got it.
Yeah.
And what about you reducing the gap between Zen and the acquired company's margins? Because you had made a couple of acquisitions earlier as well, on which we had this conversation on the channel. You said that going forward, you will reduce the gap between them. By when do you expect to do that? And what is your margin prognosis for FY26?
Most of the companies, for example, our naval simulation company, the marine simulation company is focused on the marine market. Now, when they shift to the naval market, I think we'll have better margins, not only in India, but globally we'll have better margins. And we expect the alignment to take in the next couple of years. So I think by FY27, 28, we should be completely aligned.
Okay. What is your sense in terms of R&D? Because you have been investing, I think, around 80 to 100 odd crores in terms of research and development. What was the total investment that you can share with us as of, say, even the 9 months gone by? And what are you targeting when it comes to the next year odd? And how would it probably play out in terms of a P&L, say in terms of sales or say in terms of EBITDA?
In a couple of years back, we were doing about 20 crores. Now, I think we're slowly moving towards 50, 60 crores kind of thing. Again, it is not as a percentage, but as an opportunity that we get something, we think that it has a large market with the Indian Armed Force, we invest in that. So I think the EBITDA margins, again, we have been saying that EBITDA margin, we expect to be around 35%, and that has not been revised. And again, on the PAT margins, we want to hit at least 25%. So that's what these are the two things that guiding our decisions on more and R&D. Again, these margins are possible only because you have tremendous amount of IT investment that you already done over the hundreds of crores over the past few decades. So they are now paying off as with we compete with the world's best companies, but still we are able to maintain these margins.
All right. And the drone opportunity, if you could give us a sense on what your market share currently is, what are the likely orders one can expect over the next couple of years from the industry standpoint, and how much are you likely to win from them?
So in terms of drones, we are just, we have acquired a company called Vector Techniques. They are big into the drone ecosystem, and they will be supplying the motors, the other part, the controllers, etc. So we are really completely aligned, and we are trying to build up their capacity. That was the whole point of the acquisition, was building the capacity so that we can become an essential part of the drone ecosystem. So we will probably be giving those numbers in the when the earnings call come, exactly what will be the kind of expectation from the turnover from those companies.
Okay. You also won an order recently, I think it was on the 27th of March itself, just about a month ago, for the air defense combat simulator for the L-70 gun. I think it's worth around 150 odd crores in terms of an order. Tell us about what the pipeline is looking like in terms of incremental order inflows within this particular segment and how lucrative it might be.
That IADCS is integrated air defense combat simulator. So that's for the L-70, which is a weapon that's used worldwide. I think there are about at least 40 to 50 countries that use this. So we were able to make a simulator for this, and it's very, very effective in terms of, instead of sending missiles worth lakhs and crores of rupees, you're actually getting the same kind of practice without using anything. So the demand for this is very huge, not only in India, but across the world. And, again, we think that there are similar kind of products that are there, and other air defense systems that we can make simulator for. So there is the buying narrative is very, very powerful, that, savings are immediate, so they can see the benefit of the simulator. Unlike some places where people say, where is the benefit? So yes,
okay.
Yeah.
We're just taking that point forward. Exports now comprise of how much of your order book? It was around 35%, say, a year, 2 years ago. How much is it now?
30 to 40% of the total turnover, yeah.
40%. And when you talk about exports and when you talk about the kind of demand that you're seeing globally for these kind of products, what is the kind of order inflow that we expect on the export front?
Again, we have been saying that between 30 to 40% is going to be exports. I think we will be able to maintain that ratio on an average in the next couple of years also.
All right, we take that point. Thank you so much for joining in. Just once again, if you could revise your break-even point for us, because your business is such that once you hit the break-even point every quarter, the rest, flows onto the margins itself. So if you could revise that for us.
Yeah, I think I'm definitely not going to, immediately say that, but I think it used to be about between 100 and 150 crores that we have crossed long time back.
Execution you do goes straight to the margin, to the profitability. And what do you intend to do in FY26 in terms of execution?
So what we have said is this last year we have said 900 crores, and we have said next 3 years we expect a CAGR of 50% on an average. Some year we may down, but next year we'll make it up for that. So we stand by that prediction even now.
All right, take that point. Thanks a lot, Mr. Atluri, for joining in and giving us an update on what's taking place in the defense sector. Defense stocks have been in focus for the last few trading sessions. But with that, we'll step into a short break. Before we do that, here's some good news. Network 18 has beaten Times Internet to become the #1 news publisher on ComScore. News 18 races past the Times of India to be the #1 news brand in the country. That's not all. Network 18 is also the #1 digital network in the news and information category as per ComScore report of March 2025. News18.com has 38% more users on native and social platforms than that of Times of India. As per ComScore report of March 2025, Network 18 is way ahead of the Times Internet with over 55% more internet users on native and social platforms. Well, it's a 22-point uptick that we're seeing on the Nifty. The mid-cap index is down about 0.15%. Nifty Bank is recovering from the lows. An interesting, insipid sort of day for trade ahead of a holiday tomorrow, but more importantly, ahead of weekly options expiry today as well. So there is consolidation for day 2 in a row for the market. The broader markets tell you that there are more stocks which are declining than the number of stocks which are advancing. And then you have the red and green crisscross lines moving further apart. So that's something we'll have to keep an eye out on. The Nifty Bank, there is a tug of war between what HDFC Bank is doing as well as what SBI is doing. So on the one hand, SBI is dragging it lower, while on the other, HDFC is supporting it. So there is consolidation at the index level on account of that. Let's keep an eye out on where either of these go to get a trend on where the market's likely to go from here. But for the Nifty itself, we're right in the middle of the zone. 24,300 put, fairly active, premium 10 rupees, 24,400 call, equally active, and the premium is close to around 9.5 rupees, which tells you that the street is expecting no major breakout or breakdown of this range from 24,300 at the lower level to 24,400 at the higher level itself. And that's what we've seen in the straddles, which are the calls and puts written together at the 24,350 mark itself as well. Though there has been a lot of punt buying at the 24,500 call this morning. So let's see where we go in the second half of trade. The real estate space, that is the toast of today's trading session. A lot of short covering in Godrej Properties and Prestige Estates. On the other side, a lot of long build-up that we're seeing on names like Macrotech Development and Oberoi Realty as well. Oberoi Realty in its conference call yesterday said that premium part of the real estate sector is doing well. So on the back of that, we're seeing some traction in names like Prestige, Godrej, Macrotech, the guys who deal in premium real estate itself. Ekta.
Okay, all right. So that's a lot of the real estate stocks to try and focus. But let's get a check on what's taking place as a whole on the markets. Pritesh Mehta, who's the Executive Vice President, Yes Securities, joins in on the show now. Pritesh, hi, welcome to the show. If you could just start by giving us a sense in terms of what your strategy would be considering the kind of slowness that we've seen, at least in terms of the indices. Would it be a more stock-specific approach now?
Yes, good afternoon. I think you got it right. See, we had a sharp rally on Monday, but we are still trading around the confidence of hurdle zone around 24,400, 24,450. And if you look at the top record in September 2024 till the low of March 2025, we are at a confidence of a hurdle zone. So basically, index has spent more time around this zone, and it won't be easy to take it out at one go. So I think that we are at a point of confluence, and with index, India is also trading at elevated levels. It is trading over 17. The breadth is a neutral zone. So in kind of scenario, there is no point talking about index. Index is not going to provide any kind of direction. It is a stock-specific market.
All right, stock-specific market. So Pritesh, get stock-specific. What do you have for us?
Yeah. So see, popular tires in fact, tire stocks are doing well, and there are several names from the tires which are popping up on our screen, and we like popular tires. So basically, we have seen a series of bullish data breakout coming in popular tires. Thereafter, in the first week of April till the second week or third week of April, we saw a strong up move. There is a bit of retracement and immediately bounce back. It is waiting to follow through the bullish anchor column. So buy for a target of 520. Stop loss would be around 450. The second stock is buy on Godrej Properties. Yes, real estate has been the flavor of the day, and stock was in a declining trend from July 2024. But since Feb, it is creating a base around this 3-year mean, and now it is showing signs of breaking out of the base. So I think that there is going to be sharp follow through on the upside. So buy for a target of 2600. Stop loss would be around 2050.
Okay, all right, Pritesh, we're going to leave it on that note. Thanks very much for joining in and giving us your perspective. Well, as we take a break now, here is some good news for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at just your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play. Just scan the QR code on your screen. Welcome back. Well, for the Bank Nifty, like we said, it's a marginal amount of pressure, but there's been some amount of recovery which has taken place on an intraday basis. Just want to point out a couple of these high volume broader market stocks which are moving. So there is a lot of action in the banking space. UCO Bank down around 2-3% odd, Punjab and Sindh, which is down around 1% odd. Federal also, which is sulking a bit, which is down 2.5% odd, and giving it company is Central Bank of India along with Bank of Maharashtra. Just want to point out that SAIL also is seeing some amount of profit booking today, so that stock is marginally lower at this point in time. Do watch out for Vishal Mega Mart because that came out with a spectacular set of numbers, and you can see that reflect on the stock price. Huge amount of volumes which are traded on that stock, which is up around 9% odd at this point, and it's gained around 13% odd this month itself. So doing well for Vishal Mega Mart. But let's move on to more earnings then, and this time from the frontline space. Bajaj Finance and Bajaj Finserv are under pressure after reporting their Q4 numbers. Bajaj Finance sees numbers miss estimates, while the management also trims its guidance for FY26. Bajaj Finserv's total premium has declined 9.65% from a year ago. Abhishek Kothari is here with details on the earnings.
Well, both Bajaj Finance and Bajaj Finserv reported their numbers yesterday. Bajaj Finance, the ANA and PAT were a tad below our poll. However, the FY26 guidance is on the weaker side, and that's what spooked the investors in trade today. So take a look at the customer addition. It's expected to be at 14 to 16 million in FY26 versus 18.2 million that they have done in FY25. The AUM growth guidance has been lowered down to 24 to 25% from the earlier long-term range guidance of 25 to 27%. Net interest margin to remain stable as they expect the cost of funds to improve by 10 to 15 basis points in FY26. Fees and charges that will grow at lower than AUM growth of 13 to 15% in FY26. Credit cost to be in the range of 1.85 to 1.95%. Remember that in the previous year they have got credit cost of nearly 2% higher than their guidance as well, and this time around 1.95% continues to remain on the higher side as well. So return ratios have been lowered down with respect to expectation for FY26. ROA guidance has been cut down to 4.4 to 4.6 versus 4.6 to 4.8% earlier. ROE guidance has been cut down to 19 to 20% from the earlier guidance of 21 to 23%. With reference to Bajaj Finserv, the general insurance reported a weak show. Total premium over there was down about 9.65% YOY and 27% sequentially. In that, the gross written premium was down 13% YOY and more than 34.5% sequentially. With respect to the claim ratio in the general insurance, that saw massive improvement to 62.9% versus 70.3% on a year-on-year basis and 77.7% on a sequential basis. The PAT was down over there 4.5% on a YOY basis and about 9.25% on a sequential basis. With reference to the life insurance, that reported a good show. The income over there has increased massively on a sequential basis. However, the PAT was down both YOY and quarter-on-quarter. Back to you.
Take that point, Abhishek. Thank you for that. We're seeing a couple of, banking names pick up once again. So we have Axis Bank, which has moved to the high point of trade. Actually, it's moved into the green after trading the red for most part of today's trading session. So we'll watch out for the impact of that on Nifty Bank. And the second part is that I'm looking at, Maruti Suzuki as well as M&M. Both these stocks have surged. M&M at the high point of trade, but Maruti, most notable, it's actually the top Nifty gainer right now, up nearly 4%. Wonder what would have happened, just around that 1045 mark for the stock to have seen that kind of an up move. So we'll just keep an eye out on that one. And the third one is Varun Beverages. Remember when the results came out, there was a decline, and then we made a point that maybe the best is ahead of them, and the volume growth is up 15%, which is good. And the stock has recovered nearly all of those losses, back in the green for that stock as well. But really, the toast of today's trading session have been the real estate stocks. Macrotech, Godrej Properties, all of them surging. Prestige Estates up more than 2% after it's announced its foray in the NCR market. So what's taking place down ground on the real estate sector? Ria joins in with more details. Ria.
Well, a lot of real estate stocks are in focus once again today. First up, we have Prestige Estates, since they have announced their entry into the NCR residential market with the launch of the first phase of the Prestige City Indirapuram project. Now, the first phase of this project has a GDV potential of over rupees 9,000 crores. And once the second phase is launched, the GDV for the entire project will go up to rupees 12,000 crores. So this is a big project for Prestige Estates, which is why the stock is trading higher in today's session. Morgan Stanley has upgraded the stock to an equal weight rating, with their target price actually being cut to rupees 1,370 per share. They say that the worst is behind for the company, and the recent RERA approval for this project could result in strong pre-sales in Q1 and Q2 of FY26. CLSA also yesterday maintained the outperform rating on the stock with a target price of rupees 2,380, which is an upside potential of over 80%. And they believe that this launch will lay the foundation for strong pre-sales in FY26, and it will also allay concerns over the miss in the pre-sales guidance for FY25. Remember, the company had only achieved around rupees 17,000 crores in pre-sales versus their guidance of rupees 25,000 crores in FY25, and the approval delay for this project was the key reason for this miss in guidance. CLSA has also said that they believe that the company can sell around 60 to 70% of this project in FY26 itself. Now, some other real estate stocks have also been in focus today, including the likes of Godrej Properties, Macrotech, DLF and Phoenix Mills, all trading higher on the back of commentary from Oberoi Realty's management in yesterday's earnings call, wherein they've said that luxury is agnostic to the economy and they don't see any slowdown at all in the luxury segment. In fact, they've said that there is a large appetite for luxury projects, and the consumption per person per square foot has also gone up substantially. And on the back of this, all of these stocks are trading higher by around 2.5% to 6%, with Macrotech and Godrej being the big gainers today. There's also some negative commentary for Oberoi Realty. The management has said that in the next quarter, there won't be any launches because of the monsoons, and all of the launches are going to take place in H2 of FY26 as demand picks up during the festive season. So that is negative for Oberoi Realty. The stock nonetheless is trading slightly in the green.
Okay, all right. Thanks very much for that. So that's Realty, which is buzzing around. But on earnings, we have Praj Industries and Vishal Mega Mart, which are reacting to their numbers, and that too conversely. We have Amakshi, who joins in to give us details on Praj, which is lower, and Vishal Mega Mart, which is higher.
Well, good afternoon, Ekta. Praj Industries, of course, came out with a very weak set of numbers. It's a miss across the board. The revenue saw a dip of almost 16%. The other expenses as well as the employee expenses, on the other hand, saw an uptick of almost 17%. Resultantly, the EBITDA margin came under pressure. Keep in mind that most of these expenses were in respect to the GenX manufacturing facility, which the company has scaled up. In fact, when you look at the net profit, that also saw a very sharp fall of almost 57%. On the flip side, when you look at the ordering activity, that was quite healthy. Order intake stood at 1,000 crores. They've managed to continue that run rate, quarter on quarter as well. 11.7% year-on-year growth is what we've seen here. Order backlog too stood at 4,293 crores, so good growth out here as well. But nevertheless, it's an execution-led miss this time around. In fact, we spoke to the management earlier on as well. 10% revenue growth and double-digit margins in FY26 is what they've guided for. They're maintaining 2030 targets of revenue of around 10,000 crores and 50% mix coming in from bioenergy and the rest from the other segments. Keep in mind, on the back of a weak set of numbers, we do have Praj Industries under pressure today. But on the flip side, when you look at Vishal Mega Mart, a spectacular set of numbers. Revenue growth was largely in line with the past performance, but the margin expansion was quite good. When you look at the revenue, saw an uptick of 23%. The margins have improved from 12.1% to 14%, and the net profit is seeing a very sharp surge of 88%. The internals as well look quite healthy, with same-store sales growth at 13.7%. The revenue from own brands increased from 72% to 73%. Sales from apparel were up nearly 26.5%, and the gross margins have improved substantially from 26.4% to 28.3%. So good set of numbers coming in for Vishal Mega Mart.
Take that point, Amakshi. Thank you so much for that. Vishal Mega Mart seeing a better quality of sales coming in from their own products, and apparel sales itself up nearly 9%. Take a short break. Here we before we do that, let's give you some good news. Network 18 beats Times Internet to become the #1 news publisher on Comscore. News 18 races past Times of India to be the #1 news brand in the country. That's not all. At the Social Plus on platform leadership network level, Network 18 is the runaway leader as per the Social Plus MMX Comscore report for March 2025, with 315 million unique views, which is 55% more than its nearest competitor, Times Internet, at 202 million views. News 18 also races ahead of Times of India in terms of Social Plus MMX cumulative reach. We have news18.com overall, which clocked 251 million unique views to beat the Times of India overall with over 183 million unique views. As per Comscore report for March 2025, Even the social media metrics report says that Network 18 is 2 times bigger than its nearest competitor with a 54% reach within the near 389 million overall social population. And speaking about Indian languages, in there as well, in terms of social media plus MMX cumulative reach, News 18 Indian languages is the leader in the category with over 182 million unique views as per the ComScore report for March 2025.
Welcome back. Well, let's talk about a couple of previews. Vedanta will be reporting its fourth quarter numbers today. Nigel is here with what to expect.
Well, that's right. Vedanta will be coming out with its set of numbers and we'll be speaking to the management as well. More than the numbers, the management commentary is something that we'll be tracking very, very closely. To run you through the big consolidated numbers, which include Hindustan Zinc, and those numbers we already have, and that's already in the price. Well, the revenue should jump up by close to around 10%. On a year-on-year basis, the EBITDA number as well will look quite good. There will be some margin expansion that we're working with. And profit number, remember, it's all over the place because Vedanta has a couple of one-offs below the operating performance. But the operating performance is something that we'll be tracking. So the higher volumes, both in Hindustan Zinc as well as in the aluminium business, that's what's going to aid the top line growth out there. The power business, well, it will be impacted by lower generation, but that's known. And from the steel business, we like to see some kind of improvement, particularly on a sequential basis. On a sequential basis, though, we'll have the margins that will contract a little bit. And that's because they source some part of their alumina requirement from the third party. And alumina prices did move up. Remember, as of now, they're much lower. But as of the past quarter, alumina prices were higher, which will increase the cost of production, which in turn will hurt the margins on a consolidated basis. The key numbers you need to track is the aluminium, oil, as well as the international zinc business. And all those three are up for you in the screen because Hindustan Zinc is in the price. A rough EBITDA number. You have brokerages like Philip, like Kotak that have given estimates. So that's why we have got those numbers up. That's the prime importance that you're looking at. Besides the numbers, as I said, we'll be looking forward to the timelines with regard to the demerger. The street is running out of patience because earlier it was supposed to take place in the first quarter of the new fiscal. Now they've guided for the second quarter, so we'll have to wait by on that. How is the promoter on the debt front and what is the debt reduction plans as well? Some kind of guidance for the remainder of this year. So that commentary will be monitored as well as the numbers. Back to you.
Take that point, Nigel. Thanks a lot for that. That's about Vedanta, the commodity company. But speaking about commodities, take a short break, come back on the other side. Manisha Gupta joins in with all things commodities. This time around, I think it is all things jewelry and gold because it is Akshay Tritiya. Jitendra Vumidi, who's the managing director at Vumidi Bangaru Jewelers, joins in. Stay tuned. Welcome back. Looking at the markets, once again, there is a fair amount of consolidation, though a couple of these city gas distribution companies have spiked in trade. So we have Mahanagar Gas, which has moved to the high point of trade. We've seen some traction in Nippon Life India as well. And speaking about, tire companies, we have CEAT, which said that maybe in the second quarter of this financial year, they would see improvement in their margins. That stock is surging. Apollo Tyres on the back also is moving higher. We're also seeing some traction in United Spirits. But in high spirits is Manisha, because it is Akshay Tritiya. Manisha, the golden girl. You've been speaking a lot about gold, silver, increasingly. It's Akshay Tritiya. It's all about you and gold.
Oh, thank you for that. On an average, on Akshay Tritiya days, you see 20 tons of gold being sold within that 24 hours. But the expectation is, because the gold prices are at an all-time high, this time around, it could be around 12 to 15 tons. Even that would be on the higher side, but the markets clearly are guesstimating at this point in time.
How many tons
do you
possess?
Oh, yes. Slightly lesser than yours.
But that's a huge reduction. Even the upper limit is 12 to 15, like you said.
Yes.
As compared to the average of 20.
That's right. 18 to 22 tons, but this time around they're looking at 12 to 15. So much lesser, but higher in value, clearly.
I'm sorry, I don't remember this, but last Akshay Tritiya, what was the gold price and how much is it now?
76,000. And right now it's at 98,000.
Oh my gosh.
So we're looking at 23,000 of a jump up from gold prices.
That's a 30% jump, and that is offset by a 30% decline in the volumes itself.
Yeah, clearly that. But let's get in some more details. And joining us then is Jitendra Vimidi, Managing Director at Vimidi Bangaru Jewellers. Mr. Jitendra, thank you so much for joining in. What has been your sense? Because Akshay Tritiya basically started from southern part of India, and now it is being marketed across India, auspicious day to buy gold. It's a gold festival of sorts. What are the kind of numbers? What's your sense on what buying could we see?
Thank you for having me on the show. It's never been a time when gold was cheap. It was always a time when, went into a store and you say, why is the gold price so high? This is something that we've seen over a period of time. Generations of customers come and shop with us, and they always feel at the time of purchase, the gold price was high. But later on, they are very thankful that they bought a lot of gold. And this is something that, generations down, we hear it. We hear stories that, we bought a sovereign for 80 rupees, and today it is about 80,000 rupees. So that's how it is. And we are very confident that gold will do extremely well, because the price of gold is something that, it's a barometer against how the economy is doing. It's if the economy is not doing well, then gold prices do go up. And we know with all the problems that there is in the global economy, there's a lot of push towards gold, and gold prices will keep going up, is what we believe. And Akshay Tritiya is one day where it's an auspicious day to start something. And the whole idea and concept behind Akshay Tritiya is, if you do something on this day, you will continue to do this through the year. So, buying gold happens only when there's prosperity. So, this is a great start to have through the year, So, that's the idea with which Akshay Tritiya is there. And I'm very glad that there is a day like this, where actually, people do invest in gold. And I always believe that gold is a great security. It's something that, it gives you the ability to take risks. So when gold is part of your portfolio, it helps you to take risks. So
It
this
does,
is what
and
I see.
Absolutely, Jitendra. We've seen those numbers play out well also. If you look at the dollar terms, we are up by 43%. Rupee terms, because the rupee is appreciated, we've seen 33% of gains here as well in the last 1 year. But what are people really buying right now with the gold prices so expensive? But I get your point. It's always expensive. But we are almost at around lakh rupees per 10 grams. So is it bars, coins, jewelry, lightweight jewelry, studded jewelry? What is it that people are picking up?
See, I believe that when the price of petrol went up, we saw bigger cars coming into the market. So nobody actually worries to buy a smaller car because the price of petrol went up. So because of the price of gold going up, we have seen people buying larger items. Of course, the lighter weight items are the ones that we want to wear on a daily basis. But we find people who wear bangles. They want something that is sturdy, so they don't care about it being lightweight. They want it to be sturdy enough so that they can wear it every day. So there are different types of jewelry for different reasons, and we've not seen the diminishing quantities in gold. So we've seen gold quantities increasing year on year, and that shows us that the price of gold going up is in fact a reason why people buy more.
Okay. Jitendra, is there any new theme, new offering, new designs that you're putting out this year?
We are constantly creating designs. There's a big industry at work. We have designers like never before, and there's a lot of acceptance to new designs. So there's lots of new designs. We've started a new collection in gold and diamond, which is using mythological figures and beings. So something that the most important thing is it all should tie into our traditions and culture. So that we found has a lot more liking towards, and people love that kind of jewelry.
How are you looking at buying this time around? Because markets do believe that in value we might be looking at a higher number, but the volumes could see a suffer. Are you looking at those numbers as well?
See, at BBJ, we are expanding like never before. So we are going to be buying more gold this year than ever before. So I don't think there is a reason for us to actually buy less. I agree with maybe there'll be maybe a small drop, or I think if you look at what happened in the recent 24 months, with the way the price of has gone up, and they're expecting price to even go up further from this point. I think there will be there's a lot of confidence already in the market, and I'm sure the numbers will tell maybe in a couple of days from now.
So if somebody was to come into your store, what are the offerings that you're giving? Because all the jewelers that I've been talking to across Pan-India tell me that there are offers and schemes and making charging being waived, silver coin being offered, or complimentary gifts being added. So there is something or the other as a marketing, advertising, or brand building, or even relationship building with customers happening. What is it that you're putting it out?
We are offering a discount in our making charges and value additions. Today is a very auspicious day, and we as an industry, we serve our customers extremely well. So we are competitive enough to give a great value to our customers. So I think gold buying consumers are very, very smart. They know how to buy. They have been in this for generations. They are coached by the elder generation, so they know what to expect when they come into a jewelry store. And it's very, very important that we give them the right price, the right product. And as an industry, we are doing great work. I'm very proud of what we do.
Youngsters forced by elder generation to buy gold today.
Okay, all right, Jitendra. Some things don't change, I guess. Just like a diamond is forever. But thanks very much for joining in and giving us that perspective. Manisha, before we go, if we have to have the same conversation, same time next year on Akshaya Tritiya, where do you expect the gold prices to be? Because it's already 98,000.
We've seen a lakh rupees on the higher side as well. And everybody, Indian banks and brokerages and abroad as well, tell me that by next Akshaya Tritiya, you'll be looking at 1,10,000 for gold prices. So, well, this isn't such a bad price either.
Okay, all right. Well, thanks very much, Manisha, for joining in and taking us through that. We need to take a short break. In fact, we're going to wrap up on the show. Thanks very much for watching. Business Lunch up next.
Stocks move in a narrow range ahead of a May Day rest amid expectations of an India-US trade deal. Realty and healthcare are prominent gainers, while consumer durables and financials drag, mid-caps trade in line. Bajaj Finance skids after it pairs its guidance on growth and return ratios. The stock boosters like a 1-to-1 stock split and a 4-to-1 bonus issue failed to prop up sentiment. A day after IndusInd Bank's deputy CEO stepped down, CEO Sumant Katpalia resigns, taking responsibility for the derivatives deviance until a new CEO steps in. A committee of 2 executives will run the show. U.S. President Donald Trump points to a likely trade deal with India. U.S. Commerce Secretary Howard Lutnick says a trade deal will be announced soon. Even U.S. Treasury Secretary Scott Bessent joins the chorus. Hello and welcome to Business Lunch, live from the CNBC-TV18 Motilal Oswal studio. I am Ritu Singh. Well, on that note, let's take a look at the markets, which is largely flat. The Nifty is hovering around 24,350, while the Bank Nifty, if you take a look, is holding on to the 55,200 odd levels. Now, U.S. President Donald Trump says the U.S. will strike a trade deal with India soon. His comments come right after Treasury Secretary Scott Bessent said the U.S. was very close on India. In fact, Commerce Secretary Howard Lutnick has said that a major trade deal has been completed but did not name the country. Listen in to their comments.
India's coming along great. I think we'll have a deal with India. The Prime Minister, as you know, was here 3 weeks ago, and they want to make a deal. We'll see what happens.
India, in a funny way, is easier to negotiate with than many other countries because they have very high tariffs and lots of tariffs. So it's much easier to confront the direct tariffs when, as we go through these unfair trade deals that have been put in over decades, that the non-tariff trade barriers can be much more insidious and also harder to detect. So a country like India, which has the posted and ready tariffs, it's much easier to negotiate with them. So I think the India negotiations are moving well.
Every country in the world, just like Donald Trump has said, who wants to do a deal with us. Now, here's the point. I have a deal. Done. But I need to wait for their prime minister and their parliament to give its approval. And then there are country after country where we're just working through the details. But you have to remember, they have prime ministers, they have parliament, they have to work through their process. But all of these are going to be coming. And what they're going to be is they're going to be incredibly smart, incredibly thoughtful. They're going to unleash the ability for us to export to them to grow. And they are going to also protect our industry so we can grow. And I think our GDP is going to pop from there.
Well, sources have told CNBC-TV18 that India and the US are exploring opportunities for an interim trade agreement in goods to secure an early mutual win ahead of finalizing the first phase of a proposed bilateral trade agreement. Abhimanyu Sharma gets us all of these details. Abhimanyu.
On the India-US trade talks, government sources have indicated that an interim arrangement is being looked at on trade and goods, which could take place as part of early mutual wins in case both the sides agree. The initial focus would, of course, be on goods and non-tariff barriers flagged by the Indian side, which includes the marine sector. The US had suspended the additional 26% tariffs on India till the 9th of July, and both the nations are intending to take advantage of this window to push the trade talks. India and the US are slated to hold sectoral engagements for the proposed BTA from the end of May 2025. The Commerce Ministry had held a meeting with the American officials in Washington, D.C. between 23rd and 25th of April, in which it has indicated that discussions took place on issues like tariff and non-tariff matters. Discussions were also held on the pathway for conclusion of the first tranche of a mutually beneficial multi-sectoral BTA by the fall of 2025. The ministry further indicated that productive sectoral expert-level engagements have taken place virtually, and in-person sectoral engagements have been planned from the end of May 2025. It remains to be seen how early the negotiations are going to begin and what are the issues which are going to be ironed out initially.
All right, an interim arrangement in the works. Abhimanyu, thanks very much for bringing us that story. Let's also listen in to what former RBI Governor Raghuram Rajan had to say on these trade deal talks between India and the US.
this should be seen in the larger context of the India-US relationship, which covers things like defense, but also education. A whole lot of Indian students coming to the United States to learn, do research, and so on. So many areas in which there could be collaboration. But within that, I do think that India benefits hugely if it can negotiate tariffs to a much lower level, even while some other countries have it at a higher level. It may cause a lot of companies to look at India in a new light, especially given the large Indian domestic market. So you not only get an entry into India and produce for the rest of the world, including the United States, at low tariffs, but you also get to serve the Indian market.
All right, we'll stick with the tariff news, and in more related developments, the US president has signed off a pair of orders to soften the blow of his auto tariffs with a mix of credits and relief from other levies on materials. Now, this is a development that eased investor worries about Trump's erratic trade policies. Take a look at this report.
US President Donald Trump on Tuesday moved to soften the blow of auto tariffs on US carmakers. The pair of orders he signed walks back some levies just as 25% import duties come online in a few days' time on auto components. One order modifies Trump's plan to avoid so-called tariff stacking. For example, if Ford or General Motors pay a 25% tariff on parts, they won't pay another 25% on top for the steel and aluminium tariffs Trump's imposed or those he slapped on Canadian or Mexican goods. The other order provides relief, giving carmakers credit against the value of imported parts, though that benefit gets phased out over the next 2 years. On Tuesday, Trump portrayed the move as helping companies invest more in making things in the U.S.
We just wanted to help them during this little transition, short term. And during this little, if they can't get parts, it has to do with a very small percentage. If they can't get parts, we didn't want to penalize them. And you have a 1 year period and then they have an extra year, but it's for a very, very small part of the car. Basically, they're paying 25%.
Also on Tuesday, the uncertainty unleashed on the auto industry by Trump's tariffs saw General Motors pulling its annual outlook. And GM delayed its investor call to later this week, pending possible changes to trade policy. Autos Drive America, a group representing Toyota and other major foreign automakers, said Trump's new orders did give some relief, but they also said more must be done in order to turbocharge the U.S. auto industry. Trump's aggressive trade policies have cascaded far beyond cars since his return to the White House in January. A 90-day pause was announced after financial markets went into a tailspin over fears of recession and inflation. Trump and his team aim to strike 90 trade deals within this period of time. On Tuesday, U.S. Commerce Secretary Howard Lutnick told U.S. media he reached a deal with one foreign power to permanently ease reciprocal tariffs, though he declined to say which country it was. Lutnick's comments did help lift stock prices and pushed the S&P 500 higher to achieve its longest streak of gains since November.
All right, on to some macroeconomic news from China. Now, amid its trade war with the USA, China's factory activity, which is a key pillar of the country's economy, slowed to a 16-month low in April. The Purchasing Managers Index, or PMI, fell to 49 in April. And keep in mind, any number below 50 shows contraction in the manufacturing activity. Now, China blamed the sharp changes in the world economy for the slowdown in manufacturing that it has now seen. Meanwhile, China has also softened its stance amid the tariff war with the US. Sources say that China has removed the 125% tariff that was imposed on US ethane in early April, and this is expected to boost global petrochemical production. Now, we have to take a short break on that note, but don't go anywhere. On the other side, we'll focus on some stock-specific action, so stay tuned for that. Welcome back. You're watching Business Lunch on CNBC-TV18. Now, Bajaj Finance and Bajaj Finserv traded lower after posting their fourth quarter numbers. Abhishek Kothari joins us to give us a fine print for their fourth quarter performance.
Well, both Bajaj Finance and Bajaj Finserv reported their numbers yesterday. Bajaj Finance, the ANA and PAT were a tad below our poll. However, the FY26 guidance is on the weaker side, and that's what spooked the investors in trade today. So take a look at the customer addition. It's expected to be at 14 to 16 million in FY26 versus 18.2 million that they have done in FY25. The AUM growth guidance has been lowered down to 24 to 25% from the earlier long-term range guidance of 25 to 27%. Net interest margin to remain stable as they expect the cost of funds to improve by 10 to 15 basis points in FY26. Fees and charges that will grow at lower than AUM growth of 13 to 15% in FY26. Credit cost to be in the range of 1.85 to 1.95%. Remember that in the previous year they have got credit cost of nearly 2% higher than their guidance as well, and this time around 1.95% continues to remain on the higher side as well. So return ratios have been lowered down with respect to expectation for FY26. ROA guidance has been cut down to 4.4 to 4.6 versus 4.6 to 4.8% earlier. ROE guidance has been cut down to 19 to 20% from the earlier guidance of 21 to 23%. With reference to Bajaj Finserv, the general insurance reported a weak show. Total premium over there was down about 9.65% YOY and 27% sequentially. In that, the gross written premium was down 13% YOY and more than 34.5% sequentially. With respect to the claim ratio in the general insurance, that saw massive improvement to 62.9% versus 70.3% on a year-on-year basis and 77.7% on a sequential basis. The PAT was down over there 4.5% on a YOY basis and about 9.25% on a sequential basis. With reference to the life insurance, that reported a good show. The income over there has increased massively on a sequential basis. However, the PAT was down both YOY and quarter-on-quarter. Back to you.
Thanks very much, Abhishek, for bringing us up to speed with that. And the next stock in focus today is IndusInd Bank. Now, accounting lapses at IndusInd Bank are now triggering high-level exits, just as we had reported earlier. Sumant Katpalia has stepped down as the MD and CEO effective yesterday, nearly 11 months before his term was due to end in March of next year. Now, this marks the third major exit from the bank in just 1 year, with the CFO exiting in January even before the disclosure of these discrepancies, followed by the Deputy CEO Arun Khurana stepping down earlier this week, and now the CEO himself. Now, amid this leadership vacuum that's been created, the Reserve Bank of India has approved the formation of an interim committee of executives that will oversee the bank's operations. This will comprise of Soumitra Sen, who's the head of consumer banking, and Anil Rao, the chief administrative officer of the bank. It is going to function under the guidance of an oversight panel, and that in turn will be chaired by the chairman of the bank, that is Sunil Mehta. Now, these developments come just days after the bank disclosed findings from an independent investigation by Grant Thornton, which has identified key individuals that are responsible for the lapses. The board has since taken action against those that were held accountable. Now, at the center of the crisis is a significant accounting discrepancy in the bank's derivatives portfolio, which has resulted in a near 2,000 crore rupee hit on the bank's P&L, and this is in addition to a 600 crore rupee discrepancy in the microfinance portfolio, which is still under audit. The bank, we understand, is expected to factor these hits in its fourth quarter numbers and therefore may end marginally in the red. Now, in his resignation letter, Sumant Katpalia said he was stepping down as a matter of moral responsibility for various acts of commission and omission. For now, the newly formed executive committee will remain in charge for 3 months or until a new MD and CEO is appointed. So that's as far as IndusInd Bank is concerned. Prime Minister Narendra Modi, in other news, has asserted that the armed forces have complete operational freedom to decide on the mode, targets and timing of India's response to the Pahalgam terror attack, as he chaired a meeting with the top defence establishment. Parikshit Luthra joins us now to give us details on this front. Parikshit, take it away.
a crucial meeting of the Union Cabinet has taken place, and clearly different options to respond to the Pahalgam attack were discussed. There was a meeting on Cabinet Committee on Political Affairs, a Cabinet Committee on Economic Affairs meeting, and a CCS meeting as well. So clearly India is looking at not just military options but an economic options also to isolate Pakistan. There is going to be a cabinet briefing at 3 p.m. where the decisions will be announced. But our sense is, and this comes from the message that the Prime Minister delivered to the service chiefs, that you have the operational independence to respond to Pakistan, retaliate for the Pahalgam attack. So clearly there are going to be options that India will be exercising in the days to come, and there will be a long-term strategy as well. We have been seeing ceasefire violations by Pakistan across the LOC and now also at the international border. There have been over 6 to 7 ceasefire violations the last few days. Pakistani forces have been resorting to small arms firing, and the Indian side has been responding effectively. We're at a very high level of alert right now. There are military drills being carried out by the Air Force, by the Navy, and very serious and very high degree of counter-terrorism operations that are on in Jammu and Kashmir to catch those who were involved in the Pahalgam attack. Those are also ongoing right now. But all eyes now on the cabinet briefing at 3 p.m., which will give us a sense of which way we are proceeding with our investigation and with our action against Pakistan.
All right, Parikshit, thank you very much for bringing us that report. Now, my colleague Parikshit also spoke to the Defence Secretary about the GEHAL F414 deal. The Defence Secretary was hopeful of launching the jet engine manufacturing line this year, and he also reiterated the government's push for cutting the acquisition timeline and other reforms. Take a look at that conversation.
We've identified that there are various sort of processes involved in our procurement, which includes everything from cost negotiations to field evaluation trials to preparation of RFPs. All of these had certain timelines that were often very, very elongated. We've, through the DSC, we've already taken a view that many of these timelines are going to be compressed. Essentially, what we are trying to do is ensure and accept higher accountability within our system for the various collegiates and groups which are, for example, doing the FATs or doing the RFPs. As part of that, the DSC has already taken a decision in terms of compressing many of those timelines so that we take us several weeks out of this procurement process. Technology transfer for the General Electric 414 engine, that is a negotiation that is ongoing between the HAL from our side and GE on the other. That is making progress, and that will help us meet the requirement of a jet engine for the time being in the interim. This year, I hope so. This is being led by HAL. We don't get into the nitty-gritty of that negotiation, but on our part, we've been asking both players, GE as well as HAL, to try and expedite this, so that our production schedule for the future Tejas, I think it's Mark II, doesn't get affected. So yes, that is something that we are nudging from our side, but the nitty-gritty of the negotiations we are leaving to these two agencies.
All right, now before we slip into a break, here's some good news we have to share. Network 18 beats Times Internet to become the #1 news publisher on Comscore. News 18 races past Times of India to be the #1 news brand in the country, but that's not all. At the Social Plus on platform leadership network level, Network 18 is the runway leader as per the Social Plus MMX Comscore report for March 2025, with 315 million unique views, which is 55% more than the nearest competitor, Times Internet, at 202 million. News 18 also races ahead of Times of India in terms of Social Plus MMX cumulative reach. News18.com overall clocked 251 million unique views to beat the Times of India overall with 183 million unique views. Now, as per the Comscore report for March 2025, social media metrics report, Network 18 is 2 times bigger than its nearest competitor with a 54% reach within the 389 million overall social population. And speaking about Indian languages in terms of Social Plus MMX cumulative reach, News 18 Indian languages is the leader in the category with 182 million unique views, as per the Comscore report for March of this year. Welcome back. You're watching Business Lunch on CNBC TV18. Now, Meta Platforms has announced a new standalone AI assistant and an application programming interface in a bid to woo businesses to easily build AI products using its Llama artificial intelligence models. Here's a report on that development.
Facebook parent Meta has set out its next moves on AI. Boss Mark Zuckerberg took the stage in California during the company's first conference for artificial intelligence developers. He revealed a new application programming interface, or API, which allows programmers to more easily build AI products using Meta's Llama model. Zuckerberg said they would be able to customize and integrate the best bits of rival bots.
So if another model, like if DeepSeek is better, or if Quen is better at something, then now as developers, you have the ability to take kind of the best parts of the intelligence from the different models and produce exactly what you need, which I think is going to be very powerful.
Meta didn't say what it would charge for the new tool, which is currently available as a preview for select customers. Rival OpenAI, creator of ChatGPT, makes most of its revenue from such APIs. Tuesday also saw Meta launch a new standalone AI assistant app. Chief Product Officer Chris Cox said a priority was to make the new bot sound natural.
We were very focused on the voice experience, the most natural possible interface. So we focused a lot on low latency, highly expressive voice.
Reuters has previously reported that Meta plans to test a paid subscription service for its AI chatbot in the second quarter.
Moving on, in some other global news, 3 people were killed in a shooting incident in Sweden yesterday, and the police have now launched a murder investigation, although there's no signs of terror or hate crime so far. Take a look at this report.
A shooting in the Swedish city of Uppsala left at least 3 people dead on Tuesday. Police said they received calls about gunshots in the Uppsala city center. Witnesses told local media that they heard 5 shots and saw people running for cover. As of Tuesday night, authorities said the motive for the killing was unknown and victims had not been identified. A police spokesperson told Reuters someone left the scene on an electric scooter, but it's unclear if they were involved. The shooting is being investigated as a homicide, and police said they had no information that it was a hate crime or related to terrorism. Swedish Justice Minister Gunnar Strömmer said the ministry was in close contact with police and closely following the case. In a statement, he described the incident as a brutal act of violence, just as the city began celebrating Valpurgis Night, a spring celebration held on April 30th. Sweden has faced a decade-long wave of gang violence, including an epidemic of gun crimes. February saw the country's deadliest ever mass shooting, when 10 people were killed in the city of Örebro after a 35-year-old man opened fire at an adult education center. Sweden's right-wing government took power in 2022, promising to fight gang violence. It has toughened up laws, given police more power, and called for stricter gun laws after the shooting in Örebro.
Now back home, a massive fire at Rituraj Hotel in central Kolkata has killed 14 people. This fire broke out on Tuesday night when the hotel was occupied by 88 guests. A few people tried to jump out of their windows, but they sustained injuries. 10 fire tenders were deployed to douse the fire, which was brought under control after nearly 8 hours. A special investigation team has been formed to probe the cause of this massive fire. In some other important national updates now, President Draupadi Murmu has approved the appointment of Justice B.R. Gavai as the 52nd Chief Justice of India. Justice Gavai is set to assume the highest judicial position in the country. He is the second ever Chief Justice from the scheduled caste community, following Justice K.G. Balakrishnan, who retired in 2010. Justice Gavai is slated to take oath on the 14th of May. CJI Khanna, keep in mind, will retire on the 13th of May. All right, that's all the time we have today on Business Lunch. Thanks very much for watching, but stay with us. Mid-Cap Radar will come up next and take the action forward.
Today, 6 years on, a much more real possibility going to the Lal Street listing. Work has already begun on that.
We have started that work. The question keeps coming. I would say sometimes unfairly because we are a young business. We get compared with other companies which are higher vintage. We are more serious about it today than at any point in the last few years.
Given the fact that you have expansion plans at this point in time, what are we talking about in terms of the kind of capital that you will be deploying in the next few years?
So we've publicly announced our plans to deploy close to 1,500 crores across not just capex, but generally investments in totality across renewables and electronics. I would say we're halfway there. Time for Indian manufacturing is here to stay. I think India can become a $1 trillion economy in manufacturing alone. What is happening today will probably happen only once in our lifetime in terms of the shift that is happening globally. Will hopefully create a bright spot for the economy.
Objects in the mirror can be closer than they appear, and that's exactly what the screen is indicating too. The screen may show that the indices are absolutely flat, but does not take away from the fact that there is a lot of stock-specific activity. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia, and back with me today is Vamakshi Dhuria. Vamakshi, good afternoon. Absolutely quiet going into the holiday, but of course there are plenty of earnings reactions that we are tracking.
Well, absolutely, Hormuz. You know, the markets as of now have not gone anywhere. We're at the same place where we let off yesterday. And it's very surprising given that it's the weekly expiry today, right? The broader indices too underperforming the benchmark indices. But on that note, you know, there's a lot lined up on the show. So let's get started with some of the top headlines. Stocks move in a narrow range. Realty and healthcare are prominent gainers, while consumer durables and financials drag. Mid-caps marginally underperform.
Vishal Mega Mart is among the top gainers on the Nifty 500 following a strong fourth quarter. Revenue growth is in line with expectations and margins also climbed nearly 200 basis points from last year.
Auto ancillary stocks like Schaeffler India, CEAT surged in trade after reporting a strong set of numbers. Schaeffler reported double-digit growth in all the segments. CEAT tells CNBC-TV18 that they expect double-digit growth for standalone business in FY26.
Raj Industries is among the top losers in today's trade after the fourth quarter net profit more than halves. Revenue also falls. Shoppers Stop has also slipped after reporting a muted revenue and EBITDA growth in the fourth quarter.
Well, 24,337, that's where the Nifty is at. But, when you look at the advanced decline ratio, that is largely in favor of the declines. The Nifty mid-cap index is down nearly 0.3%. The small-cap index, too, is reeling under a fair bit of pressure. As far as some specific stocks are concerned, look at the move that has come in on, the stocks like Bajaj Finance, Jana Small Finance Bank. They're all reacting to a weak set of numbers. But, plenty of action in the mid-cap space. And to explain just that, Hormaz has moved across to the wall and he will be taking us through our special segment, Mid-Cap Movers.
Well, firstly, I'd like to thank you, Amakshi, for telling me that it's Schaeffler and not Schaeffler, as we like to call it. But of course, there is a lot of action in the broader market. So as you can see there, RR Kabul is now up 8%, extending its gains. Sonata Software, too, having a good day today. IGL is up 4.5%. Brainbees, or as popularly known as First Cry, too, seeing gains of around 3.5% to 4% in today's trading session. When in earnings reactions, of course, you're seeing numbers from Ujjivan Small Finance Bank flashing on your screen. That stock, too, has taken a bit of a nosedive after the net core profit is down 75% from last year. But take a look at CEAT. Strong commentary, 9% higher. Vishal Mega Mart, too, a similar quantum. Schaeffler is up 6%, and Praj Industries now extending its losses, down 7% now at the lowest point of the day. That positive management commentary from CEAT is rubbing off on other tire names as well, and with names like JK Tyre, Apollo, Balkrishna, all of them at or near the highest point of the day, gains of anywhere between 3 to 4%. Stocks that are doing well in today's trading session also include the real estate names, and stocks like Macrotech, DLF, Godrej Properties are all seeing healthy gains in today's trading session. But other than Praj Industries, there are other losers too in the broader markets in today's trading session, and we take a look at those. We include Westlife Foodworld, Sterling and Wilson, 5-Star Business Finance also continues to fall, and KFin Tech another 5.5% shaved off today. All of these names at the lowest point of the day today, Mamakshi.
Well, thank you so much for that, Hormaz. A comprehensive list as always. But it's time to now welcome Jay Thakkar from ICICI Securities for a technical check on the market. Good afternoon, Jay. This is Vamakshi joining in. So give us a sense of what you think about the market, because the markets have been consolidating in a narrow range over the last 2 sessions at least. So where are the markets headed from here on? Is it a party for the bulls or the bears?
Hi, good afternoon to you, Amashi and Hormaz. Well, see, I would say the party has so far has been for the bulls only. I mean, we have seen a very sharp recovery in the index, 21,750 to almost 24,300, 400 range now, right? And last time trading sessions, we have seen a good buying coming in by the FIs as well. So we are not seeing profit booking from the high levels despite the India VIX going up. I mean, since 8-10 trading sessions, the India VIX has been slowly and steadily going up, and it's now closer to 17 levels from 14 levels, So it's very rare to see both market and India VIX at the high levels. But the FI participation along with the DI participation in the last 3 days has been such that both FI and DI both have actually contributed on the positive side to the index, and which has definitely supported the market. Otherwise, if you see from expiry to expiry, week on week, from last Thursday to today, actually, we have not seen much of the change. I mean, sort of, doji star, or maybe spinning top candlestick getting formed at the high levels, or maybe, the range has been too narrow. So at these high levels, I would say comfort for me would be only about 24,400 to initiate any fresh longs as far as index is concerned. Stock specific moves will continue, but index specific only 24,400. If those levels get taken off, ultimately our May targets for the month May series are 24,800 will be achieved straight away thereafter. Else you can see some profit booking in the range of 24,000 to 23,800. So anyone who's trading index, either buy on dips in the range of 23,800 to 24,000, else buy about 24,400. I mean, that could be the strategy going forward in the short term. However, stock specifically, the action will continue. And actually, as you were mentioning about the Nifty Reality Index, which is up quite much today, we are seeing good short covering out there post the results. I mean, Oberoi is out, Godrej is out. So I think that Oberoi Realty can see good up move from here on. And the overall there are good shorts there. So I'm targeting around 750 to 1800 levels in the near term. One can place a stop loss below 1590, and in anticipation of short covering, one can buy Oberoi Realty. And similarly, one can buy Astral as well. I mean, Astral is trading around the levels of 1365. One can target 1450, placing a stop loss below 1330. This too is a short covering candidate. I mean, short covering is witnessed everywhere across the board. I mean, you have been seeing TI Industries since past 2 days as well. Likewise, Astral might also see a good up move. So these are the two buy recommendations.
All right, Jay, thank you so much for sparing time and joining us today, and with your views on the index and on specific stocks as well. We take a short break, and just before we do that, here's some good news. And Network 18 has beaten Times Internet to become the #1 publisher on ComScore. News 18 has raced past the Times of India to be the #1 news brand in the country. And that's not all. Network 18 is the #1 digital network in the news and information category as per ComScore report of March 2025. News18.com has 38% more users on native and social platforms than compared to the Times of India. As per the ComScore report of March 2025, Network 18 is way ahead of the Times Internet with over 55% more internet users on native and social platforms.
Welcome back. You're watching Midcap Radar on CNBC TV18. A couple of results have now come through. Look at Greaves Cotton. After its numbers, that stock has surged higher by almost 7.7%. When we look at the margins, they've seen a substantial improvement. Look at the uptick that has come in after the numbers have come through. Apart from that, we also saw Go Colors report its Q4 numbers. When we look at the margins here as well, substantial improvement on a year-on-year basis from 29.6% to 35.8%. Very strong up move on Go Colors, that is Go Fashion as well. The stock is trading higher by almost 7%. And apart from that, Crystal as well reported its numbers just a short while ago. The numbers were flashing at the bottom of your screen. The margins here stand at 28.54%. The stock as of now is up nearly 0.9%. But let's also get in another management on the show. Capital Small Finance Bank is in focus on the back of its Q4 numbers. Profit after tax and net interest margin came in healthy. To discuss this and more, we now have Sarvajit Singh Samra, MD and CEO of Capital Small Finance Bank, joining in with us. Well, good afternoon to you, sir. My first question is on the deposits. Some banks have recorded strong deposit growth this quarter, but when we look at your numbers on quarter basis, it's a dip. Why is that so?
Actually, the thing is, we are a bank which were on a low CD ratio, which we feel. We were pushing our CD ratio. So otherwise, this was the reason why we had a calibrated deposit growth. Otherwise, just to give a color of a deposit book, we are 92.5% retail deposit. And where the CASA share is almost 37%. And we have been able to, in spite of the pressures on CASA and all, we have been able to maintain it. And otherwise, this was otherwise as per our plan. And there's nothing such of any kind of pressure on this growth or nothing like that.
Mr. Samra, good afternoon. Thank you for joining in. So what kind of deposit growth are you penciling in for FY26? And if I could club in one more question, according to the CASA ratio as well, which has also declined sharply, what do you attribute that to, and when and at what level do you see that stabilizing?
No, actually, okay, answering your first question, like we, in this financial year, keeping in view the present micro and macro environment, we are giving a guidance of 20% plus growth in our credit advances. And similarly to support that, we are the target for deposit is 16% plus to support that. And with this, since liquidity is high and we want to further push our CD ratio, which last year also has resulted favorably on a net interest margin and of course on ROTA as well. And this is how we want to take it further. CASA, actually, we otherwise are, just to give quickly a picture of that, we are a CASA driven organization always. And it's a true sense CASA, where like after conversion from a local area bank to small finance bank, on savings banks, we were paying 3.5%, which now from 1st of May onwards, we have reduced it slightly from 3.5 to 3.35. And we have been able to maintain the cost of deposit 5.9 and the cost of funds at 6%. So we of course, there was a lot of pressure on CASA, which we have seen, but now I am very confident with the interest cuts. When the gap between the low cost deposit and your term deposit increases, you see pressure on CASAs. But with now the rate cuts, two which have already happened, and we expect more cuts also in this financial year. So I see improvement in CASA going ahead.
Sure. Thank you so much for that. And, I'd also like to ask you about your NIMs, because when we look at your NIMs, they have contracted sequentially. Now, with the rate cuts, as you mentioned, coming in, with RBI looking to infuse a lot more liquidity in the month of May to enable rate transmission, what can it spell for your NIMs in FY26? What is the range that you're guiding for?
Yeah. First, I'll just want to apprise that the NIM, which last year at the close of financial year 24 was 3.9. In this financial year, we improved it to 4.2. So with, of course, now the rate cuts and all, we will definitely, there's going to be a pressure on NIM, which I see in our business plan. We want to further improve it. First, our endeavor is to maintain it since the rate cuts have already factored in. So we want to maintain it. And of course, I see a further improvement to that, to the NIM of 4.2, which we have put on this fiscal. Yeah.
What about your bottom line, Mr. Samra? Other income had a significant contribution in the boost that you have seen. What is the nature of this other income, if you could specify that for us, sir?
Other income is a stable income, which is a fee income, of course. The fee income, and of course, it comes now from the partnership also, like the banker income. So since actually otherwise after our conversion, there were a lot of new customers onboarding which happened in the last all these years now with the decent size of customer base where like the deepening has started. Where like in our matured branches, I'm talking about branches which are say 5 year old, where like lot of deepening happens and there's a further legroom available to improve it further this fiscal and coming in the coming time also.
Sure, got that. And one more question actually on your return on equity. That stood at 10%. 2 years ago, it was at 17%. So what is your outlook going forward for return on equity, that is ROE, and return on assets for FY26 as well as FY27, if you can share that guidance?
Yeah, actually, the 17% plus was like before raising our capital. We raised capital last year. So there was a fresh infusion of 450 crores of fresh capital. So this is the reason since over a period of time we are consuming this capital. So I think we'll take it up to the level where we have earlier done the capital raise, and then we'll think of raising the capital further. So it's a journey since the capital was raised recently only. So we are well consuming, it's a growth capital. We are well consuming the growth capital and we'll consuming over the period of time, and further capital raising we aim after we reaches at that optimum level of return on.
Right. One final question, Mr. Samra, very quickly, if you could tell us, what are your current cost of funds and what are you expecting them to be as the year goes by?
Current cost of deposit is 5.9 and cost of funds is 6%. As rate cuts are coming in, already we have repriced our savings book, which earlier was 3.5%, which now 1st of May, it's going to be 3.35%. And even bulk deposit, we have done a cut on the bulk deposit. So I think the both should go down as we move towards in the next year, and we expect more cuts also.
Sure. Thank you so much for that. And, thank you so much for giving us those insights on your numbers. But from one earnings to the other, Exide, the numbers are flashing at the bottom of your screen. The stock seems to have taken a sharp knock. Sharp fall is what we're seeing. When we look at the EBITDA, that is down nearly 9.6% on a year-on-year basis. The margins too have contracted from 12.3% to 11.2%. But apart from that, when we look at the revenue as well, the number will come up for you. The revenue is seeing a downtick of almost 3.7%, and what they've also announced is that they will be investing 1,200 crores in Exide Energy Solution. So as of now, when we look at the numbers, doesn't look like such a great set of numbers. So the stock is tanking on the back of that. But on that note, let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side. So don't go anywhere. Stay tuned.
Today, 6 years on, a much more real possibility going to the Lal Street listing. Work has already begun on that.
We have started that work. The question keeps coming, I would say sometimes unfairly, because we are a young business. We get compared with other companies which are higher vintage. We are more serious about it today than at any point in the last few years.
Given the fact that you have expansion plans at this point in time, what are we talking about in terms of the kind of capital that you will be deploying in the next few years?
So we've publicly announced our plans to deploy close to 1,500 crores across not just capex, but generally investments in totality across renewables and electronics. I would say we're halfway there. Time for Indian manufacturing is here to stay. I think India can become a $1 trillion economy in manufacturing alone. What is happening today will probably happen only once in our lifetime. In terms of the shift that is happening globally, will hopefully create a bright spot for the economy.
Welcome back. Just before we move on, pull up Exide again. The stock is now extending its losses after its fourth quarter results that were flashing at the bottom of your screens just a few minutes ago. The margins have narrowed from the same quarter last year. More capital infusion in its energy solutions business as well. So the street not liking what the numbers have been presented by Exide. 3% lower now on the stock at the lowest point of the day. What's also not doing well today is Shoppers Stop after its muted revenue and EBITDA growth in the fourth quarter. Mangalam is here with more on that. Mangalam.
Well, Shoppers Stop is down 7% in today's trading session. They reported their fourth quarter numbers and the revenues grew a feeble 1.7% and the EBITDA too grew just about 2% itself, telling you the margins were absolutely flat around that 16% mark as well. There was a sharp gash on the net profit of almost 90%, but that hasn't much to do with the operational performance of the company. The revenue actually, grew by 1.7%, EBITDA just 2%. Net profit fell because the depreciation was higher, finance costs were slightly higher, and the other income was lower by almost 50%. So those factors contributed to a decline in the profitability. Some of the internals which were slightly positive were the premium sales, which increased in contribution to 65%, and that grew 7%. Their own loyalty program saw a contribution of 82%, which was an improvement of nearly 400 basis points. And Intune, which is the competitive value fashion stuff that they've launched in competition with Trent's Zudio, has actually seen growth of nearly 200 crores in this financial year and has seen a growth of 3x year on year on a low base. So that is something that we'll most definitely keep an eye out on going forward for Shoppers Stop as well. They've added 21 stores, 15 of which have been Intune. So that's something we'll track, apart from their investment in the beauty vertical as well, where they've decided to invest another 50 crores, and that's reported around 67 crore sales in the fourth quarter.
Not at the lowest point of the day now is Shoppers Stop. Mangalam, thanks a lot for that. By the way, Exide is seeing some recovery from the lows after the management commentary there, which looks kind of buoyant, with registering double-digit growth in the mobility business driven by the technologically advanced products. And they also mentioned that the demand in the replacement market remains buoyant as well, and they are maintaining that double-digit growth momentum in the auto replacement, industrial UPS and the solar verticals as well. Both in the two-wheeler and the four-wheeler battery market, the replacement market, the demand remains buoyant. So for now, Exide a slight recovery from the lows of the day, but still 2.25% lower after its earnings miss. But with that, we call time on this edition of Midcap Radar. The index remains absolutely flat. Your stocks for the next 30 minutes. Good afternoon. You're watching Your Stocks live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia, and we'll have our experts answering all your viewer queries over the next 20 minutes. And well, joining us today on the show are Astha Jain of Hem Securities and Saumil Mehta of Mirae Asset Sher Khan as well. Astha and Saumil, good afternoon. Thank you for joining in. And the index, well, it remains quiet as quiet can be. There is no movement in the Dow futures as well. Of course, we are awaiting the all-important GDP data from the US at 6 o'clock this evening. So important macro data awaited, some important earnings awaited. We are also counting down to earnings on our own markets from stocks like Vedanta, from stocks like Indian Oil Corporation. Stocks like Exide have already reported results. The stock has fallen from the highs of the day as well. So a lot of stock-specific activity that's been ongoing, even though the index remains quiet. Of course, today is the weekly expiry as well, considering tomorrow is a holiday. So the expiry got pushed forward to today's session. But starting off with our viewer queries, then Prashant is writing to us from the Punjab, and he is holding around 25 shares of Infosys at 1400 rupees, and he wants to know if he should continue to hold on to Infosys or should he book his profits. Now, Astha, at least for large cap IT, the fourth quarter was a washout of sorts, if you could call it that. Would you say that the fourth quarter was the worst that you have seen for IT and things start to get better? What should one do with Infosys?
Hi, good afternoon to all of you. So with Infosys, I would like to recommend hold now. Why? Because yes, we have seen weakness in their Q4 numbers. And in fact, management has also given their guidance in which they were a little bit skeptical because of the constrained client's budget, as well as what they are seeing the weakness in some of their major segments. But I think going forward, maybe 2 quarters down the line, the company will be able to post a good set of numbers again. So whatever has happened, it is a matter of just 1 or 2 quarters. So in the longer term, we believe that IT companies are poised for a good returns again. So my idea here is to remain invested in this counter, although initial price target, which I would like to limit myself, is up to 1550 to 1570 odd levels.
Remain invested in these names. What about you, Saumil? What are the charts indicating here? Is Infosys a good bet after the results, or would you find better opportunities in mid-cap IT?
I think overall, if I have to be taking a call on a IT sector overall, I think for some time IT sector is in the bear trend, on the downtrend, and in the medium term outlook, in the long term outlook, it looks a little bearish from here. If I'm talking about Infosys only, then the resistance is in the very short term. The resistance is around 40 daily moving average, which is 1550, and I'll be expecting previous swing lows to be retested, which is around 1300 levels. So my outlook for Infosys is bearish. Even in the medium term outlook, I don't see any a good rally on the upside. I'll be expecting a good downside for now.
Interesting. And moving on then, GAIL is the next stock, and Susan Thomas is writing to us from Coimbatore, and she has 15 shares of GAIL, and she wants to know if she should continue to hold on to these names. She's in the money, Astha, but at the buy prices of around 180. Is there an opportunity here in GAIL, considering the valuations, the dividend yield, or there are other opportunities in the PSU basket or even in the oil and gas space for that matter?
I think if one can continue in the same space, then it will be a better choice with a price target of 200 to 210. Would like to recommend hold for GAIL, because what we have seen is their volume growth was there, and definitely I think going ahead also the space as a whole will definitely post very strong set of numbers, and on that basis we are positive on this counter. I think right now GAIL is looking decent to us. Remain invested in this counter with a price target of 200 to 210.
What about the charts, Saumil? GAIL or any other oil and gas name?
GAIL looks great to me in the very short term, in the medium term outlook. High tops, high bottom formation, trading about 200 daily exponential moving average. At the moment, it is just consolidating in a very small range, but I'm expecting this range to break on the upside. The target should be around 213, which is the previous swing high, and you can keep a stop loss around 180 levels. Buy on decline should be the strategy.
Well, Well, when Deepak is now writing to us from Mumbai, he has around 50 shares of KC International, which he purchased at 700 rupees. Now he wants to know if he should add on to his positions. Well, not a significant move from his buy price, but Asta, for KC International, slew of order wins. The company also surpassed its FY25 guidance. This infrastructure construction space, KC International or L&T, which one would you pick?
So KC International is also looking good to us. So I would like to go with both. But now, as far as KC International is concerned, yes, you are absolutely right. Their order book is very strong, around 37,440 crores of order book they are having right now. In fact, management has also given a very strong guidance going ahead. So I think this makes the case to remain invested in this counter. Although L&T is also looking good to us, if I have to choose between these two right now, I would like to go with KC International. And here the price target can be set at around 800 or less.
What about you, Somil? KC International on the charts?
I don't see much happening in this stock. It's been consolidating in this range for a little while now. It's been struggling to go above 20 and 40 daily moving average, which is a weak sign for the stock. But if it closes above 770, that's way above right now. 770 is a very crucial resistance. If it closes above that, then the next level would be 860 levels, and that would be my medium-term target.
860 is a medium-term target for KC International. Hasn't done much over the last 12 months either. Now, Deep Shah is writing to us from Mumbai, and he has 6,000 shares of Aditya Birla Capital at 181 rupees. Now, he wants to know if he can hold the shares for 15 years and wait for it to become a multi-bagger. Asa, do you see prospects of Aditya Birla Capital becoming a multi-bagger in the next 15 years?
Yes, definitely. Why not? And 15 years is a long time horizon. So right now, I can say, yes, this stock has a potential to move upwards from here. Till what level? Maybe around 215 to 220 are my initial targets. Pardon me, these are very small targets I'm giving right now. But for 15 years perspective, definitely the targets will be much higher. But right now we are limiting ourselves to these targets. Now, talking about this counter, what we have seen as, yes, their asset quality was it was a strong asset quality which they have posted in their quarterly results. But there was a problem in the growth front, whether it is NIMs or RA I'm talking about. But their housing finance business is doing well. And in fact, the other segments of the company, like life insurance business, is also doing good. So I think overall, it is a good NBFC to remain invested in. And that is why we are recommending a hold with a price target of 220 to 230 at the initial level. But yes, for 15 years perspective, it can be a multi-bagger stock.
Interesting. What about you, Somil? What are the longer term charts indicating? Of course, I won't ask you for a 15-year target, but what are the charts saying here for Aditya Birla Capital?
See, in the very short term, I don't see anything happening here. I think it will consolidate around 190 and 200 levels. That will be a range, a trading range. And once it goes above 210, I think the next levels to watch out would be around 250, which is the previous swing high, which is close to the previous swing high. Medium term positive, short term positive. And I think you can definitely hold on with trailing stop losses.
Hold on with trailing stop losses there. A very long time horizon on Aditya Birla Capital, still down around 19% over the last 12 months. Take a short break, but just before we do that, here's some good news. Network 18 beats Times Internet to become the #1 news publisher on ComScore. Network 18 races past the Times of India to become the #1 news brand in the country. And that's not all. At the social plus on-platform leadership network level, Network 18 is the runaway leader as per the social plus MMX ComScore report for March 2025 with 315 million unique views, which is 55% more than its nearest competitor, Times Internet, which stands at 202 million unique views. News 18 also races ahead of Times of India in terms of social plus MMX cumulative reach. News18.com overall clocked 251 million unique views to beat the Times of India overall with 183 million unique views as per the ComScore report for March 2025. Now, as per the ComScore social media matrix report, Network 18 is 2 times bigger than the nearest competitor with a 54% reach within the 389 million overall social population. And speaking about Indian languages, in terms of social plus MMX cumulative reach, News 18 Indian languages is the leader in the category with 182 million unique views as per the ComScore report for March 2025. Astha, Somil, stay on. We take a short break. We'll be right back with more queries.
In 6 years, to go from starting from scratch to being able to take this business global, I mean, it's a turbocharged journey.
The first US thought came to us back in 2019 when Trump 1.0 and there was 25% tariffs on China. Okay, now with this 25% tariff, can India compete with China? Because we have this 25% delta. Started with like one person spending like full time into that market, talking to a bunch of customers. The second wave of COVID is when we experienced acceleration.
We're now at Trump 2.0. Yeah. Tariffs are playing havoc at this point in time. How do you read the latest set of developments in the US?
These kind of opportunities like tariffs, etc., they really allow you to shortcut your sales cycle. So what you would have otherwise achieved in 1 to 2 years, you're able to achieve it in 1 to 2 quarters. I would say in 3 to 4 years from now, these things should be good for India and by extension us.
Welcome back. You're watching Your Stocks from the CNBC-TV18 Motilal Oswal studios. Astha Jain and Somil Mehta are still with us to answer our viewer queries. And the next stock on our radar is Praj Industries, and a viewer has written to us on that. And S. Jaykumar has 1,000 shares of Praj Industries and a little out of money right now, is trading in the loss. The buy price is around 526. Now, Somil, it's a big gash that you've seen on the charts today for Praj Industries. Would you use this dip, or should this gentleman use this dip to average his positions, or use any bounce to cut his losses?
I think use the bounce to cut any losses. I think from here in the very medium term outlook, 450 and below 450, 413 would be the levels I'll be looking for. The medium term trend is down, the short term trend is down, and I think any bounce should be used to exit the stock.
Any bounce should be used to exit the stock. 7.5% lower now for Praj Industries, the top loser on the Nifty 500. But what about you, Astha? Disappointing quarter that came in for Praj. The profits were down on a year-on-year basis for the third straight quarter. Margins are also narrow. There are increasing investments, but the management continues to remain optimistic on their new areas of growth as well. What do you recommend this gentleman currently sitting on losses on his positions on Praj? What should he do?
So management is positive, but what we are seeing in the result is a huge cut. If I talk about the bottom line growth also, it was a 62% degrowth in the Q4 itself that they have posted in the bottom line, right? And in fact, their valuations are also not very comfortable in the wake of kind of results this company has posted. This company is running at a price to earning multiple of around 40, 42. So still at a high valuation, and the kind of industry it is into, we are seeing some good results from the industry, other players as well. So in the wake of all these factors, I think right now, if one can take the risk for a longer term horizon, then only stay invested. Otherwise, I think exit can be a better strategy.
Exiting can be a better strategy than 7.5% lower for Praj Industries. Now, Kevin Shah is writing to us from Hyderabad, and he has 1,000 shares of Bandhan Bank at 144. Now, he wants to know both the fundamental and the technical views on the stock. Well, Saumil still in the money, stock at 165 now compared to his buy price of 144. But does the chart have the potential to retest levels of say 180, 190, maybe even 200?
For Bandhan Bank, in the last couple of weeks, we've seen a very good rally, and it's been trading above the averages. The momentum indicator on the higher time frame is on the buy side. The only hurdle probably from here is the 200 daily exponential moving average, which is around trading around 170, 172 levels. If the stock closes above 173, I think that will be the right time to buy the stock. For now, I don't see anything happening in this stock. However, if it goes below 154, if it comes down to 154, that will be a good buying opportunity. You can take that risk because it's been taking support at 20 and 40 daily moving average and starting the uptrend. So I think 150, 160 would be a good entry for the stock.
150, 160 would be a good entry for the stock. Of course, Bandhan Bank is reporting results today, Astha. And of course, one of the MFI players as well. What would you want to hear from the management, and what are the prospects looking like for this gentleman?
Yes, so in Q3 of their number, there was the concerns related to the higher slippages, higher provisioning, etc. So asset quality is a major concern because they have got the higher slippages in the MFI sector in the last quarterly numbers. So I would like to really see how they are working out with the asset quality, which is posing a major challenge to this bank. So all in all, because results are due today, I would like to wait and I would like to recommend a wait for this counter at least till the results arrive. Meanwhile, if everything comes in place, then we are looking for the upward price target of around 180 to 190, but that are subject to the strong results which this bank can post. So all in all, we are right now in the wait and watch mode till the results arrive.
Conditional target from Astha. The next one is a retail shareholder favorite, and that is Yes Bank. And Preeti Rao is writing to us from New Delhi, and she has 100 shares of Yes Bank that she purchased at 50 rupees. Now she wants to know if she should continue to hold or sell at current levels. Saumil, what are the charts indicating at 17 rupees currently is Yes Bank? 50 seems a distant memory now.
Definitely. I mean, it's in the downtrend for a very long time now. And low top, slow bottom on the higher time frame, the momentum indicators, whenever it gives a bounce, it completes the entire cycle on the upside and then it starts breaking the lows. So I think from here, I would suggest to exit this stock. There are very good private players like ICICI Bank, even Federal Bank, if you want to go for a smaller one. These stocks are looking good, but my suggestion would be to exit from the stock. I'll be expecting at least 15 levels or maybe below that as well.
15 or below that as well. But Astha, if I could take the liberty of using some Hindi, Yes Bank falls into one of those categories, right? Bhav kam tha to le liya types. But what would you say? The numbers were fairly good this time around from Yes Bank. But what should this lady do? Is a purchase price of 50 rupees?
Actually, yes, bhav kam tha isliye le liya. That strategy never always work out to be in a better way. This is what we believe. What happened with this bank in particular? Yes, they have got a good set of numbers, but still, the GNP ratio was almost the same. There was a slight improvement the NNPA ratio. So I'm not very much optimistic about the results, and that is why even we are also not very much positive about this counter. Now here the whole things come around the patience. If she has a patience to hold for a time period of 6 months to a year, then remain invested, because the losses can be huge if she exit at present point of a time. But still, I would recommend at least partial exiting from the stock is a better strategy, so that capital should not remain fixed in a one counter. And we believe that there are various other banks where she can deploy the funds in, and hence we are recommending partially exiting from this counter.
Partially exiting from this counter. 17.7 right now is where Yes Bank currently trades. Well, Mayank Arora is now writing to us from New Delhi with an investment query, and he is asking which cement stock can be purchased right now for the long term. Now, Astha, what would you recommend from the cement space? We just saw numbers from Ultratech, from ACC, from Ambuja. A lot of the smaller players are still to report, but the ones that did saw a very big gash on the bottom line. How's the sector overall looking like, and what would you recommend from this space?
So we would like to go with the Ultratech Cement and Dalmia Bharat as of now. For Ultratech Cement, we have seen that the volume growth was good, blended realizations were high, and now the management has taken certain cost reduction initiatives, so that will also help the company in posting good set of numbers going ahead. So we believe that Ultratech Cement is one of the better choice in this space, with a price target of 13,000 to 14,000, followed by Dalmia Bharat. In the Dalmia Bharat, there is one thing, that it is one of the low cost cement producers that we all know, and the kind of initiatives, in fact, this company has also taken for cost reduction, that will help in increasing their EBITDA per ton by 150 to 200 rupees in the coming time. So I think both these counters are looking good to us in the cement space. In Dalmia Bharat, our target is 2150.
Interesting as well. Somil, which cement stock looks most attractive to you on the charts? What would you recommend?
Similar. Ultratech Cement would be my top pick from the space. In the medium term outlook, in the very short term, it's giving us small correction. However, in the medium term outlook, it has broken out of a good consolidation of last 6 months. And this consolidation, I think the next target for this stock would be 13,000 plus. I'll be expecting at least in the very short term, I'll be expecting the stock to take support around 11,400 levels, and then again start the uptrend. So the support would be 11,400, and the next support is at 200 daily exponential moving average, which is around 11,100. Overall, buy on decline should be the strategy. 13,000 levels should be the target.
Staying with the industry leaders, both Astha and Sawmill. Now, Kashish Jain is writing to us from Gujarat, and he has 50 shares of Tata Technologies at 630. He wants to know whether he should buy more shares at this point. Well, Astha, the stock has seen a correction from its post-listing highs, but it is still remaining around its IPO price. What do you recommend for Tata Technologies?
No new buy. This is my clear advice, because what we have seen in the result is that there was a fall in the numbers due to the slump in the auto segment. In fact, the technology solution business is also not doing great to them. So we were not very much positive about the results, and hence no new buying. Right now, if anyone wants, just remain invested in this counter, because if I would say exit from this counter, then definitely the losses can be higher. This is what I believe, and hence just hold this counter, but no new buying at the present moment.
All right, Astha, Sawmill, thank you so much for sparing time and joining us today to answer our viewer queries. You can, of course, write to us and email us your queries, and we'll address them with our experts as well. But with that, we call time on this edition of Your Stocks from me and the team that put this show together. Thank you so much for watching. Just before we take your leave, a couple of stocks. Go Fashions is now up 13% after its results, and Exide is now at the lowest point of the day, down 4%. But for now, thank you so much for watching Your Stocks. Closing bell for the final 60 minutes of trade.
to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng 2 trading around 0.2% lower. The Taiwanese index just above the flat line as well.
Donald Trump has said wants to do a deal with us. Now, here's the point. I have a deal. Done, done, done.
On the India-US trade talks, government sources have indicated that an interim arrangement is being looked at.
I do think that India benefits hugely if it can negotiate tariffs to a much lower level.
Now, Commerce Secretary Lutnick essentially said that have reached, and this was interesting, he said have reached a trade deal with an unnamed country.
Begin with Bajaj Finance, the numbers were slightly below our poll. However, the key has been that the guidance for FY26 is lower than FY25.
Sensex is down about 0.25%. Small cap and mid cap indices were up about 0.25% yesterday.
I think it's more to do with smart money buying in and around the indices, the heavyweight indices level, rather than individual stocks at this given point in time.
We're trading at around 72,000. They're trading at 96 to 97,000 at this point in time. So nearly 24,000 of a jump up in last 1 year itself.
Tata's banks are dragging. The Nifty PSU banking index is under deep pressure.
With Praj Industries, a weak set overall coming in from the company. When we look at the numbers, it's a miss across the board. Nifty mid-cap index is down nearly 0.3%. The small cap index too is reeling under a fair bit of pressure.
Okay, well, that's the day so far, and it's almost as if, at least if you look at the Nifty, we never started trading, right? I mean, 1 point change. That's how you got. That's what you've got on the index. It's how you started and where you are now. So very, very tentative markets for the second day in a row. Lots of numbers are coming through. I think the Vedanta numbers are flashing through, and I'm sure Nigel will tell us more in a bit. But there's a market to track as well. Stocks, of course, lots moving here and there, which will be the focus. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Surabhi and Rima with me in the studios here. Nigel from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. We've got a few indices also moving. So the mid-cap index is down 0.5%. The small-cap index is down 1.25%. And banks is struggling. The Nifty banking index is down nearly about 250 points. And then you've got a slew of individual stocks, the Bajaj Twins, Trend, BPCL, so many others reacting to earnings both sides.
April belonged to India. April was we were the rank out performers, almost 5% up on the index. But it seems the fag end of April, India seems to be taking a bit of a breather, because even today, if you contrast our performance with global markets, most have managed a gain of about 0.25%, 0.5%. Asia, Europe is trending slightly higher. I can see the FTSE, CAC, DAX, mild gains on all these indices. But I think here, for now at least, the bulls are just taking a bit of a pause. Nigel?
Well, that's right. Just a couple of factors. It seems like a quiet day. But don't lose sight of the India VIX. The India VIX has been gradually moving up. The last time I checked, it was up more than 5%. And that's giving you a sense that there is some fear in the market. After this big run, the VIX is up. Normally, if you see the markets a little bit higher, the VIX should cool off a little bit or remain more or less flattish. The VIX has moved up. So that's one indicator. The other point I want to make is on Vedanta. Actually, these numbers look quite good. The absolute EBITDA number as well is good. If you look at the aluminium EBITDA, it's coming at around 4,800 crores. We were penciling a number around 4,400 crores. So that's a clear beat. The oil and gas business, well, we were factoring around 1,150 crores. It's coming at around 1,200 crores. So that is well in line to a little bit better. And the third number we are looking at is the international zinc business. Even out there, that's coming at around 400 crores. So X of Hindustan Zinc's numbers, which are already in the price, Vedanta's numbers actually look good. But as we say always, for Vedanta, the numbers are not a big move out there. The question is, how is the demerger progressing? How is their balance sheet looking? And what is the promoter intent? For the numbers, though, it gets a thumbs up.
Okay, all right. For the time being, stocks moving slightly higher. This mid-cap decline that we're witnessing today, the index is down 0.8% and the advanced decline ratio is really weak. So you'd have to say that some of these internals in today's trading action are not very inspiring. And also it's the second day in a row that the Nifty seems to be meeting complete exhaustion at these levels. Exactly unchanged from yesterday. not able to take out that congestion zone or the resistance zone around 24,400. In terms of key losers, look at KFIN. KFIN reacted quite, badly to numbers yesterday. It's down another 5% today. Westlife Food, 5.5%. Praj Industries, you heard the management in the morning. Companies going through a transition, they say. Stock has been knocked out again, 8% lower. Shoppers Stop, another result casualty. Shoppers Stop is down almost 7% at this point in time. So lots of names. Electronic Smart, 5%. So lots of names where wherever earnings are weak, there's definite profit taking. Otherwise, also a fair amount of caution in the broader market. So let's kickstart the action then. We have Mitesh joining in. Mitesh, good afternoon. What would the advice be? A lot of people have been waiting for the index to take off again, but the long trades aren't working. What's your call now?
Good afternoon. So I think, the long trades worked entirely for the last about 2 weeks. And now I think, the indicators are getting tired, especially on the hourly to hourly charts. So I sense that there should be at least a good chance to consolidation, which could span for a few days. And now the next trigger will come once we get a closing about 24,450. Else, good chance that 23,850, 24,400 is the broad range which you're looking at, which could be in source for the next few days to come back. So the markets might just consolidate, and therefore the idea is that on the index, as it comes down towards the lower end of the range, then look for a reversal sign and try to take a long position. On the stock side, I have a sell on Exide with a stop at about 360 for targets of 340. And Bharti Airtel is on the buying side. Recommend buying here, the stop just below levels of 1830 for targets of around 1900.
Okay, Exide tanked after its numbers, and Bharti Airtel has seen a spike up today. Indus Towers reports their numbers, and Indus Towers is now a subsidiary of Bharti Airtel, and Bharti Airtel has been a big outperformer. In the last 1 year, Bharti Airtel has gained close to 40%. But let's talk about Varun Beverages. They reported a revenue growth of 29%, driven by an organic volume growth of 15.5% in India and 13% in the South African business over the last 4 quarters. Mangalam joins in with the details. Mangalam.
So Varun Beverages reported its first quarter calendar 25 numbers, and the stock after an initial dip saw a recovery, and here's why. Because the consolidated sales of the company grew by around 29%, and it was aided by the South Africa acquisition. More importantly, overall volumes grew 30%, but organic volumes grew by 15.5% in the quarter. We heard from Coca-Cola how, India's business was aided by Mahakumbh. Case in point, Varun Beverages also would have seen a benefit from that itself. But more importantly, ahead of summer, they've increased their capacity. So that should aid them in the quarter that we're currently in, which seasonally is the strongest quarter for the company. A 29% revenue growth, margins which are absolutely flat. We had, net profit for Varun Beverages grew by around 33.5% in this quarter. Some of the internals were strong as well. The South Africa business that we're talking about grew by 13% over the last 4 quarters. Importantly, India realizations improved by about 2% as well. And they've initiated distribution and sale of PepsiCo's snacking products in a couple of these African nations. And they've commissioned new facilities in both Kangra and Prayagraj ahead of the summer season. The most interesting highlight that came in from the numbers, however, was the massive shift that we're seeing towards low sugar and no sugar options. Nearly 59% of the company's volumes come in from no sugar products or low sugar products. Now, even if you discount the 30% that they sell from Aquafina water, it means that of the carbonated soft drinks that they sell, 50% opt for no sugar options. So that's a healthier underlying mega trend. That's something we'll watch out for. Do you like sugar in your drinks or no?
Well, not me. What about you guys? I know you like at least sugar in your coffee.
Not too much of it.
Not too much.
Yeah, can't afford more.
All right.
We've got Deepan now joining in. Let's get his sense on the stock as well. Deepan, hi, good afternoon. So Varun Beverages is one, actually a whole raft of earnings over the last couple of days, right? V-Mart was pretty good. Vishal Mega Mart I'm talking about. Shoppers was bad. There's Trent where the market's still a little disappointed. What stands out for you? And a specific take on Varun Beverages if you have it.
Yeah, good afternoon, Surbhi, and thank you for having me on your show. I think great set of numbers from Varun Beverages. And look, we're looking for ideas in the FMCG space. This truly is a great FMCG company to buy, other than the HULs and the Nestle's, and we've seen what numbers have come over there. And I think there's still scope for growth because the Africa market, they're getting into Zimbabwe as well. And even in India, I think the penetration levels has still some way to go. From a valuation perspective, of course, it's expensive at about 63 times or so, but nonetheless, a great business to own. Having said that, it's a company in which we and our clients are invested in. Another company in which we have an interest in, where I thought the numbers were very, very impressive, was India Mart Intermesh. And I think we had, 2, 3 years ago, we had this concern that their expenses were growing at a rapid pace as they were investing in technology, they were investing in manpower, and they were taking on the competition and expanding their business. But the way the operating profit margins have moved up in this quarter, last quarter as well, but more impressively this quarter, it does suggest that now they are over that particular hump where they were to increase expenses to keep the business going. And now we are seeing great operating leverages play out for India Mart. Valuations also extremely attractive for a platform company like this. And I would say great competitive position, whatever threat was there from Just Dial or Google or artificial intelligence or Chat GPT, I think all of those seem to have been put to rest. So very positive on that company. But again, the disclosure, we and our clients are invested, so our views are biased.
India Mart has also taken quite a fall. If you look at it over the last 1 year, we should pull that up as the company's paying subscribers continue to remain under pressure. Dipan, what the management said in the conference call on the margins is that currently margins are about 38 to 39%. That's on account of lower subscriber acquisition costs. But as the paying subscribers start coming onto the platform, then margins will normalize and they'll come down to levels of about 33 to 35%. But yeah, they are trying to fix the platform and get in the paying subscribers. So that's India Mart, a stock that he likes. What about Bajaj Finance and Bajaj Finserv? Is this a buying opportunity?
No. See, again, Bajaj Finance is a company in which we are invested in and disappointed with the numbers. See, the pre-provisioning, up to the pre-provisioning profit, when you read the numbers, you look happy. It's looking fantastic, great industry-beating numbers on all parameters. And then you have a 78% or thereabout increase in NPA provisioning. And this has been the situation for last several quarters. I thought, okay, next quarter, the NPA provisioning will normalize in line with the growth in pre-provisioning profits. But that's just not happening now. I don't know when it will happen. But nonetheless, I think, we are not exiting our positions at this point of time because the momentum is there, the business momentum is there, and they have taken excess provisions for NPA. So, we all remain in hope, and we hope that eventually, maybe a quarter or two down the line, the provisioning requirements will come down, and that can result in a very good spike in the profitability on a net basis.
Okay, all right. Hi, Dipan. Good afternoon, and good to see you when Vedanta reported its numbers. They look pretty good, actually. The absolute EBITDA number has beaten yet again. But as we know, the EBITDA beat is not really a driver for the stock. However, valuations are comfortable. If I look at all the three segments, X of Hindustan Zinc, aluminium, oil and gas, as well as the international zinc business, all of them are better than what the street was working with. There's a mild debt reduction. And the demerger is there by September 2025. Enough to attract you, or you want to stay away?
I think the demerger will provide a nice unlocking opportunity, and it will put to rest all concerns around the holding company debt as well. And on the whole, I think numbers are very impressive. Valuations also reasonable. But look, we are in a very uncertain global environment. And if you look at some of the non-ferrous metal prices, they're all declining or sliding lower. And if there was to be a recession in US, in China, and Europe because of Trump tariffs, some dislocation over there, then we could see a further correction in commodity prices. And that's not great news for Vedanta. So I'd be a bit cautious, but I don't think that cautious to exit out of a long-term position. So investors who are invested on long-term basis in Vedanta and who are prepared to ride out 1 or 2 years of uncertainty because of Trump tariffs, I think they'll be eventually rewarded. But from a fresh investment perspective, I think I'd give it a pass.
All right. Deepan, you may want to listen to the next one. It's not tracked that much. I'm talking about GIC-RE, which is the reinsurance company. What we're picking up, of course, is what the general insurance companies are really demanding for. I mean, they'd like this to happen. They would have liked this for it to happen for a long time now. All source-based, but the sources tell CNBC-TV18 that general and health insurance CEOs will meet the Department of Financial Services Secretary on the 7th of May with, some demand, which, if it goes through, is not exactly great news for GIC-RE. I'll let Yash do the explaining. Yash, over to you.
You rightly pointed out, Prashant, the meeting between general as well as health insurance CEOs and the Department of Financial Services Secretary M. Nagarjuna is scheduled for May 7th. One important demand which the CEOs of the insurance companies will have is removal of obligatory premium which they pay to GICRE. How does this obligatory premium really work? Essentially, every health insurance or every motor insurance policy which is sold, if 100 rupees is the premium which a general insurance or a health insurance company receives on the back of that policy, 4 rupees, which is 4%, has to be paid to GICRE. Of course, they get reinsurance support proportional to that 4% premium which they pay to GICRE. Health and general insurance companies will put forth a demand of removing this compulsory obligatory premium of 4% which they have to pay behind every policy sold to GICRE. Why does this become important? Particularly for GICRE, because in FY24 itself, GICRE collected a total obligatory premium of 1500 crore rupees. Now for reinsurance, we are in a scenario where there is competitive intensity which is increasing, which is making business difficult for GICRE and impacting the growth. On top of that, if at all this demand for removal of obligatory premium goes through, then it could be a bigger negative coming in for GICRE.
Any thoughts, Deepan?
No, as it is, I'm weak in insurance companies. It's kind of out of my syllabus, if I may say so. So I'll give it a pass here.
Or for life insurers as well, there are actually a couple of things over the last two or 3 days which we've reported. That entire bank assurance sword which was hanging. You know, the finance minister was on record saying that IRDAI said that, selling insurance policies through banks, I mean, it's got to be curbed and it should not rely too much on the channel. I think that threat has gone away, as we reported. And that was a big regulatory risk this year. So, but that is life, and stocks actually compared to the rest of the market relatively this week have done well. But that is insurance for you at this point. Deepan, the other big talking point, of course, has been geopolitics with, of course, what's happening at the border. Wide acknowledgement that no one really thinks there's a full-scale escalation which will happen, but still there is nervousness, I think. No doubt about it. Somebody was pointing out that the Pakistan stock index is down some 2.5% today. Late last night, there were some comments saying that over the next 24 to 36 hours, I think the foreign minister or someone essentially said that they're expecting some escalation. Any thoughts here? How to think about it?
No, these things are very difficult to predict, Prashant. And, it's very unfortunate what has happened in Kashmir. But, we are aware of all these risks. Investors are aware. And, we've seen the markets kind of calm down after any such action. And that similar situation will play out this time around as well. So, but yes, there is always this tension that something can happen and that may affect the sentiment per se, although not the earnings or the fundamentals of the economy per se.
Okay, all right. That is on the defense space. Deepan, by the way, before we let you go, let's talk about the big Nifty losers, Bajaj Finance and Finserv. What do you think went so wrong? And is this something that you will extrapolate to other NBFCs as well? Shriram had a bit of a tough going, but PNB Housing was a stellar set of numbers. I remember the stock popped 8% there. So now, within the NBFC universe, what would you pick and what would you avoid, going by the trends we've seen this season?
I still have kept my faith in Bajaj Finance and Chola as well. And hopefully these are transient issues where like 70-80% increases in provisioning is just kind of, this phase that which they are in. And eventually it'll get normalized to 25-30% growth in NPAs. So from that point of view, we remain committed to the sector per se. But these are unusual situations, and these surprises or negative surprises can pop up at any time in any financial company or any lender. See what happened in IndusInd Bank also. Who would have thought that this kind of irregularity would be noticed? And similar things do play out. So these are the risks of investing in banks and NBFCs. And that's the reason why they trade at low PE multiples also, despite having a decent growth trajectory. But you have to just live with it, because point to point, these companies do create value. So just have to be patient in them. And I still maintain that investors need to be overweight banks and NBFCs. Maybe 30-35% of the portfolio should be in these two counters. And some of the benefits like lower interest rates, lower taxations have yet to accrue, and better monsoons also have yet to accrue in the quarters to come. So, I mean, we all live in hope.
IndusInd Bank has recovered more than 3% from the day's low. It was down 2.5%. Now it's back in the green. Today, MK downgraded the stock. They're saying the CEO resignation derails hopes of a smooth transition. So that's what makes them a bit circumspect. And remember, the stock had rallied close to about 40% from the time the news broke, and it tanked. IOC numbers up for you on your screen. Margins looks like a beat, a big beat.
I was just looking at the preview that Surat put out. They've blown past expectations, much like BPCL. It was a complete out-and-out beat. Margins, EBITDA, everything is much higher. The profit number that we were working with was closer to about 2,400 odd crores. Profits were expected to decline. In BPCL's case, things really moved higher because the GRM business, the refining business just fired up. BPCL had delivered GRMs of over $9 a barrel, which was like way past all street expectations. So probably, for IOC as well, refining has really fired. BPCL also got the added leg up because one of their refineries there was a maintenance shutdown happening that came back on stream. But this is looking phenomenal. And of course, there are marketing gains. Inventory gains, marketing gains. So I think, the oil marketing and refining companies are really raking it in, at least in Q4. Looks good.
Looks good. Dipan, you want to quickly comment on BPCL or IOC? Look at the way the stock is spiking.
I think you can see a good trading rally in these companies, but end of the day, they're not great wealth creators, and long-term returns are below subpar, below the indices as well. So, but yes, there's a trading opportunity in these companies, and investors and traders can certainly take advantage of it. And as we said, it's been a patchy earnings season. So maybe these are the few winners which have emerged so far.
With, of course, OMCs, the trigger before the earnings, of course, has been markets have been waiting for those unpaid LPG subsidies to come in. It has still not come in. We spoke with Mr. Hardeep Singh Puri, the oil minister, some time back, and he said, well, it's imminent and it will come. But so far, it has not. IOC, 139 or so, about 2% higher. Deepan, we'll leave it there. Thank you very much for your time. Enjoy your market holiday tomorrow. We'll speak again soon. Before we slip into a break, here's some good news. Network 18 has beaten Times Internet to become the #1 news publisher on ComScore. News 18 has raced past the Times of India to be the #1 news brand in the country. That's not all. At the Social Plus on platform leadership network level, the Network 18 is the runaway leader as per Social Plus MMX ComScore report for March 2025 with 315 million unique views, which is 55% more than the nearest competitor, Times Internet, which is at 202 million. News 18 was also raced past Times of India in terms of Social Plus MMX cumulative reach. News18.com overall clocked 251 million unique views to beat the Times of India overall with 183 million unique views as per the ComScore report for March 2025. Welcome back. Rajesh Kothari is now with us, Managing Director at Alpha Accurate Advisors. Rajesh, good to have you with us here. Thanks very much for your time. I mean, I think last interacted on the editors roundtable on that Friday, and the mood was so different, right? It was, and how the mood's turned, and for the positive, for the better, and that is what markets are all about. But what have you been doing, Rajesh? We spoke about a few ideas, few opportunities back then. Give us a sense of what you've been up to with the fund. Any names you've added, anything you've added on, or in terms of what you already owned.
Yeah, well, I still remember that Friday roundtable discussion, and if you remember on that day also, we explained that during COVID also, in first 7 days, market discounted the worst effect. In Russia-Ukraine war also, in first 90 days, market discounted the worst effect. And I said this time is not going to be different. Donald Trump 75 days were over that time when we did the roundtable. So I think now Mr. Trump is a kind of a discounted story. In fact, there are many guys, they are terming him as a, reversal godfather. He's a godfather of doing reversal things. So I think that is now behind us as from market perspective. Effect on economy, nobody knows. It may continue for 2, 3, 4 years. I think the domestic-driven economy, domestic-driven sectors, that will do much better compared to the globally linked businesses, like what we discussed last time. So those are the sectors, on which we have been increasing our weightage. The banking is one sector, which is our largest holding right now, on which we are positive. The second is the pharmaceutical, more domestic linked businesses, the CDMO space. That's very interesting. So that's the second sector where we are increasing the weightage. Third is the consumer discretionary. And I think the discretionary sector in general has been doing reasonably well. And I think there is a solid earnings growth coming on the few pockets of consumer discretionary. So that's the third pocket. And the fourth is, select, capital goods companies which are really focusing on HVDC kind of a micro segment, the metro trains, Scott transformer related segment. So this is basically the few pockets on which, we have been increasing our weightage in last, I would say 2, 3, 4 months.
Okay, banks, CDMO, consumer discretionary, and power and areas like HVDC, Hitachi, etc. we've spoken about in the past. We'll just come back to you, Rajesh. Numbers are trickling in. IOC was the last. Sudarshan is here with quickly explaining the numbers to us. So over to you.
So we were expecting, basically our estimates were suggesting that IOC may report a mixed set of earnings, but after BPCL, which had reported a strong set of earnings led by refining, similar picture is being seen with IOC as well. Refining continues to be strong for these OMCs. And here also, if you take a look at gross refining margin, the estimate was that gross refining margin may come in the range of $4.5 to around $6 per barrel, but company has beaten the estimates, and gross refining margin has come in at almost $9 per barrel, much higher than the expectation. Even on the revenue, EBITDA and margin front, revenue has also come in higher than estimate. It was at 1.95 lakh crore versus our estimate of 1.91. EBITDA has come in at nearly 14,000 crore against the overall estimate of nearly 8,000 crore, and margin has come in at 7% against estimate of 4.10%. Also, if you take a look at both the throughput, refining as well as the pipelines, at both the places you will see an improvement not only on a sequential basis but also year on year. So overall, it's a very strong set of numbers from two oil marketing companies that have reported earnings so far. Both BPS and IOC have reported a strong set of earnings. So we'll be taking a look at when HPC announces the numbers, and if it announces a similar set of numbers as these two companies have announced.
Thank you very much for that. And Sudarshan, in terms of the LPG under recovery, who is most exposed? So when that under recovery comes, who is likely to see the biggest benefit?
So amongst all, 50% of the total compensation LPG has an exposure to. So whenever the government decides to compensate for that, IOC would be the biggest beneficiary.
Okay, thank you very much for that. Rajesh, you've not mentioned oil marketing companies in the preferred sectors, but tactically, is there any opportunity? IOC, BPCL, and plus there is the trigger awaited of the LPG under recovery.
I think, these are the businesses on which generally we do not take exposure because it's very extremely difficult to predict the crude oil price, the refining margin, and the government policy in terms of how much to recover and how much not to recover. So I think all these are more policy-led businesses rather than pure economics. So generally speaking, we avoid investing in refineries and marketing kind of companies.
Okay, all right. Rajesh got that point. Markets actually seeing a little bit of green right now, about 50 points up on the Nifty at this juncture. So, Rajesh, what else? I mean, where else are you looking for opportunities where at least there is some decent earnings visibility? Because lots of sectors like consumer, etc., they're still going through a rough earnings patch. So, what is on your radar?
So I think there are few sectors where you are clearly seeing the very strong earnings growth. Look at, for example, the consumer discretionary space, and two retail companies have already announced their numbers, and both have reported a 25% plus revenue growth. And one of the companies, of course, the largest company, even on a high base, they reported 25-30% growth. So I think it is a solid number reported by the largest company, and of course, even second retail companies reported 20% plus growth. So consumer discretionary, few pockets within that is doing extremely well. That's first. Second, look at the affordable housing segment. Again, three banks and also the two large NBFCs which are into affordable housing segment has reported strong numbers. So I think the housing segment is going to do extremely well. And third, where of course the numbers are not yet announced, but we are expecting a positive growth momentum to continue, is the healthcare and hospital segment. And I think even this segment will report good double-digit growth. Please remember the Nifty this year, FY25, Nifty earnings growth is going to be only 4-5%. It means the economy is actually a little bit struggling. And against that 4-5%, these are the housing finance companies or the retail companies, apparel side particularly, they are growing and reporting 20-25% growth. One of the company which is into the soft drink, the reported numbers today, has again reported very strong numbers. There was a market narrative that one other player has entered and therefore there is going to be tough competition, the price war will start and all that stuff. But look at the company's numbers. The narratives are different and the actual delivery is completely different. So if these companies are growing at 25% plus in an environment where a consumer is kind of slowing down as per the narrative, I think it is a fantastic show by a few companies. So, bottom-up strategy is going to work over next 12, 15, 18 months. And these are opportunities where we are looking to add.
Rajesh, take that point, but specifically on retail, this large company that you spoke of, I know you won't get into individual names and stocks, but I mean, let's say if you're talking about a stock like Trend, and yes, the company is still showcasing 25-30% sort of growth, but the argument now is on valuation. Does this market have the mood and the appetite to still keep buying stocks at 70-80 times? Because the earnings growth rates are no longer 50-60%, but they're 30%. 30 is not bad. But then again, at what price?
Very good question. And let me give you some data. The Nifty is reporting 4% earnings growth. The Nifty is trading at 19 times price to earning multiple. It's 5 times PEG. Let's talk about Nifty normalized earnings growth of 11% next year. And Nifty is trading at around 20 times. It's 2 times PEG for 11% growth. Look at S&P 500. It's trading at 1.8 times PEG. So in a growth phase, you have to look at PEG because we are not buying 2% growth companies. Am I right? And look at any other company. For example, the India's largest IT company, what is going to be earnings growth? 7%? And what is the price to earning multiple? 22 times? 3 times PEG? Now, Trend, for example, what you talked about, please put a disclaimer, is growing at 25-30%. And if you look at the FY26 and FY27 valuations, they are below probably the Nifty PEG. So that's where you make money, because on a growth companies, you need to look at PEG with, of course, ROE and underlying balance sheet. And that's where all these companies, and they've been the biggest winners for last 3 years, 5 years, 10 years. Small correction, of course, will be there. Some disappointment in between SSG growth and micro analyzing of each number and penalizing company, fine. But after 1 year, where you will grow? You have two options. Either you invest into India's largest FMCG company, which is struggling for 5% revenue growth and 10% profit growth, and you buy at a PE of 50 times and feel happy. Or you buy a company which is growing at 30% at a PEG of probably less than 2.5 times. I think you make probably more money over there. Of course, if they continue to report growth, if that assumption goes wrong, then even if you lose money, even in that case.
That's an interesting argument, a solid one at that. If a company like Trend says growing at 3 times PEG, price to earnings growth, which is still lower than the Nifty PEG, so then maybe you're not that bad off. It's an interesting lens and one that investors must perhaps keep in mind. Nigel?
Well, Rajesh, just one question from my end. In the past, I recall you all have played this travel and hotel theme. The travel stocks, they could pull back a little bit. If I look at Interglobe Aviation, that's pulled back a little bit from the recent peak. There's going to be a bit of a skirmish on the border. So some of these hotel stocks a little bit nervous. The luggage makers are a little bit nervous as well. Would you use this as a buying opportunity?
So probably there is still going to be some wait period over there, particularly in the luggage industry side, because the price war between the top three players is still ongoing. And, on the other side, some consumption slowdown. So the macro is not going to be that strong. And in between, the two players are a little bit trying to do price war. The inventories are still very high in the system. So we need to wait for the right time as far as luggage industry goes. As far as hotel industry goes, we do not have any exposure to, the hotel industry. And probably, I think the best of the realization is probably behind you. The best of the peak capacity utilization, because now many other hotels are also expanding, right? So one need to do a little bit more demand supply analysis before taking the final view. Currently, we do not have any exposure to either of these sectors.
Got that. By the way, in the CDMO space, Rajesh, what's the pick? We have a few listed players.
Yeah, so please put a disclaimer. So we are holding Suven for quite some time, and we believe, I think the overall opportunity is very strong. The opportunity is very big, and there are only few players who basically has a 30% plus kind of a margin profile in this kind of a businesses. And forget China plus one, even the orders which are otherwise what Indian companies are getting, and because of the acquisitions, the new capabilities what these companies are winning into. I think you have a very, very long, roadmap over next 3, 4, 5 years. So the growth is going to be compounding, and as you grow, the opportunity to participate into the larger size molecule, that comes basically handy. So from $10 million to $20 million to $100 million. So as you enter into different niche segment, the opportunity becomes really very big.
You're talking about Suven Pharma, right, Rajesh?
Yeah,
Suven
you're
Pharma.
right. Yes.
Okay. All right. Got that. Thank you very much, Rajesh. Appreciate you joining in. And of course, full disclaimer, as Rajesh himself pointed out, he'd own the name in their fund. So please do your diligence before you decide to take action if you do. Well, we'll take a quick commercial break here. Markets, of course, are up sharply as we go into the close. It is the last 30 minutes or so. And it's come up from about 240. Weekly expiry, perhaps the reason. 24,330 is where we were about 20 minutes back, and we're at 24,375. So that's the bump. We'll come back, get you some trading ideas with a technical expert. Stay tuned.
In 6 years, to go from starting from scratch to being able to take this business global, I mean, it's a turbocharged journey.
The first US thought came to us back in 2019 when Trump 1.0 and there was 25% tariffs on China. Okay, now with this 25% tariff, can India compete with China? Because we have this 25% delta. Started with like one person spending like full time into that market, talking to a bunch of customers. The second wave of COVID is when we experienced acceleration.
We're now at Trump 2.0. Yeah. Tariffs are playing havoc at this point in time. How do you read the latest set of developments in the US?
These kind of opportunities like tariffs, etc., they really allow you to shortcut your sales cycle. So what you would have otherwise achieved in 1 to 2 years, you're able to achieve it in 1 to 2 quarters. I would say in 3 to 4 years from now, these things should be good for India and by extension us.
investing.
Welcome back. Well, the markets are now sitting with a gain of close to around 50 points or thereabouts. The Nifty Bank, that's the one that's shown some weakness here again. That's trading in the red. Mitesh is back with us. Mitesh, a quick word on the Nifty Bank and fill us in with your picks as well.
I think in both the indices are basically consolidating is just that Nifty Bank had a fairly big outperformance. And therefore, I think last few days I've seen that there might have performed a bit, but no directional bias in both the indices. So then I believe that the rainbow after will continue. And you might not get much from trading the index. Unless I think you try to buy it near to lower.
Okay. All right, Mitesh. Now, what about final stock calls? Any advice before we get into the midweek break?
So I have a BTSC on paid industries. Making the stock just below 45,450. And a target of maybe around 46,000 can be looked at. Paid is slightly, not very liquid, so you might have actively paid, but it's available in FNO. That's the advantage. And the other stock which I have is a BTST and Persistent. It's today negative, but the overall structure for me is very positive over here. So Persistent, I would take a stop just below levels of 50 to 90 and a target of 53.75 can be.
Okay, let's talk about the other big story today. IndusInd Bank MD and CEO Sumant Katpalia has stepped down after the derivative accounting lapse. This follows the resignation of Deputy CEO Arun Khurana. The bank has now set up a committee of executives to oversee operations. Ritu joins in with the details on this. Ritu.
Well, accounting lapses at IndusInd Bank triggering top-level exits, as we had reported. Now you have the CEO, Sumant Katpalia, stepping down from his position effective yesterday, nearly 11 months before his term was to end in March next year. This is the third major exit from the bank in just this year, with the CFO stepping down in January, even before the derivatives discrepancies were disclosed, following which the Deputy CEO, Arun Khurana, resigned earlier this week, and now, of course, the CEO himself. Now, in light of this, the Reserve Bank of India has approved an executive committee to oversee the operations of the bank. That will comprise of Soumitra Sen, who is the head of consumer banking, and Anil Rao, the chief administrative officer. And this committee, in turn, will work under the guidance of the oversight committee, which will be chaired by the chairman of the bank, that is Sunil Mehta. Now, these exits come after the Grant Thornton independent investigation identified some of the key people that were responsible for the lapses, in light of which, of course, now the board has taken action to realign the roles and responsibilities. This is a clear fallout of the derivatives discrepancy, which will lead to a near 2,000 crore rupee hit on the bank's P&L, and that comes on top of the 600 crore discrepancy in the microfinance portfolio, which is still under audit. The impact of both of these is expected to be accounted for in the fourth quarter itself, and that may lead to the bank ending the quarter marginally in the red. Now, in his resignation letter, Sumant Katpalia himself said that he was stepping down as a matter of moral responsibility for his acts of omission and commission. For now, this executive committee will be in place for 3 months or until a permanent new CEO is appointed.
Okay, that's IndusInd Bank. So more flux and for the time being a little bit of uncertainty. Ritu, thank you very much for that. Stock, however, has recovered. The market hopes that this transition is going to be pretty swift and there will be, a new leader at the helm very soon. Let's move on now. We have, of course, an eye on auto sales, because when we come back on Friday, a lot of those numbers would have already come through. So what are the expectations? How has April been for the auto OEMs? Sudarshan's here with some perspective. So what can we expect?
So it's largely looking muted. As far as Vahan retail registration data is concerned, most of the sectors, passenger vehicles, MHCVs, or say two-wheelers have seen a growth, but it's in single digit. For passenger vehicles, registrations have seen a growth of 2%. For two-wheeler, again, it's 2%. And for MHCV, it's again 5%. But as far as wholesale estimates are concerned, here, passenger vehicles may see a growth of 4%, but for two-wheelers, it might see a decline of 13%. MHCVs may see a decline of 3%, and as far as tractor is concerned, there might be a decline of 1%. Now, coming to the company-wise number. In two-wheeler space, two companies that might report a growth, and these two companies have been reporting growth, and those companies are Eicher Motors and TVS Motor, and Bajaj Auto and Hero Motor will continue to report decline. For Bajaj Auto, sales may fall, wholesales, I'm talking about wholesales, may fall 1%. For Hero Motor, there might be a decline of 16%. For TVS Motor, there might be a growth of 12%. And for Royal Enfield or say Eicher Motors, there might be a growth of 6%. Now in the passenger vehicle space, Maruti Suzuki may report a growth of 4%, while for M&M Auto segment, growth might be for almost 15%. As far as Tata Motors is concerned, there might be a decline, and here decline can be of around 3%. And for Ashok Leyland may report sales like it might be flat if you compare year on year. Tractor space, M&M may see a growth of 1%, but for Escorts, it might be a decline of 7%. So as far as wholesales are concerned, the picture is looking mixed. Some companies might report a growth, and these companies that will be reporting growth have been outperforming, but certain companies which have been underperforming for the last few months may continue to see a decline.
Yeah, absolutely. And I mean, M&M incredible. Month after month, we talk about 15% growth, right? So, I mean, even on that high base, I mean, they're really managing to charge ahead almost on a monthly basis. I don't remember the last time we saw a monthly or a quarterly miss from Mahindra and Mahindra. But anyway, on a separate note, Ather Energy. So, the IPO is finally subscribed, but it's not gangbusters, right? Fairly muted so far, at least, when I saw the numbers last.
It's a second pure EV play, and finally on the third day or say on the last day, its IPO has got fully subscribed, and as of now total subscription is of around 1.3 times, and company had a fresh issue of 2,626 crore and OFS is of 1.1 crore shares, and price band that company has fixed, it's in the range of 304 to 321 per share. Now the data that I had taken just few minutes ago, or say till 1:30 p.m. I had taken, and till that time, retail was subscribed 1.5x, QIB was subscribed 1.3x, NIs was 0.3x, and employees, it's like oversubscription that we are seeing on the employee front. Here the subscription is around 4.2x, and QIBs of total offering that company is making, it forms around 54%, and here as of now subscription is 1.3 times, and NIs that form 27%, they have just subscribed as of now 0.3 times. So subscription is largely being led by QIBs, employees and retail. Now as far as Ather Energy had also raised almost 1,340 crore from anchor investors, and if you take a look at the list of anchor investors, some of the big names are there, and those names are Abu Dhabi Investment Authority, Singapore's East Spring Investments, Morgan Stanley Investment Manager, and US PIMCO, Samir Arora's Helios Mutual Fund and Helios Capital, UK's LMR Partners, and Hong Kong's Ovata Capital. So finally, at on the last day of its IPO, company has managed to get the total subscription, and it's currently subscribed 1.6x.
Interesting. Sudarshan, thanks a lot for that quick update. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, who joins us on the show. Hi, Mayuresh. Since we discussed autos, what do you like out there? And give us a quick take on Ather. Ola wasn't a very good experience for a lot of investors, but now they're betting on a next name. Your take on this EV theme?
Afternoon, Nigel. Now, again, I think if you probably look at numbers, right, numbers are not encouraging by far. And therefore, I think how numbers will play out, specifically on the bottom line, is going to be extremely critical for Ather as well. And therefore, I think when you're talking about how numbers will play out, how competition intensity is expected to play out as well, you've seen all the big players in the space have their launches done. They are having some teething issues there as well. How pricing will play out. I think all those things are going to matter a lot. And let's not forget, I think the overall ecosystem in terms of dealerships, distribution, after sales are a very critical component in terms of the entire ecosystem as far as two-wheelers or even four-wheelers are concerned. So my own sense is that within the two-wheeler pack, a stock like a TVS Motor, which has done exceptionally well, the expectation still continues that the kind of dealers, distributors that they are adding on are quite significant. the expectations of them able to maintain their EBITDA margin should be quite significant as well. Their EV launch, the iQube, is expected to do reasonably well. It is doing reasonably well. But as they scan other markets as well, I think the expectation largely in terms of volume and price related growth should continue. So for Ather, I think my own sense is I will give it a pass. I think you've got better, bigger players who are probably doing a lot more, who have done a lot more, and therefore TVS probably remains top of rack as far as markets with India is concerned. As clear disclaimer, this stock remains onto our global portfolios and global clients may be owning it.
Mayuresh, hold that thought. We will slip into a very short break. We'll come back in about 10 minutes left as we count down to today's trading session.
Well, the market's clearly nervous in today's trading session, and the breadth of the market is telling you the story. Mayuresh Joshi is still with us. Mayuresh, some of these AC makers, there was a lot of talk that it's going to be a scorching summer, so some of them should do well. However, reports are now indicating that the sales haven't been as good, both for refrigerators as well as for ACs. How do you approach this theme? Stocks like Voltas had run up in anticipation. Blue Star, in fact, has come off close to 15-20% in the last 1 month or so. Your take?
Well, numbers have been a little bit disappointing on Apple, Nigel, no two ways about it. But I think the expectation is that with scorching temperatures happening over the last few days and last couple of weeks, and expected to remain so well through May, well through June, the sales should rebound quite significantly. Significantly, again, I think what you've probably seen in terms of the dealers and the distributors that have increased, specifically in tier 2 cities, I think it's no longer a phenomena that remains stuck to urban cities. And therefore, the penetration perspective in terms of AC sales to cooler sales is going to improve drastically over the next few quarters. Having said that, I think from an immediate near-term perspective, my own sense is that recovery should probably happen over the next couple of months. You should see a significant amount of recovery, both in terms of volumes as well as pricing. And therefore, I think the kind of underperformance that all these stocks have probably exhibited at this juncture, and Blue Star probably has remained one of the most resilient stocks, Nigel, over the last few weeks, last few quarters, as far as this entire segment is concerned. I think the kind of market leadership that they probably got, the kind of models that they've probably introduced, the inverter sales, specifically within their AC models, which have shown a steady, stable uptick. I think that should probably continue. So my own sense is that not too perturbed with the kind of fall we've probably seen. There is some sense of recovery that can get expected. Blue Star still remains top of the list.
Okay, all right. Mayuresh, hi, good afternoon. Good to have you on the show. I'm just looking at some of the result reactions as they've played out. Vishal Mega Mart definitely stands out, right? But what solid growth, 20% plus kind of growth, almost quarter on quarter. Stocks up 10%, by the way, right now. That's Vishal Mega Mart. And this year, it has done better than the Nifty, better than the market, with a gain of almost 11% for 2025. That's today's performance. Obviously, it's a recent listing, so that being the caveat. Your thoughts on the retail space, and would you buy any of these?
So, Surbhi, I think I'll have a close watch. I think Vishal gave super numbers, but even V2 retail as an example, or V-Mart retail as an example, I think if one really assumes and presumes that consumption will come back for both factors, one, I think because of the budgetary announcements done and the tax cuts that have got announced, the first half and specifically the second half coinciding with the festive season should see a huge rebound happening specifically in tier 1 cities. As far as tier 2, tier 3 cities are concerned, which is more semi-urban, rural in nature, the expectations of better monsoons this time around. Rabi output will be out in the markets. If monsoons are better, and one hopes it should be, the Kharif season should be equally good as well, with an equally better Rabi season to follow. Would mean rural discretionary spending and rural discretionary consumption should come back very, very strongly. And because I think the presence of Vishal Mega Mart, V2 Retail, V-Mart is largely and predominantly in tier 2, tier 3 cities, along with tier 1 as well, I think a mix in terms of recovery of rural consumption along with urban consumption should probably reflect in numbers being better in the second half. Again, the mix that V-Mart and V2 Retail have is predominantly apparel compared to a Vishal Mega Mart, which is 44% apparel and the rest between FMCG and other discretionary. And therefore, I think the margins for V2 Retail, V-Mart are relatively better. Same sales store growth should also start holding out. And because of that, I think core dynamics, both in terms of average spend, the expectations in terms of revenue per square feet, and SSG growth should probably improve quite significantly in the second half. So I'm keeping a close eye on these apparel makers, which in my opinion should do well in the second half.
By the way, just pointing out, guys, that the tire stocks have done really well today.
Yeah, CEAT.
CEAT, look at CEAT. We had a conversation with the management in the morning and they were sounding very, very unperturbed, frankly, by whatever's happening in global markets, quite confident on the domestic business and even on the international business. They're saying Europe is steady, OEMs are not showing any nervousness, and they are planning to build on their US business, US as a key export market as well. The stocks rock solid and steady. There's Balakrishna as well. There's Apollo Tyres. So in general, tires in top gear this afternoon.
Absolutely, and doing very well, all told. Apollo Tyres is the other one. With Apollo, of course, there was a news flow that they're shutting their European subsidiary, which has been losing money. So a bit of a late reaction coming through, but it's there today. Let's just quickly put up the Zomato eternal expectations, because the numbers are tomorrow. And that's the other one, which I think should be in focus when we come back on Friday morning. I think there's a net loss, which is the expectation from Zomato. 33 crore loss. This is, of course, this is not a poll. If you have the graphics, we should be able to pull this up. This is Jefferies analyst who's expecting net loss to be at about 33 crores compared to a profit of about 175 crores. Okay, revenues are, basically that's the point. And there is at the margin some, actually Jefferies has estimated that food delivery GOV will actually fall on a quarter-on-quarter basis. I think this should be the first time ever on a Q-on-Q basis food delivery GOV comes off. I mean, if not as the first, it's quite rare to see it. But that's Zomato for you. The other bit, of course, this entire large selling which will happen on MSCI because of the FDI restrictions, which the company is announced recently. Mayuresh, any thoughts?
On Reliance, when Reliance Retail came out with their numbers, they said that they're actively marketing their, they're going to actively start marketing their quick commerce or under 30-minute delivery by creating a separate tab in their app for such deliveries. And this segment has seen a 2.4x quarter-on-quarter growth for Reliance Retail. So basically more competition is coming in the quick commerce space. which delays their path to profitability, at least in quick commerce.
Any sector with decent size, visibility, profit pool competition, right? I mean, huge, tremendous amount of competition, which is actually the lesser spoken about factor when we look at businesses, industries, etc. Mayuresh, 30 seconds. Any thoughts? Zomato.
We would wait for numbers, Prashant. I think, honestly, I think they have been accelerating their dark stores, and that's the strategy that they've adopted. And clearly, it's to counter competition quite clearly. Rima was just mentioning Reliance. We are hearing about Amazon. We are hearing about other large players who are also probably trying to do some localized bit in terms of food delivery as well. And let's not forget the local kirana wallas who are probably up there as well. And therefore, I think the competition is going to be intense. Numbers are going to be soft, not just for this quarter, I think for the next 2 to 3 quarters, because their expansion spree is going to be very, very aggressive. So I think I'll wait out for numbers and then take them.
Thank you, Mayuresh, for joining in. As we close out today's trading session, market slipped in the last 30 minutes. So we're closing with cuts of about 1/3 of a percentage point, 75 points lower on the Nifty, 24,260, Sensex down 200 odd points. Banks underperformed, the Nifty banking index down 400 points, but many NBFCs, whether it's a Bajaj Finserv, Bajaj Finance, losing more than 5%. Mid-caps declined. The mid-cap index down over 1%. When we started the show, the mid-cap index was down about 0.5%, but the sell-off accelerating. The small-cap index ending with a cut of more than 2%. Onto the losers list then, Bajaj Twins right on top. Trend, which is also very expensive. Today, Trend has breached the 50-day moving average. Tata Motors under pressure, along with that TVS Motors. Street is awaiting the auto sales numbers. State Bank of India reports numbers on Saturday, along with that fundraising, and the stock corrected in trade. Ultratech Cement also on the way down. On the way up, HDFC Life, Maruti Suzuki, SBI Life, Bharti Airtel. These were 4 of them, where the gains were in excess of 1.5%.
Actually, if you can just look at the Nifty intraday, it's a pretty, it's a pretty sharp turn. There was a bit of a bump, but then the intraday will tell you the impact. We were at 24,400 at 301, 302, 330 now. So 24,400 and we're at 24,240. So it's a 150-point turn on the way down that we've seen for the Nifty. And I think we should do something similar for the Nifty Bank as well. Just take a look at the intraday. Again, here 3 o'clock, the index was at about 55,200 and we're at 54,961. So that is again about a 250, 300-point turn that we've seen in the last 30 minutes for both the Nifty and the Nifty Bank as well. I mean, there's no particular news flow, but I think there is just sort of lightening of positions going into a holiday with not so much global risk, but of course pretty much all focus on the entire India-Pakistan issue in terms of whether there could be any escalation, etc. That's it. I mean, that's the only point of conversation out there in the market. Global, etc. Of course, I mean, I think we've been discussing, and it's been discussed quite a bit over the last many weeks now. I think it's goodbye time from all of us here. Thank you very much for staying with us on another edition of Closing Bell. But we're going to focus on Akshaya Tritiya and what else but gold and focus on the other side.
Hello and welcome to our special broadcast on Akshaya Tritiya. Well, it is said that gold, silver or jewelry that you buy on Akshaya Tritiya brings you good sense and prosperity going forward. Is the reason even as the gold prices are so high, there is an expectation that we could be looking at a surprise number on the higher side. Lesser than the average though, because when you look at Akshaya Tritiya in past many years, the average gold bought during this time is to the tune of 18 to 20 tons. But now, because the prices are at ₹1,00,000 per 10 grams, the expectation is that this buying could drop to nearly 12 to 15 tons. Well, that chart tells you on what the gold prices have been on Akshaya Tritiya in various years behind. And as you can see that the gold has been making higher highs going forward. The expectation also is that by the time it's next Akshaya Tritiya, you could be looking at even higher numbers. So last year at same time, gold prices were trading at around 72,000. Now they're trading at around 96 to 97,000 rupees per 10 grams. That has been a 24,000 rupees per 10 grams of a surge that we've seen in case of gold. Not just gold, a lot of people also buy silver during this time, and silver actually is being bought more because gold is so expensive. So when you look at the silver prices, and as you can see, it has been ranging between that 60s to 70,000 rupees a kg. But this year, in the month of March, we've seen silver prices trade above ₹1,00,000 a kg as well. Some profit taking, and that perhaps could benefit during the Akshaya Tritiya. Well, there are various ways that you can buy gold, and the most favorite clearly has been buying it by the physical way. So when it comes to jewelry, bars and coins, that is how the gold is bought the most. But now, of course, you also are looking at gold ETFs where the buying really has picked up. The gold ETF buying actually in the first quarter of this year has been the highest in 3 years. And then it also has been about gold mutual funds, and the millennials and the youngsters are also buying gold by the way of digital gold. This is the performance that tells you on how gold really has been. And this year, we've seen gold prices gain up by 27%. Last year was 28%. In 2023, we saw 15% of gains coming for the gold prices. Much of this support clearly comes in from the global central bank buying, which has been holding at a record above 1,000 tons every year. And there are no different expectations from 2025, where the markets believe that this is the number that you could see breaching this year as well. Well, the expectation is that going forward, you could be looking at higher gold prices. Well, at least that is what most of the global banks and brokerages are talking about. So whether you look at Bank of America, Deutsche Bank, Citi, Goldman Sachs, they're talking about prices of $3,500 to $3,800 an ounce in this year. And almost everybody is talking about $4,000 an ounce of a possibility in 2026 to between 2028. So with those kind of numbers, the expectation is that you could be looking at more confidence in Indian buyers. And because it's an auspicious day of Akshaya Tritiya, there could be more buyers going forward. Well, joining us to take all of this story ahead is Suvankar Sen. He's MD and CEO at Senco Gold and Diamonds. Also joining us is Saurabh Gadgil, Chairman and MD of PNG Jewelers. We will also have Prithviraj Kothari, MD of Riddhi Siddhi Bullions of RSBL. And we will, of course, be joined by Ajoy Chawla at Titan. But Suvankar, I want to come to you first. And we've seen very strong gains coming for the gold prices. Do you see that denting the buying this time around? Or is it the usual euphoria because people do believe in the custom of buying gold today?
What we are seeing is that there have been two kinds of customers. At one end, a lot of wedding buying, with weddings in the future, people are utilizing their old gold, they're exchanging their old gold and they're buying heavier wedding jewelry or for their personal consumption. That has been one very positive sign, especially even at these high price levels. And at the other end, we are seeing that consumers, there is an impact in terms of volumes. People are wanting to buy something for the auspicious season, but something of a token amount, something within their budgets. So 30,000, 50,000, 70,000 rupees, lighter weight jewelry. So there are these two kinds of customers that we are seeing in the market. But overall, with Akshaya Tritiya in mind and the last 1 month that we have seen, consumers are positive towards the commodity. They are very happy somewhere that the prices have gone up so much. The trust on the metal has gone up. However, I think they are very much confused with the price volatility and they are wanting the price to stabilize and it's impacting volumes for sure. So this is the situation that we are seeing in the market.
Saurabh, what is your sense? Are you also looking at smaller ticket size doing better than the larger bridal jewelry, or is it any different in Maharashtra?
I think Maharashtra, we are seeing good footfall right from the start. We opened early morning, 9 o'clock. And I think till the first half, when I took a tour at 2 p.m., we were almost on the lines of Gudi Padwa. So I would say that it's been a very good start, being a working day, also being summertime here. Footfalls have been good. ticket values have shrunk a little bit, but people interested in gold, gold jewelry, gold coins remain strong. Silver has been outlier this Akshaya Tritiya. Silver coins have been on fire, and with the whole optimism around silver prices looking heading northward, there's a lot of interest in also silver coins being bought today. But I think overall we are happy with the way things have shaped out till now. And the second half, from 5 p.m. to night 11 p.m. is going to be a very important time, because that's when the Mohra is also going to be there. Plus, people will come out in big numbers to shop. So all in all, we're looking at a very good Akshaya Tritiya. People's faith in gold, people faith that this is a good price to enter the market and things look bullish henceforth, is what is playing on people's mind. And like Suvankar mentioned, 50-60% shopping, wedding shopping happening with exchanging old gold for new. But I think that's again a trend, because prices have gone up, budgets are under constraint. But I think the market looks good, and I'm talking to people pan-India. I think it's the same story everywhere, that things are looking good, and there's a lot of optimism around Akshaya Tritiya.
Well, there is buying happening, and people are buying more silver than gold, is what we do understand. And as you said, the ticket size clearly seems to have shrunk right now. So, Suvankar, this one is to you. While we do understand that we're looking at lower ticket size, but are we also looking at lower caratage this time around? Because we do know people liked to buy 23 and 22 carats. Rarely in last 5 or 6 years, we've heard 18 or 14 carats being spoken about, unless until now.
So, one thing that has happened this particular, I would say last 2-3 months, is that the demand for diamond jewelry has gone up. And along with that, people are wanting to experiment 18 karat plain gold jewelry, especially for designs which are more modern, more Western, something for the daily wear. So, 14 karat and 18 karat for diamond jewelry. So if we look at in terms of volumes, if value-wise gold prices have gone up, you will see that the value-wise growth has been quite high, because gold prices itself is up by 20-25%. Volume-wise, if we really look and go deep into it, we will see that the diamond jewelry growth in the last 1.5, 2 months have been much higher compared to the gold price growth in terms of volume. So I think, yes, this high price is influencing the customer that, yes, this is a time that they can buy diamond jewelry, lower caratage, 18 karat, 14 karat gold. So this is something which is in trend. And I think we as jewelers have to ensure that that demand of the consumer is fulfilled.
So, Suvankar, would you also say that when it comes to studded and diamond and lab-grown diamonds, including natural diamonds, is all of that bouquet doing well?
Yes, all of that. Still, the natural diamond is, I would say, that has a more space in the mind of the consumer. The lab-grown diamond is out of curiosity. Consumers are trying it, they are experimenting, they are inquiring about it. The growth rate in lab-grown diamond, because the base is so low, looks much more attractive. But in general, in terms of absolute numbers and volumes, the natural diamond still continues to hold a larger space in the mind of the consumers.
Saurabh, I also want to come to a point that Suvankar mentioned earlier on, that the exchange jewelry really seems to be doing quite well. During Akshaya Tritiya as well, do you see that big number coming in, or is it more fresh buying given the auspiciousness of the day?
No, I think the trend is towards swapping new for old.
Okay.
In Akshaya Tritiya, when you see wedding shopping, a lot of shopping is already done by pre-booking. People have come and placed orders, so the gold already has been given at a time of placing orders. So today, if you look at one single day, you'll find a lot more fresh shopping happening. So today, I think the ratio would be 80-20. 80% would be fresh shopping, and 20% would be old gold, which on average for the last 2 months has been 60% old gold, 40% new gold. So I think today's thing is that people want to purchase something new and get it home. It's auspicious. It's considered to bring you luck. So be it gold, be it silver, even if it's a small quantity, people want to buy something fresh today and take it home.
And Saurabh, would you say that it is about a lot of offers and schemes and complimentary gifts is what we've been hearing since morning today is being done to lure more customers in?
See, at our company, we have not been focusing on discounts or offers. The basic offers like something off on making charges, what is there. But I think the whole promotion for us is going to be, being your family jeweler, being someone who's, where you should, come and look at, with transparency, buying from us will bring you good luck. So focusing more on the whole value proposition than just discounts. Because end of it, today consumers have become clever. They understand that, people are here to do business. So you jack up prices get them down, give some offers. End of it is the same story. So I think our focus has been to create value for the consumer, to be able to give them the right designs in the right environment, and being able to serve them better. So that has been the entire focus, and it has paid off well. We do not see really to any people going away because of lack of further discounts.
Subankar, this one is to you, and the World Gold Council report that came in today, and that is what we are reacting to. So when you look at the first quarter of this year, the Indian gold demand saw a 15% decline. The Indian jewelry demand saw even higher 25% of a decline. Do you see that buying now coming in for this quarter? Because the last quarter clearly did not have any festivals, not auspicious days, no weddings as well. So that perhaps, and of course the prices were high and volatile. Do you see now some stability coming in for the markets, and we see buying picking up now?
I would say that, this World Gold Council report gives a very clear reflection that the increase in gold prices might, make us see that the value-wise growth looks very good numbers, but the volumes have taken a hit. And this 20-25% degrowth in terms of volumes, I think that in the last 1 month, gold prices have moved up higher than what it was in the month of, say, March. So this 20-25% degrowth in volume will continue to happen. So yes, during Akshaya Tritiya, we will end up having a growth of, say, 15%, 20%. But in terms of volumes, it will always be a challenge. Consumers are coming, as Saurav has said, that he's focusing on certain value propositions. But in general, if you look at the industry, people have been giving offers. People are giving discounts on the gold rates or making charges. But along with that, all big brands are focusing on the new design collections that they are launching. They're trying to connect with their old customers and, bringing that relationship aspect of it so that the service remains constant. But yes, the volumes will be under pressure because of the high gold price.
Saurabh, when it comes to jewelry versus investment, what are you looking at this point in time when it comes to Akshaya Tritiya? Because we've seen during Akshaya Tritiya, people usually tend to buy jewelry because it's something that you can invest and wear it as well. But with the gold prices, the way they've run up, trying to, curb onto the making charges, do you see more investment buying rather than jewelry buying?
Yeah, I think on any festive day, typically 70-30, 70% is jewelry buying, 20% is investment demand, which is bars and coins. This time, I think it'll be 60-40, 60% would be jewelry and 40% would be bars and coins, primarily investment demand, which I think is quite natural because people also want to invest some of the surplus in gold. So I think this will be incremental demand, which will come out of people who wouldn't have invested in gold in other circumstances. So I think on the jewelry side, the numbers should be good. Investment demand is very high, and I think that will continue because the whole outlook towards gold, if you read any media right now, there's a lot of talks on gold reaching 4,000. And even today, a man on the street is talking on gold crossing 110,000. So these numbers is what is driving the whole frenzy for people to invest in gold. And that I think is going to play out very well on this Akshaya Tritiya day.
That point is well taken. So it is Akshaya Tritiya, people are buying, and it is longer hours that the retail chains also are working with. So couple of things that we have seen play out well. One, the exchange jewelry is on the higher side. Silver buying even better because it's slightly cheaper than what gold does. And then, of course, the investment buying is stronger than what we are seeing in sense of jewelry buying during the day-to-day. Thank you so much, Saurabh Subankar, for joining in. It's time for a short break. More news and updates on the other side.
Hello and welcome to Business 360. I'm Shireen Bhan. Latha's interview with the SEBI chief Tuhin Kantapande is coming up in just a few moments. But first, a big check of the headlines. The Sensex and the Nifty end at the low point of the day with marginal losses. Mid-caps and banks see sharper cuts. The rupee hits the highest level in 2025 as the dollar continues to weaken. Gold prices ease from record highs, even as thousands throng jewelers across the country to buy the yellow metal on the auspicious day of Akshaya Tritiya. Gold prices up 27% so far in 2025.
India's coming along great. I think we'll have a deal with India. The Prime Minister, as you know, was here 3 weeks ago, and they want to make a deal. We'll see what happens.
President Trump says tariff negotiations with India are coming along great. He expects to seal a deal. Trump also makes a U-turn on tariffs on U.S. auto companies to soften the impact. Prime Minister Modi holds a second meeting of the Cabinet Committee on Security after the terror attack in Pahalgam left 26 people dead. The manhunt for the suspects continues. The Indian Army says Pakistani forces violated ceasefire at the border for the 6th straight day. RBI approves a two-member committee to run IndusInd Bank. This follows the resignation of the CEO and his deputy after derivative accounting lapses led to the loss of nearly 2,000 crore rupees. A first-of-its-kind government survey projects private sector capital expansion to decline 25% this fiscal. 43% of the 3,000 companies surveyed are unlikely to undertake any capex. Electric scooter maker Ather Energy's 2,600 crore rupee IPO fully subscribed, led by retail and qualified institutional buyers. Key anchor investors include Abu Dhabi Investment, Morgan Stanley, PIMCO, and others. The Supreme Court allows courts to modify arbitral awards but warns this power should be exercised with caution. So far, courts only had the power to strike down the entire arbitral award for a portion of it. PepsiCo's largest India franchise partner, Varun Beverages' net profit up 33% in the March quarter. The low sugar or no sugar segment accounts for 59% of its consolidated sales volume, signaling a shift away from sugary drinks for over health concerns. The Mahakumbh helps boost Coca-Cola's earnings. The multinational company says it sold 180 million servings of the fizzy beverage at the congregation in Prayagraj. But first up, the market action. The Lal Street ending at the day's low, with major selling being seen in the broader markets, while the Nifty managed to hold the 24,300 mark. 36 out of the 50 Nifty stocks closing in the red. Mid-caps and banks underperformed the blue chips today. In the currency market, the rupee rose to its highest level for 2025 so far, as the US dollar continues to weaken. Strong foreign inflows and lower crude oil prices also boosted sentiment. And gold prices have eased from record highs, this even as thousands throng jewelers across the country to buy the yellow metal on the auspicious day of Akshaya Tritiya. Gold prices up 27% so far in 2025. The latest in the tariff tussle, President Trump has expressed optimism over a trade deal with India. Speaking to reporters outside the White House, Trump said tariff talks with India are coming along great and he expects a deal soon. Commerce Secretary Howard Lutnick revealed that the Trump administration has reached its first trade deal. However, he did not reveal the name of the country involved.
It's coming along great. I think we'll have a deal with India. The Prime Minister, as you know, was here 3 weeks ago, and they want to make a deal. We'll see what happens.
Former RBI Governor Raghuram Rajan says lowering tariffs more than other nations will give India the edge in trade talks with the US. Speaking to CNBC, Rajan also said that a possible trade deal with the US will push several companies to look at India in a new light.
Every country in the world, just like Donald Trump has said, wants to do a deal with us.
This should be seen in the larger context of the India-US relationship, which covers things like defense, but also education. A whole lot of Indian students coming to the United States to learn, do research, and so on. So many areas in which there could be collaboration. But within that, I do think that India benefits hugely if it can negotiate tariffs to a much lower level, even while some other countries have it at a higher level. It may cause a lot of companies to look at India in a new light, especially given the large Indian domestic market. So you not only get an entry into India and produce for the rest of the world, including the United States, at low tariffs, but you also get to serve the Indian market.
That's Raghuram Rajan. The U.S. president also made a U-turn on auto tariffs. He signed an executive order to make concessions for U.S. automakers to cushion the impact. This comes after automakers warned that tariffs could raise prices, reduce sales and make American production less competitive. Under the order, vehicles assembled domestically with foreign parts won't face high import taxes. Imported automobiles have been given a reprieve from separate tariffs on aluminum and steel. Now, China has waived the 125% tariffs on ethane imports from the U.S. that were imposed earlier this month. According to a Reuters report, the tariff on ethane had been waived in recent days but was not publicly announced. Remember, China buys nearly half of America's ethane exports, so perhaps a thaw in the relationship. Foxconn has reportedly commenced the production of Apple AirPods at its Hyderabad facility in Telangana. As per a Money Control report, Apple's Taiwanese contract manufacturer is also planning to ramp up iPhone production at its Bengaluru plant. This move comes at a time when Apple is looking to position India as an alternative to China amidst trade tensions between Washington and Beijing. Well, that's it for now, but the big CNBC-TV18 exclusive, the first interview with the new SEBI chief, Tuhin Kanta Pandey, in conversation with Lata Venkatesh. Let's take a look.
The newly appointed chairman of SEBI on March 1st outlined 4 key objectives for SEBI: trust, transparency, technology and teamwork. And today we have a 5th T to elaborate on this. The author of all these statements, Mr. Tuhin Kanta Pandey, the new SEBI chairman. Thank you very much, sir, for your time. Well, let me first start with the trust and the transparency part. The previous chairman had already set in motion the controls on F&O. We saw the first tranche of controls came in, only 1 expiry per week per exchange. We are eagerly awaiting the second set of rules. When do you think we will hear of it, and what will be the main, constraints, if any?
I think the SEBI had put out a consultation paper, yes, and we received about 800 comments. Yeah. Some supporting the position, some suggesting some alternatives, something in between. So we will take a considered view and will come. Basic premise is that we should make systemic improvements and also provide, while the F&O market is very important market for price discovery, for hedging, we also don't want it to be, like reduced to one single problem that we were facing on index options on the expiry day. Yeah. That was our key problem area. So therefore we need to clearly define the risk metric, and we are trying to, we'll bring the delta in terms of the options.
Yeah, I thought it was more, besides the risk metric, the end of day counting of options or intraday. And it is now, look, I mean, there were enough articles written on it that the intraday positions are so high that some limits need to be put, and the limits should not only be on end of day. So should we expect that there will be intraday limits? Because that's where the HFTs seem to be taking the game away.
I think we will have to take a clear call on not really exactly what we had proposed in the paper, but exactly what will be more practicable, and taking into consideration all factors. So we will bring about necessary changes accordingly.
Okay, you can't give us any clue on whether it would be intraday or end of day limits?
Not at this moment.
Okay. All right. Let me come to the other issue that is rankling the market on this trust transparency issues, and that is this SME IPOs, sir. I mean, we have seen Gensol is now. Just before that, we had that, I think it was Trifactor Technologies. There are enough number of SME IPOs. Are there some new rules being written? There is an inherent conflict. When you ask the exchanges to control them, they make money out of them. So it doesn't seem to be an effective, they don't seem to be functioning as a first line of control.
I think one of the objectives of bringing SME IPO are a little light touch regulation for them was exactly to facilitate the SMEs to access capital markets, where the cost of accessing we have to see the cost is relatively down, and it is easier for them to access capital markets. So we have a very large number of SMEs. And so therefore, in order to enable them to do that, whether we could have the same onerous requirements as the main board was the issue. And it was, so I think we are watchful if there are certain aspects where, we have, for example, brought in some changes in terms of profitability criteria, in terms of usage and deployment of funds post-IPO. Also on the fact that this money cannot be simply used by loan repayment of the promoters. But I think the merchant bankers, they need to do a better thing on this, and we expect, But
do you expect it to remain with the exchanges because there seems to be a conflict of interest?
I don't think that is, in a way, in anything, even if it is approved by the SEBI, the exchanges will have to be paid their fees. So therefore, the transactions will have to be carried out in the exchanges. Okay. So only the processing part, like clearing the document, that was something which was SEBI passed it on to. But we will be watchful of the situation, and if we find that, if we find that this is a very widespread phenomenon, even after whatever the changes that we have anticipated, then we will review it.
The second tranche of F&O rules, when should we expect it?
Well, I can't give you the deadline, but...
No, in a month, even a broad ballpark?
I think very shortly, yes. Within a month, I think we should be able to arrive at, yes.
Okay. Now let me come to the other issue that you have already announced as one of your first announcements, this conflict of interest disclosures for SEBI's own officers. Do you notice any gaps in the current disclosures?
Well, this is not only for SEBI's officers, but also about the SEBI board members, including chairman.
Yes.
So the gap is, I think, one is 2008. This was set for the board members. Then there are ESR regulations, which are even older, which is employees service regulations. There are certain disclosures which are made within. There are certain conflict of interest clauses are being applied within. People are recusing. However, there is very little public exposure. There is in fact no public disclosure of the conflict of interest. Even we don't have even disclosures of properties and other things.
Even other government officials don't disclose to us. It is to the appointments committee or whoever they disclose. We don't get to hear.
No, but at least some disclosures are there. Even, for example, the property returns, the immovable property, even for all government servant, is out. And I think SEBI also is slightly a regulator where we find that we should be more proactive in terms of this regime. And secondly, we also need to have comfort for those who are working within SEBI as to how they need to conduct, in many cases,
You mean the lateral entrance?
Not only lateral entrance, even the people who are employees, they also need to, when they are passing orders or, dealing with the case.
They need to know.
They need to very clearly know where it will fit. So I think we have to update that particular, both the ESR and the board resolution. Secondly, we also need to have a framework how they would be recorded. Because we need to know who has recused for what and rationale, so that have some database, and also have public disclosures.
Okay, so that is a big thing. So you expect that it will be a public.
So public disclosures, to what extent the public disclosure should be made, in what cases should be made, how it could be mitigated. Suppose somebody seeks the thing, then how that particular complaint, etc., could be processed. If there is a, we will, the committee obviously will look at the best practices for other regulators in the world as well. And I think we will be pushing forward this important subject.
The fundamental difference will be that you will make things more public.
I think both. We have to also need to have more clarity internally as to how they will rest, how they will be processed.
Okay, fair enough. Now, you've made repeatedly a statement that there is a compliance burden. Are you of the view that SEBI is over-regulating?
I think so. I think in many areas we can have a much simpler regulation. Many regulations were, contextual in nature, and some of them have been changed also. For example, LODR was completely changed in 2018. Similarly, the regulations were updated, but not all of them. So therefore, there is a need for relook at the regulations. Many times context have changed. Many times, a better way of regulation may have come simply because you have a better technology now.
No, my fear is that as it is, there are scams. I mean, we had Gensol. Like I told you, there were 2 or 3 SME IPOs. Even if I do a Google for the last quarter, we have seen 3 or 4 scams come out. It doesn't look like over-regulation. It looks like more regulation is needed.
No, I mean, simply you write a regulation doesn't mean that it is there is a difference between implementation and a regulation. That is what the effectiveness of regulation is. Like wherever the risk is higher, that is where we have to concentrate. If we try and ask too much of micro, that may not be our game. Secondly, we also have to clearly say that we can't be in every boardroom. So the question is it asking too much of a tick boxing? In many a case, it is a false disclosure. The disclosure will come, but that's false.
Yes, that's what we discovered.
So therefore, what we need to do is how effectively you can have a check and balance where these disclosures are stemmed in the bud.
But is there a feeling in government that there is over-regulation? Because that seems to be the general feeling that, and I think it also may kind of demoralize people within SEBI also. If you're constantly told that you have, you've overdone, you're over-regulated.
No, SEBI,
doesn't it?
Number one, this is not something that I'm telling SEBI. All our staff are fully engaged and energized into re-looking at things. Many a time they have been feeling also. See, the question is, it's like a spring cleaning. Many a time what happens is when you are in your house, and not that, this is something which is happening for the first time. I must give credit to successive leadership in the SEBI that from time to time they have re-looked at it, they have contextualized it, they have brought in new regulations, they have, shed the old. So it's not something that, like it is like spring cleaning. Every time you keep on doing it, every Diwali you want to do it something and then you accumulate and then you shed also and you contextualize. This is something which is exercise which is really being done by all the divisions. I mean, they have begun it. They are enthusiastically doing it in terms of, because it is also when you are having a regulation, and if there is too much of information, then you have to also process too much of information. If you just bring that information and just keep it rest, then what's the point? So therefore, they would also like to be, they would like to be smarter. So I think SEBI wants to be a smart regulator.
Okay. Well, let me come to the other issue of, ASBA for secondary market. This blocking of the amount for primary markets was done for IPOs, and we were expecting it will happen in the secondary market. Is that something which is on the anvil?
Yeah, we are looking into it.
Okay.
We are looking into it.
But will it take a long time?
I will let you know. I mean, I just have to take a stock of the situation.
Because the brokerages are sitting on a lot of money. There was somebody the other day who said that some 4.5 lakh crore of, customer idle funds are sitting with custodians, with brokerages. I mean, why are people able to offer zero brokerage? Because float is there, they're making money on that. So will ASBA in secondary market be a priority for SEBI?
No, I think we have to really see the whole ecosystem moves together. Okay. And as you say that, the level of float has come substantially down in our system. The India itself, took a lead in going to T+1 settlement. Yes. US has now followed suit. Several jurisdictions. I was in US and we had a meeting with several security regulator in the context of the IMF ISCO spring meetings. And there are many people who are still in a much different regime.
But it is under consideration. Should we expect some rules?
Yes, I mean, it's under examination, as I said.
Okay. Let me take a quick break, sir. Back with a few more questions. In fact, lots more questions to the SEBI chairman. Welcome back to this very special chat with the newly appointed chairman of SEBI. Well, not quite newly. He's been around for over 45 days, Mr. Tuhin Kanta Pandey. Thank you very much for your patience, Mr. Pandey. Let me come to this T+1 settlement that we were talking about just before the break. SEBI is also pushing T+0. Will there be more of that? Because that also reduces the float, makes money more active and efficient. Will we see more of it?
Well, T+0 was intended to be optional.
Yes, optional only.
So right now, I think we will rest at that. Let it be optional.
Yes, yeah. Yes, of course. No, the system cannot be imposed, but you will try and push T+0. There is no rethink on that, is there?
No, I mean, we are neutral about it. As I said, we have brought in the T+0. It is an optional system. The technologies, etc., have been tested. So, I mean, we have to really see how the ecosystem moves and how there will be a comfort level of the wide variety of issuers and investors and things like that. And what kind of plumbing is there? What kind of problems are there? There are FPIs. How would they move the money? I mean, there are...
It's to their advantage. I mean, if they get T+0, they will get money on the same day when they sell. They should be happy, if anything.
No, that's true, but that is not the kind of thing is there. You should ask them also.
No, I did speak, and some of them were very happy.
They may have procedural issues, many of them, of trying to move the money, and different time zones are there, different things are there. I think India has taken an initiative, and our security markets continues to take the initiative in its own unique way, but we should take people along.
Okay. What about the NSE IPO? Can you give us some updated headline on that? They have come to you again. Will it be round the corner?
Well, there are certain issues which are going back and forth. I think there have
Is
been
it that co-location
active
litigation
discussion.
case which is the
No, I
prime
mean,
roadblock?
There is, no, I think that is one case where I think some solutions can be found in terms of settlement, etc. And there is a technology architecture issue, then there is a governance, and then is a clearing corporation. In these, all of these things, I think there is an active interchange between the exchange and the SEBI. And we intend to look at positively forward to, not as a procrastinating device,
No, of
but
course.
actually to make it happen.
Okay. But Clearing Corp, their argument usually is that BSE has been allowed. Why are we being asked to reduce our stake?
That's the point. I mean, but at the same time, we have to really keep in mind that, it's substantial, is 90% of the market share, and market thing is. So we have to see keeping in view the market integrity in others, how we will basically it's a question of a roadmap. What kind of roadmap we should agree upon.
So should we expect it in a year, in 6 months? Is there anything you have in mind?
We will let you know. Frankly, it's a bit early for me to jump the gun, but there have been technical discussions on, and we'll come to a finding. But again, I said with a view to find a solution, and not to permanently, park that question.
Okay. Fair enough. The other issue was, in the previous regime, there was a regulation enacted that if FPIs have more than 50% exposure to one stock, then all the granular details should be revealed. I think it was, they went through the entire stage and almost everyone revealed. But there was still a little bit of people who would have been disqualified because they did not reveal. Can you share any numbers as to how many funds have still to reveal or were disqualified because they didn't give you the final granular details? What is the amount of money involved?
This reduction in cases where
they did not reveal.
It did not reveal the full granular disclosures as required, could not be there, and therefore their registrations were rendered invalid. This is about 1% of the total FPIAs.
Okay, I just have a couple of questions on mutual funds. One is the TER, the total expense ratio. What happens is SEBI has a TER limit that top funds compete and they fix their TER very close to what SEBI has mentioned. So it becomes, it is not related to your performance. Ultimately, your expense should be related to your performance. It doesn't work that way. What happens is SEBI's limit becomes the limit for the market. Any rethinking on the TER?
See, first of all, I will not agree with your point that the fixation of an upper ceiling TER is a way to cartelize, because that is an upper ceiling. You can always compete.
It tends to be, is all I'm saying.
That is always competing. Now, if you see, for example, the brokerage. In the brokerage, you have an upper ceiling of 2.5%. But there are people who are offering zero also. Similarly, debt funds. If there is a ceiling of 2% or whatever, you have people offering much less.
In equity, you don't see that.
So, in equity also, I mean, the people will compete and the people will do that. So, right now, I think what we should say, we should not look at as simply removing the ceiling. Will not mean that, the people will not, you are saying that everyone is crowding around the...
Yeah, it's somehow the TER is not related to performance. It has become like that. It has become everyone congregating around SEBI's limit.
Yeah,
in equity, that's what's happening.
I think in many cases, people are looking at performance in a variety of ways. I think when
3 or 5
the investors are looking at returns, they are looking at... So, they are not necessarily looking at TER also. So,
yeah. But they don't look at TER. They look at performance only. But I'm only saying that funds are getting away with it.
Upper ceiling is not really the reason for which, you're saying they're crowding at that upper ceiling.
It tends to be, that's what everyone fixes as their TER, somewhere close to the SEBI's limit. Okay, while on the matter, sir, there was also that, that investment product between mutual funds and PMS. we were expecting new rules to come on that special investment unit?
Yes, the new regulation framework has already been out. Now we have received 2 applications also from 2 AMCs. So I think in a matter of 10 days, we would have cleared them.
Just a final question on the market volatility. SEBI had asked previously for stress testing of mutual funds. If there was something very adverse in the global market because of tariff wars or other geopolitical concerns, would you worry about mid-cap and small-cap mutual funds? They have volume only because investors rushed in. But if there is a rush of redemptions, then there will be stress. They may not be able to pay immediately. So any stress testing moves from SEBI?
I think it's a very important question, and stress testing actually not only should be done, but actually SEBI has also got it done for small cap and mid cap in 24. It was done, and the results have also been released. So on directions of SEBI, MFI, directions to MFI, all the stress testing results have been in the public domain. We also intend to do stress testing for others also.
Which would be?
I mean for others. These are the small cap and mid cap, but for others also. So therefore I think it's an important thing to know what happens, and I mean.
Are you somewhat confident that if there is huge volatility, the market will be able to still function normally?
Absolutely. I think we have buffers and we have mechanisms. To give you an example, the kind of settlement guarantee fund which is there, that has been more than doubled in the last 5 years, and it has worked as also our system works as more like a counter-cyclical, and the margins are 11% plus, which is much higher than the SGX margin of 5%. We have also, as I said, the funds moved up to clearing corporation. They are lien to corporations, not at the broker level. We are securities directly getting credit, not through brokers, but directly given that. So this is another element. I think at different levels we have created. And then we have also that, CMDF fund, which is the, for any redemptions, etc. On unusual redemptions, we have that support backstopped fund as well.
So we are somewhat prepared, but of course one hopes that we don't have to use them. Finally, as you end, say, one quarter, what is your goal? What do you want achieved in a quarter? What do you want achieved in your first year?
Well, I think it's not my achievement really. I think the SEBI is a very robust institution. It carries on, and we keep overseeing the markets, we develop the markets, we do investor protection. That's our mandate. And we'll continue to improve ourselves, challenge ourselves to do better.
Okay.
With the help of every stakeholder. As I said, 4 T's. The teamwork, which is more external and internal teamwork, media included.
Okay. We'll try and pose tough questions. That may be our role. Thank you very much, Mr. Pandey, for sparing time for CNBC-TV18.
Thank you.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. FY26 has brought with it several tax changes. Yes, this is the new financial year, and the biggest of these tax changes is the huge sweetener in the new income tax regime that has been offered this year. Now, this, along with major capital gains tax changes that were announced in the July budget in July 2024, mean that you need to look at your financial planning with perhaps a new sharp tax lens. To help us do this, we have with us today Mayur Shah of EY India and Mohit Gang of Moneyfront. Gentlemen, thank you so much for joining in. Great to have both of you on. So I thought it's a good idea to, get the house rules out on the table so we know. Of course, tax, all experts will tell us. I'm sure Mohit, you'll agree, right? Tax is not the only reason we decide where to invest and how to invest, but it's a very important part. We can't ignore it either. So welcome to the show. Mayur, first thoughts.
Thank you. Thank you so much for this. And yes, you are right. Absolutely right. When we are really looking at it, we should look at net return which a person gets, return on investment. And especially when you are looking at, say, something which is getting taxed at regular rate, something which is getting at a concessional rate tax, then, the difference, the value, our money in the pocket is much larger than what we expect. So therefore, I think tax will also play an important role.
Absolutely. Mohit, smart tax planning. And this year, the finance minister has told us that if you're in the new tax regime, you can save up to 1 lakh rupees. So what do you think? Is this 1 lakh going in investments? Where should it go? Or should it go in spending?
Thank you very much, Surbhi. Look, I think I'm a firm believer that all that you earn should not be put to savings. Some things should be actually spent in a wise manner, spent for your personal necessities, spent for your experiences in life. So, of course, by all means, save much more than what you were saving previously. But yes, I think some portion has to be spent also, and that has a different kicker and a different multiplier for economy.
Oh, absolutely. All right, so get your paper and pens out, or your tablets or your digital devices out, and take notes, because this is Tax Planning 101. Mayur, my first question to you is going to be, we need to understand and illustrate what this means. Because one thing we know is now that if you have income of up to 12 lakh rupees, you don't have to pay income tax thanks to the rebate in the new regime, right? And also what the finance minister said, that you end up saving 1 lakh rupees. So just do the math for us, help us understand, how do we arrive at this? What is happening in the new regime?
Yeah, so what happens is that when income is up to 12 lakhs, probably you will calculate tax, but then you will claim rebate as a benefit. And therefore, effectively, you will land up paying no tax on that income. Okay. And that's where, you will be saving up to 1.5 lakh just because, your income is above approximately 12 lakhs.
So the rebate is 60,000 in the new regime now. And that's why you don't have any tax liability.
So this is rebate from income itself. So if your income is up to 12 lakhs, 7 lakhs is what you get additional rebate. And as a result, your income tax really goes to zero.
Okay. So that's how it is. And what about this 1 lakh rupee saving? I mean, is it for all taxpayers? Anybody with income above 12 lakhs? How do we arrive at this number?
Correct. So what happens is that what has happened, that if you look at slabs, which was earlier, which was moving up to every 3 lakhs. And now it has changed to 4 lakhs. Earlier it was ending, so maximum marginal rate came at 15 lakhs. But now it is coming at 24 lakhs. Right. As a result, the slab benefit has increased a lot and new rates has been added. Sure. As a result, you will be able to save around 1,43,000. And this applies across the board. It does not mean that it is only for the low income or high income or middle income. It is for everyone.
Everybody ends up saving a minimum of 1 lakh rupees.
Absolutely, because of the slab change.
Because of the slab changes. Got that point. So we'll come down to the math in just a minute. But Mohit, I remember when the budget was announced, I remember doing conversations and shows on this. So the rough rule of thumb that was coming out was that if your total deductions are very high, I think if they're higher than, say, 8 lakhs or 9 lakhs, maybe you're still better in the old regime. But, what did the numbers throw up for you?
Yeah, I think, Surbhi, there are certain calculators which are floating across all the social media handles. And I'll just give you a rough texture and flavor of this. So my sense is if you earn up to 12 lakhs, then you are better off always better off in the new regime. if you earn anywhere upwards of 13 odd lakhs, and then the number changes every lakh onwards. If you are earning upwards of 13 odd lakhs, and if you are claiming deductions of around 4.44 lakhs or anything higher than 4.4 lakhs, then you might perhaps still want to be in the old regime. But if you don't have deductions totaling up to 4.5 lakhs, then you might want to take a switch to the new regime, and new regime will actually work better for you. The moment you go upwards on the salary band, which is from 13, you move to 14, 15, so on and so forth. This band of deductions, which is for 4.44 or something, will keep moving up a little. It will go up to, let's say, around 5 lakhs, 25 or 1,000 if you're earning 20 odd lakhs.
Okay. I think we.
So yes, a short answer to your question is be in the new regime if you can't claim deductions more than 4.5 lakhs.
Got that point, and which is why, viewers, please note that whatever deductions you are claiming, that becomes the single biggest reason that will determine whether the old regime is better for you or the new regime is better for you. Mayur, now let's take this with an example. I want to take an example. We've got some numbers on the screen as well. Let's assume someone has 30 lakhs of income.
Correct.
Now let's take different scenarios with low deduction, medium deduction, very high deductions. How does the comparison change between old and new?
Sure. So as rightly pointed out by Mohit, what happens? It's a combination of level of income and level of deductions which you intend to claim. Basis which whether new regime is better or old regime. Let's take an example, as you rightly said, let's take an example of 30 lakhs. And if my deduction is 2.5 lakh, the total tax liability which needs to be paid under old regime is around 6,63,000. But if we look at new regime, then it will come to 475, whereby you are saving around 1,87,000.
So if your deductions are as low, we have the numbers on the screen. If your deductions, you can see the table there. If your deductions are as low as just 2.5 lakhs on an income of 30 lakhs, then you are definitely better off in the new tax regime. Now let's move on. Let's talk about someone who has higher deductions than 2.5 lakhs.
Let's say that 30 lakhs is the income and the deduction is around 8.5 lakh. Then I think it will be neutral whether you follow old regime or new regime.
Okay.
Then the dependence are there any other additional advantage which you are able to claim if you are going in the old regime? The advantage is that, if you have any carry forward losses, then you will be able to carry forward if you are following old regime. Then your dependency will be based on what other additional thing which otherwise I would have lost if I would have gone with the new regime. So those aspects needs to be considered to arrive at whether I should go with the old regime or new regime.
Okay, so this is really important. Now what you see on the screen is extremely clear that if, again, 30 lakh rupees is the income level we have assumed, if the deductions are as much as 8.5 lakh rupees, then both the regimes are the same, old and new. But old may still be better because you can claim certain set off of losses, etc., certain other deductions. Got that point. So is there any scenario in which the old regime is still beneficial versus the new regime?
Correct. See, old regime would be beneficial where deduction is below 8.5 or, when it is 8.5. So if 8.5 is a break-even deduction, in that situation, if you have, say, house property losses which you need to carry it forward, then all this will be beneficial to follow old regime. But otherwise, new regime is much better.
Now let's talk about someone who has even higher deductions, 10 lakhs as deductions.
Correct. Then the old regime becomes very easy.
Okay.
So I think I would like to correct what I have said in past, that when the deduction is lower, new regime is better, but when deduction is higher, the old regime is much better in those situations.
Got that. So that's the thumb rule. Higher your deductions, maybe there are chances that the old regime is still suitable for you. But if you have very low deductions and exemptions that you're claiming, then just move to the new regime, which then brings me to the point we need to quickly recap what are these deductions. How does someone claim as much as 10 lakhs or 8 lakhs as deductions if you count all the chapters?
Correct. So, the deductions are multiple. I mean, for salaried employee, the biggest one is house rent allowance. So when a person is paying rent, HRA seems to be exempted. That is the biggest one. Then, we look at, leave travel assistance which is being provided, which can be claimed as an exempt. Along with that, especially technology persons, when they travel, they don't get a reimbursement of the expenditure incurred. But what they get is per diem allowance. And if they follow new regime, then exemption of per diem allowance is not applicable.
Okay.
And therefore, they tend to lose a lot of value there.
Okay.
So you need to consider even that as well.
Okay.
Apart from them, income from, losses from house property.
Like you explained, yeah.
Yeah. So that's another one which you are likely to lose. So if I'm not a salaried employee and if I'm having a business, then I may tend to lose depreciations or carry forward of depreciations.
Okay.
And so likewise, I don't get deductions under Chapter 6A as well.
Sure.
Which is, insurance premium or PF contribution or PPF contribution.
The lovely 80C, which is 1.5 lakhs of, deductions that we get there.
Absolutely.
Okay.
Apart from that, what you also don't get is that premium paid for medical insurance.
Yeah, ATD, Section 80D.
ATD.
So you don't get that in the new regime.
And any donations, charitable, or any philanthropic activity which you have done, you don't get deductions for that either.
Sure. So, well, that's the rule of thumb. Keep this in mind. Look at all the deductions you can claim very, very carefully. Total all of them up. And HRA would be a big component of that if you're living on rent. And then do the maths and decide whether the old may still be better in some cases. All right, we have to take a very quick break on that note. We'll come back on the other side. Now that we've understood the income tax part of it, the question is, what about investments this year? How have tax rules changed? Where should we invest? What is tax effective and what is not? Back with that in just a bit.
Let's talk money. Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week we are talking taxes. It is the new financial year. April has just gotten over, and we need to understand if we've chosen the right income tax regime and if we're planning our investments in a tax-efficient manner. Mohit, I'm going to come to you on this one. Now, pure equity is fine. I mean, we were all living with it, dealing with it, that long-term capital gains is not 10%, it's 12.5%. My question to you really is that, and this is a year where equity markets have been very volatile, right? So people will look beyond equities to diversify their portfolios. So when we get to the hybrid fund category or things like maybe REITs or InvITs, things to diversify, which of these options looks a bit tax efficient to you?
Absolutely. I think, Surabhi, this budget actually has ushered a lot of good news for investors in multiple categories of mutual funds. So if I were to just point out a few categories which have really benefited, I think the number one category and which is shining the brightest is gold, silver, the commodities category. Previously, the taxation out there was not as favorable. It was long term was defined as 3 years. Now the long term has been redefined as 2 years, and the long term capital gains is 12.5%. Obviously, there is no indexation any further, but 12.5% after 2 years is a pretty good and a pretty neat deal for anyone who is willing to invest in commodities. So that's, to my mind, the biggest advantage. The second biggest category is the international funds category. There's a lot of interest, a lot of money which has been of late going into US funds, other, let's say, global funds, global themes. So those were all taxed like your debt funds previously. But now again, on those international fund of funds and international funds, the taxation is very clear. Long term has been defined as 2 years and the taxation is 12.5% out there. And similarly, fund of funds category is also something which is benefited, and the taxation is same as gold and international funds on that.
So let me ask you this, that's the tax part of it, right? That this is where these categories have become tax efficient. But now also let's, add the investment advice to it. International funds, and not too many are open right now for investing. Gold, after a huge 40% run, is it still advisable? Would you look at these categories for investments this year?
So that's a tricky one, honestly. I think, look, as a diversification tool, both international and gold, I think always merits an allocation in any kind of portfolio. Whether that allocation is 10% to international and 10% to gold, or 10% to international and 20% to gold, silver put together, I think that will completely depend on the nature of the investor, his appetite, risk appetite, and few other parameters. But my sense is, as a portfolio asset allocation, these are core parts and cannot be missed. One needs to have it. However, at this juncture, would I advise anyone to invest more in gold and go over allocate out there? Honestly, not. I think it's not the time to over allocate into commodities right now. Perhaps if you're sitting on some allocation, yes, make the most of it. But it's not the time to add further at these levels. And if you are any which ways over allocated as per your asset allocation, then you might just look at taking something off the table as well.
Okay, all right. So don't get carried away in the gold rush. That's the advice coming in from Mohit. Though there are people out there on the street, targets are ranging up to $4,000 in gold. But that's a debate for another time. Mohit, now back to this whole question of fixed income or hybrid funds or arbitrage funds. I'm going back to the point of asset class diversification. We can't have only equities in our portfolio. We've discussed gold, we've discussed foreign funds or global funds. How to take tax-efficient fixed income sort of exposure in the portfolio?
So honestly, I think finding a tax-efficient fixed income mutual fund option is like finding a needle in a haystack. But you have few needles out there if you are like really keen to find one. So I think there's this new category which is ushered in, which is called income plus arbitrage category. I think the category very smartly plays around 35% composition into arbitrage, and the remaining portion is treated is into fixed income investments, which could be short maturity fixed income papers or long maturity fixed income papers. All fund houses have their own modus operandi to deal with the fixed income paper. But that category effectively gives you a 2-year long-term capital gain taxation, which is 12.5%, and absolves you from the fixed income taxation, which is at your slab rate. So that's one category. The second category, which is not exactly fixed income by definition, but the return profile is fixed income and the safety profile is also closer to fixed income, is arbitrage category, which has been extremely popular of late, and that gives you a proper equity taxation, which is 1-year long-term capital gains at 12.5%. And the third category is equity savings category, which is a composition of arbitrage plus naked equity in the portfolio. Again, will give you a pure equity taxation in the portfolio. So yes, in pecking order, pure fixed income, then you go with income plus arbitrage category, and otherwise you have arbitrage and the equity savings categories.
Okay, great. So those are some examples of maybe some fixed income funds which are not entirely, taxing, so to speak, on our returns and our investments. But otherwise, Mayur, do you want to add to that on fixed income or quasi-fixed income plays? Some people say REITs are like quasi-fixed income, steady income generating plays. So maybe not pure debt. I'm not saying FD or strict fixed income fund, but anything else, stable, safe, and where tax will not bite too much.
Yeah, so if you look at AIF investment in category 1, category 2 are completely tax free in that sense. So there is no tax incident on the earner, the investors. So if you are investing which has such kind of benefit, then definitely you can really look at, because that is purely tax efficient. The reason for that is tax is paid by the fund itself. So there is no tax which has to be paid by the investor then. If you look at category 3, it's a flow through. There also you will have advantage of whatever is being earned by the fund.
Yeah.
So there by default you get advantage, because taxation is only at a one stage, then multiple stage.
But you have to invest in big ticket sizes.
That's right.
Minimum threshold I think is 10 lakhs or higher, much higher for many of these funds, right?
That's right.
But that's where the tax advantages are. So for the HNI, ultra HNI or the affluent category, they could be considered.
Absolutely.
So we've covered a lot of asset classes. This has been a breathtaking rush. We've done equities, fixed income, we've done gold, real estate very, very carefully. Because even in real estate, Mayur, last couple of years, we've seen changes. I think even that reinvestment, if you're selling your house, I think you can now split it across 2 properties, house properties, if I'm remembering correctly. So just again, revisit for us, from a tax perspective, if I want to buy a house this year, is there anything new? I don't think there is. And if I want to sell a house or sell a house property, then how can I plan it effectively?
So when you are selling a house, if it's a long term, there are 2 things. One, with indexation, you want to consider. In that situation, you will the tax will have to be paid at the rate of 20%. But because of indexation, if you are suffering any losses, that will not be allowed to be carried forward.
Okay.
And that will be foregone then. But if you are getting tax at 12.5%, then there is no challenge.
Okay.
Now, how do you really save tax when you have sold one property? If the entire gain is reinvested.
And before we talk about that, I just want to, because there was a lot of debate when this was announced, whether you pick 12.5% without indexation or 20% with indexation. Again, what is the final thumb rule that the calculations showed up? When should you consider 20% with indexation, and when is 12.5% better? Is there some math to it?
So it's still an iteration process as of today also, but there is some guidelines around it. And let me explain those guidelines. What happens is that if your gain is much bigger than the expected or inflation rates or in index number, in that situation, I think going for 12.5 without indexation is much better.
Okay.
But whereas if your value increase is not much, then going with the old method is much better, where you will be not paying any taxes thereon, though the losses will not be allowed, but you will not be able you don't have to pay any tax thereon.
Okay.
It is like when we are looking at new regime, old regime, the same 2 rules will have to be applied here as well now.
Okay, got it. So that's the rough rule of thumb. But you were saying that if someone wants to save on these capital gains, they can reinvest the gains as well, right?
Correct.
What are the options there?
So there are 2 options. One is that either you invest gain in another property, and here I am talking about gain and not sales proceeds. But you can invest up to 10 CR and you will get the benefit in that.
Okay.
So if you are investing more than 10 CR, then you will not get proportionally, those benefits will get diluted.
Sure.
Now when we are really looking at another thing is that you invest in infrastructure bonds. But the investment or gain in their sales proceed invested can be up to 50 lakhs.
Right.
And it does not offer larger advantage. Another disadvantage of that investment will get locked in for 5 years, whereas in property investment will get locked in for 3 years.
Okay.
So that is that is how you have to analyze. But more often than not, infrastructure bond does not give you good yield, and I'm sure Mohit will be able to answer that.
Okay, Mohit, so last word with you then. Now we've understood the full tax math for this year, all the rates for this year. So any advice in terms of which asset classes look better, where to book some profit, where to keep, where to increase exposure, in general, to wrap up?
Look, Surbhi, as long as real estate is considered, I'm a proponent of REITs and InvITs, and I think the taxation out there is also pretty favorable, which is 12.5% with a 24-month kind of an holding. So my sense is that's a 12-month kind of an holding at long term. So my sense is that's a great way to invest in real estate. But overall, I would still, at the pecking order, in spite of the taxes going up from 10 to 12.5, I would still rate equity by far the most coveted asset class, and by far the one which should demand the highest proportionate allocation in any portfolio, followed of course by commodities and fixed income. Depends on the risk profile and the nature, and fixed income can be made tax efficient in a portfolio depending on the outlook of a portfolio, right? So there are multiple ways to do all this. So.
Fabulous, fabulous, gentlemen. I think this has been a very, very helpful refresher, a great crash course, stepping stone to how we can plan our investments and our sort of income streams better from a tax lens this year, FY26. Thank you so much for joining in. Great talking to both of you. Well, viewers, we hope you found this session useful. I certainly did. Keep sending us your feedback, queries, comments. See you next week with another theme.
Let's talk money.
Hello, welcome to News Center. With me, Parikshit Luthra. Now, there have been at least 7 to 8 days since the Pahalgam attack. The hunt for the terrorists is on. There is a lot of anger with Pakistan, but India has been behaving in a very mature fashion. It has been molding international opinion against Pakistan, taking measures economically to isolate the country, and also evaluating different military responses. The Prime Minister has been holding a series of high-level meetings over the last few days. Just yesterday, he held a meeting with NSA Ajit Doval, with Rajnath Singh, the Defence Minister, the 3 service chiefs, and the message was that we will inflict a crushing blow on terrorism. Secondly, the armed forces chiefs have the operational independence to decide the timing and the response to the Pahalgam attack. Today, there was a very important meeting of the Union Cabinet, of the CCPA and the Cabinet Committee on Security as well, where India's responses were once again reviewed. Let's also not forget that yesterday, after the meeting of the Prime Minister with the service chiefs, Home Minister Amit Shah visited 7 Lok Kalyan Marg, which is the Prime Minister's official residence in New Delhi, and also RSS Chief Mohan Bhagwat too visited the Prime Minister and had a meeting with him. Now, the meeting with the service chiefs went on for at least a good 35 to 40 minutes. On the border, the Pakistani government, the army, have been violating the ceasefire. They have violated the ceasefire at multiple locations across the line of control and the international border over the last 6 days. India has retaliated very effectively as well. Just at the international border, we're told last evening, around 8:15 and 9:15, between this period, at least 1,000 rounds are fired by forces on both sides. So India remains at a very high alert. Also in Jammu and Kashmir, we're looking at intense counter-terror operations in Pahalgam, in Kupwara and other areas. Joining us right now to break down the government strategy, the defense strategy right now, we have with us Kanwal Sibal, currently a Chancellor at the Jawaharlal Nehru University. He has also been India's Foreign Secretary and former Ambassador to the US. We've got former diplomat Funchok Stobdan. Also, Major General Dhruv Katoch of the India Foundation is also with us. Gentlemen, thank you very much for joining us. Major General Katoch, how do you see India's response coming in? Because the Pakistani army has been saying India does not have a shred of evidence. They've been violating the ceasefire quite regularly. What do you think the Pakistani army, the government, is trying to do at this stage? And how would you describe India's response and strategy to a viewer?
Thank you, Parikshit. I think the Indian response has been very measured. Firstly, as soon as the dastardly attack took place, it didn't take very long for us to find out where the electronic signatures were coming from. And that was traced to 2 locations within Pakistan. So the Pakistani hand was confirmed. And after that, the ball was set rolling in a series of actions which were announced. And in the yesterday's meeting and in today's meeting, I think both these meetings are very important because they are setting out the future course as to what is going to be our response. Now, the Prime Minister had made it very clear that there will be a response. So the political will has been shown. So the government is firmly behind, the nation is firmly behind the government, and the nation is united in this particular effort. So here in India, we have consolidated all our energies, political, diplomatic, military, onto what we hope to achieve as a desired end state. On the Pakistani side, I'm afraid there has been a bit of a confusion. Their ministers have been talking in different voices, and mostly they have been threatening, even going as far as to talk of using a nuclear option, which in my personal opinion, I think is quite absurd. But that notwithstanding, the very fact that the border has been ratcheted up by the Pakistanis and they are resorting to firing, in my view, they're trying to get the world opinion, they want to get the world leaders to put pressure on both the countries to maintain a status quo. Now, that is not going to happen. Regardless of what world leaders say, there will be a response from the Indian side. That response will be severe. When it takes place and how it takes place, we will see in the course of time. Those things cannot be discussed nor disclosed. But what can be stated with certainty is the Prime Minister has a resolve, the government has got a resolve, the people of India are resolved, and there will be action to avenge what has happened on the 22nd of April. Parikshit.
Right, right. Ambassador Sybil, if I could get you in on the implications of any retaliation, what do you think the calculations would be when we're looking at our military options? One also has to keep in mind that what happens with Pakistan cannot be looked at only as a Pakistani problem. You have the involvement of China that we need to look at as well. What do you think are the diplomatic and geopolitical implications of any military move by India?
Well, it's a very difficult decision that government of India has to take because it will not be cost-free. If we go in for a military option, Pakistan is bound to react. Their entire, self-image has always been that they will hit back very strongly. They have the means to do so. They are very gung-ho, very aggressive. They have to therefore prove that the huge military machine that they have built over the years, which has monopolized a large part of the budget of the state, means something. If the Pakistan military is the ultimate defender of the idea of Pakistan and Pakistan itself, the Pakistani army chief in his recent speech has more or less again reiterated this in a very, very aggressive and Islamic way, then they have to react, and they have the means to react. Therefore, we have to see how we calibrate it, how we avoid escalation, what targets we use. We put the onus on Pakistan for escalation. On our side, our, I think, objective would be to attack terror-related targets rather than the military machine of Pakistan. So, insofar as China is concerned, China is the biggest arms supplier to Pakistan. They have huge stakes in Pakistan. It's nothing new. They have used Pakistan strategically to counter India. They'll continue to do so, even as they try and maintain some kind of an equilibrium with India. They'll give access to arms from China. Turkey is also getting into the fray, as we see. But the possibility of China militarily intervening in the conflict, to my mind, is not there. I don't think that'll happen because that, after all, if we are actually taking military action against Pakistan for the terrorist attack that they have staged, and not now, this is a long-standing instrument of policy that they pursued, China is not being attacked. We have our differences with China, which we are trying to resolve. There's some forward movement that has taken place. Now, if China were to intervene, actually the entire facade of a responsible power, and currently under pressure from the America, they want to project this to the rest of the world, that they're not like the Americans, they're not aggressive, they believe in peace, and they like to promote peace, they're a reliable power, that kind of propaganda, that kind of line that they give. So that will be totally exposed. And for what? It will be seen as a hugely opportunistic move and create far more distrust for China in the years to come if they were to do so, because they'll be responsible for enlarging the conflict by bringing themselves in. So I don't think there's a threat there, but they support China. They support Pakistan fully diplomatically in the United Nations, make public statements, try to put the onus on India, project India as not being responsible, as not being willing to have a dialogue and resolve these things peacefully, the usual kind of line countries take. That'll be there. But at the end of it, I'll conclude by saying that we will react. All the meetings that are taking place, all the statements that are being made are a prelude to some action. But what action will take place, what will be the scale of that, whether it will be, to begin with, a one-off thing, and then leave it to Pakistan to escalate, and then put the onus of Pakistan for enlarging the conflict. Let's see what happens.
All right. All right, Ambassador Sybil. Let me also get in Ambassador Stobden right now. Ambassador Stobden, what do you see the role China would play in case there is any kind of retaliation? And when you do a retaliation, there is always a risk of escalation. So keeping that in mind, and looking at the geopolitical and trade tensions globally right now, and considering that India a weaker India may be good for a stronger China. What role do you think China could play over the next few weeks and months in trying to destabilize the security environment, the investment environment in India?
I think that's a very long question, but I think according to the Wang Yi statement, there's nothing such noises have been made by the Chinese. They only said that there should be inquiry, there should be impartial investigation into what has happened. There's some diplomatic support, but beyond that, they even haven't said anything even on the water. So the fact of the matter is China is also involved in Indus. It's a upper riparian country, from Kailash. Therefore, it's a huge point that Chinese are avoiding. I don't think they have any thinking also in this regard. I don't see, and I think from the previous experience, I don't see Chinese are doing such stupid things like intervening. Okay, military sales, arms sales, that is all right. The only worried part now I am is that that J-35, jets that would be supplied, some 40 of them to the Pakistanis. That will upset the balance. Although I'm sure that we have adequate preparation of the aircraft, the air superiority has to be maintained. In the case of Indo-Pakistan, I think conflict, it's not like India-China conflict. Indo-Pakistan conflict, we need to think about the air power. Of course, the blockage of the sea is all right, that is possible. But the air power has to be very, very, very sure about it, because we are very close to whatever we are doing. I mean, they could hit any of the river side or dam side or any strategic side. We are very close to the Pakistani border. Unless those things are taken care of, I don't see in the first place all-out war this time. There would be, should put something here and there, but if possible, maybe in my area, in Turtuk sector, we could take something like 80 kilometers depth in the POK. That's the only advantage I see. But in the Cham sector, in the Rajasthan sector, I don't see we can do much. Hitting targets there, that's possible. But all-out war, I don't think. But my own sense is that after a week from now, they will force General Muril to step down and diffuse the tension. That's how, that is how things are going to work out. It's not going to be very, very, we have also seen that we may talk about all these things, but ultimately you land up, even with China, you have to think seriously about war.
Absolutely. You know, we've just got a statement also that the Director General of Military Operations of India and Pakistan talked over hotline yesterday to discuss the unprovoked ceasefire violations by Pakistan. India warned Pakistan against the unprovoked violations by Pakistani army along the line of control and the international border. Major General Katoch, if I were to get you in at this stage, how would you describe this strategy by Pakistan? Now, what we are given to understand that there have been 15 ceasefire violations by Pakistan in 2025. 6 or 7 of those have happened in the last 1 week itself. And it's happening in a couple of areas where Pakistan perceives that it has a dominance against India. Why is this happening? Of course, the Indian army is also retaliating. Also on cyber attacks. While there are ceasefire violations taking place, there have been cyber attacks on certain army-related websites by Pakistani state actors. Why do you think these two facts are taking place on the ground?
Well, firstly, as far as the firing which is taking place on the international border in some places and generally on the line of control, I think that is in my view, it's a war avoidance strategy by the Pakistanis. They want they want the borders to heat up and escalate to a level by which the world will start getting concerned and then put pressure on both the countries to desist. They will in that process they would like to avoid what India aims to do. That we've already made a statement that there will be consequences to Pakistan on what they have on the 22nd April attack. Now, I think it is to avoid that doing this the minor escalation along the border to avoid something bigger cropping up later. But that's not really going to happen because India is not going to be concerned about international opinion or any country putting pressure. We have made our choice and we will go ahead with what we are doing. On cyber, I think that is ongoing. Cyber is not something new which is happening now. The cyber attacks have been ongoing by various people. It could be the Chinese, could be the Pakistanis and others. And this time being, when the hostilities are ratcheting up, I think the cyber attacks will also ratchet up. I'm quite certain that we'll be from the Indian side, similar attacks must be taking place on the Pakistani side too. So that is simply a part of non-kinetic warfare, which will continue all the year round.
I'm running out of time, Major Katoch. I'll put one final question to Ambassador Sibbal. Ambassador Sibbal, as we evaluate our different options right now, how do you think our cooperation with the US, with Israel, help us right now in tackling what's happening in Pakistan and also on a long-term basis?
Look, United States has not been able to tackle Pakistan all these years, despite their war on terror. In fact, if you look at Pakistan's record, they have hurt United States interests very deeply over the years. There's been a Pakistan hand even in the World Trade Center bombing. United States certainly, unlike in the past, can give us diplomatic cover. Even when we had the Balakot operation, President Trump in his first term had said that India has a right to self-defense. And now, and it's actually something which we should be glad that the United States at the highest level has been very supportive of India on this terrorist attack that took place at the level of Trump himself, Vice President Vance, the Secretary of State, the Deputy Secretary of State, the FBI Director, the Director of National Intelligence, the Attorney General. All these people have issued very supportive statements, which means, and then President Trump himself has said, let the two countries sort this out themselves, which means he has given us some kind of a green light to go ahead and decide what should be the level of our military action or other actions against Pakistan. They have not criticized the fact that we have suspended the Indus Waters Treaty. In fact, none of the countries who are our partners, Western countries, have said anything to this effect. So therefore, to that extent, if we decide to take military action, I don't think we will have problems with the United States. Of course, China will immediately go to the UN Security Council and insist on a discussion there to ward off the conflict and that sort of a thing. And that's where the support from the United States, France, Russia, and others would become very critical and important. And I think we will get it. But at the end of the day, no country is going to publicly support the idea of a conflict between India and Pakistan. That's part of the international system. At best, they can keep quiet and say the usual, that there should be restraint on all sides and war is not a solution, and there should be de-escalation, reduction of tension, and dialogue. That kind of thing would be said, but that need not worry us too much if we decide to take some action on the ground. But it has to be a very calibrated action, in my mind.
Okay, we've run out of time. Thank you very much, Major General Katoch, Ambassador Sibbal, and Ambassador Stobden for joining us. We'll take a break, but don't go anywhere. When we return, we'll talk about the Indo-US trade negotiations. And Donald Trump is saying that he's very hopeful of having a trade deal with India very soon. Let's talk about that with Jayant Dasgupta, former Indian ambassador to WTO. We'll be right back.
Capital market plays, etc., looks quite decent in this downfall. I'm particularly more bullish on the depositories, RTAs, asset management companies, whatever asset management companies have reported numbers. They have all gone up from their lows. And I think from a medium-term perspective, they all look quite good. Even the broking platforms, selectively, wealth management platforms, I think they are all investable from a medium-term point of view. You're getting it at lower prices, but just keep in mind the valuations, exorbitant valuations, 50, 60p won't hold. But anything like 25, 30, 35p, these platform companies are likely to create wealth in the medium. I think for the next 1-2 months, till the point in time you have clarity on the tariff, and basically that 90-day pause, out of which 15-20 days has already gone. So next 1-2 months, I think markets are going to be range bound between 22,000 and 25,000. Can't really be seeing an outbreak beyond 25,000 given the macros that we are in, given that earnings season is somewhat okay, not very great. So I would believe that we'll consolidate. And
Welcome back. US President Donald Trump has expressed optimism about a possible trade deal with India. He said that he expects a trade deal with India to be signed very soon. Even the US Treasury Secretary Scott Bessent has gone on to say that he expects India to be one of the first countries with whom the US will sign a trade deal. The US leader, Donald Trump, told reporters that the Indian administration wants to make a trade deal with US. Trump's comments came shortly after US Commerce Secretary Howard Lutnick revealed that Trump administration has reached its first trade deal. However, he did not reveal the name of the country. These remarks follow US Vice President J.D. Vance's meeting with Prime Minister Modi in New Delhi. Both leaders had also noted significant progress has been made in negotiating a bilateral trade pact. Joining me right now is Jayant Dasgupta, former Indian ambassador to the WTO. Mr. Dasgupta, do you foresee a trade deal being agreed upon so soon? Howard Lutnick has said that I know that one deal is done, but the Prime Minister needs to get approval. They need to get approval from their parliament. Will the India-US trade deal happen so soon? The negotiations actually began in right earnest only in March.
There are two important aspects which you have mentioned. One is that unlike many other democratic countries, we don't have to go to the parliament to get an approval. We get a cabinet clearance and then sign the deal. And then in the next session of parliament, it's laid on the table of the parliament for information. And of course, there could be a discussion, but it would be an ex post facto discussion. So to that extent, if the Prime Minister and his cabinet decide to sign a deal, it can be done immediately. So that is one thing. The second point is that the US, if we look at the range of products which they manufacture, it is fairly limited. Of course, they do a lot of high-tech manufacturing, but including semiconductors, which of course they are trying to fortify now and strengthen and deep. But barring that, they have more or less vacated the space in the low technology, labor intensive sectors like textiles, like ceramics, like leather, etc. So if we look at the profile of US exports worldwide, I think India can offer, and according to the newspaper reports, there are offers covering about 90% of the tariff lines, which number about 12,000, slightly over 12,000 tariff lines at the 8-digit level, which we use. So if we do that, and then for the balance 10%, of course, there will be some red areas where we will not give any offers at all, and we will continue to maintain our old position. But in some others, we may decide to phase out our tariffs and bring them down over a period of, let's say, 5 years or 10 years, as we have done in other FTAs like the ASEAN FTA, for instance, and the Singapore FTA. So it is possible, very much possible, that India will have a trade deal well within the 90-day period, which is running out on the 8th of July.
Right. Ambassador Dasgupta, do you feel that a deal in goods trade with 90% of the industrial goods Is it possible for India to reduce it down to zero altogether? And what we also hear is that there could be an agreement on bringing tariffs down to 10%. Currently, the US baseline reciprocal tariff, which was imposed by the Trump administration, is at 10%. If India brings down its average applied tariff from around 14% currently to about 10%, do you think we can strike a deal in goods at this tariff rate?
I think so. But it would be a one-off thing with the US only. And the newspaper reports are also saying that India wants to have a forward MFN treatment provided by the US and by India mutually, which means that should India sign any future FTA and brings down its tariffs in certain areas to lower levels than what has been offered to the US will automatically get the same benefits. In investment treaties, it is known as the MFN treatment, but in goods trade, since MFN has a certain connotation, it is now being called forward MFN, which is that in future, if India were to do it with any other country, the best terms will be offered to the US, and the US will also do the same. But mind you, there is a provision, the current position of the US is that it will not enter into any FTAs where it has to give certain things to the other side as well. From the reports coming out of Washington and from what President Trump has been saying, he is not offered anything in return to any country. It is only a one-way traffic that he has been talking about, that other countries should reduce their tariffs to accommodate what they have enjoyed so far. With respect to the US tariffs, which have been very low. So they have gained, and now it is payback time for them, so they should pay back. And there should be a more level playing field for both sides.
Right. We hear that non-tariff barriers are still an issue as far as talks between the two nations go. Do you feel that if there is any kind of early trade deal, non-tariff barriers would not be a part of it, and that would only be in the full BTA that may be agreed upon by fall during Trump's visit?
Non-tariff barriers are difficult to get rid of completely. For instance, if I may mention, dairy products in the US, which are produced. Now, the milch cattle there are fed the entrails of certain animals. Similar is the case with poultry. And that may cause problems here because of various religious reasons as well. So we want a certification to be provided which can be verified. And that is where the US has been objecting. It is saying that it has got nothing to do with a health standard, but it is a non-tariff barrier which India is imposing. But we have our legitimate reasons to do that, and I'm sure we will continue to do that. So this is the kind of thing which it will not be possible to get rid of all that quickly. There are others where, of course, and I think there are 4 areas, apart from tariffs and non-tariff barriers, customs facilitation and rules of origin have also been mentioned. Now, rules of origin have to be certified by a certain body, or accredited body, that this is the value which has been added in the country from where it is getting dispatched. So the US will have to ensure that it may import semiconductors from Taiwan, but if it is exporting a medical device, a certain value addition is taking place in the US. So that is the kind of rules of origin, and it is cumbersome. It takes, a little bit of effort and a lot of money to procure certificates. So the US has been talking about its problems with respect to Indian rules of origin and Indian certification, etc. But we also face the same problems in other markets.
Right. Thank you so much, Mr. Dasgupta, for joining us on the program. So it'll be interesting to see how we come to a conclusion on an early trade deal, an early harvest deal with the US, but there are all indicators in that direction. That's all we have time for. Thank you for watching. Goodbye.
Right now, it is more about institutional buying, the banking space, the heavyweights, Reliance, you have, the technology space after the correction. So I think it's more to do with smart money buying in and around the indices, the heavyweight indices level, rather than, individual stocks at this given point in time. So it's more to do with index management. Currently, now that we have bounced back 10% from the lows, I would believe that you'll see broadly the heavyweights on the index largely play out on the positive side till about that 25,000, and then we'll be basically consolidating around that point.
Hello and welcome to our special broadcast on Akshaya Tritiya. Well, it is said that gold, silver or jewelry that you buy on Akshaya Tritiya brings you good sense and prosperity going forward. Is the reason even as the gold prices are so high, there is an expectation that we could be looking at a surprise number on the higher side. Lesser than the average though, because when you look at Akshaya Tritiya in past many years, the average gold bought during this time is to the tune of 18 to 20 tons. But now, because the prices are at ₹1,00,000 per 10 grams, the expectation is that this buying could drop to nearly 12 to 15 tons. Well, that chart tells you on what the gold prices have been on Akshaya Tritiya in various years behind. And as you can see that the gold has been making higher highs going forward. The expectation also is that by the time it's next Akshaya Tritiya, you could be looking at even higher numbers. So last year at same time, gold prices were trading at around 72,000. Now they're trading at around 96 to 97,000 rupees per 10 grams. That has been a 24,000 rupees per 10 grams of a surge that we've seen in case of gold. Not just gold, a lot of people also buy silver during this time, and silver actually is being bought more because gold is so expensive. So when you look at the silver prices, and as you can see, it has been ranging between that 60s to 70,000 rupees a kg. But this year, in the month of March, we've seen silver prices trade above ₹1,00,000 a kg as well. Some profit taking, and that perhaps could benefit during the Akshaya Tritiya. Well, there are various ways that you can buy gold, and the most favorite clearly has been buying it by the physical way. So when it comes to jewelry, bars and coins, that is how the gold is bought the most. But now, of course, you also are looking at gold ETFs, where the buying really has picked up. The gold ETF buying actually in the first quarter of this year has been the highest in 3 years. And then it also has been about gold mutual funds, and the millennials and the youngsters are also buying gold by the way of digital gold. This is the performance that tells you on how gold really has been. And this year, we've seen gold prices gain up by 27%. Last year was 28%. In 2023, we saw 15% of gains coming for the gold prices. Much of this support clearly comes in from the global central bank buying, which has been holding at a record above 1,000 tons every year. And there are no different expectations from 2025, where the markets believe that this is the number that you could see breaching this year as well. Well, the expectation is that going forward, you could be looking at higher gold prices. Well, at least that is what most of the global banks and brokerages are talking about. So whether you look at Bank of America, Deutsche Bank, Citi, Goldman Sachs, they're talking about prices of $3,500 to $3,800 an ounce in this year. And almost everybody is talking about $4,000 an ounce of a possibility in 2026 to between 2028. So with those kind of numbers, the expectation is that you could be looking at more confidence in Indian buyers. And because it's an auspicious day of Akshaya Tritiya, there could be more buyers going forward. Well, joining us to take all of this story ahead is Suvankar Sen. He's MD and CEO at Senco Gold and Diamonds. Also joining us is Saurabh Gadgil, Chairman and MD of PNG Jewelers. We will also have Prithviraj Kothari, MD of Riddhi Siddhi Bullions of RSBL. And we will, of course, be joined by Ajoy Chawla at Titan. But Suvankar, I want to come to you first. And we've seen very strong gains come in for the gold prices. Do you see that denting the buying this time around? Or is it the usual euphoria because people do believe in the custom of buying gold today?
What we are seeing is that there have been two kinds of customers. At one end, a lot of wedding buying, with weddings in the future, people are utilizing their old gold, they're exchanging their old gold and they're buying heavier wedding jewelry or for their personal consumption. That has been one very positive sign, especially even at these high price levels. And at the other end, we are seeing that consumers, there is an impact in terms of volumes. People are wanting to buy something for the auspicious season, but something of a token amount, something within their budgets. So 30,000, 50,000, 70,000 rupees, lighter weight jewelry. So there are these two kinds of customers that we are seeing in the market. But overall, with Akshaya Tritiya in mind and the last 1 month that we have seen, consumers are positive towards the commodity. They are very happy somewhere that the prices have gone up so much. The trust on the metal has gone up. However, I think they are very much confused with the price volatility and they are wanting the price to stabilize and it's impacting volumes for sure. So this is the situation that we are seeing in the market.
Saurabh, what is your sense? Are you also looking at smaller ticket size doing better than the larger bridal jewelry, or is it any different in Maharashtra?
I think Maharashtra, we are seeing good footfall right from the start. We opened early morning, 9 o'clock. And I think till the first half, when I took a tour at 2 p.m., we were almost on the lines of Gudi Padwa. So I would say that it's been a very good start, being a working day, also being summertime here. Footfalls have been good. Ticket values have shrunk a little bit, but people interested in gold, gold jewelry, gold coins remain strong. Silver has been outlier this Akshaya Tritiya. Silver coins have been on fire. And, with the whole optimism around silver prices heading northward, there's a lot of interest in also silver coins being bought today. But I think overall, we are happy with the way things have shaped out till now. And the second half, from 5 p.m. to night 11 p.m. is going to be a very important time because that's when the Mohra is also going to be there. Plus, people will come out in big numbers to shop. So all in all, we're looking at a very good Akshaya Tritiya. People's faith in gold, people faith that, this is a good price to enter the market and things look bullish henceforth is what is playing on people's mind. And like Suvankar mentioned, 50-60% shopping, wedding shopping is happening with exchanging old gold for new. But I think that's again a trend because prices have gone up, budgets are under constraint. But I think the market looks good. And I'm talking to people pan-India, I think it's the same story everywhere that things are looking good and there's a lot of optimism around Akshaya Tritiya.
Well, there is buying happening and people are buying more silver than gold is what we do understand. And as you said, the ticket size clearly seems to have shrunk right now. So, Suvankar, this one is to you. While we do understand that we're looking at lower ticket size, but are we also looking at lower caratage this time around? Because we do know people liked to buy 23 and 22 carats. Rarely in last 5 or 6 years, we've heard 18 or 14 carats being spoken about until now.
So, one thing that has happened this particular, I would say last 2-3 months is that the demand for diamond jewelry has gone up. And along with that, people are wanting to experiment 18 karat plain gold jewelry, especially for designs which are more modern, more Western, something for the daily wear. So, 14 karat and 18 karat for diamond jewelry. So if we look at in terms of volumes, if value-wise gold prices have gone up, you will see that the value-wise growth has been quite high because gold prices itself is up by 20-25%. Volume-wise, if we really look and go deep into it, we will see that the diamond jewelry growth in the last 1.5, 2 months have been much higher compared to the gold price growth in terms of volume. So I think, yes, this high price is influencing the customer that, yes, this is a time that they can buy diamond jewelry, lower caratage, 18 carat, 14 carat gold. So this is something which is in trend. And I think we as jewelers have to ensure that that demand of the consumer is fulfilled.
Saurabh, I also want to come to a point that Subankar mentioned earlier on, that the exchange jewelry really seems to be doing quite well. During Akshaya Tritiya as well, do you see that big number coming in, or is it more fresh buying given the auspiciousness of the day?
No, I think the trend is towards swapping new for old.
Okay.
In Akshaya Tritiya, when you see wedding shopping, a lot of shopping is already done by pre-booking. People have come and placed orders, so the gold already has been given at a time of placing orders. So today, if you look at one single day, you'll find a lot more fresh shopping happening. So today, I think the ratio would be 80-20. 80% would be fresh shopping, and 20% would be old gold, which on average for the last 2 months has been 60% old gold, 40% new gold. So I think today's thing is that people want to purchase something new and get it home. It's auspicious. It's considered to bring you luck. So be it gold, be it silver, even if it's a small quantity, people want to buy something fresh today and take it home.
Subankar, this one is to you, and the World Gold Council report that came in today, and that is what we are reacting to. So when you look at the first quarter of this year, the Indian gold demand saw a 15% decline. The Indian jewelry demand saw even higher 25% of a decline. Do you see that buying now coming in for this quarter? Because the last quarter clearly did not have any festivals, not auspicious days, no weddings as well. So that perhaps, and of course the prices were high and volatile. Do you see now some stability coming in for the markets, and we see buying picking up now?
I would say that, this World Gold Council report gives a very clear reflection that the increase in gold prices might, make us see that the value-wise growth looks very good numbers, but the volumes have taken a hit. And this 20-25% degrowth in terms of volumes, I think that in the last 1 month, gold prices have moved up higher than what it was in the month of, say, March. So this 20-25% degrowth in volume will continue to happen. So yes, during Akshaya Tritiya, we will end up having a growth of, say, 15%, 20%. But in terms of volumes, it will always be a challenge. Consumers are coming, as Saurav has said, that he's focusing on certain value propositions. But in general, if you look at the industry, people have been giving offers. People are giving discounts on the gold rates or making charges. But along with that, all big brands are focusing on the new design collections that they are launching. They're trying to connect with their old customers and, bringing that relationship aspect of it so that the service remains constant. But yes, the volumes will be under pressure because of the high gold price.
Saurabh, when it comes to jewelry versus investment, what are you looking at this point in time when it comes to Akshaya Tritiya? Because we've seen during Akshaya Tritiya, people usually tend to buy jewelry because it's something that you can invest and wear it as well. But with the gold prices, the way they've run up, trying to, curb onto the making charges, do you see more investment buying rather than jewelry buying?
Yeah, I think on any festive day, typically 70-30, 70% is jewelry buying, 30% is investment demand, which is bars and coins. This time, I think it'll be 60-40, 60% would be jewelry and 40% would be bars and coins, primarily investment demand, which I think is quite natural because people also want to invest some of the surplus in gold. So I think this will be incremental demand, which will come up for people who wouldn't have invested in gold in other circumstances. So I think on the jewelry side, the numbers should be good. Investment demand is very high, and I think that will continue because the whole outlook towards gold, if you read any media right now, there's a lot of talks on gold reaching 4,000. And even today, a man on the street is talking on gold crossing 110,000. So these numbers is what is driving the whole frenzy for people to invest in gold. And I think is going to play out very well on this Akshaya Tritiya day.
Well, there definitely is a decline in volume, as we understand from our jewelers, but there is a high in value sense when it comes to this Akshaya Tritiya. Well, thank you, gentlemen, so much for joining in. With that, we'll go for a break. But coming on the other side, we speak to Ajoy Chawla, CEO of Titan's Jewelry Division, on demand and growth outlook for the organized players. Stay tuned.
ऋतुराज होटल में आग की जो घटना लगी है उसमें अभी तक 14 लोगों का फिगर आया, जो पहले जो हम लोग 15 फिगर बता रहे थे वो उसमें थोड़ा सा कंफ्यूजन है। टोटल 14 है अभी तक, 14 कैजुअल्टी।
Hello and welcome back to our special broadcast on Akshaya Tritiya. Joining us now is Mr. Prithviraj Kothari. He's MD at Riddhi Siddhi Bullion. Mr. Kothari, thank you so much for joining us to CNBC-TV18. What we understand until now really is that the markets are looking at higher exchanges instead of fresh buying. And then there is more investment buying rather than jewelry buying. And people are buying more silver rather than gold. How are you looking at the market?
Right now in the Akshaya Tritiya, because of the higher prices, it's almost all-time high prices. So people are exchanging jewelry, or they before book the price or EMI. So only today they take the delivery on auspicious day. And second thing, in south side still demand is good, but north and the west side and the east side is a very poor demand. Basically, if you see in the market, only the coin or maybe bar demand is there, but not so heavily. People are, instead of buying 10 gram, they're buying 5 gram or maybe 2 gram. But overall, but still the day is there too much hot in the too much hot in the city. Everywhere is the hot. The temperature is too high. Maybe in the evening session, people are rushed to the showrooms and everywhere. So I think maybe Akshaya Tritiya is not so good compared to the last year, but obviously I think 30 to 40% maybe dropped down. But in the volume it's a drop down, but the value is the same.
Mr. Kothari, what is your sense going forward? Where do you see the gold prices by, let's say, next Akshaya Tritiya?
It's too difficult to say about that. But I think if you see the long term, I think prior too much, I think is the big correction is there. The waiting for the correction after the 3,000, it's a come to 3,500. So we are waiting for comes around 85 to 87,000. But next year, I think it should be cross over 1 lakh, 1,10,000 rupees per 10 gram. So I am bullish, long term I am bullish because it's still too much tension, geopolitical tension, de-dollarization, Trump tariff. So many things are because their central banks are still buying. So we can't say, but long term is a bullish, and slowly if price is stable 85, 87,000, then Indian demand should be there. Now if you see the discount rate are very comes down also in India. If its price is stable around 3,200 or 3,150, then import again started.
Mr. Kothari, a lot of people have been betting on silver. What is your sense, one, on silver prices? And do you think that silver will outperform gold in sales for this Akshaya Tritiya?
Yeah, I think that today the silver price is coming lower, almost $1 already down in the international market. I think silver long term is too much bullish. I am in the 3 years, almost 2.5 lakh silver prices I'm watching. And if you see the silver stocks in the London or everywhere, the silver is deficit now. In 2025 also, the silver is deficit compared to the last year also deficit. So I think silver long term is bullish. People are smartly buying silver because it's too cheaper, and if you see the ratio is above 100, so people are smartly buying more silver compared to the gold. So I think it's the best option to buy silver or invest in the silver, because the auspicious day you can buy gold or you can buy silver. Both are the same. So I think people more buying silver.
Fair point that. Mr. Kothari, thank you so much for joining in at CNBC TV18. That's the clue coming in from Mr. Prithviraj Kothari that there's more exchange happening and you could be looking at gold volumes declining by 30 to 40%. I mean, that's a big number they're coming in. But value-wise, of course, we could perhaps still be the same because we've seen prices gain up by 40% in the last 1 year. We are now joined by Ajoy Chawla. He's CEO at Titan Jewelry Division. Ajoy, thank you so much for joining in. And everybody seems to be talking about a lakh rupees at 10 grams in sense of gold. People who are buying it, bought it, holding it. What is your sense? It's a big milestone. How do you see the current prices?
What do I say? Gold is a magical commodity, and in the last several years, it's become even more magical. It has a life of its own, and there are so many forces at play. At 1 lakh per 10 grams, 995 purity, I think it's a milestone. And certainly, it is high on everybody's mind, as you said. It's virtually impossible to predict, at least not for me. Maybe there are magicians and astrologers and economists out there who can predict. I cannot predict. All I want to tell you and the viewers is that ultimately, remember, gold is a commodity. While it has seen a rising thrust over the last several years, it has been unprecedented. And but eventually all things do settle down over a period of time. Now, what is that period of time? We don't know. So don't get totally caught up in that world. But yes, at this point in time, it is high. Will it remain high? Will it go up further? Will it come down? Anybody's guess. I cannot be a predictor of gold price. All I can say is gold is very high on everybody's mind, young, old, new age, traditional, modern, whichever way. Every customer is very keen on gold, and it is evident as I see it, even let's say our entire last financial year as well as the last quarter, and even now in the first 2-3 weeks of April, the sales of gold coins continue to lead growth by a distance. And that indicates, the high interest in this category, even as other asset classes perhaps have been a little more muted or volatile.
Ajoy, so you're saying that with gold near all-time highs, it's the coins which are doing better as an investment?
I think the coins have seen a secular growth over the last 3-4 years. It's not a recent phenomena. It's grown up steadily in contribution. It has been leading growth. But yes, therefore, there's a greater interest in gold as an investment. But there is also enough interest in jewelry because gold has been going up. So it's a two-edged sword. When it goes up rapidly and very suddenly, customers get spooked. And then, if it's been rising at such an unprecedented rate, almost 29% in the last 3.5 months. And if I consider from October, it's also 32% or something to that effect. Obviously, customers are spooked, and it does affect buyers, especially in the everyday gold in the sub 100,000 price segment. And it does therefore build some softness into the sentiment amongst that class of customers. But we see, on the other hand, the higher grammage and the higher value gold segments continuing to see robust buyer growth. So it works both ways. And in a way, what may be lost or soft on buyer growth is made up on ticket size growth. And ultimately, total value growth is what we measure. So it is not just coins. Even for gold jewelry, we are seeing growth. When I'm talked about these higher and lower price bands, that was more in the gold jewelry segment, not so much in coins. Coins across segments and across price points are growing very well.
Ajoy, would you say that the markets have now digested 1 lakh rupees levels, and such sudden surge basically was last seen in 2015, then 2020, and now in 2025? How has history really played out with these high price surges?
Difficult to digest. Really, it's a tough one because it's a big milestone. It is a psychological milestone. We will know whether the Indian customer has been able to digest in the next 1 week, because it is Akshaya Tritiya time, it is festive time. Every person looks at, because this is a time where also very good offers are there. It's auspicious to buy. There is a fantastic wedding season ahead. Last year, we didn't have a Lagan season in Q1. Plus, there were elections this year. That's not there. So all the other factors are very good for buying, and therefore there's a high interest. In fact, the inquiries on our website, particularly the gold rate part of the page on the website, has gone up 3x between March and April itself. That indicates customers are very keen to buy, but they're waiting to see what happens to the gold rate, especially a large percentage of customers in the, who are looking at a lower price point. So the interest is very, very high. And whether they will come in and buy or whether the market may correct a little bit, even a small correction, could trigger a gold rush in my mind. So we don't know. It's very uncertain. All I can say is we are prepared for growth so that if something like this happens where customers come in a big way, we are ready, we are not stocked out, and we will like to ride that wave. But so far, it's not bad. I would think it's more a ticket size-led growth that we would imagine if the gold rate remains high or continues to go up.
Well, I can understand the uncertainty, but Mr. Chawla, we do understand that Titan and various other jewelers have been launching new collections to lure buyers. Are these new offerings picking pace? Do you see customers exchange gold for new pieces of gold jewelry, or are they preferring to buy new?
Yeah, before I come to exchange, Manisha, I think your question refers to a larger point. How are we solving for customers' problem of high gold rate? So we have decided that in this very high gold rate regime in Akshaya Tritiya festive period, let us focus on solve versus selling. Selling is an outcome, solving is what we need to focus on. So what we have decided to do is a host of things. One is, of course, exchange. Exchange has been steadily going up over the years as a contribution. And every year we are seeing a small 1%, 2% gain in contribution, which means the sales through exchange are growing at a faster rate than the overall brand and the business growth rate that we are seeing. And even in this quarter, we expect it to be very high, especially in festive. We have also launched an offer to enable customers. So one is we are making people aware. More and more people are now aware of exchange and the clean, transparent practice of exchange that Tanishq offers. So we have launched an offer which is saying that any gold, even from another jeweler, which is 20 carats and upwards in purity, there will be no deduction. It will be 100% value for the gold content of the jewelry. So that's a current offer to make it sweeter. The second solve that we are doing is the best gold rate offer. Many times customers during this period, at least in the run-up, are confused. Should I buy now? Should I buy later? What will be my gain or loss? So to take that out of the equation, we have offered customers best gold rate. You will get the lower of the two rates whenever you book. And that we have seen increasing interest. We started this 2 years ago in a small way. Last year, we really expanded it for both the festive periods. This year, we are ready with a much larger quantum because we need to plan. Since we don't take a position on gold, we ensure that we make an estimate on how much gold may come in for exchange and take option on it and hedge ourselves completely.
Well, those are a couple of great schemes that Titan is coming out with. But as Joyce tells us that 1 lakh is a milestone, a magic number. And well, yes, consumers are finding it difficult to digest it at this point in time. Thank you so much, Ajoy, for joining us here on Akshaya Tritiya. And with that, it's a wrap on this special Akshaya Tritiya broadcast. More news and updates on the other side.
The newly appointed chairman of SEBI on March 1st outlined 4 key objectives for SEBI: trust, transparency, technology, and teamwork. And today we have a 5th T to elaborate on this. The author of all these statements, Mr. Tuhin Kantapande, the new SEBI chairman. Thank you very much, sir, for your time. Well, let me first start with the trust and the transparency part. The previous chairman had already set in motion the controls on FNO. We saw the first tranche of controls came in, only 1 expiry per week per exchange. We are eagerly awaiting the second set of rules. When do you think we will hear of it, and what will be the main, constraints, if any?
I think the SEBI had put out a consultation paper, and we received about 800 comments.
Yeah.
Some supporting the position, some suggesting some alternatives, something in between. So we will take a considered view and will come. Basic premise is that we should make systemic improvements and also provide, while the F&O market is very important market for price discovery, for hedging, we also don't want it to be, like reduced to one single problem that we were facing on index options on the expiry day. Yeah. That was our key problem area. So therefore, we need to, clearly define the risk metric, and we are trying to, we'll bring the delta in terms of, the options.
Yeah, I thought it was more, besides the risk metric, the end of day counting of options or intraday. And it is now, look, I mean, there were enough articles written on it that the intraday positions are so high that some limits need to be put, and the limits should not only be on end of day. So should we expect that there will be intraday limits? Because that's where the HFTs seem to be taking the game away.
I think we will have to take a clear call on not really exactly what we had proposed in the paper, but exactly what will be more practicable, and taking into consideration all factors. So we will bring about necessary changes accordingly.
Okay, you can't give us any clue on whether it would be intraday or end of day limits?
Not at this moment.
Okay. All right. Let me come to the other issue that is rankling the market on this trust transparency issues, and that is this SME IPOs, sir. I mean, we have seen Gensol is now. Just before that, we had that, I think it was what, Trifactor Technologies. There are enough number of SME IPOs. Are there some new rules being written? There is an inherent conflict. When you ask the exchanges to control them, they make money out of them. So it doesn't seem to be an effective, they don't seem to be functioning as a first line of control.
I think one of the objectives of bringing SME IPO or a little light touch regulation for them was exactly to facilitate the SMEs to access capital markets, where the cost of accessing we have to see the cost is relatively down, and it is easier for them to access capital markets. So I mean, we have a very large number of SMEs, and so therefore in order to enable them to do that, whether we could have the same onerous requirements as the main board was the issue. Yes. And it was, so I think we are watchful if there are certain aspects where, we have, for example, brought in some changes in terms of profitability criteria, in terms of usage and deployment of funds post-IPO. Also on the fact that, this money cannot be simply used by loan repayment of the promoters. But I think the merchant bankers, they need to do a better thing on this, and we expect
But do you expect it to remain with the exchanges because there seems to be a conflict of interest?
I don't think that is, in a way, in any in anything, even if it is approved by the SEBI, the exchanges will have to be paid their fees. So therefore, the transactions will have to be carried out in the exchanges. Okay. So only the processing part, like, you know, clearing the document, that was what something which was SEBI passed it on to. But we will be watchful of the situation, and if we find that, yeah, if we find that, you know, this is a very widespread phenomenon, even after whatever the changes that we have anticipated, then we will review it.
The second tranche of F&O rules, when should we expect it?
Well, I can't give you the deadline, but...
No, I mean in a month,
yeah,
even a broad ballpark.
I mean, I think very shortly, yes. Within a month, I think we should be able to arrive at, yes.
Okay. Now let me come to the other issue that you have already announced as one of your first announcements. This conflict of interest disclosures for SEBI's own officers. Do you notice any gaps in the current disclosures?
Well, this is not only for SEBI's officers, but also about the SEBI board members, including chairman.
Yes.
So the gap is, I think, one is 2008. This was set for the board members. Then there are ESR regulations, which are even older, which is employees service regulations. There are certain disclosures which are made within. There are certain conflict of interest clauses are being applied within. People are recusing. However, there is very little public exposure. There is, in fact, no public disclosure of the conflict of interest. Even we don't have even disclosures of properties and other things.
None of them, even other government officials don't disclose to us. It is to the appointments committee or whoever they disclose. We don't get to hear.
No, but at least some disclosures are there. Even, for example, the property returns, the immovable property, even for all government servant, is out. And I think SEBI also is also slightly a regulator where we find that we should be more proactive in terms of, this regime. And secondly, we also need to have comfort for those who are working within SEBI as to how they need to conduct, in many cases,
You mean the lateral entrance?
Not only lateral entrance, even the people who are employees, they also need to, when they are passing orders or, dealing with the case.
They need to know.
They need to very clearly know where it will fit. So I think we have to update that particular, both the ESR and the board resolution. Secondly, we also need to have a framework how they would be recorded, because we need to know who has recused for what and rationale, so that have some database, and also have public disclosures.
Okay, so that is a big thing. You expect that it will be a public.
So public disclosures, to what extent the public disclosure should be made, in what cases should be made, how, it could be mitigated. Suppose somebody seeks the thing, then how that particular complaint, etc., could be processed. If there is we will, the committee obviously will look at the best practices for other regulators in the world as well. And I think we will be pushing forward this important subject.
The fundamental difference will be that you will make things more public.
I think both. We have to also need to have more clarity internally as to how they will rest, how they will be processed.
Okay, fair enough. Now, you've made repeatedly a statement that there is a compliance burden. Are you of the view that SEBI is over-regulating?
I think so. I think in many areas we can have a much simpler regulation. Many regulations were, contextual in nature, and some of them have been changed also. For example, LODR was completely changed in 2018. Similarly, other the regulations were updated, but not all of them. So therefore, there is a need for relook at the regulations. Many times context have changed. Many times, a better way of regulation may have come simply because you have a better technology now.
No, my fear is that as it is, there are scams. I mean, we had Gensol. Like I told you, there were 2 or 3 SME IPOs. Even if I do a Google for the last quarter, we have seen 3 or 4 scams come out. It doesn't look like over-regulation. It looks like more regulation is needed.
No, I mean, simply you write a regulation doesn't mean that it is there is a difference between implementation and a regulation. That is what the effectiveness of regulation is. Like wherever the risk is higher, that is where we have to concentrate. If we try and ask too much of micro, that may not be our game. Secondly, we also have to clearly say that we can't be in every boardroom. So the question is it asking too much of a tick boxing? In many a case, it is a false disclosure. The disclosure will come, but that's false.
Yes, that's what we discovered.
So therefore, what we need to do is how effectively you can have a check and balance where these disclosures are stemmed in the bud.
But is there a feeling in government that there is over-regulation? Because that seems to be the general feeling that, and I think it also may kind of demoralize people within SEBI also. If you're constantly told that you have, you've overdone, you're over-regulated.
No, SEBI,
doesn't it?
Number one, that this is not something that I'm telling SEBI. All our staff are fully engaged and energized into re-looking at things. Many a time they have been feeling also. See, the question is, it's like a spring cleaning. Many a time what happens is when you are in your house, and not that, this is something which is happening for the first time. I must give credit to successive leadership in the SEBI that from time to time they have re-looked at it, they have contextualized it, they have brought in new regulations, they have, shed the old. So it's not something that, like it is like spring cleaning. Every time you keep on doing it, every Diwali you want to do it something and then you accumulate and then you shed also and you contextualize. This is something which is exercise which is really being done by all the divisions. I mean, they have begun it. They are enthusiastically doing it in terms of, because it is also when you are having a regulation, and if there is too much of information, then you have to also process too much of information. If you just bring that information and just keep it rest, then what's the point? So therefore, they would also like to be, they would like to be smarter. So I think SEBI wants to be a smart regulator.
Okay. Well, let me come to the other issue of, ASBA for secondary market. This blocking of the amount for primary markets was done for IPOs, and we were expecting it will happen in the secondary market. Is that something which is on the anvil?
Yeah, we are looking into it.
Okay.
We are looking into it.
But will it take a long time?
I will let you know. I mean, I'll just have to take a stock of the situation.
Because the brokerages are sitting on a lot of money. There was somebody the other day who said that some 4.5 lakh crore of, customer idle funds are sitting with custodians, with brokerages. I mean, why are people able to offer zero brokerage? Because float is there, they're making money on that. So will ASBA in secondary market be a priority for SEBI?
No, I think we have to really see the whole ecosystem moves together.
Okay.
And as you say that, the level of float has come substantially down in our system. The India itself, took a lead in going to T+1 settlement. US has now followed suit. Several jurisdictions. I was in US and we had a meeting with several security regulator in the context of the IMF ISCO spring meetings. And there are many people who are still in a much different regime.
But it is under consideration. Should we expect some rules?
Yes, I mean, it's under examination, as I said.
Okay. Let me take a quick break, sir. Back with a few more questions. In fact, lots more questions to the SEBI chairman. Welcome back to this very special chat with the newly appointed chairman of SEBI. Well, not quite newly. He's been around for over 45 days, Mr. Tuhin Kanta Pandey. Thank you very much for your patience, Mr. Pandey. Let me come to this T+1 settlement that we were talking about just before the break. SEBI is also pushing T+0. Will there be more of that? Because that also reduces the float, makes money more active and efficient. Will we see more of it?
Well, T+0 was intended to be optional.
Yes, optional only.
So right now, I think we will rest at that. Let it be optional.
Yes, yeah. Yes, of course. No, the system cannot be imposed, but you will try and push T+0. There is no rethink on that, is there?
No, I mean, we are neutral about it. As I said, we have brought in the T+0. It is an optional system. The technologies, etc., have been tested. So, I mean, we have to really see how the ecosystem moves and how there will be a comfort level of the wide variety of issuers and investors and things like that. And what kind of plumbing is there? What kind of problems are there? There are FPIs. How would they move the money? I mean, there are...
It's to their advantage. I mean, if they get T+0, they will get money on the same day when they sell. They should be happy, if anything.
No, that's true, but that is not the kind of thing is there. You should ask them also.
No, I did speak, and some of them were very happy.
They may have procedural issues, many of them, of trying to move the money, and different time zones are there, different things are there. I think India has taken an initiative, and our security markets continues to take the initiative in its own unique way, but we should take people along.
Okay. What about the NSE IPO? Can you give us some updated headline on that? They have come to you again. Will it be round the corner?
Well, there are certain issues which are going back and forth. I think they have
Is it that co-location litigation case which is the prime roadblock?
There is, no, I think that is one case where I think some solutions can be found in terms of settlement, etc. And there is a technology architecture issue, then there is a governance, and then is a clearing corporation. In these, all of these things, I think there is an active interchange between the exchange and the SEBI. And we intend to look at positively forward to, not as a procrastinating device, but actually to make it happen.
Okay. But Clearing Corp, their argument usually is that BSE has been allowed. Why are we being asked to reduce our stake?
That's the point. I mean, but at the same time, we have to really keep in mind that, it's substantial, is 90% of the market share, market thing is. So we have to see keeping in view the market integrity in others, how we will basically it's a question of a roadmap. What kind of roadmap we should agree upon.
So should we expect it in a year, in 6 months? Is there anything you have in mind?
We will let you know. Frankly, it's a bit early for me to jump the gun, but there have been technical discussions on, and we'll come to a finding. But again, I said with a view to find a solution, and not to permanently, park that question.
Fair enough. The other issue was, in the previous regime, there was a regulation enacted that if FPIs have more than 50% exposure to one stock, then all the granular details should be revealed. I think it was, they went through the entire stage and almost everyone revealed. But there was still a little bit of people who would have been disqualified because they did not reveal. Can you share any numbers as to how many funds have still to reveal or were disqualified because they didn't give you the final granular details? What is the amount of money involved?
This reduction in cases where
they did not reveal.
It did not reveal the full granular disclosures as required, could not be there, and therefore their registrations were rendered invalid. This is about 1% of the total FPIAs.
Okay, I just have a couple of questions on mutual funds. One is the TER, the total expense ratio. What happens is SEBI has a TER limit. that top funds compete and they fix their TER very close to what SEBI has mentioned. So it becomes, it is not related to your performance. Ultimately, your expense should be related to your performance. It doesn't work that way. What happens is SEBI's limit becomes the limit for the market. Any rethinking on the TER?
See, first of all, I will not agree with your point that the fixation of an upper ceiling TER is a way to cartelize, because that is an upper ceiling. You can always compete.
It tends to be, is all I'm saying.
That it is always competing. Now, if you see, for example, the brokerage. In the brokerage, you have an upper ceiling of 2.5%. But there are people who are offering zero also. Similarly, debt funds. If there is a ceiling of 2% or whatever, you have people offering much less.
In equity, you don't see that.
So, in equity also, I mean, the people will compete and the people will do that. So, right now, I think what we should say, we should not look at as simply removing the ceiling. Will not mean that, the people will not, you are saying that everyone is crowding around the...
Yeah, somehow the TER is not related to performance. It has become like that. It has become everyone congregating around SEBI's limit.
Yeah,
in equity, that's what's happening.
I think in many cases, people are looking at performance in a variety of ways. I think when the investors are looking at returns, they are looking at... So they are not necessarily looking at TER also. So,
yeah. But they don't look at TER. They look at performance only. But I'm only saying that funds are getting away with it.
Upper ceiling is not really the reason for which, you're saying they're crowding at that upper ceiling.
It tends to be, that's what everyone fixes as their TER, somewhere close to the SEBI's limit. Okay, while on the matter, sir, there was also that that investment product between mutual funds and PMS. We were expecting new rules to come on that special investment unit.
Yes, the new regulation framework has already been out. Now we have received 2 applications also from 2 AMCs. So I think in a matter of 10 days, we would have cleared them.
Okay. Just a final question on the market volatility. SEBI had asked previously for stress testing of mutual funds. If there was something very adverse in the global market because of tariff wars or other geopolitical concerns, would you worry about mid-cap and small-cap mutual funds? They have volume only because investors rushed in. But if there is a rush of redemptions, then there will be stress. They may not be able to pay immediately. So any stress testing moves from SEBI?
I think it's a very important question, and stress testing actually not only should be done, but actually SEBI has also got it done for small cap and mid cap in 24. It was done, and the results have also been released. So on directions of SEBI, MFI, directions to MFI, all the stress testing results have been in the public domain. We also intend to do stress testing for others also.
Which would be?
I mean for others. These are the small cap and mid cap, but for others also. So therefore I think it's an important thing to know what happens, and I mean...
Are you somewhat confident that if there is huge volatility, the market will be able to still function normally?
Absolutely. I think we have buffers and we have mechanisms. Just to give you an example, the kind of settlement guarantee fund which is there, that has been more than doubled in the last 5 years, and it has worked as also our system works as more like a counter-cyclical, and the margins are 11% plus, which is much higher than the SGX margin of 5%. We have also, as I said, the funds moved up to clearing corporation. They are lien to corporations, not at the broker level. Where securities directly getting credit, not through brokers, but directly given that. So this is another element. I think at different levels we have created. And then we have also that, CMDF fund, which is the, for any redemptions, etc., on unusual redemptions, we have that support backstopped fund as well.
So we are somewhat prepared, but of course one hopes that we don't have to use them. Finally, as you end, say, one quarter, what is your goal? What do you want achieved in a quarter? What do you want achieved in your first year?
Well, I think it's not my achievement really. I think the SEBI is a very robust institution. It carries on, and we keep overseeing the markets, we develop the markets, we do investor protection. That's our mandate. And we'll continue to improve ourselves, challenge ourselves to do better.
Okay.
With the help of every stakeholder. As I said, 4 T's. The teamwork, which is more external and internal teamwork, media included.
Okay. We'll try and pose tough questions. That may be our role. Thank you very much, Mr. Pandey, for sparing time for CNBC TV18.
Thank you.
Hello and welcome to Startup Street. I'm Arundhati Ramanan, and with me as always Shruti Mishra, and from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. SaaS firm Freshworks records an operating revenue of $196 million, growing 19% on a yearly basis, narrows its operating losses by 67% in the first quarter of this calendar year.
Quantum cybersecurity startup QNU Labs bagged 60 crore rupees in a Series A round. Round was led by the National Quantum Mission. Will use the funds to expand offerings and enable development of its solutions.
Anveshan raises 48 crore rupees in a Series A round led by Wipro Consumer Care Ventures, along with DSG Consumer Partners and Titan Capital Winners Fund. New funds to help expand its manufacturing network, strengthen supply chain, and enhance its IT tech platform.
Sadhav Offshore lands investments worth 25 crore rupees to enable launch of critical dry dock facility and support India's maritime ecosystem. The equity round was led by Negan Capital, along with participation from several prominent family offices and high net worth individuals.
An Udayti CII report flags worrying trends in the logistics sector as female participation in logistics sector stands at 7% in FY24, a mere 1% rise compared to last 4 years. The report states that only 44% of NSE-listed logistic companies have one woman in key managerial positions.
Space tech startup Satlio Labs secures $3.3 million in pre-seed funding round. The capital will be deployed to advance the development of proprietary thermal imaging payload and also support expansion of team. Well, those are the headlines we've been tracking for you this evening on What's Brewing Today. Pop culture brand The Soul Store has acquired Red Wolf, a popular name in the fandom merchandise space. The company says the move will give fans access to an even wider range of unique fandom-driven products. As part of the acquisition, Red Wolf's founding team will be joining The Soul Store. And to tell us more about what this acquisition means, how the pop culture economy is evolving in India, and what's next in The Soul Store's journey. Joining me now is its co-founder, Vedang Patel. Vedang, welcome to Startup Street. If you could first confirm if this is a 100% acquisition and what made you bet big on Red Wolf, what made Red Wolf the right strategic fit for the Soul Store at this point, and how do you expect this move to enhance your product offerings and audience engagement? What kind of synergies are you hoping to unlock?
Thanks for having me. So this is almost a 100% acquisition, close to it. There's some technicalities why it's not, but for all practical purposes, it is. We are really excited to have the team on board because I think we started out together and we really looked up to Red Wolf. They are quite the, I think, pioneers in this space, and they were going to shut down. And I feel together, and we could do so much more, and we didn't want that situation to happen. So we decided it's best to just partner together and become a true home of pop culture in India. We really love where the Soul Store is today. And with Red Wolf team here as firepower, I think we're going to become a very dominant force in India, at least, if not global.
All right. Vedang, with the Red Wolf founders now joining your team, how do you plan to integrate their creative vision while staying true to the Soul Store's brand DNA? And will Red Wolf continue as a standalone identity, or will we see a full brand merge?
See a full brand merge. I think where it comes for people having different design languages, the Soul Store is actually a very collaborative space. No one person runs the design on their own. I think we all come together with our own unique flavors. People are fans of different merchandises, like someone will be a Superman fan, someone will be a Dragon Ball Z fan, a Batman fan. Everyone makes that version of it to get that true authentic feeling of what a fan wants. So we are very excited to have this new point of view and, build this out together even bigger.
Okay. The Soul Store has been aggressive in scaling both online and offline. How does Red Wolf strengthen your omni-channel strategy further? And with 40+ stores already live, Vedang, what is the next phase? Are Tier 2, Tier 3 cities or global markets on your radar?
Yeah. So Tier 2 and Tier 3 cities are on our radar. We already are in a lot of them. For example, I think Jodhpur was our latest store opening. We have one in Dehradun. Obviously, the Tier 1 cities is where more than half the stores are, but the next half of stores would be Tier 2, Tier 3 concentrated. Yesterday, we launched it in my hometown in Navsari, and that's a Tier 4 city. So we're very excited about the depth of where the brand can go. Globally, something that we will launch this year, we'll have global stores starting with the Middle East and eventually going to the US and Europe. The main reason is because the Soul Store is truly unique. There's nothing like us around the world, and that's also a very relevant audience to us. So we're very excited to, tap that market too.
Okay. So you have big plans from Tier 4 towns to the global markets. But will you be eyeing funds anytime soon to fuel these aggressive growth plans? Reports suggest you're eyeing to raise around 200 crore rupees, if you could confirm this.
So to be honest, we haven't decided on it, whether we go a little slower and just grow through our profits, or we raise some debt, or we go ahead and raise funds. I think that's something that we're waiting to see how things play out. But it's very clear that our ambition might be larger than our purse. For the last 2 years, we've been growing with our internal cash because we've been growing at a certain pace, and the cash flow from operations has been able to fuel that. But maybe our fast-paced growth might need us to take up some more capital.
All right. Now, like you mentioned earlier, the Soul Store's mission is to be the home of pop culture in India. From your vantage point, how has fandom evolved over the last decade in India? And what are some of the newer trends or consumer behaviors that you're noticing?
I really love the way it has evolved in India. I think a lot of it goes to the fact that new Marvel movies or Harry Potter movies are now available in many regional dialects, not just Hindi as it used to be. So very excited about the fact that a large India TG is now relevant to these fandoms. We also love the fact that a lot of Indian fandoms are now coming of play, and we've seen that a lot of our new designs, which are India-based, mythology-based, are selling even better than some of the Western stuff. My favorite is that we decided as a sole store we won't do NASA, but we will do ISRO, and we love the response that the Indian consumer has for ISRO, for example. But one cool fandom shift that we are seeing is that what used to be cool in the West is now moving east. So a lot of American fandoms are dying down versus Korean and Japanese anime are now what's the coolest.
Huh. All right, one final question, Vedang, before I let you go. What is the current growth trajectory looking like in terms of revenues and profitability? And are there any new product categories or exclusive collaborations in the pipeline that you can share a sneak peek of?
Yeah, so I think from a revenue perspective, we closed last year at around about 500 crores, and we have a healthy bottom line of about 6-7% post-tax. What we are very interested about now building is the fandom element going stronger. So we will have a lot of accessories like Harry Potter wands, some nice rugs, which would be different superheroes. Because we have a lot of breadth when it comes to apparel, we have backpacks, we have sneakers, but it's now the little things that I think we want to do to get the fan to be truly excited about their fandom.
All right, on that note, we'll have to wrap up our conversation. Vedang, many thanks for joining us on Startup Treat today, and wish you the very best with all your growth plans.
Thank you so much for having me. Yeah, have a good evening.
Moving on Investor Eye, Trident Growth Partners has announced the first close of its debut fund at over 1,000 crore rupees. Founded by former senior investors from Premji Invest and IFC, the firm brings together over 50 years of collective experience and a strong track record of backing unicorns and IPO-bound startups. With plans to raise 2,000 crore rupees by 2025, Trident is set to shape the next wave of high-growth Indian businesses across sectors like consumer, fintech, SaaS and healthcare. Joining me now to discuss this further is Pravan Malhotra, the managing partner at Trident Growth Partners. Pravan, thank you so much for taking time out and being here with us on Startup Street. First of all, congratulations on the first close of 1,000 crore rupees. If you could sort of elaborate on the key factors that contributed to such a strong debut for your maiden fund.
Sure, and thank you so much for having me on the show. So I think there are a few factors that allowed us to get to this point in a relatively short period of time. So this was only about 7-8 months after we first received our SEBI license. I think it's a combination of the team where the three of us have been investing in the Indian growth stage market for over 15 years at this point. So my two partners, as you mentioned, Atul Gupta and Rajesh Ramaya, were basically built the private equity practice at Premji Invest, the family office of Azim Premji, and invested in leading companies such as Lenskart, Flipkart, Amagi Media, Policy Bazaar, and many others. I spent 12 years with IFC building up the growth stage investment business in India and then in Southeast Asia, investing along with my partners in Lenskart, but also investing in Big Basket, Moglix, and many others. So the team has been very active in this stage and is continuing that same journey in terms of how we're investing in this market. So I think that was one contributing factor that has been that our backers really liked.
Absolutely. And, you also have a plan to sort of close the fund at 2,000 crore rupees in 2025, right? So are you seeing the investor interest and momentum continue post the first close?
Absolutely. And I think, we've been very kind of targeted in how we're raising it. So the first close, we focused a lot on sort of founders and family offices that have known our journey, known how we've invested over a longer period of time. So we've had 30 plus founders who've come and backed us. And many are actually advisors to the fund and will work with us and our portfolio companies. We've got two preeminent government funded funds, so SIDBI and SRI, who have backed us. And now the next segment of our journey is looking at both domestic institutions as well as some global capital, both funded funds as well as family offices, that will allow us to get to the total 2,000 crore target that we plan for.
Right. And, with the funds that you've currently raised, you plan to lead or co-lead Series B plus rounds, right? What makes this stage of investment especially compelling in India right now? And how many companies are you looking to invest in, and what will the size of these investments be?
Absolutely. So what we find compelling is the risk-adjusted return in this segment to us is probably the most optimal, and that's what we've seen in our prior 15 years of investing. So we come in where companies are de-risked from a technology or business model perspective, yet have built sizable enough businesses, but need capital to continue to fuel their growth going forward. So that's what we find interesting. It's a relatively underserved market if you look at the whole private equity landscape. And most of the funds that are focused in this stage, Series B, C, D, are typically more tech-focused. And what we bring is that, again, that sector-agnostic approach, because we want to ensure that we're investing across sectors. We're not getting stuck in any particular market cycles or valuation bubbles within particular sectors. We'll invest in 10 to 12 companies through the course of the next 3-4 years with this fund.
Right. And, while Trident Growth Partners is sector agnostic, you've highlighted consumer financial services, SaaS, manufacturing and healthcare as key themes, right? So what excites you most about these sectors in the current Indian growth story?
So I think a common theme across these sectors, which is really the India theme, is that a lot of this is really broader consumption-led. So as we're seeing the evolution of the middle class, we're seeing rising incomes, we're seeing a young and growing population. I think that's driving a number of these broader sectors. So consumption is growing beyond tier 1 into tier 2, tier 3. The models in terms of consumer models are evolving along with that. We're seeing the demand for better quality and affordable healthcare, food, education, all rising along with income rising. We're seeing the demand for financial services rising. People want more access to finance, again, getting into tier 2, tier 3. So that's one broad theme that's driving a few of these sectors that we're tracking closely. The next, of course, is the shift from China plus one and the Make in India story that is playing out, and probably more turbocharged as a result of this global turmoil that's happening right now. And then the final kind of key area that we're actively tracking is around SaaS, which is, again, driven by AI. It's driven by really interesting product-led companies that are coming up in India and that are creating products for the world.
Right, absolutely. And if you could sort of take us through, as you pointed out, you've made huge investments in Flipkart, Lenskart, Policy Bazaar, Credit Bee, First Cry. You've got a lot of companies that have IPO'd. If you could sort of take us through your current AUMs and the kind of returns your investors are seeing, do you have an exit strategy? And where do you hope to see your AUMs post this big fund?
So just to clarify, those investments were made in our prior roles at Premji Invest and IFC. So this is our first fund that we're raising right now. And so we'll be looking at investing between 15 to 20 million in 10 to 12 companies. Again, the total fund target is about 2,000 crores. Going forward, again, we want to be disciplined in terms of fund sizes. So we plan to have funds which will be similar sizes because the stage is very important to us. We feel, again, that this risk-adjusted return in this stage is optimal. So we don't want to create larger and larger funds where you start having a shift in strategy and end up doing larger ticket investments in later stage companies. So we want to be true to where we really feel that the returns for our investors will be the most optimal.
All right, Pravan, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best with this new fund going forward.
Thank you so much.
All right, on that note, it's time for us to head into a short break. But coming up on the other side, a series of conversation with the National Restaurant Association of India's office bearers on what's aching the small restaurants, impact of 10-minute delivery, and why the association has slowed down talks with ONDC. That and more on the other side. Stay tuned.
Welcome back. You're still with us on Startup Street. Amid the ongoing tussle with food aggregators over 10-minute food delivery and private labeling, my colleague Aishwarya Anand caught up with NRAI president and also the founder and CEO of Wow Momo Foods, Sagar Daryani. He warned that smaller restaurants are at the risk of shutting down, slammed the misuse of customer data, and says if dialogues fail, the industry is ready to take the legal route. Take a look.
I think we were always given an assurance by them that they would never get into our space. Now, what they are doing through Snack and Bistro, they are selling similar products that we sell in our restaurants. Now, they have all our data. They have generated demand and a trend of demand over 15 years. That data is not shared with us. They have all our data. Nothing stops them from using that data to migrate a customer from a restaurant to the similar product that they are selling from their app or private label. Now, they don't have marketing pressure because they have all the data, they have all the trends. They don't have commission pressure. It's their own business. Now, it's not a level playing field. We feel we are cornered. We feel it's absolutely unfair. We feel it is against the interest and the rights of restaurants. It's absolutely unfair. We feel we are cornered. Our problem is not against quick commerce in food delivery. We are for quick commerce in food delivery, but aggregators doing it, we're not okay. Aggregators, they're doing a great job with aggregators. I think they've really helped in growing the food delivery business. They are here to stay. They're here to grow. We work with them. We agree on many aspects. We don't agree on many aspects. We agree to disagree. We have constant dialogue. Today, both Zomato and Swiggy are our special guests for the event. We have them on the panels. We have them as speakers. They're just a phone call away. But the problem is that, when we don't come to a narrative where we both need a solution, if we have to take legal recourse, we will.
Also, in an exclusive conversation with CNBC-TV18, NRAI Zorawar Kalra confirms advanced talks with Rapido as an alternative to ONDC, even as integration with the government-backed platform slows amid top-level exits. Kalra also weighs in on the service charge debate ahead of the Delhi High Court hearing. Aishwarya Anand brings you that conversation from NRAI Food Delivery Summit 2025.
Platform. I think it has low barriers to entry. I think somewhere down the line, it has the opportunity to become a third entrant or a fourth entrant into this particular field. I don't think the NRAI has paused anything. I think conversations have slowed down. So there are still some issues to be worked out. There's a lot of, the entire ecosystem is not seamless. That lack of seamlessness will slow down adoption rates. Our goal is to have a legitimate alternative. In the current scheme of things, it may not be moving as quickly in that direction, but I don't think anything has been stopped. Things may have slowed down. Things may have been temporarily paused, but dialogue should continue. I still think we all think at the NRAI that it's still a good system and it can genuinely function as a legitimate third option in this ecosystem.
You're looking at onboarding Rapido. Yes. As they have said, could you help us understand at what stages the discussions are on? And what's so lucrative about having Rapido as an alternative option?
See, whatever the NRAI does, it does for the industry. The Rapido model, we are in good advanced discussions. I think something soon can be announced very, very quickly. However, the good thing for the industry will be a far more democratic commission rates. So the commission rates are going to be far, far more appealable to the people. The system has to work in a seamless manner. If their commissions are low, I'm sure a lot of restaurants will jump on board to Rapido. So I think that's a real, genuine third entrant opportunity there that is going to be a very democratic entry into the whole fray and can add significant value to a lot of people, especially ones that are incurring extremely high commission costs.
Okay. And how does NRAI respond to the Delhi High Court's observation that there is no direct evidence of service charges benefiting the workers at restaurants?
There's been an overreaction to this. It was always optional. It was never mandatory. If you did not enjoy the service, you could take it off anyway. That still exists. So this complication, this new little, change in the legal language has created a lot of confusion. It's created a lot of fear. So even people that are doing legitimate work, passing on the entire service charge to their workforce, are now removing it. What will happen? You either have to increase prices or you have to stop collecting service charge. And as a result, those service charge points that were perhaps very beneficial and important for a waiter or a stewardess were now going to be removed. So who loses here? I don't think the consumer is going to have a problem in paying 10%. Rates can anyway be increased for that purpose. So if it is an entirely optional thing at the moment the rates go up, it no longer remains optional. then that service charge element can be included in the menu pricing, and as a result, you're now having to pay. So I think the current system is better.
Well, My Designation, which is a fashion and lifestyle D2C brand founded in 2020, has raised $1.25 million in a seed funding round that was led by Multiply Ventures. The company says this capital infusion will help it accelerate its hiring, technology enhancement, offline expansion, as well as entry into new geographies. The brand claims to have built a customer base of more than 5 lakhs and plans to double this user base within the year. For more on this, joining me now is Swaroop Krishnan, the co-founder and CEO of My Designation. Swaroop, thank you very much for your time here on CNBC-TV18. Briefly tell us about the brand, what distinguishes it, and what's helped you to get this 100% year-on-year kind of growth in the last 4 years.
Yeah, so I think few distinguishing factors has been our USP. So we are a niche brand. So that's what we have focused from day one. So it's like any of our products that you see in our website or outlets, you cannot find even a 10% similar product in any of other brands or even outlets that you go across. So we spend 90% of our effort on actually the research and development. While bringing the product, we do a lot of research on what's not available in the market and what other brands are not doing. So that's the area where we focus on. So for right now, I'm wearing a Starry Night shirt. So Starry Night by Van Gogh, it's a world famous painting. But I don't think it's a design that you've seen in a product, like a fashion product and being flaunted like this. So I think, yes, that has been our strength from day one, standing out from everyone else.
All right. So, how do you plan to deploy this $1.25 million that you've raised? How many cities, for instance, are you currently in, and which new geographies are you eyeing?
So right now, if you ask me, 80% of the market share we have is in the southern half of India. From Maharashtra till Kerala and Tamil Nadu, we have a very strong base. We have served almost 5 lakh customers till date. And we have a very strong repeat of almost 35% monthly. So right now, we are getting very good customer potential and responses from Kolkata, Delhi, and even northern parts of India. So people are actually seeing the brand, they're getting to know. And yes, right now the first plan is to become very dominant in our current categories and areas, as well as expand to these areas. So right now it's purely D2C, our own website alone. So right now we are slowly starting our incorporation with Myntra. So Myntra is adding us as a portfolio brand in their category. And slowly we are starting our EBO, exclusive brand outlet, in most of these metro cities. So yeah, that's the immediate plan. And then again, team expansion. So right now we are a very small team of just 30 people. And with this, we have been doing this kind of numbers. So right now, as these strong investors came on board, we are getting a lot of value as well as team addition as well.
Okay, so while you have plans to tie up with Myntra, tell us more about your offline expansion plans. How many stores do you plan to have? Will those be exclusive or multi-brand retail outlets? How much additional sales do you think this offline presence will unlock for you?
Yeah, so if you ask me that, currently we have just 3 outlets. So all of these 3 outlets are in Kerala itself because Kerala has been our top 1 market. So right now that has changed a bit. Right now Maharashtra and Karnataka is showing very strong potential. So we are planning to start at least 3 outlets in both the states within the next 6 months. So if you ask me, in the next 12 months, we'll have at least 12 more outlets, EBOs especially. So that's our way of working. We don't do multi-brand outlets. It's purely our outlet because the way of communication, the niche that I told, if it's our own outlet, then only we can convey it very properly. So it's going to be EBOs itself, and you can expect almost 12 outlets in the next 1 year. So that's the basic plan. And again, coming to outlets, the profitability ratio is comparatively very high. So in online, there has to be a very strong bidding. A lot of brands are doing advertisements, but with outlets, you can communicate your vibe directly. People are seeing your outlet, it stands out, it's different. They feel like giving it a touch. They're like, okay, what's this different brand? I want to try it out. So once they try it, it's about the brand quality and the designs, which we are already, I believe, we are good at.
Okay, then finally, what is the longer-term roadmap for your business? How do you expect revenues and profits to grow from where they are currently? What will be the key priorities?
Yeah, so we have never focused much on the rapid scaling. So there are brands that focus, that burn a lot of money. They just want to grow 10x, 20x. So we have never done that. It was always to make a profitable business. So that's been the model we have always focused. That's the reason why we were happy with the 2x growth. So 2 years back, you asked me, we closed at 8 crores. The last financial year, we closed at almost 17 crores. And this year, we are actually projecting 70 crores for this coming year. So that too with profitability. Maybe I can aim for actually 100 plus year also with the kind of investors and funds that has come. But that's not the roadmap that we have. We need to keep the profitability. It's the ultimate motive is to build a profitable brand, not just a fast growing brand.
All right, so the focus will very much be on profitability. Thank you very much for your time, Swaroop. It was a pleasure speaking with you.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up right here on the other side. Stay tuned.
Ladies and gentlemen, it's wonderful to be here in Mumbai in conversation with the Honorable Chief Minister, Mr. Devendra Fadnavis. I've always had conversations with him that have elicited headlines, so I'm hoping that we will be able to do the same. I had the good fortune of being at the G20 summit in New Delhi, which is where the idea of the India-Middle East European corridor was first announced in the presence of the Honorable Prime Minister, Shri Narendra Modi. A lot has changed since the G20 summit. We are currently in a state of flux and volatility globally, where there is a global reset that is currently underway. But the hope is, and the belief is that what is being touted as a game-changing idea will be a reality with all parties on board, with all stakeholders on board, ensuring that it does in fact fructify. But to talk about Maharashtra's aspirations of being the gateway to the India-Middle East European corridor, let me address that question with you, Mr. Fadnavis. You have grand plans of positioning Maharashtra as an infrastructure hub. It's been called the gateway to India, but as part of the IMEC, how do you position yourself? What are you factoring in as some of the things that you could potentially do to your current plans to envisage a future that includes the IMEC?
Yeah, thank you. First of all, let me welcome everybody to this beautiful city of Mumbai, which is financial, commercial, and entertainment capital of India. And I think Mumbai and Maharashtra has to play a pivotal role in the IMEC corridor, because I think we will be creating an ecosystem which will support this entire idea. And when we talk about our plans to become a $1 trillion economy, I think we are working in several ways. If you can look at our infra push, which we have given in last few years, I think you have seen change Mumbai, and also the entire Maharashtra feels connected now. And I think when we look at the opportunities through IMEC, I think we have a great opportunity to become the logistics capital. We can move a lot of logistics from Mumbai. We actually we are looking at advanced manufacturing. We are looking at agri-tech. We are looking at fintech. Of course, Mumbai is a fintech capital. So I think the clean energy push, the green manufacturing, all these areas I think are very important for us, because they will not only play a major role in making us a $1 trillion economy, but they will be also the drivers of the IMEC corridor.
Well, speaking of the drivers for growth and urbanization, infrastructure development, connectivity, as you outlined, are some of the key areas that the government is focusing on. For the benefit of our audience here in the room, as well as for those who are watching on TV and online, Mr. Fadnavis, what is the aspiration in terms of infrastructure development? Is there a number that you're working with that over the next 5 years, this is potentially what you would like to invest as far as infrastructure is concerned, to ensure that you can realize the many dreams that you've spoken of?
Absolutely. You see, between 2014 and 2019, we invested somewhere around $30 billion in creating infrastructure. You can see the coastal road, you can see the Atal Setu, you can also see the Samruddhi Highway. There are many iconic projects, the new Mumbai airport, many iconic projects which we built during this tenure. Now we want to do more. So recently, we have tied up with Indian financial institutions to raise a sum of around $50 billion. And in next 3 to 4 months, we'll be tying up with foreign investors to invest into $50 billion more. So there will be a huge push on infrastructure side. We are building a lot of access control roads, airports, ports. Now, you know that the new Mumbai airport will be ready very soon. Now we are building a new airport in Pune. We are also building one more airport in Vadhavan, which will be the third airport of Mumbai. We are actually building a new airport terminal in Shirdi. We are building a brownfield airport in Nagpur. So across Maharashtra, we are building airports. We are building roads. We have already built Samruddhi Highway. Likewise, now we are building one more highway, which is Shaktipit Highway. This will connect Nagpur. It will be from Nagpur to Goa, and it will actually connect the entire, that area of Maharashtra, which is up till now a little backward, to all the major centers of business. And this will actually transform our economy. And we are also actually building a lot of river connectivity projects. So actually, if you look at Marathwada area, which is water stressed, in that area now we are building a river linkage project by which we'll be bringing 50 TMC water, the water which flows from west flowing rivers, which directly flows into the sea. That entire water will be brought to Marathwada and will make Marathwada drought free. Again, one more project which we are doing is more about urban floods. So we usually every year we have a lot of floods in the area of Kolhapur and Sangli. This entire water we are bringing through diversion canals to Ujni and to Marathwada. So there are huge projects around water, there are huge projects around infrastructure, roads, ports, airports. Again, you know that we are building Vadhavan, which is, Vadhavan is a game changer port. And you see, today, the biggest port of India is the JNPT port. It accounts for 60 to 65% of the container traffic. And this Vadhavan port is 3 times bigger than JNPT. And actually, on its day one, it will be amongst first 10 ports of world. So this port is going to change, the entire way we conduct the business. And we are also integrating entire Maharashtra with this port, because with the Samruddhi Highway, we have actually brought 15 our districts connected to the JNPT port. So the port-led development is now actually expanding beyond Mumbai, Pune or Nasik to 15 new destinations. And now from Samruddhi, we are creating an access control road, which is just 100 kilometers to this new Vadhavan port. So from Nasik to Vadhavan, a new road will be created, and that will actually connect at least 17 districts to Vadhavan port. And that will make, this port-led development expand to 17 districts of Maharashtra. So see that we are actually getting us ready for this corridor, so that, once all the signatory countries, they work together and they create this corridor, Maharashtra will be the future-ready state. It will be ready to use this corridor.
Well, future-ready as and when the IMEC does come together. But, if I could just continue on what you talked about, the port-led development, which, of course, is going to be a big part of this reality as and when it does take shape, Mr. Fadnavis. One of the challenges when we talk about doing business in India is the ease of doing business. The other is, of course, the cost of doing business. What will this mean? Logistics cost is a big cost as far as the cost of doing business is concerned. In your view, with the measures that you've outlined, if you can leave us with timelines by when you believe the measures that you've just spoken about will in fact be a reality, what could it mean in terms of the cost of doing business?
Yep, you're absolutely right, because EODB and CODB are two things which actually, keeps you ahead. And we have been working on it for a long time. I mean, if you look at, ease of doing business initiatives taken by the state of Maharashtra during my first tenure, I think even the World Bank has recognized it, and the government of Singapore, which published one of its publication around ease of doing business in India, and they have put Maharashtra at number 1 in 2019. So I think that has always been our focus of achieving seamless business in entire business arena. Now we have also created a legislation around that. Our Maitri portal, which is one-stop shop for all businesses, to do the business seamlessly. So we actually have created a single window system by which anybody can access it, and this real single window, because I always say that many times there is a single window. When you enter, there are several doors which you have to knock. This is not like that. This is a real single window whereby actually end to end all things are connected, and we give the services totally from scratch to everything we are giving under this Maitri portal. Having said that, I think you're absolutely right that cost of logistics is something which is bothering businesses a lot. And that is why we are creating infrastructure and seamless movement of goods. See, now, if you look at, the movement of goods, or if you look at the JNPT port, from, let's say, Nagpur, it used to take 7 to 8 days for goods to reach JNPT port. Now it takes 8 hours. So with this, our connectivity push, once the Vadhavan is ready, and as per timelines, I think in next 3 to 4 years, we'll start the operations of Vadhavan. And once Vadhavan is ready, I think that will have huge impact on logistics, because today JNPT port is so jammed because it's only big port which is handling on this side. And turnaround time, although it's a very efficient port, but still turnaround time is high. But once Vadhavan is there, then I think the turnaround time will be very less, and that will actually lessen the logistics cost. I think around that, if you look at the Pune airport, which we are actually creating, this is not just an airport, but it's also, we are creating a huge cargo handling facility at Pune, because, Pune is our manufacturing hub.
Yes.
And the entire manufacturing is done in and around Pune. So we are actually doing a cargo hub there. Our cargo hub will also be, one cargo hub will be created in Nagpur. We are doing it. And our new business magnet is now Sambhajinagar, where, the entire EV revolution has translated into action in Sambhajinagar. So you name it and they are there in EV. And they are also actually the connectivity to the Vadhavan port and the connectivity to the JNPT port is just 7 to 8 hours because of Samruddhi and because of the new corridor which we are creating. So I think a lot of things which we are doing will be adding up to, lowering the logistics cost. And when we started creating this Vadhavan port, I actually appealed to Honorable Prime Minister, and I requested him that we are creating a port. We are actually doing, a lot of reclamation there. So around the world, most of the efficient airports are reclaimed airports. So why shouldn't we build a new airport at Vadhavan? And he immediately agreed. And we are now also building one airport. So you see, a port and an airport together, that will create a huge ecosystem for businesses, and especially those who are into import and export, all those manufacturing which required a lot of export or a lot of import of the components. They will have an entire ecosystem created there for the manufacturing.
I just want to recap some of the big takeaways that have come in from the Chief Minister already. Almost $100 billion in terms of financing is what the Maharashtra government is hoping to do to aid infrastructure development. You've given us a timeline of the new port, operational hopefully in the next 3 to 4 years, along with the airport that's going to be coming up there. third Mumbai, which of course is your plan as far as creating the new engine of growth as far as the state of Maharashtra is concerned. What's the status check on that? How soon can we expect that to be a reality?
Yeah, of course, I think that's soon going to be a reality. You see, due to our infrastructure deficit between 2000 and 2014, we lost a lot of IT revolution to cities like Bangalore, cities like Hyderabad, because Mumbai being an island city, there is huge land constraint, and the rentals went shoot up. They went up so high that it was unaffordable for tech companies to locate themselves in Mumbai. But now with our infrastructure push, actually we have connected the new Mumbai to Mumbai with Atal Setu, 22 kilometers sea bridge, and the entire hinterland which we have connected. Now we are creating a third Mumbai between this Atal Setu, JNPT port and the new airport. And this will be 3 times bigger than the existing Mumbai. And it will be a sort of thematic city where we are actually building an Edu city. In the Edu city, we will be having 10 foreign universities located themselves, out of which 5 are in active dialogue with us. Actually, 5 have already applied. Since we have a non-disclosure agreement, I cannot disclose the names, but they've already...
Are they US-based, Europe-based?
Yes, US-based, Europe-based, yes, absolutely. I would say that these 5 universities are actually amongst first 100 universities of world. So we are creating an Edu city, we are creating a health city, we are creating an innovation city. Now this innovation city is a concept where we want to bring entire innovation ecosystem at one place. It's actually 300-acre city where entire innovation will be hosted. And Mr. N. Chandrasekharan of Tata Sons, he has actually volunteered to create a framework around this city. And now we are actually actively talking to many stakeholders. And the moment I announced it, who's who from global community has contacted me, and they have shown interest that they want to locate themselves in this city. So we are creating innovation city there. You see, New Mumbai and this third Mumbai is already the data center capital of India, because around 60% of our data center capacity is created in this new Mumbai. So I think that it will be a very exciting city where you'll see a lot of technology. And of course, the biggest benefit to this city is that, the rentals or the cost of, property is at least, 50% less than Mumbai. So it is affordable city. We lost all this IT revolution because of the rentals. Now, the entire real estate which is getting created there is affordable. And also we are creating a huge, ecosystem for GCCs at this third city. And having said that, we are not stopping at the third Mumbai. Now we will be building fourth Mumbai around Vadhavan, because, Vadhavan is one area where we are creating port, we are creating airport. The bullet train also stops at Vadhavan, and our coastal road, which now, Bandra Versova we are creating, Versova to Bhayandar we are creating, Bhayandar to Uttan we are creating, from Uttan to Virar. So this entire western coast will be joined by the coastal road. So see the ecosystem which we are creating, that at one point there is a port, there is an airport, there is a bullet train station, and there is a road which is connected. And all this, the bullet train and this road will bring you to Mumbai. Bullet train will bring you to BKC in 20-25 minutes, and this road will bring you to Mumbai in 40-45 minutes.
The question is, when will it bring us to BKC in 45 minutes?
See, that is also not very far, because, you see, unfortunately, sometimes politics is very cruel, and between 2020 and 2022, when there was some other government in Maharashtra, they actually literally scrapped the bullet train. But once we took over again, we started it afresh, and today I can tell you that every bit of work of bullet train is being taken up, and it's happening at a great pace. So let's say that by 2028, will be able to travel in the bullet train.
By 2028?
Yes, yes.
Is that a commitment and a guarantee?
Yeah. You see, from the Gujarat side, they are ahead of us because there was a single government in Gujarat. There was, double engine government. So it never stopped. So Gujarat, they are quite ahead of us. We are lagging behind, but I think now we have actually taken the pace and will be able to do it by 2028.
By 2028, we should see the bulletin being operationalized. That's a commitment here coming in from the Maharashtra Chief Minister, and that's going to be a big headline as well, Mr. Fadnavis. But you talked about losing out on the IT revolution because the land was not affordable, rentals were not affordable. Let me ask you this in the context of what we're seeing happen as far as other states are concerned. Your colleagues in the state of Andhra Pradesh are virtually giving away land for free. 99 paise, is what the deal has been done with TCS. Are you worried about things like that? Do you see those things as an opportunity?
No, I'm not worried because Andhra Pradesh can have anything, but they cannot have Mumbai and Pune. You see, ultimately you need to have Mumbai. Mumbai is Mumbai. You cannot compete with Mumbai.
You can't compete with Mumbai. But, in order for all of this to be a reality, I think sustainability is also going to have to be key to the aspirations of growing the city, whether it's into 3 or 4 new cities as well. So from that perspective, Mr. Fadnavis, what will the state government be prioritizing to ensure that growth is sustainable?
Yeah, I think that's absolutely right because, when we grow, the biggest concern is energy because, one of the indicators of growth is how much energy do you consume. And today we are somewhere around, the installed capacity in Maharashtra is somewhere around 46 gigawatt. And by 2030, it will be around 82 gigawatt. So almost double. We have already started working on that. But I must tell you that in this capacity addition, the addition will be mostly the green energy. See, today our entire energy mix in Maharashtra is just 21% renewable and rest all is, from fossils. But by 2030, our 52% energy will come from renewables. So there's a huge push on renewable. By next year, by the end of 2026, by December 2026, our entire agriculture demand, which is around 16 gigawatt, will come from solar. We have already started, it is India's biggest distributed solar scheme, which we have started, Mukhyamantri Saur Krishi Vahini, where around 3,000 feeders are being solarized and already we have finished around 4,000 megawatt and by end of 2026, it will be 16,000 megawatt. So we are giving huge push to solar, to wind, to also PSP because of the Western Ghat. We have a huge opportunity into pump storage. So we are doing pump storage. We are doing now. We are working around green hydrogen. So I think on sustainability, especially when you look at power, we are doing a good work. And along with that, the second biggest polluter is public transport. So now we are actually transforming entire our public transport into green. We are using CNG, we are using EV. The biggest order of EV to all the EV manufacturers has gone from the state of Maharashtra. Actually, right now we have a huge requirement, but the manufacturers are not able to provide our requirement. So we are actually totally transiting our entire public transport. And again, because of the EV revolution which is happening in our country, I think that by 2030, even the private cars and the two-wheelers will be mostly EV because now a lot of push is being given to EV and the costs are also coming down. So I think on sustainability, it is our focal area and we are doing it.
Well, you're talking about the EV revolution, Mr. Fadnavis. So let me ask you, is Maharashtra going to be part of Elon Musk's plan for India?
That only Elon Musk can tell, but I hope we should be, and we'll always try, we'll always compete, we'll always be, at forefront to welcome them.
But, you talked about supply chain diversification. You talked about the manufacturing opportunities that also present themselves today. In light of that, electronic manufacturing, for instance, big potential area for India. We've already seen exports go up exponentially in the last 2 years. What role do you believe Maharashtra could potentially play in new areas like this, linking it back to the IMEC as well?
Yeah, you see, of course, if you look at the investments which have come into Maharashtra, whether it is Toyota, whether it is JSW, whether it is Ather, all the Mahindra, all those are into EV have actually come to Maharashtra. In fact, Maharashtra has become the EV capital, and basically with a EV ecosystem and with our port capacity which we are creating, and with the entire seamless logistics plan which we have created, I think IMEC will be a game changer for us, for our EV plans, for our to become. Today we aspire to become the EV champions of India, but tomorrow we can aspire to become EV champions of this entire region, and that's what we are aiming at.
So what would you prioritize as far as the next steps are concerned? Many of the game-changing opportunities that you just spoke of, but in order of priority, what would the top 3 be?
No, I think, as I've already told you, that the priority will be, of course, advanced manufacturing is priority, EV is our priority, agri-tech is our priority. So I think there's a huge business opportunity which I can see because of this connected world, because of this connectivity, and all of us know that India once was very prosperous because of this route. This is an old route. It's not something which is reinvented. It's an old route. So I think that I am looking at the same prosperity. It's not just for India, but for all the participating countries. But India can be at the forefront. So in that endeavor, we want to be part of it. We want to lead it in India.
Well, Mr. Fadnavis, it's been an absolute pleasure. Thank you very much for joining us here this morning.
Thank you so much.
Outlining for us the plans that you have for Maharashtra as being at the forefront of taking the IMEC future forward, and how you intend to be future ready for when IMEC is a reality. Ladies and gentlemen, the Chief Minister of Maharashtra, thank you very much for joining us here this morning. Ladies and gentlemen, it's wonderful to be here in Mumbai in conversation with the Honorable Chief Minister, Mr. Devendra Fadnavis. I've always had conversations with him that have elicited headlines, so I'm hoping that we will be able to do the same. I had the good fortune of being at the G20 summit in New Delhi, which is where the idea of the India-Middle East European corridor was first announced in the presence of the Honorable Prime Minister, Shri Narendra Modi. A lot has changed since the G20 summit. We are currently in a state of flux and volatility globally, where there is a global reset that is currently underway. But the hope is, and the belief is, that what is being touted as a game-changing idea